back. Thursday. What is it? April
16, 17?
Yes, sir.
17. Look at it. Ripped through.
We got a holiday tomorrow, but we'll be trading.
We will be. FX is open. That's it. You can't buy a stock. You can't trade a future, but you can certainly trade spot FX.
Which will be interesting. It's been an interesting week leading up until the ECB meeting in about 45 minutes.
Yeah.
What say you? Does anybody care? I mean, there's been a bunch of data this week. It doesn't seem like anybody cares
data
about.
Doesn't care. What did we have yesterday? We usually a big one. Retail
sales yesterday came out. I think it was
slightly
a mixed
better.
bag. Yeah, the headline number was slightly better. There were some numbers in there, I think, that were slightly worse. So a little bit of ebb and flow, but nothing really. And then you had the Bank of Canada rate decision where they came out unchanged. And you saw a little bit of lift in Canada off of the decision, if I'm
They tried.
And then they reversed it.
Yeah.
So really not even anything there. The big move came from the Powell talk yesterday afternoon. And I believe I'm so lost in today's macro world because he came out and said, what, inflation is still kind of a problem.
Well, he said, what he said, from what I gleaned, and I tend not to, I don't like to listen, I don't have the patience to, that the tariffs they had modeled, and they're all economists or bankers, I'm sure they did model it. The tariffs that were actually put in place were far higher than their worst case model.
So that was
and he said it in
headline.
a diplomatic way, which
Okay.
wasn't judging like, this is insane. But he just said they didn't model anything close to this. So the knock-on effect was that's more uncertainty. We think we modeled a certain level of tariffs that showed it had an impact on prices. This just kind of implies there'll be an even greater impact on prices. Given that uncertainty, we are in no position to talk about interest rate cuts.
Gotcha. That's what it was, because I heard
that's all it was.
I heard the inflation piece and the interest rate cuts might not be coming.
He's definitely getting better at this, but he walked a very balanced line up. It's more than everybody thought. I mean, if anybody who's actually doing this wouldn't say it's more than everybody thought, it's true. And from that, I think we're going to see this in every earnings company that in the next 3 weeks we get the bulk of earnings. We either have no forward guidance or, here's a wide range depending on stuff going on.
So it's all
They did the same thing.
It's all uncertainty.
Yeah.
It's not necessarily like, oh, the tariffs are this, and so we're projecting this. It's we have no clue.
Well, they had a
so
projection that there would be a again, you raise tariffs 40% on something. They priced in a smaller subset of an increase in price level. I mean, it's hard to do. They're just saying if they're 80 or 100, that means our little model means there's going to be a bigger bounce in prices. So,
because I saw some of the verbiage come out, but then I saw rates get hit and bonds get bid,
and
gold gets another bid. It was already bid, and it gets another bid.
That's just crazy town right now, and they've got people wrong. I mean,
it seems like yeah, they've got a lot of people trapped because it's like, oh, it's up 80. Oh, now it's up 100. Now it's up 115, and it's like, man, they're not letting anyone out of any shorts in this trade.
And remember, all the guys, there are so many complex derivatives built off of gold, not just futures, but swaps and forwards and everything. All leverage, all guys who are making markets on these who have to hedge them as, you think this market rallies, it's overdone. Well, if you've got a guy who's trying to run a delta neutral premium book, you're not done buying at the highs. You're buying more to keep your neutral position intact. So you've got to think about that because it's like, where does this extra buying come that takes us past unreasonable to insane? That's it.
Yeah. Interesting two-sided action in the U.S. dollar this week. But yesterday, it was, from Tuesday to Wednesday, it was the classic, oh, here's the U.S. dollar bounce. And then yesterday, they take all of it out of a number. You had, again, this dollar Swissy 1% moves are becoming normal. Yesterday, again, it was up 1% on, it was either Monday or Tuesday, and then down 1% yesterday. Today, actually getting a little bit of a bounce back. I mean, there's back and forth in that market.
That level
there.
we looked at yesterday continues to be a violent pink. I mean, it seems like such a small thing. Even if you went over to the daily.
Sure. Yeah, I mean,
You've had
right down here.
1, 2,
this doesn't
3,
look
4,
like much.
5, 6. It's like, okay, they're just, the market's quiet. No, those are big.
100-point ranges around
Yeah.
81.50, really.
Yeah, those are big levels back and forth.
But yeah, you can see this week they've tried to bounce this market a couple of times. This is Monday, they take it all down. This is Tuesday, they take it all down. And then yesterday, they took it down and then actually bounced it a little bit. And here today, we're pretty much flat on the week, but 100-point moves on both sides
Yeah,
throughout the week.
you would look week over week. Oh, so nothing happened there. No, there's a tremendous amount of back and forth.
For sure. Where there isn't back and forth is this Kiwi continues to,
Yeah, is as you know, we labeled this poor guy the dog of the market.
it was.
It's Teflon now.
Yeah, I mean, they tried to take it down yesterday with the move in equities. I believe, no, I've got my timing wrong. This would have been the move off of the Powell speech, and then they bounced it back.
And, right.
This is
in
last
that Powell
night.
speech, they sold
Now
Kiwi.
they bounce it back again.
Because
Yeah.
I was actually away from my desk. I came back. I was like, oh, I just bought some Kiwi.
Well, it seems like they're trying to get the correlation going in some of these flashes between equities and Kiwi or equities and Aussie, and the market is just having none of it. Because, yeah, this is the move, and immediately by the close of the U.S. session, they're back to around their highs for the last week or so of trading, and then overnight it looks like they tried to put some damage on this Kiwi, and now they're back to unchanged, which is to say 59.40, which is the highs for, I mean, the last several weeks, it looks like. Let me get
And I
back to
go
the
back
daily
to
chart.
just general market structure. When you look at that 50-minute intraday, the lows off the new highs never reach anywhere near the previous set of lows. They don't spend much time down there.
Yeah,
And then they grind higher.
yeah.
That tells me that I'm very mindful of selling tops. And if I am, and my top is usually I'm selling a top and I'm giving it 50 points, I'm giving it 20.
Yeah, this
Because I don't have a lot of conviction in that trade. But if you want to do that, I'm actually, and I know statistically this is not necessarily long-term productive, but I'm putting small losers if I'm going to fade this rally, and look for a little bit more on the downside.
Well, let's take a look at the euro
Let me
dollar
ask you
market.
this.
Sure.
This Kiwi has been dogged, and we always talked about the tie-in between China and Aussie and Kiwi. Maybe I'm going too far down the macro conspiracy rabbit hole, but this Kiwi action, which is, again, bouncing off of catching up to an extent to everybody else, but really solid tape action, good performance. And they've ratcheted up. The Chinese have come back and ratcheted up on us, and we've ratcheted up on them.
And Chinese equities are lower, for sure.
Yeah.
Same as U.S. equities. Yeah.
But is this saying maybe the smarter animals in the forest are saying the Chinese could win this trade war?
I mean, if you looked at the price action yesterday, post Fed Chair Powell speech, I mean, Chinese equities were down 1% to 2% going into the afternoon yesterday. Similar as NASDAQ and everything else was down like 1.5% going into the event. I didn't check it on the close, but I was comparing them after the speech, where Powell is maybe a little bit more fearful of these tariffs than everybody wanted him to be in this speech. And NASDAQ and SPOOs move lower by 3% on the day, and Chinese equities didn't move that much.
Right.
And so, I mean, does that tell you, well, that's the telltale sign, and now Chinese equities are going to outperform, and this Kiwi and these Aussie currency markets are going to outperform? No, but I do agree with you that there are some, I don't want to use the word signals out there. There's some price action out there that is saying, hey, man, it seems like the greatest fear is in U.S. equities and in the U.S. dollar when you're looking at these different asset classes around this tariff talk. Because when it was March, it was the great fear is in Canadian dollar and some of these other currencies and some of these equities abroad. now that we're in mid-April and you're seeing the retaliation over the last month, I agree with you. I don't think it's any coincidence that this Kiwi is through its highs for the last, you go back 6 months at this point, it's through its highs and you can't move it lower. Chinese equities, maybe we'll do something for the show next week. They're off, but some of the recent price action, not as violent to the downside as U.S. equities.
They're stinky, less stinky than some of the others.
And the U.S. dollar seems to get punished every time we bring up tariffs at this point, more than any other currency. It's not even, Trump wants to do tariffs on this region, and you see that currency sell off, and then the U.S. dollar sells off. It's pretty much U.S. based fear that we're seeing across the board. So I think it's a good point. We'll see how it all shakes out. But yeah, let's get into our segment for today because
content.
Yeah,
look at you.
It'll be some good stuff.
It's good having the machine back.
U.S. dollar is collapsing, but I want to take a look at the carry trade because prices are one thing, Pete. Interest rates, overnight funding rates, and the carry trade between dollar yen, dollar Swiss franc, but also dollar and even euro or Canadian dollar. A lot of positive carry in the U.S. dollar's favor, but the fear is showing some price action that's negative for the U.S. dollar. So I want to take a look at some of the dynamics. First, harping on the U.S. dollar price action, here you have that dollar Swiss franc chart, and we're down more than 10% year to date, which is a massive move for the first quarter of the calendar year to be down 10%. I mean, that tells you that on an annual basis, you could see a 30 to 40% move in this currency. And we look at volatility all the time, and to think about a 30 to 40% vol in a currency market like this is very, very rare. Now, I don't think that we're going to get a move one way or another in any of these major Forex pairs to the tune of 30 or 40% on the year, but that's the pace that we're on 3.5 months in, down 10%. There, euro is up 9.8% year to date, and it's at its highest prices since 2022. And dollar yen, though it's not necessarily at a price extreme, it's only at its lowest since September of last year. It is down 9.6% on the year. But I mean, you look at this chart here, Pete, this is the monthly in dollar Swiss franc going back the last 15 years. The lowest prices since 2015 and the crazy price action we saw to start that year. But obviously we didn't spend very much time down at 80 or anywhere near that 80 handle, although they flashed down to 75. These are some pretty freaking low prices for the dollar.
Yeah, absolutely. I mean, this is a sea change in what people are looking at long term. Now, does the market overreact? Sure. But from what point?
Yeah.
It will be interesting to see. Right now, I mean, you'd look at this, you say, well, that's capitulation. You've squeezed everybody who's been buying this out of the market. I tend to, we actually saw that in Kiwi where it punched that low that one day and then came up back. We rarely see V bottoms anymore. So this may be the low, but if it is, it's going to do what it does when we went back to that daily chart. It's going to sit, it's going to test, it's going to give you a couple of fake little rallies.
Sure.
And I'm not convinced. So statistically, the rate of pace for the time it's moved makes it seem like it's way overdone and due for a correction because not everything goes one way. I think you have to be mindful around from what level does it correct.
Well, and these first couple of weeks of April are great examples of what you're talking about here, where they're trying, it's almost, I don't know if it's the algos or whatever you want to say, the market's trying to create that V bottom phenomenon, which we've seen so many times so many times, I don't even have to say that. Look at the last couple of years of data where it's like, okay, they punch whatever market lower, whether it's equities, US dollar, crypto, anything, and then they create a V bottom, and it's immediately bought. The first couple weeks of April here, they've moved it lower, tried to bounce it back, and have been just completely unsuccessful. Like literally the next 24 hours unsuccessful. So it'll be interesting, and if we turn that concept on its head, Pete, when we got up to parity with the Swiss franc, it was the same kind of thing where, you know, they got up here, they tried to move it lower, but we were around these levels for 6 months here in 2022 before they moved it off of that upside extreme. Could be the same thing here with this downside extreme where we spend some time down here, but yeah, it'll be interesting to see how much time, because or how much lower they get. Is it 80 or is it 75 or 70?
And we don't know. I mean, in a vacuum, this looks cheap, right, until it prints 77.
Exactly.
I think we always need to be mindful, just at a very top level, of the context of this holistic market, because it's not just you and I and a bunch of guys trading directionally back and forth. The glue that makes this market work, why it exists, is to facilitate international transactions. Now, that's companies building in one area, selling in another. Now, companies they either build in that cost by hedging that. Okay, I know if I can build this, it's going to take me 6 months to deliver it. I can lock in the price I'm going to get for this goods by hedging. Hedging is a cost. The market's not moving. Why would I cut my margins to hedge?
Yeah.
When markets move like this, traders are compelled to hedge. So this is where we go to why does it was at an unreasonable level. Now it's even at a more unreasonable level. Well, at that point, people who haven't hedged need to hedge, and the guys hedging need to hedge more. So it tends to be, this is where we get this really elastic test of this. When we start that hedging is completed, that market's normalized a little bit, and it usually takes a little bit of time. So when we say, oh, it takes time, why does it take time? Why doesn't it just V-bottom and correct?
Everything's efficient in 2025.
Right.
Yeah.
Well, the mechanics of the efficiency take time to unwind. Then we stage a little bit of corrective action.
But it's funny, it's the same thing with VIX. I mean, what you're talking about is fear in a market.
Absolutely.
These are the dynamics of fear in a market.
And the need for end users, and we're a different kind of end user, but an end user who has something else up against it, who needs to protect their prices.
Well, let's take a closer look. I love all of that context, but let's take a closer look at the current interest rate landscape. We even, as recently as the last 24 hours, got further guidance from Fed Chair Powell, who has said that the tariffs and all this fear doesn't necessarily mean that we're cutting interest rates to zero or we're inclined to do anything crazy. We'll look at what the market is thinking they're going to do in just a second. But for the time being, you still have US and UK atop the interest rate landscape among major central banks. And it's funny, Pete, this, if you want to call it a game, this conversation was so much simpler. I don't want to say it was simple. Post-pandemic and all the craziness around then, up until the last year, it was everyone's at zero, and the dynamics that we're seeing are really just like, how much more did the U.S. hike than this place? How much more? Japan is still at zero. Now the U.S. is at 4%. Now the U.S. is at 5%, and we're going to punish this yen because we want to get long these dollars. It's not so simple anymore, because the interest rate differential between the U.S. and Switzerland is 4.25%. And you're seeing the lowest prices for a U.S. dollar in the last decade plus.
It doesn't quite make sense,
does it? It doesn't quite make sense. But let's take a look. I mean, at the end of the day, the prices are the prices. Just a couple of notes really quickly. U.S. rates are down 1% from their 5.5% highs. Everybody has been cutting except for Japan. The euro, the ECB is due to cut actually in a couple of minutes. We're talking here on April 17th, Thursday morning. Japan is the only one who's hiking rates, albeit at an extremely slow pace, from negative 10 basis points to positive. I think they went to what?
Positive 25. And then
positive 25, and now they're at 50. Switzerland has cut all the way down to 25 bips. Here's the expectation for the end of the year in the U.S. market's still expecting, I mean, this is lower than where we currently are,
Right.
but still only expecting 3 to 4 cuts between now and the end of the year, or 100 basis points. So 3.5%, which if you look at this landscape, I mean, it's hard to believe that the U.S. is cutting and Australia isn't cutting, or the U.K. isn't cutting at the same time. But 3.5% still puts you higher than most of these major central banks, even if they aren't in a further cutting environment. And I wanted to bring this up and have you take a look and
This is great.
and give your feel on this. This is the indicative overnight rates that I took yesterday, and I even called out because it's a weird holiday schedule. So some of these are one-day rolls, some of them are 3 or 4 day rolls. All that means is you just have to divide the positive carry or the negative carry by the amount of days. But you get the picture. And here, Pete, take a look at what the prices are looking like yesterday from TastyFX, because, I mean, some of these are pretty healthy. Even if you take that dollar yen and you take into account, okay, it's a 3-day roll, you're still getting over a point every night that you're holding that long dollar, short yen. And now some prices that you haven't seen for the last 6 months plus. You look at that dollar CAD, I understand that that 138.5 is relatively inflated if you're looking at the last couple of years. But I mean, we were 144 bid a month ago. And also looking at that's the 1-day roll for dollar Swiss franc getting around a point. I'm not trying to allude to like, hey, it's great prices for US dollar and you're getting free money every night. The dollar's getting smoked in a lot of these markets, and this may not be the end of its smoking, but it's interesting.
Long term, it's one context that drives activity. Not every day. Again,
it used to be the only one for 2021 and 2022 and 2023. It felt like the only one.
It will continue to be a recurring story.
Yeah.
It is just when, again, collective changes in risk drive prices that overwhelm the swap. But I think this is really interesting context because this starts to speak to long-term bias, is that where we see markets with, very high levels of carry, this has been the story for the last 2 years of dollar yen going from parity to 162. The positive carry that was on the long dollar yen, those Canada rates haven't been that wide in a while, which is really interesting to see. And go back to the rates again then too. So there, I mean, it's funny. We've always heard about the yen carry trade, and for a while it was the euro carry trades when the euros were wrapped closer to zero, and we were starting our climb out of the zero rate environment. There is, I mean, when you look at this, you're really seeing, again, Aussie, a relative push. Sterling, not the same dynamic at play, but through Swiss, through Canada definitely being somebody new. We never looked at Canada as necessarily an interesting carry trade. It's starting to become one.
Well, and actually you bring up that Eurodollar piece because in this table, you look at UK and US, obviously it's a push because we're both at 4.5%. The Eurodollar piece, that's a 1-day roll of almost half a point. And so, I mean, and at 114.
Now, we're not saying whether this is right or wrong. But
it's just 114 is a high price.
We have customers who are all about the carry trade. They look at term structure like this, the swap rates, as being, we talk so much on Tasty about cost basis reduction. They look at, they've got a natural bias. They think, these guys think the dollar's going to get stronger. So
in this example,
in this example, I'm expressing my opinion, and I'm actually getting cost basis reduction every day. The market basically is giving me half a point of cushion every day to hold that position.
And that's the dynamic that I think is interesting, is you have a Eurodollar market, for example, on that top line there, that's gone from 102, 103, 104 in the last couple of months to 114, and it's giving the long dollar part of it some of the best
short
overnight.
Euro, i.e. long dollar,
Exactly. It's just an interesting piece. Now, the flip side, maybe to end the show here, is of course, if all of these carry trade dynamics, the big word the last year with the dollar yen crash and then the V bottom, and they were back to 150 in no time, is unwind. And if we're seeing the dollar getting punished here in the start of 2025, and this dynamic unwinds and the U.S. does cut rates to on par with the ECB, to on par with the Bank of Canada,
that's another reason why we see continued dollar selling, because the guys who have these trades in place need to unwind them.
And so then you might see even further capitulation in that U.S. dollar trade. So there's nothing's free here. I don't want to paint this like, oh, you're getting great dollar prices and you're getting money every night to be long this dollar. There's risk on both sides of this. I just think it's interesting. The dollar's getting smoked, and you're getting some of the best overnight fund. It's just the facts. Getting some of the best overnight funding to be long U.S.
We want as many productive tools in trade decision and building bias. I mean, we're directional traders, so we need to have a bias. There's no premium for us to sell. This is another interesting aspect when you start to wrap in what your bias is and what you want to do when the market moves. It's not, positive carry, I got to be short, because otherwise I'm paying to be long. That's not your overriding consideration, but when you look at bias, you also look at carry. Does carry help your decision making, or is it something you have to be mindful of bearing? So, and again, that speaks to, are you a flat every day? This really isn't relevant for you. Are you a swing trader where you're looking at longer periods, a couple of weeks? Absolutely, it is. But another input that lets you make productive trading decisions. Another reason why I love trading these things.
Cool, man. Well, that'll do it for today's segment. And now we'll throw it to Tom, Tony, and Vanetta coming up next. Stay tuned, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tastylive.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
Look who's backtesting. Tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
Market, come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot, now you got a hole in your throat. Oh no, just call your boss. Take a crust
knuckleheads on this synthetic work Friday.
I can't wait to get out of here.
I was waiting for a whoop whoop. I was up.
No, I just can't wait to get out of here.
Yeah.
It's a long stretch.
She's throwing me off this morning. She's throwing me off. She's like,
why?
Because she brought.
He's obsessed with me.
She brought in breakfast, but she doesn't eat it until after the show.
I didn't see any breakfast.
I bring in a breakfast sandwich. It's not fancy. I'll tell her. It's just like a turkey sausage. Yeah, to eat later.
I wasn't asking her to bring in breakfast for me. I'm saying she brings in breakfast, but then she doesn't eat it, right? And then she eats it.
Drives him nuts because he wants it.
And I brought in an apple. Yeah, I eat it after the show.
Then she eats it after the show, but that's when we have lunch.
No, I get off of the show at like 8 o'clock.
Oh, that's true.
And so then that's...
We get off the show. We had
8 o'clock if you're running late, and Tom says, "Well, Vanetta was running late."
Lunch.
Yeah. So is it? Can I live? Can I eat my breakfast later? Is that okay?
Yeah.
Because I don't want to mess up my makeup, man. Like, you know how long it takes to get this lip down?
Tom doesn't have that problem.
Yeah, I know. I know. Anyway,
Not at all.
How are you doing today? How are you both doing?
We're spectacular.
Are we?
I have to get myself in golf shape. I have one day.
You have one day?
Yeah, I'm playing golf tomorrow morning.
T-minus 12 hours?
Remember when we would make Tom do his swing for us, and then we would film it? That's
That's why my back was all messed up. But I
so
haven't
good.
taken a swing yet this year, so.
You haven't even been practicing. You've been more playing with the Papa shot than our little putting green.
Right now, my 3-point shot is on point.
You should really start doing mobility
My
exercises.
3-point shot right now is, I think yesterday I hit like 3 or 4 in a row.
Okay.
Downtown. Yeah.
Okay, Kobe.
Nothing but net. You would have been there, you'd have been impressed, but you weren't there.
You would not have been impressed. I was here. I was not impressed.
I had a crowd around me. It was impressive.
A crowd. It was Slappy and JJ. You were all like, it was a crowd. It was Slappy and JJ. You're like, and the crowd went wild. It was Todd.
I had a crowd around me, just like.
It was loser fest.
I can't believe he's dropping dimes from out here. Boom, boom, boom.
Oh my goodness. Just you and your Delulu lemons over there.
Yep.
Well, the Bulls have been officially eliminated from playoff contention, dropping a play-in game to the Miami Heat last night.
I watched the first
it was
half
not.
where I got frustrated.
It was like 109 to like 90. It was not even close.
The game was over in the first quarter. I mean, the Bulls have a good young team.
They do. They do.
They're likable. I mean, the 3 young kids are all likable.
Sure.
And I think they're going to be really good. They just need to get one good free agent and one good draft pick.
Well, we will see what happens.
This Bucells kid, oof.
Bucells, that's his name?
Bucells.
Bucells. Bombaclat. What are you talking about?
Oh, that's a bad word, I think.
It's not.
I learned that when I was in Jamaica, which I might go back to, by the way, for the first time.
Yaman. Yeah.
5 years for me for Jamaica.
At least. More. Oh, my God. 35 years. Last time I went with Tucci, who calls in sometimes. Tucci and his first wife.
I used to go there a lot.
My first wife.
You used to go to Jamaica a lot?
Yeah. Oh, yeah. Trial.
Really?
Yeah, I liked the trial.
Loved it.
And
what?
Johnny Walker Black Open was there. It was fun.
I played golf, the trial, that golf course there.
Yeah, it's
played
great.
there a couple times.
Yep.
Is that why you're obsessed with me? Is that what reminds you of some island girls? Run the island out. Gross. I've never been. It's like it's
It was
on my
great
list.
back in the day. It was great, but the 2025 senior class, graduating class, might be going to Jamaica, and they asked our friends to go who have a senior who's graduating, and they said you should come too because their son and my son are best of friends. So he's going to go, and he can have somebody. It'd be fun. So I think we might go.
Where are you staying?
Oh, I don't even know anything about it. It would be like not this year. It'd probably be like next year.
Depends where you stay. Jamaica's all about where you stay.
Yeah, of course.
Isn't anywhere about where you stay? Like,
wow. I used to like, but the reason we used to like from Chicago to Jamaica because Air Jamaica used to fly direct nonstop.
Oh,
I don't think they exist anymore.
I don't know.
But they
haven't got that deep into the woods.
There used to be Air Jamaica flights from Chicago O'Hare to straight into
Kingston.
What's the other main? I think it was Kingston.
I don't know.
Montego Bay.
Yeah. Yeah.
I'll take Jamaican cities for 600, Alex.
No, Montego Bay.
Yeah, I think it was Montego Bay.
Yeah.
I think I used to fly from here to Montego Bay.
Oh, okay.
And yeah, a lot of those hotels were like, within half hour away.
Just unknown boomer secrets, I guess, that I just did not.
A lot of traders used to like to go to Jamaica.
Can you gamble there? Are there casinos? No. Okay. I didn't know.
No, at least back then there were not.
Gotcha.
Definitely no casinos. But,
Sure.
But nice, good restaurants, good food, beautiful hotels.
Yeah.
Mm-hmm. Yeah, nice beaches, nice pools. Everything was nice in Jamaica. Only went to one bad hotel in Jamaica. I'll never forget this trip. We went there was a place where they had kids they had camps and babysitters and so parents could. Oh my God, it was the worst hotel ever. And
it was like a sweatshop for kids, and you threw case and coal in there.
It was literally a sweatshop for kids.
They were making Louis Vuitton wallets.
It was a sweatshop for kids, and it was disgusting for adults.
Oh, gross!
And we went with another couple once.
Your poor traumatized child.
They knew the difference. They would serve. It
was fun back then. I'm not gonna lie. Ganja man. It was good. Yeah, it was good. It was fun.
All right. Well, good times,
I even
man.
like the local restaurants there. Cause we'd go into Montego Bay and at
that time, if you went to like Montego Bay or the other one, I forget there was another one. Negril was where you were getting a little dicey. Like if you went down to Negril.
I never went to Kingston actually.
Oh, okay.
But yeah, we used to go in for I even went roadside jerk chicken.
Sure, I'm sure like the seafood was really fresh, and of course the jerk, all the pon de jerk, man.
It was good.
Yeah,
it was good. No,
you would get your hair braided. It was a good time. We have that picture. Yeah, we have that picture. Yes, yeah. Get that done. Yikes.
Yeah, why not?
Why not, girl?
Yeah.
All right. Well, how are you, Bat? How is Vinny doing on the meds?
Goes to the orthopedic surgeon this morning at 8:30.
All right. Well, finger crossed.
I am predicting no surgery and just a couple weeks or whatever of just keeping it immobile.
You got to be careful with these surgeons because they're always trying to
get in there and cut.
Business.
They want to cut.
Yeah.
I mean, it is like
it's
time.
$15,000, decision.
Yeah.
I mean, it would be time
He's busy already.
Would be time for him, that surgeon, to upgrade his boat about now. It's like the perfect time. So
Summer season.
I'm just kidding. No.
Summer season's coming. Yeah. So hopefully he'll be fine back on the ice.
No, I had the best orthopedic surgeon. Like when I had to have surgery on my leg.
Then he's going to give her the. I think this kid will be better off long term.
Yeah. Well, we'll see.
Cool.
Dad'll intervene.
Well,
I didn't think it looked that bad.
Yeah.
I actually thought he was kind of chewing the scene, as they say in the thespian world.
Okay.
Yeah.
Well, I'm glad that he's okay, and hopefully we get
he's aggravated.
We get the best news possible
I don't know
today.
I don't remember doing this as a kid. They have this stuff. They probably didn't have it back then, where they just kind of run it underwater. It almost looks like a big foam, and they run it underwater, and then they put it over the area, and that gets hard. So they wrap it with cotton first, and then they just put like an ace bandage around.
Sure.
But the underneath part gets solid. That's what they did to him in the ER room. But that wrap that they put on there is like an ace bandage. He looks like Elephant Man. I mean, it's unwrapped when he was sleeping.
Sure.
It was brutal.
And they also charged you $4,000 for that bandage.
You can't wait to get something. At least.
No, I know. I'm just kidding. But that's that was like the markup on that stuff is insane. You're just like, okay, well, what? All right.
So he's happy to go to the doctor. He wants to get it done.
That's good. Well,
we'll see.
Keep positive thoughts and vibes out there for Vinny.
I told you, Sadnoff, it's not his blizzard-making hand, so he's okay there. Although he did have a hard time playing some video games. It was not his best. He was very aggravated last night. Very aggravated.
I mean, will he be traveling to school with like a medical assistant now? Like
he might. His mom.
His convalescence, like
a Russian nurse.
Yeah.
Oh my goodness gracious! All right, I have nothing to add to that. Hey, we got a great show for you today. Programming notes, no live programming tomorrow. The market is closed because it is Good Friday. But please be careful if you're trading things like Netflix, which we will talk about later today, because just a weird sort of situation. Just be careful. But no live programming. But feel free to dive into our archives, check out some of our research segments that we've done, or just spend time with your family, whatever. Up to you. But for today, on this thrilling Thursday here, on this Synthetic Friday, headed your way at the top of the 8 o'clock hour. They've been bumped for the last couple of weeks, but back, hopefully, in full effect, live trades from the research team.
Right.
The world's greatest financial think tanks presenting their trade ideas to Tom and Bat. Finally, they're tired of getting bumped. 8:40, we got Victor Jones in the house. What are you going to talk about with Victor today? Excuse me.
Victor stuff.
Yeah, Victor stuff. I'm not sure.
Okay.
He's
all right.
on the phone with our producer of the stars right now. So they're
Okay, none of that is true. But yeah, there's a lot going on, I'm sure.
No, that is true. They're talking right now.
Okay.
That is kind of true.
All right. And then 9 o'clock, we have a market measures. Fastest losers on a bad day versus 0 DTEs. Why are you looking at me like that? I'm just
Just reading it.
just reading it.
It's a 0 DT study, which
Okay.
we depends on what's going on. We'll see if we get to it or not.
Okay. And then we got live from the trade desk, my personal favorite, around 9:30, big boy Scott Sheridan, who is on his own countdown to returning back to Chi-Town. We love to see it. But I love how he gave when will I be back in the state and when will I be back in the office, and like how those are two separate things.
It's good to be queen.
Right. He's got to ease his way, and he is my favorite. He's my favorite person, I think, Scott Sheridan. Anyway, he's going to count down the top trending tickers from Tastytrade, so that will also be great. And that is our show for today. In the meantime, and in
The
between
show
time,
for today is going to be all about Netflix for earnings. That's what the show for today
Sure.
is going to be on everybody's radar.
Very valid. Do you want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire.
This just in.
Top story. Just in.
In today's headline. This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It's April the 17th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Tom, do you have all the food that you need for Easter?
No.
So you got to do that tomorrow, or?
No, tomorrow I'm playing golf.
Oh, yeah, that's right.
Because
And then-
tomorrow's the day to shop, Saz.
Right, yeah.
You know.
Are you gonna shop tonight then, or when are you?
We just
you're not
go to the
gonna
freezer from
You're not gonna be able.
years.
You're not gonna be able to move your arms on Saturday, so you should get the shopping done before you can't move your arms.
Oh, I got everything left over from last year.
Gross. That's gross. That's Hey, you just rub the freezer burn off the ham. It'd be alright.
I was going to rub the freezer burn off the pie.
The year is like 3 months tops, is what experts are like say. But
No, I will probably go out a little bit on Saturday and do a little shop. But
You have to go out on Saturday. You're not going out on Sunday. You're playing golf on Friday.
Everything's closed
You play
Sunday.
golf all freaking day? Like, I mean, how long does it take?
it takes a while, and he's going to the
Especially
south
you-
side.
do you
Yeah.
walk in the course. Please tell me you walk in the course. I'd like to see you dragging on the.
Nah, they got carts. They got carts.
So, yeah, we got cards. But I may go, if I get done in time, I might go to the Cubs game. I might go back. I might get double header. That might be tiring for me.
You might not recover by Monday.
Yeah, you are going to be in
That could put
traction,
you
dude.
down.
Cubs game is 1:20. My tee off time is 8 o'clock.
That could put you down.
If I could make the.
You're going to need an IV.
You'd be like Forgo. We'd have to put you down at the end of the race.
If I
to be
can,
over.
if we tee off at 8 and I get done by 12:45, I can make the Cubs game at 1:20.
That's not going to happen.
No way.
Just the traffic alone, you're whatever you're smoking. I want the name of your dealer.
Yeah.
I can be at the Cubs game at 1:30 if all goes well.
When has anything ever gone well when you're
just saying.
involved? Hey,
So I might make it.
anyway, this is the part of the show we like to call the Daily Dose. We talk about today's financial news and headlines. Mr. Bat, what's on the horizon for earnings?
Well, I mentioned Netflix. That's going to be everybody.
this is
That's
a
what
big
everybody's going to be looking at today, which is going to kind of be weird with it being expiration today. Netflix. We've talked about this.
I honestly, I don't think Netflix is going to be a big deal because most people are not going to trade Netflix. It's
Or because of the move it's already had this week?
no, because the markets are like $2-3 wide.
Oh, they are?
It's $1,000 stock. It's
Wow.
trying to trade.
Why are the markets so crappy in there?
They've been crappy in there for 2 or 3 years.
Interesting.
Yeah.
All right.
I mean, I just don't think a lot of people are going to. It's $1,000 stock with $2 wide markets. I just don't think a lot of people are going to trade it.
Well, getting
I agree with you, but I believe they're with 0 days, which is the April expiration, which is the monthly expiration, is going to have a lot of a lot of residual trades have already been placed.
I have a May position on now, so we'll see.
Okay. Well, getting to my first headline of the day, Fed Chair Jerome Powell said yesterday that the central bank could find itself in a dilemma between controlling inflation and supporting economic growth. Powell gave no indication on where he sees interest rates headed, but says for the time being, we are positioned to wait for greater clarity before considering any adjustments. He said that the tariffs were even too fast and too furious for the Fed to even predict. This morning, however, President Trump is gone to Truth Social in lieu of the ECB cutting rates this morning. He says that Powell needs to be fired now, even though Trump does not have the authority to fire him. And Trump continues to tweet that the Fed needs to lower rates now. Powell needs to get gone. He's kind of going off on a rant. So.
I honestly don't think that the Orange King knows how the Fed works. And just tell him to look at the bond market.
Sure.
The bond market doesn't care. It's down. What's it down?
It's 115 even.
115 even on bonds.
Mm-hmm.
Okay.
Yep.
Just look at the bond market.
What are you guys doing in bonds, treasuries?
I'm short the Strangle right here.
Okay.
We're actually betting that rates are going to go a little bit lower, and we're
hold on for the ride.
Yeah, so I'm betting the rates are going to go a little bit lower.
Okay.
I'm short the 115 puts, and so we'll see what happens.
Anything that you're seeing in the euro? Again, ECB news coming out this morning. Not sure.
All these things are. I mean, they're all down. The dollar's up small this morning. At least it was before. Let's see. The dollar's up small this morning.
Okay.
The British pound's up, but then the Canadian dollar, euro, and Japanese yen are all down. So I'm going to say the dollar's up small today.
JP Morgan Chase said this week that they have begun suing more customers that have been accused of stealing funds from the nation's largest bank in a TikTok trend called the so-called infinite money glitch. Oh, children. The bank is now going after customers who stole amounts below $75,000, which means they're filing complaints in state courts instead of the federal venues it chose last year.
I'm not sure what this is, but
it was a trend on TikTok. It was basically like you could write yourself a check, deposit the check. The bank would make a certain percentage of those funds available, and then you could take them. But it's just wire fraud.
It's like ACH fraud.
Right? Yeah, it's wire fraud, ACH fraud, whatever.
It's
called being a criminal.
Right? Yeah, but kids discovered it. I won't just say kids.
They should go after those people.
But it just became viral on TikTok, and obviously people maybe weren't quite cognizant of the full, because they're like, well, if I write a check to myself, how it's like, well, but you don't have the money to anyway.
Yes, that is illegal.
It is.
They should go after those people.
Right to jail. Hey, Coinbase gets a regulatory notice for crypto accounting move shenanigans. So they received a regulatory comment letter regarding their accounting for crypto assets. So the regulator acted against another company for the same practice. We thought that all of the sort of Reg T notifications were going to go away, but I was kind of surprised by this. I'm not sure exactly what the accounting notification was, but it was, bless you.
I don't know what this is exactly. It's not.
But I'm surprised. Right. Okay, I used the wrong words. But I'm surprised that they're getting charged with anything because I thought we lived in a lawless land.
Coin's trading 173, 174, up about $1 or $2.
I don't know what this is exactly.
What are you doing in Bitcoin or coin?
JP Morgan was up $1 or so also. Bitcoin's trading almost 85,000, the higher end.
Hey.
But it's been hanging in there. Bitcoin, if you look at the volatility of the market, look at the volatility of Bitcoin.
Market's way more volatile than Bitcoin.
Thank you.
Sure. But
excellent way to say it, Sal.
You're not doing anything in like any of the altcoins either, like ETH. Poor ETH. No one ever talks about it.
We're buyers on dips. I mean, otherwise,
I bought the ETH ETF yesterday.
Oh, okay. How was that?
It's a loser so far.
Okay.
I did get some Bitcoin kind of option. Do you guys doing anything in any of the ETFs or anything else like that?
We bought the ETH ETF yesterday, but there's no option.
No mature market there.
Yeah, I mean, there's so many better things to trade right now than Bitcoin or ETH.
Yes.
That's fair. That's fair. International crypto exchange OKX, originally established in China in 2013, announced they're expanding their presence in the U.S. and they're setting up a new headquarters in San Jose. Do you know the way to San Jose? OKX also announced the appointment of a new U.S. CEO. So what do you think about that?
Who's the US CEO?
Barclays alumnus Rashawn Robert. Or maybe it's Robert. I don't know. Sometimes it's pronounced Robert, which is very fancy.
I don't know anything about OKX.
Okay, I had never heard of them either, so I didn't know if you had.
No,
so
I haven't.
all right. Keeping it moving. Getting some news. Chip stocks obviously were in focus yesterday after NVIDIA disclosed $5 billion hit because of China export controls. AMD announced yesterday that they expect an $800 million hit from the same U.S. chip restrictions to China. Let's talk chip stocks.
I mean,
and going into the long weekend with your chip stocks.
I think they got a little oversold yesterday.
Okay.
So, I mean, we're not short them here. I can't speak for other people, but I thought yesterday was a little bit of an overdone.
Okay.
Mm-hmm. I think we said that. I mean, there was somebody on the show that said NASDAQ would be the strongest, which it is today, while somebody just sat there and looked pretty.
Okay. What's NVIDIA doing this morning? Oh, boomers.
Actually, I've been all week saying that I wouldn't sell this opening. I mean, I was nervous about them being up this.
That's true, but I said it better. NVIDIA's up around 70 cents.
What are you doing did you adjust anything in NVIDIA yesterday? Or?
A small long.
Okay. What about like SMH?
No position.
Oh, all right.
But even the S&P's up 30. I mean, NVIDIA up less than $1 or so is basically in line. Not an overperformer, not an underperformer.
Sure. Well, how about this? A nice little kick in the teeth. Apple's market cap is now back below $3 trillion as its relief rally fades amid new tariff uncertainty. Apple stock fell nearly 4% Wednesday, sending the iPhone maker's market cap back below that $3 trillion, a paltry sum. Apple stock surged earlier in the week, leading the Magnificent Seven on exemptions for cell phones, laptops, which obviously very important to Apple. But what are we doing?
It's gonna be close to getting back there. 197, let's call it, up around $3, $2.50 to $3. Gonna get close.
What are you doing in Apple to Apple?
We came in a little bit long.
Did I be ranked 57 in there? Earnings are May 1st.
Yep.
Okay. Poor Apple. It's just getting whipsawed. Google says that it's being sued in Britain for potential damages up to £5 billion in a class action suit that alleges the company abused its dominant market position in the search industry. One way critics, analysts, economists, or whatever, are saying that the EU can really strike back at America during these difficult trade tensions is to really start to penalize our tech companies. What do you think of a $5 billion lawsuit?
Well, first of all, that's exactly what it is. It's a lawsuit. It could be frivolous for all we know. It sounds like a joke.
Nothing about Google's monopoly or dominance is frivolous. Like, it's well established.
My point is, if somebody files a £5 billion lawsuit, it doesn't mean anything. It just means somebody filed a $5 billion lawsuit. It doesn't mean they have any ground to stand on.
All right, so we're getting sassy saws today.
It seems like
that's fine.
I'm just saying, just because somebody files a lawsuit, who cares?
So what? Who cares?
Right.
So what? Who cares? What are you doing in Google?
Google, we're small long.
Google Schmoogle has not been cooperating with the rest of the market.
Nope.
Google up around $1, $1.50, but the whole market's a little bit stronger if you're looking at everything except the Dow. But Google hasn't been the good Google of yesteryear.
I love seeing all the different ways that nations are responding to the actions of America. Hong Kong has now entered the chat. I don't even know what to do with this. Maybe you can talk to Victor about this because I don't know if this affects him directly. But Hong Kong is suspending postal service to the U.S. They're like, you know what? We're done. And they're going to stop handling packages coming from or going to the United States. So again, Hong Kong is like, we're tired of you. We're not going to take packages from you. We're not going to send packages to you.
Make a lot of
And you're blocked. And you're blocked. The audacity.
The correlated risk and fallout from this, like the unintended consequences, it's just going to be disastrous.
I just think
Nobody doesn't care, so whatever. I mean,
I was like, but it seems pretty. Hong Kong seems pretty important. I'm sure people would like their packages.
I'm sure they would.
They'll find a workaround. Don't worry about it.
And
It'll be okay.
you're blocked. You're blocked. Love the energy though, Hong Kong. OpenAI is in talks to pay $3 billion to acquire an AI coding startup called Windsurf, formerly known as Codium. It competes with Cursor, another popular AI coding tool. Yesterday, I announced that OpenAI wants to maybe build its own social network. Now they're spending $3 billion to do an AI coding startup. What are your thoughts?
I don't know anything about windsurf. Never heard of it before.
Okay, but what are your thoughts on OpenAI making all these moves and announcements in general?
Well, supposedly they have a lot of money.
They do have a lot of money.
Yeah.
They have no revenue stream.
No, people pay for their
They said they have
service.
no revenue stream. They have a lot of
They
money.
just raised a lot of money. I mean, these are kind of deals I don't know anything about. Never heard of windsurf.
You can't really trade OpenAI, but you can trade Microsoft. How's Microsoft doing in this morning's sort of little rally?
Microsoft's been a pig. It's probably up a little bit today. Hopefully, we're a little bit long it.
Microsoft has been a little bit of a pig. Microsoft is up. It is up small, less than $1, maybe $1. 372.5.
OpenAI also said its latest model can now scan and analyze diagrams and sketches, that's kind of cool.
It is cool.
Like, you're like, hey, how do I break into this bank vault? OpenAI. No? Okay. Just me?
Yeah.
It's a tough room with Sassy Saws. Hey, the U.S. is mulling penalties to block DeepSeek from buying American technology. Remember when DeepSeek shook the market and then we never heard of her again? Well, the Trump administration's weighing penalties that would block DeepSeek from buying U.S. technology, and they're also debating barring Americans access to the service. People, as soon as this came out, did predict, they're like, oh man, this is going to get banned in America. It's just a matter of time.
Why would they ban DeepSeek?
Because it's based in China and we're fighting with China super hard right now.
Yeah, but it's free.
Again,
I just don't understand why you would ban something that's.
you really don't understand why we would ban DeepSeek right now at this current time.
Why would you ban DeepSeek? It's free.
Okay, then it's free. I don't know. Everyone's
I'm
an
just
idiot
asking you a
except for
question.
you.
Why would
I don't.
I don't. Nobody's forcing you to use DeepSeek. It's totally free. It's
Yeah, it is.
I mean, it's data privacy, security. I mean,
don't
that's what
use
they're worried
them.
about.
I'm not saying you don't have to use them, but if you want to use them and it's totally free.
Sure.
You asked why.
Sure, but a government can have control though over a product of a foreign government if it's introduced into.
I understand. If you don't want to sell, if you don't want to let them sell their product here, which is totally fine because they have a paid for Model 2.
Sure.
You can. That's fine. But the free side to it, who the hell cares?
Okay.
I mean, that's a free market.
Why don't you eat your nuts off of your mouse?
I mean,
pad?
other countries have banned it. Like Australia's banned it.
Why? So I'm asking why.
For the same reasons. For
So you're banning the
government security, for your own security.
Right. Yes. For the good of
fraud, which could cost billions of dollars
paid
on the back
for
end. I mean,
site?
I'm just making the other side of the argument. I don't know much about it.
The paid for site or the? I mean,
No, because don't you see how it could sort of be like this Trojan horse? Like if you wrap it in this bundle of like, oh, it's free, and then it can still scoop up all of your data and take it to the Chinese Communist Party. But you were just asking why governments would ban it.
It might be okay for you.
Right.
I'm sorry. If I wanted to ask DeepSeek, hey, can you recommend a good Chinese restaurant within 3 blocks of my house?
You're simplifying.
You're being purposefully obtuse.
I'm not actually.
Yeah,
you
That's
are.
What do people use DeepSeek for?
I don't know.
Okay.
I don't know.
Okay, neither of you guys know. Okay,
to write my resume when I'm looking for a new job.
Yeah, right.
That's what I'm gonna use
okay.
it for.
So, there's way better.
But they get all the information in my phone, which means they can get all my passwords. Maybe they can get all my pictures out of it. I don't want my pictures.
And maybe they could just tell you what the closest Chinese restaurant is.
Maybe they could.
2 blocks for free.
I mean, I love your wide-eyed optimism.
I'm
and
just
hope
telling
in
you,
the
I mean,
world.
some
You're
of
just
this-
a farm girl from Nebraska.
Some of this panic is like it's so freaking ridiculous.
Yeah.
Hey, can I move on?
Your opinion.
Can I move on? Or
Well, if you run a business, like for our business to use DeepSeek as opposed to using OpenAI, we would
What would be the
save
difference?
thousands of dollars a month.
You said AI is free.
No, for you it's free, but if you want your business wants to use it, it's thousands and thousands of dollars for each search.
Well, sometimes you can't afford free.
Well, they're like 1/10 of the price.
But maybe sometimes you can't afford free.
Sure,
Maybe they're
right.
1/10 the price for that reason.
right, yeah, you have
They're
to,
doing
you have
something
to look
that's
at why.
bad. In the back end.
Or maybe they're just 1/10 the price.
Maybe they're getting all the security, everybody's social security numbers or anything else like
Well,
that.
you don't
I'm
have
just
to
making the
use
other side of the argument.
My point is you don't have to use it, but for small businesses.
But if one person uses it, then maybe that's the wormhole into everybody
Hey,
else.
you guys, I think,
My phone.
I hate to burst your little.
Yeah, I don't think you know, just like I don't know.
hey, you guys, I think there's going to be a new episode of Murder, She Wrote later tonight. You guys want a nice, cool Ensure? You want a nice crack open some Ensure and enjoy it? Yeah, come on, boomers.
We'll just pass the cost on to you. So for $1,000 a month, you could have
I'm
something.
going to give you a Sosnoff. My wife used to have a buzzword would be, I like mandarin oranges in my salad. That would mean that I was getting too into it with my mother.
Yeah. Hey, let's all watch some Murder, She Wrote. Hey, I got more stories here. Shifting gears to the automotive sector, supplies of new and used vehicles for sale are declining rapidly as consumers flock to stores ahead of potential price increases due to tariffs. This was definitely indicated in yesterday's retail sales report that got dropped. But U.S. vehicle supply is falling because people are panic buying cars, and you can't blame them. Because my other story,
I've panic bought a lot of things like toilet paper and maybe some hand.
no, but if you had
But a $50,000 vehicle.
not a 50,000, but if you had a car that like was on its last legs, you're worried about the cost of repairs. You're like, okay, I have to get a newer car. I'm not saying people
Wait a
are
minute,
just
you
throwing
sound
their
just like Vinny was telling me I have to buy him a new electric bike before the tariffs.
I didn't say like, well, okay, well, anyway. Hey, in other news, though, Tesla's first quarter registrations in California, the largest market for the automaker, fell 15% according to industry data.
Tony disputes that. He says they're up at record highs.
The company's quarterly sales globally fell 13% to its lowest
Dispute it.
in nearly 3 years. The registrations in California
news.
could be a harbinger of dwindling sales to come for the auto
Fake
manufacturer.
news. All their sales are at record highs.
What are you guys
Tony
doing
told
in
me
Tesla? I just want to talk about Tesla as a stock.
Model Y is the best
Sassy
selling vehicle.
boomers.
Best-selling
Sassy
EV
boomers.
vehicle ever.
What is
All their
Tesla?
sales
Oh
are-
my
The world's
God.
All their
largest
sales are
pure
up.
EV maker.
Can't even
Those
keep
are
their
all
used
true.
cars.
Those are all
Can't even
true.
keep their used cars.
I might just spill water on this to electrocute myself today. What's Tesla as a stock doing?
Up about $2, $1.50, $2, $3.
That's all I
It's
needed to
hard
know.
tell.
Thank you.
Almost
Thank you.
$1.5 million.
Hey, in other news though, but this is true, maybe the reason why people are just buying stuff right now, Ford said yesterday in a memo that they're going to have to hike prices if the tariffs persist. The Dearborn, Michigan automaker offered deep discounts across its lineup starting earlier this month that will run through June 2nd. But they said due to economic uncertainty, because so many parts, pieces, things like that, they said they will have to pass those costs on to consumers. Ford.
Say something nice about them, Saz.
I don't have a position in Ford. I can't tell you what's trading for.
$9.40.
Okay. Hey, Rivian.
They do not have solid sales, by the way.
Rivian. Here's another good one. Rivian's first non-Amazon van customer is HelloFresh. The meal kit company has added 70 all-electric Rivian vans to its fleet. What are you doing in Rivian?
No position as of. Hold on, let me check. I think no position as of now.
You don't know.
Doesn't know.
No position.
Okay.
And we can't talk about it. Tom doesn't have it. We don't have it.
Yeah, I don't have it.
Okay. All right.
The world according to Saz.
Temu has pulled back on its online ad spending in the U.S. in the wake of sweeping tariffs. The Chinese online retailer, which is PDD, has fallen swiftly from the top ranks of Apple's App Store. Temu and rival discount retailer Shein had exploded in the U.S., led by a marketing blitz, but now they are pulling back and have to reconsider a lot of things. Shein, remember, was going to have an IPO, going to be a blockbuster IPO here in the U.S., but then they decided to list on the London Stock Exchange, but now I don't even know if that's in peril. We will see what happens, but PDD slashing their ad spending. Let's talk Chinese retail.
I think the Chinese stocks were up big this morning, but let me.
Baba 111 up around $5.
Yeah. Ooh, that's a nice move.
That is a nice move. Baidu up around $2.50 or so, also a decent sized move.
Temu is PDD.
Yeah, PDD trading $94 and change, up around $2 also. PDD's kind of been used to be the highest flyer of the group, and now it's kind of a little bit less of a flyer.
Is more Baba's the high flyer?
Yeah, pretty much.
Sure.
Yep.
Hey, Costco is bumping its dividend by 12%. The wholesale company is boosting its quarterly dividend by double digits. The board bumped the quarterly dividend payout to $1.30 per share, or $5.20 for the year, marking a 12% increase. But it's still a laggard, so the dividend payout ratio is historically smaller than its peers, such as Walmart, Target, or Kroger even.
Costco markets stink, and I'm talking about the option markets.
They do. Their in-store markets are great.
I love Costco.
Their option markets stink. I don't think people buy Costco, honestly, for the dividend. I think it's a growth stock still.
Sure. I just wanted to get into a larger discussion just about Costco as an underlying.
Dividend is small. It's like half a percentage.
And we have a very small Costco position on, but
not too many people buying a $900 or $1,000 stock.
Yeah, $900.
Sure.
Yeah, $75.
Sure. Yeah. I mean, I can afford to shop at Costco. I can't afford the stock.
I can't afford to shop at Costco, to be quite honest. I can't afford to save all that money. I always end up spending way too much there every time I'm there.
You know what's underrated? Costco sushi.
Yeah.
That's a lot of sushi.
I know. Beth's husband, B, loves it. You love it.
I love it.
I just can't get through the size of it.
What do you mean? You can eat it in 2 days. Easy.
Yeah,
It's only 4 rolls.
Yeah, I don't sushi in the next day.
I don't know. You're full of mercury, though.
No, it's not. It's not all fish.
No, I know.
But
what do I want? Like a California roll?
I'm just saying it's a mixture of a bunch of different things.
I only go to Costco for my protein gains.
But they now sell sashimi. But I haven't tried it.
That's even worse. That's
just raw fish. Yeah.
Yeah, but they sell it now.
Hey, something that we can all get excited about wrapping our hot little hands around. McDonald's is teasing when they're bringing back their viral snack wraps. McDonald's U.S. President Joe Erlinger was on Good Morning America back in December 2024, and he said the fan favorite menu item would be making a comeback sometime in 2025. Yesterday, the McDonald's X account tweeted snack wraps 0x14 2025. So it's got to be some month that starts with a 0. So got to be here in the next few months.
Klum?
That is Heidi Klum.
Yeah,
Heidi Klum holding a plethora of snack wraps there. The wrap first hit the McDonald's menu in 2006, and over the next decade it would have several iterations, gaining popularity and fans. I want to see how those macros break down in the snack wrap before I gotta take
I have never had a snack wrap. What is it exactly?
It's just a chicken breast cut.
I don't know,
Chicken,
that looks like a nice
and then
snack
lettuce,
wrap to me.
a very scant amount of shredded cheese, and some sort of sauce, like a.
It was a chicken tender.
Yeah, but kind of like in the parlance of TikTok now.
McDonald's have chicken tenders? They don't.
They had chicken selects at some stores, which were their chicken tenders. I think they got rid of the chicken selects, but I think that they did.
You still do like a isn't it like a chicken nugget?
Again, I do not work for McDonald's, babies. I work here. I did work at McDonald's when I was 15.
Supposedly the McDonald's
University.
It's the global headquarters of McDonald's. Yeah. So yes, they have everything.
Yeah, you could try that place.
Yes. Anyway, the snack wrap was discontinued in 2016. So hopefully fans of it will be satiated shortly. Finally, in another collab in the food space, Pringles is partnering with Miller Lite for beer can chicken and grilled beer brat flavored chips. The two items are staples of the summer, and now summer can just be.
You like chicken?
Yeah, summer can just be pop a top away. You don't want beer can.
You like
chicken
brats and beer?
Pringles?
Sounds like this is right up your alley.
No.
I don't hate this.
I'd love to shove a beer up your ass.
I don't.
Wow. Omaha. Where is Beth when we need her?
Right here, Omaha.
Okay. Wow. So
yes.
Yeah, but you never had like a roasted chicken crisps.
No, but I've never
in
made,
the UK.
I've actually never made. I've had plenty of crisps in the UK.
Yeah.
But I've never made beer can chicken.
You never made beer can chicken?
Come on, yeah, you
never
have.
Oh, it's good in the day. Now they make like little stands for it, but really you could just use a beer can. And my dad makes it. Yeah, it's good. Hey, filing today for my viral video of the day. I know it is not technically Friday, but it's synthetically Friday. And I was like, I could show a cat video, or I could show some food to these traders, although your behavior today does not really elicit a positive video.
You're showing food.
I know, I'm going to show it.
Not exactly.
You used to make it for us.
Yeah, but...
Used to be show and tell.
Yes, but the greatest lesson I ever learned, this is a true story, it was from a woman on TikTok who said, stop doing wifey shit for men who deserve raviolis in a can. And that changed my life. It really, stop doing
I can
wifey
understand
shit.
that. That's why we can't give you any more power.
For men who deserve raviolis in a can.
Never had ravioli from a can. I could.
Right. So I'm just saying.
Or ravioli in a can is great. I loved it as a kid.
Really?
Oh yeah.
Anyway.
Never ate it in my entire life. It's
great.
Anyway.
Oof.
But if I'm gonna have a wifey lifestyle, then I will do wifey stuff, but not for you guys. Anyway, I'd never heard of these. This looks good. Weather looks to be sort of decent for this Easter weekend. Maybe you and your family can throw these on the grill. They're called pig shots. Pig shots. Watch this.
Like it on the surface. Don't know what it
These
is.
have a dumb name. This is how you make the best barbecue appetizer ever invented. Start by slicing kielbasa into 1-inch coins. Then craft them into mini shot glasses with a half slice of thick cut bacon and a toothpick. Make the filling by combining cream cheese, shredded Colby Jack, and barbecue rub. Use a plastic bag to pump in the love. Top with a pickled jalapeno, then onto the smoker or easy bake oven at 325 for about 45 minutes. When the bacon is crispy, remove and drizzle with hot honey. Appetizers are awesome. Even though these have a dumb name,
There's
this
you
is
go,
how you
little
make the best
shot
barbecue
there.
appetizer.
You don't like kielbasa?
Use a Polish sausage or a different.
I don't mind lots of different kinds of sausage, but kielbasa.
Yeah, you don't.
Kielbasa doesn't do anything for me.
Too big for you to handle?
I just don't like it.
Yeah.
No, I'm not a big fan.
How about you? You like a good kielbasa?
I need to get out of here. Bat, what's coming up next?
We're going to take a quick 90-second, but you prefer Italian sausage?
Happy Easter. He is risen.
We'll be back in 90 seconds. We got more Tasty Live after this.
You need
Bourbon's
Jesus.
End.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
We built Tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade.
Tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tastytrade's low commissions. Try it out and leave us a review.
Tomas, we are back, my friend. You know what that means. Time for a little bit of confirm and send. But before we do, we usually go to the market. But I want to give you this public service announcement from my Taiwanese source, Dave. He said the pig shots, they're good, but salty AF, maybe probably from the barbecue seasoning that you put in the middle of there. I could see that. He said, we're trying once with a group and then forgetting they even exist. So there you go on the pig shots.
Yeah, it didn't do it for me.
You were right. You were right. Even the S&P's doing it for us, up 31 and change, about 30 handles off of their highs, about 30 handles off of their lows. Let's call them mid-price, up 30. We rallied yesterday into the close, too, pretty nicely, too, gaining about 50 to 70 handles on the S&P's off of their lows from yesterday, really in the last 15 minutes or so. NASDAQ up 160. That's your leader in the clubhouse. Russell up 7. And the Dow is down 550 and change. On the breaking earnings of UNH, trading 466. Who has an iron fly down around the 460 level left over? There was a full loss, full disclosure, full loss.
So funny, I did this trade like 2 months ago. I got stuck on that sell-off in there. I had the 460. I rolled the calls all the way, call side down to iron fly at 460.
Yeah, the stock was probably trading somewhere in the 500 handle plus when you had it on. You kept rolling down the calls. Your puts were probably 460.
No, the stock got down to under 460.
Right, but you probably put it on when the stock was around.
The stock was over 500.
That's what I'm saying. So your calls were out of the money. Your puts were at a standard deviation down around 460, and you kept rolling down the untested side until you got to an iron fly. Can't go any further. Classic defensive move.
Left it on for the last 2 months. I'm at max loss.
No chance that this was ever going to come in.
$20 wide, max loss. Last night when I said they have earnings, I go, well, I need the stock down 120. And the stock's freaking down 120.
Unbelievable. Oh, that's why they call you the luck box.
I want it to open right now so I can cover.
I'm sure you do. Bitcoin hanging out at 85,000, catching a little bit of a bid here.
It's one of those. You get one of those a year, by the way.
Oh, I know, and you used yours early. Oil up $1, gold down $7 for the first time in history. Silver down 4. So I got a lot of feedback from people saying, we were talking about gold and started with me with my gold chains and my gold bracelets. It ended with you saying, and not too many people can say this. Well, I remember this one time I bought a gold mine in Mali. So got a lot of good feedback from that. Thought it was pretty funny. But silver down 47 cents, down $1.40. That's a decent sized move to the downside. Nat gas down about a penny and change. And what's the euro doing? Euro's down small, which means the dollar will be up small. I think it's pretty much unchanged. That's all I got.
Scott and I were going to go to Mali.
You were going to go to Mali just like Apple went to get their phones out of Mali. You were going to go there and try to get your gold out of the ground. And
we were going to go there just to check it out and see what it was like. But we found that getting to Mali wasn't that easy, and it really was not that easy.
Security detail,
and then you needed a security detail so that you didn't get killed, and then you needed a lot more than that. And so we never made it to Mali.
And you never made a dime.
No, we lost everything.
Yeah.
But we ended up, our property was right outside of Timbuktu. I didn't even know Timbuktu was a real place. So our property was right outside of Timbuktu. We had like 500 acres, I think, or 500 square miles. I don't remember. It was the midnight. It was when gold was crashing. And
mid-50s. Gold was in the mid-50s, wasn't it?
No, gold was just under 270.
Oh, I thought it was in the mid-50s. I apologize.
No,
they said
just under 270. And but we figured out, the funniest part was we figured out that we could have just bought gold stocks in Canada.
The physical.
Could have bought gold stocks in Canada for less than we were spending, to buy a mine in Mali.
Right.
But it took us a long time to figure that out. So I want to send Scott to Mali then.
He was expendable.
We sent another one of our friends.
No.
Yeah.
I didn't know this.
Uh-huh.
What was his first name?
Can't tell you.
He came back?
He did come back.
Did he get there?
Yeah.
Did he get to the destination outside Timbuktu?
Yes. He was there for 3 weeks.
Wow.
Yeah, he didn't get killed or anything like that. He found it was a very interesting experience. But
did he say get out right now while you can?
No. He was just like, it's too corrupt. Everything was very corrupt. But you live and learn.
So you had the paper that said you owned it, but you really didn't own it.
We owned it. There was no ownership. It was you leased a
Yeah, I get it, like an oil leasing
mineral
thing.
rights.
They did that whole thing with oil. I got involved in that too, which was a disaster.
It was really fascinating. The whole experience was fascinating. It was a good learning experience. Would never do it again. I got $3.40 worth of gold for in a little container. God knows how much that costs. Anyway, a little confirm and send. But at least I know where Mali is on the map now. At least I know Timbuktu is a real city. Thursday, April 17th. The hotel that these guys all stayed at every time they went over there in, I forgot the main city in Mali. Off the top of my head right now. I just don't remember. But that hotel, there was a terrorist attack on there like about 3 or 4 years ago. And everybody was like basically killed. Everybody staying at the hotel, all the business people, everything. It was like
not worth it.
It was like one main hotel.
Bamako?
Yeah.
Bamako?
Yeah.
Capital of Mali. That's
yeah. And I think it was like a Hilton or a Hyatt or something. And there was a terrorist attack there. It was almost like
that's not where they made that movie, right?
No, not Hotel Mumbai. It was a different one. That was a
Showing
scary
my ignorance here for sure.
By the way, that was a scary freaking movie.
Oh yeah.
Hotel Mumbai. That was scary.
Yeah.
Great movie though. All right, let's do it. My wife's like, should we watch Hotel Mumbai before we should know what it was about? Should we watch Hotel Mumbai before we go to India? I go, no. Let's pass on that one. Thursday, April 17th. I hear people, these are emails that came into us from viewers all over the world. We just picked about 5 or 6 of them. I hear people talking about the bonds and the recent sell-off. Some say it's concerning, and this may have influenced the administration in their tariff policy pivot. Can you explain why it's concerning or why it requires our attention?
Well, I mean, listen, we used to always say that the bond market is going to tell the Fed and everything else what to do. Well, this may have changed over the last 5 months, but the bond market dictates what's going to go on with policy. Bonds go up, rates are going to go lower. It ties the Fed's hands. If bonds go lower, rates are going to go higher. It ties the Fed's hands. That's how it's going to be.
Anytime you see a 10% rise, a 10% drop in bond prices and a corresponding about 10% rise in interest rates, it is going to rattle the markets. And that's what happened over the course of this last move. At the beginning of the sell-off, bonds actually went significantly higher. It was a flight to quality. It was pretty normal tape action. But something changed in the middle of this, and there was either a concern about confidence or somebody,
rumor of a hedge fund again. I mean,
somebody forced to
the
sell.
good thing is you'll never know.
Some central bank selling. We really don't know. But cause for concern is a 10% move in the bond market in a week's period of time, because the actual bond market expected move over the course of the year isn't much more than 10 or 12%.
Right.
So in a 1 week's period of time, it's almost like a crash.
Yep.
And of course, that's going to scare the children, because the bond market is just a tad bit smaller than the stock market. We're talking probably between OTC markets and listed markets, I don't know, $50, $70 trillion. So, and
it's a debt instrument. Completely.
I understand, but when you lose, $5 or $7 trillion in market cap in principle in the bond market, that is cause for concern. And that's exactly what happened here. So that's why it's concerning. That's why it requires our attention as traders, and also to understand that. Let's go next slide. Since the long-term VIX average is about 18, what are the potential downsides of buying a /VXM below 18 and then just selling it every time it goes above 18?
Sounds logical.
By the way, that's a micro VIX future.
Right. Sounds logical. It can stay below 18 for a lot longer than you'll be able to hold on to it. And plus the drag of the product is going to hurt you too. VXM is marked to market each month to that month's future and then resets. So you're going to have to do it each month. It would be a very difficult trade in my opinion.
The reason,
I hate it.
Yes, in the simplest of terms, Every time the VIX went below 18, you should buy it and wait till it goes back above 18, then you can sell it.
If it was a stock, it would sound great.
If it was a stock, you could do that for the rest of your life. The problem is this is a future, and the future includes the cost to carry in that future price. So what happens is every single month, it's expensive to hold that. So if you hold that position, like let's say the VIX doesn't go over 18 for like 6 months, you're going to be out like 6 points.
Yeah, it's
trade.
about it would be
hundreds
in the small.
The cost to
50,000.
carry this trade, because everybody would do it, just exactly what you wrote. Everybody would do it,
right?
But the cost to carry that position, because nobody would take the other side, obviously. So in order to get people to take the other side, they build in the cost to carry. The cost to carry that position offsets that kind of free shot to the upside.
Right.
So it's very risky trade. Let's go next slide. Well, I shouldn't say it's about 50-50. So, all right, Tony, we get a lot of these emails. What do you think of the 1 by 1 by 2 setup in the SPX?
I mean,
you could explain it first too.
Sure. 1 by 1 by 2, typically on the put side, is buying one. That's the first one. So you're buying a put closer to at the money, selling another one. That's just a put vertical spread. You're long a put vertical spread, and financing that long put vertical spread, you're selling 2 units, 2 out of the money puts for net credit on the overall thing. The thing, the thought process is, first of all, it has a 80 to 90%, depending on where you put your strikes, probability of success. So that's definitive. That's what it is when you put that trade on. And the hope is that volatility kind of goes nowhere. Maybe it goes up a little bit, maybe it goes down a little bit, stays inside the expected move. But most importantly, the market doesn't make a swift move lower. It can make a slow move lower. That out of the money options, those 2 units that you're short, don't really expand. Your put spread expands because it's big and wide and it's nirvana. It lands right by your short strike and you make buku cash. The worst thing about this trade is a swift move lower coupled with, which typically happens, volatility expansion. Inside a normal range, you'd be okay. When it goes outside the range, like what we had last week when volatility goes from 20 to 40, doubles, those 2 units, and that's what we always talk about, units, size kills. Those 2 units grow teeth, they grow teeth big. This type of trade, this type of setup, if you don't have a $100,000, $75,000 to $100,000 in your account, I wouldn't be putting on this trade at this level, 1 by 1 by 2. Other than that, this trade is too big for anybody. In SPX, I should say. Not
So
SPY.
this is a trade that I'm not exactly sure who came up with this trade, but it's been around. Variations of it have been around for decades. But on a retail level, I don't like this trade. I'll tell you why. Because if you want to do a ratio spread, I like 1 by 2 or 1 by 1.
Because then you only have one unit.
1 by 1 by 1. But when you start getting into extra units like these 2 units, the biggest customer losses that we've seen in the last 2 years, August 5th, 2024, the biggest customer losses were all on this strategy, 1 by 1 by 2. There's a reason we never talk about it on this network. There's a reason we never, ever put this trade on ourselves. And there's a reason we never talk about it, because the biggest customer losses we saw in 2024 were all from this trade. And then in 2025,
typically in accounts that were too small for the trade.
Whatever. But in 2025, even for big accounts, in 2025, the biggest losses we've seen so far for customer accounts were all from this trade again. So I mean, I get it. It's just those naked 2 options as opposed to 1 naked option. I don't mind a regular ratio spread, but the losses have been too great on the extra unit. And it's not even because besides we haven't really stayed down there to get the max. Yeah, I'm just gonna. I don't like.
It's the buying power change that happens. So when people put this on, they're putting it on with X buying power that they need, but that buying power can double or triple when volatility and everything else expands here, and they can't afford to even hold the position or do anything against it. The problem here is size. The strategy is a 90% pop. It is what it is.
The 2 biggest losses that we've had in the last 2 years, 2024 and 2025,
You make a good point.
Are both in this strategy. I don't like it. I'd stay away from it. So that's what I think of it. Let's go next slide. It's all about units. I don't like it.
All about units.
One thing I admire about Tasty is the willingness to show when something doesn't work. I remember you mentioning how selling an Iron Condor or Strangles into earnings, especially on tech names like Tesla, just didn't show a consistent edge. Or on the study on selling straddles 0DT 30 minutes before the close. Again, no clear edge, which leads me to my real question. If the short side doesn't offer an edge in those specific setups, does that mean the long side might?
No. Let's just put it as the short side, no definitive edge, then the long side is going to be no definitive edge. So let's just assume for a second we can argue that there's no edge on either side. So why do one over the other? It's our opinion, and from our research, you're going to get a lot more opportunities to manage a winner on the short side than you ever will on the long side. Matter of fact, we feel that on the long side, you'll actually lose more money quicker. Then you won't be able to hold on to the trade for when it does finally work than if you were short the options. That's our thinking. So you can do whatever you want.
I'm okay with that answer. Is that, it's not, it really just boils down to over time, could you probably escape? Sure. And could you probably get away with this buying in some of those setups where we really clearly don't have any edge? And the answer is of course. However, is that a best use of your resources? Is that a best use of your time? Is that really a best use of all the research that we've done? And I'm going to say no. So if the short side doesn't offer any kind of edge, mechanical edge, because there's no real pricing edge. If it doesn't offer any mechanical edge, is the long side the way to go? And the answer is no, not at all. Nope. Sometimes it's just better to stay out of the trade. Let's go next slide. Is it worthwhile to manage $3 wide spreads? For example, does it make sense to sell the other side if you only begin with one side on a narrow spread?
Yeah, I get it. $3 wide spread. Let's say you're collecting 1/3 the width of strikes. You're collecting $1 on this. You're risking $2 to make $1. You got a 66% pop. That's what the numbers work out to be between friends. You also have probably a 90% chance of being touched on your short strike. So let's just say you have a 90% chance of this thing going for $2 from $1. Selling the other side, you could pick up a couple of pennies. And by pennies on a $1 wide credit that you got, I know $3 wide spread, maybe picking up 20, 30, 40 cents. Makes sense when you're thinking about it in dollars and cents from the original credit you get. If you're going to pick up another 40% or 30% of your original credit, yeah, maybe selling that other side out of the money makes a little bit of sense to you. Again, you can have risk to the upside where you had no risk before. Depending on the amount of time, if we were in that 3-week time frame, I would say sure, it makes sense. If we were in that 3-day time frame or week time frame, I would say no, it doesn't make sense.
Is it worthwhile for $3 wide spreads?
Won't cost you any buying power. That's a fact.
Yeah, is it worthwhile? I mean, if you want to experiment with it, sure. My guess
Very
is
hard to manage tight spreads.
My guess is on a $3 wide, relatively tight, spread, we're probably, if we did it as both sides to start with, fine. If we didn't, we're probably not going to manage it. Like we're probably not going to
have a directional bias.
Yeah, we're probably not going to add a call side to a put side or add a put side to a call side. We're not going to do it. But if you wanted to try it out, you certainly could.
Mm-hmm.
It's not.
I would ask you to ask yourself the question: when you put that spread on, if you were going to trade it naked,
would you open it?
What's that?
Would you open?
Would you open it?
Let's go next slide. And the last one. I understand the reasoning for not allowing a naked position to run to expiration. But what's the downside with the spread? I know my max loss. Why not let it run to the end?
Yeah, I mean, you talked about the 112 just a moment ago. This could possibly be the next culprit, meaning that you have options that are expiring, forget about in the money or anything else like that, out of the money, and the market moves exponentially on expiration, like in Netflix, that we're going to have a great example of today. It expires, the options expire today. Your option could be well out of the money. Then Netflix makes a big move, and you have a defined risk spread. What could happen? You can get assigned on one side and not realize it or not know it or not be diligent enough to call and exercise your own side that you had on there, and you could be left with a position on Monday that you don't want, and it's not going to be advantageous for you. Close it. That's why we have zero commission on closing trades.
Yeah.
Or just close the naked option for a penny, 2 or 3, and keep the long option if that's what you want to do.
I understand the reasoning for not allowing a naked position to run expiration. Okay, good. But what about what's the downside with the spread?
Because you could have a naked position, even though you have a defined risk position.
I know my max loss. Why not let it run to the end? You certainly could. like today in UNH, I let my position run to the end. You can,
yeah, but you will get out of that.
No, I understand, but I'm saying you could let it run to the end. I mean, there's exercise risk. You could be spread in between. You could be straddled in the middle of the position, between different strikes and stuff like that. But if it's a trade that's moved against you and you want to let it run, sure, go ahead. We'll close some, we'll roll some, and some will let it run. Like I said, I let the UNH position run and it paid off. Who knows? So, yeah, sure, you can try. I have no issue.
But you wouldn't let it go past today.
No, I wouldn't let it go to the end of the day. I mean, I'd cover it right before the end of the day if I was on the dance floor.
What if you weren't on the dance floor?
If I wasn't on the dance floor?
Yeah, what if you weren't on the dance floor? A stock like UNH has moved $100. What if they come out
after
earnings?
If it had earnings, I would take it off. But if it didn't have earnings?
No, it had earnings already. It's perfect to where it is. Let's just say, for argument's sake, that it rallies a little bit and both sides of your spreads are out of the money. Would you look to close that spread? Maybe they come out with some news and say, you know what, it was horrible, and the stock goes down another $100.
It's possible, but I doubt it. It depends. If I could buy it back for a couple pennies, sure, I'll buy it back.
Thank you. We'll take a quick 90-second break and come back. We got more Tasty Live after this. What we got coming up next, Adnov? Trades and the research team. We'll be back in 90 seconds with Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Well, we got Nova Bonetta today. She's out on a secret mission. Is this correct?
She's on a secret mission in New York City. But yeah, we're doing a funny little promotion, and we're going to see how it goes. And there's an outside chance, very small chance, she gets arrested. Yeah.
So you guys sent me to New York to deface a national treasure, and I did not get arrested. No, in partnership with a testicular cancer charity, we mounted cherries onto the back of the charging bull on Wall Street, and it was awesome. We did a test run last night at midnight. People went nuts for this. Some guy yelled at us, and this other guy was like, oh, he's just cranky. But it's all for a good cause. We're out there for a couple of hours. It took months of planning. It takes two people to hang them because that bull's ass is pretty tall. So that's why I'm in New York.
Those cherries got some good hang to them.
Mm-hmm.
Yeah.
Friday might be interesting. I'm not allowed to work on Friday. I have committed to my family because the Golden Prince is getting married.
I know. Congratulations.
So I have committed that I have to do family stuff, like take pictures.
You get.
I'll take things that Tom excels at for 100, please.
I'm just going to be a good,
attentive husband and father to the groom.
I'm never a good attentive husband. What I'm probably best at is
dancing. I watched you at the last wedding. You really excel at dancing.
I excel at picking up the tab.
My big question for you, and Slappy as he's gotten older.
What do you want to know about Steve?
Do you think after dinner, it was his 60th birthday?
No. Don't do it.
Beth knows Tony better than I know Steve.
Do you think he...
I have no idea what you're talking about, and I am just going to move on from this conversation. I'm with Beth. No.
That was like Minority Report, like a pre-crime Omaha. Like she knew the Omaha was coming. Like she got the little ball that came down and was like, okay, Tony's going to go there.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade, make your move.
Kitty.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with trades from the research team. Who is our first researcher? That's right. He's gonna piss Tom off more than a little Mr. Fresh and Clean. Gad, what's up? Oh, you my friend.
So much like Sharp Dressed Man Better.
See, I told you.
What up, Gad?
It's okay. I'm good. What's up?
What, did you say it's okay? You're Gad?
I'm good. Yeah.
Oh, you're good.
Good. He's good.
Please, it's okay. I'm Gad.
I like it's okay. I'm Gad.
Yeah.
I mean, I like that better. You should do that from now on. That's right. When somebody asks you how you doing, say, I'm okay. I'm Gad.
Yeah.
I don't like many follow-up questions, because he'll be asking, "Oh, what's going wrong? What's up? What's up?" You know, because it's okay. It's not yes or no. It's maybe I'm okay or good.
Yep. See that?
Yeah.
What do you got for us today?
So today I got SMH.
SMH. Ooh.
Yeah.
Okay.
I don't have an SMH position on right now. I've been carrying an SMH position pretty much all last year. This year, I've been quiet in there.
It's had an IV rank in the teens. It's now got an IV rank in the 50s.
Exactly. Yeah.
Yeah, maybe that's why I didn't have it on. Plus, it's next to that. It's impossible to trade. I mean, it's liquid enough.
It's liquid enough. Yeah. And some trade is worth it trying sometime.
So
I haven't done it.
They got for us here a little Iron Condor action style. Now $5 was wide.
$5 wide.
Yeah.
You got 176.71.
Yeah, 176, 171 for put side, 215, 220 for call side.
176, 171, and 215.
220 for call side. Yeah.
1/3 the width of the strikes.
Yeah, one with yeah.
Yeah, what's the stock doing this morning? It's
up.
SMH looks like it's up about $1.50, $2.
Yeah, up to $2.
All right. So this thing should trade. What do you think? You think you have $1.95?
Yeah,
It's very possible.
Do you think it's possible or impossible?
No, it's possible.
Yeah.
Yeah, I got to see where everything opens, but sure.
Okay.
I mean, you already got a little bit of skewed this a little bit to the upside.
Yes. Yeah. Exactly. Yeah.
Okay. Give it a shot. We'll see.
Good.
Beautiful.
Good. Thank you.
Thank you, sir.
Nice job out of you. Who's our next researcher? This an oxymoron? Personality. Kai.
What's up? It's Kai.
I am Kai.
Yeah, I'm Kai. Right.
That's right. How you doing?
I'm good. I'm Kai.
There you go.
Yeah.
Thanks for playing along. I appreciate it.
Yeah, no, make it right. Yeah.
I am Kai.
I am Kai. What you got for us today?
Shopify Strangle. May, because earnings is right before expiration. So
we have a Shopify Strangle on. So far, no bueno. Shopify Strangle. Oof.
It still has one of the highest IVR.
It does, but
very rich premium.
Like I said, no bueno yet. We're in the 75.95. Where's the stock?
Oh, okay.
What do you want to do?
94 right now.
Yes.
Yeah, we have the 75.95. You want to do the 65?
84, yeah, 84 right now.
You want to do the 65?
65, 105. So roughly 15, 16 delta. Slightly small delta on the put side.
Saz, what do you think? Ivy rank us.
I mean, I have the other one on. I need to make some money back. What price do you think you're going to get filled at?
Mine is 65, 105. But you probably can just, you're not gonna widen your strikes.
I didn't widen the strikes because I'm inside of you right now.
Mm-hmm.
Like I said, I have the 75.95. I'll put this on. This is the
May.
Yeah.
You have May, okay.
Yeah. Let's put this on. So this is the 65.105.
Yeah, so 16 delta.
All right, let's check it out.
Beautiful.
Let's get it on.
Very nice.
Let's get some trades on today. We got to get some stuff going on.
Cool.
Look at Saznoff. Let's get it on.
Something like a recipe. Bits and pieces.
Hey, Dr. Data.
Hey.
How you doing today, Data?
Doing well. Double D himself.
Double D himself, Dr. Data.
Hey.
I'm Double D. I'm doing good.
I got jokes today.
They got
okay, so today I'm looking at HYG. This is the high yield. You think, why is he trading HYG? So,
Why? Well, let me ask a question. Why would I trade HYG?
Well, I'm glad you asked that way. Thank you. You just set me up perfectly. So I looked up.
Does this trade at all?
Yes, it does. So the CBOE just posted like this thing on products. And so I looked in this is in the top ETF trades of 2024. SPY number 1, Qs number 2, and then you have IWM. But then also in the top 10 you have EEM, FXI, TQQQ, HYG, which is 2% of all ETF trades is in HYG. Look at the volumes on here. Look at the open interest.
Open
on here. Look at the volumes. There's a lot.
In May or June here?
I'm doing June.
You're in June, and they've got good open interest in June?
Really good, isn't there?
Let's take a look. Yeah. Well, you're right. I mean,
I was surprised.
90,000, 188,000, 200,000. Okay.
So this wasn't even in my watch list until
Which one are you selling?
I was doing the 75, and it looks like there's quite a bit of.
What price?
I'm kind of fishing here. I put here 90. That's not realistic, but I'm just going to price it high and then kind of see where the market settles on the open. Probably get 80, something like that. But if you look at it, if you get 80, right? 80 over 1,300, that's 6%. 6% real return on capital is possible. You multiply that times 64 into 365, and that's 35% annualized. So, am I going to get that? Unrealistic, but a fraction of that. So, the return on capital is okay.
You threw some math in there.
I did.
I mean, I don't like.
I haven't traded this thing in like 2 or 3 years.
I haven't either. Yeah.
I haven't either. I would love to see the markets on opening and see if they get any tighter. I haven't watched it.
Crappy right
so
now.
I can't. Yeah, they're very bad right now.
Yeah, they're really bad right now.
So I can't comment on it. But I'm intrigued by the math. So okay.
I put the order in.
Excellent.
Beautiful.
Thanks,
Good
guys.
job out of you. Who is our last researcher? What's up, young lady? How are you?
Great. Thanks for bringing the energy while Tom's giving stank face. I appreciate that.
Oh my God!
You're welcome, Julia. You're welcome. You're welcome.
I know. Someone's got to bring us up on a Thursday.
Today.
I'm just saying.
You don't warrant one.
Oh, that's okay. What are you going to do?
Can't do much, Julia.
Okay. Why am I even trying? Okay, let's do an Iron Condor so Tom doesn't buy the wings. There we go. So today I'm looking at the Qs, pretty juiced premium. I assume you have a bunch of positions on in here, but I was actually looking at the 29 days. So not as mechanical as ideal, but I didn't want to get into the 64 days yet. So this, it's moving a bit this morning. It was up a little bit more when I started looking at this maybe like 30 minutes ago, but now it's up about $3 and change. So this is adjusted for that move this morning. So I'm looking at the 405, 485 short strikes going $10 wide. So this is, more of a Tom suited trade, a bigger position, at least for me. So 748 in buying power for 252 in credit. The top is like 64%. But I felt like the premiums were pretty juiced in the 29-day contracts. It seems like there was some opportunity there. I also felt kind of more comfortable making a shorter term directional assumption around this underlying versus a longer term one. So that was the kind of justification for kind of sticking with the 29 days instead of going further out.
I don't hate it. I mean, I have a tighter one on right now.
A tighter one on?
I have a tighter.
Not from entry.
No, I have a tighter strangle on. 420,
tighter strangle on.
465.
Okay, that makes a little more sense. Yeah.
Yeah, 420, 465.
I wanted to say around the expected move on this one. I think it's going to wind up a little bit tighter depending on where we open. But I did want to say around the expected move, say defined risk especially like 29 days, looking to manage this. Yeah, probably pretty aggressively. But yeah, let's see where we wind up. That was my rationale.
All right.
Sounds logical.
All right. I'm gonna do exactly this. I'm gonna widen the strikes. I'm going to buy back my strangle. I'm going to widen the strikes. I'm going to add contracts.
To the 29 days. Wow.
Yeah,
can't do any better than that.
I'm not going to. 29 days keeps me in the maze. I won't roll to June till a week from tomorrow.
Yeah, I'm not going to sell past the close on that one.
Yeah.
Hell yeah.
yourself out,
All
she
right.
said.
Did she say knock yourself out? I didn't hear her say that.
She did. She said knock yourself out.
I didn't hear that. But I'm going to change. What strikes did she put up here? She put up 485, 405.
45, 405 short strikes, and then $10 wide. Yeah, so 252 in credit, and then 748 in buying power. The dyslexia is strong today. That's going to come in real handy.
Yeah, I think it's the 485, 400.
Okie dokie.
Okay.
Okie dokie, artichoke. There you go.
Me and my little artichoke are going to take a quick 90-second break and come back. We got the opening bell next. Thanks, Julia.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like, Tastylive plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions, and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tastylive has definitely changed my life financially, because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
I'd started to disrupt my trading career like really early on, probably, 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing. And Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with the opening bell here in just about 5.5 minutes. Even the S&Ps have been all over the place. They've been up in the teens. They've been up around 35 or so. That's about as high as I've seen them. They're up 31 right now. NASDAQ up 152. Russell up around 9, and the Dow down 400. Sounds like a lot. It's actually $300, well, $200 and change off of its lows, Sadnov, because UNH had, well, I guess bad earnings if the stock is $100 lower than where it is. Although it was $30 lower than this, Sadnov, right at your sweet spot of 460.
It just moved off my sweet spot.
It's okay. You're going to give it some time, or are you going to let it ferment, or are you going to get out right away like a sissy Mary?
I don't know.
Don't know. Good.
Let's
I
see
love a
what's
man
going
with a plan. Bitcoin 84.7. Oil up 94 cents to 62.76. Gold down $9.20. Silver's a big mover to the downside on the metals, down almost 50 cents, 49.5 cents. I guess you look at platinum too. Tom says not to trade. It does seem to be moving the same as gold, although it's not as high as gold, more like a silver, I guess. Net gas down at almost 2 cents, 1.5 cents. That's a 0.5% move. Sadnov, what are you seeing on your radar here for expiration Thursday? Highs on the opening?
Somebody just sent me the Borowitz report. You know the Borowitz report?
So funny. A satire on just about everything.
Harvard to award Trump the honorary doctorate for making its approval rating soar.
That's beautiful. That's beautiful. They were beautiful on both sides.
He is so funny.
Uh-huh.
That's good.
Yeah.
That is great.
Here's the Babylon Bee. Can I see one, show you one, give you another one? You know what the Babylon Bee is, right? Kind of satire, same kind of thing.
Yeah, but I don't follow that one.
Yeah. On X, the Chicago mayor warns that if the local Walmart locations close, people will have fewer places to shoplift.
Oof.
See? That's almost like the hockey coach telling my son, if you want to score goals, you have to be on offense.
That's not totally true.
No, of course you could. If you want to score more goals, I guess you have to be on offense. The way I say. Anyway, it's just funny. I mean, nobody obvious. Sure.
Yeah, if you want to, yeah.
Mm-hmm. Yep.
If you want to go to heaven, you got to raise the little hell.
That's a song. Yeah.
Since we're going out with just,
of course.
I'm ready. Let's get this.
Well, you still got 3 minutes to go, Sadnov. You still got 3 minutes to go. There was one other earnings play
Taiwan
there, also
Semiconductor.
TSM, Sadnov, which you did trade. You didn't trade UNH. You did trade TSM. I believe you sold some puts in there. It's up around $4.50.
I sold the 140 puts that expire today.
Bueno.
That's the best trade we're going to make today. Because that one, I have a penny bid in. I might have to pay 2 cents to buy them back.
Yeah, you might throw it out there.
And we're short the May 125, 170 Strangle at 333. That could be good. It could come in $1. Could.
Yeah.
And the May trades have not come in much.
No, they haven't. And we talked about that. Maybe trying to stay more directional and inside the.
So let's see if Taiwan Semiconductor comes in. I'm serious. I'm thinking about how to trade Netflix because the May trades are just not coming in.
You're right.
So I'm thinking if I'm going to trade Netflix, I'm either going to have to go out to June and just go super wide in June, or
expected move is $58
in Netflix, or go to April and just close your eyes.
Or go to April and close. Well, you got the April 8 days you can use. That has almost a $90
you got to do the 1 day.
Move.
You got to do the 1 day, but then you can run into a UNH problem.
There won't be any 1 day.
Well, there'll be today. They'll be the ones that expire today.
Oh, okay, so you're gonna trade the 0 day options in
Netflix, yeah.
And go into expiration and have that expiration risk from 3 o'clock to 3:45.
That's all you can do.
Or you can go to the 8 days and eliminate that.
Well, you're not eliminating.
You would be eliminating.
Which do you have less risk on? I think you have less risk if you do the 0 day than if you do the 8 day. Because the 0 day,
I couldn't disagree with you more.
Okay, that's why that's why this is America. You can trade whatever you want. You can trade whatever you want.
Is this going to be how it's going to be all day?
I'm just telling you, you can trade whatever you want. I like the 0 day. I don't have to defend it. I like the 0 day. It's a better trade for me. Okay. I don't want to have an open position coming in next week if I don't have to.
You may trading the 0 day.
I may, but I may not.
You may, but you may not.
Listen, let's say the expected move is $50, right?
Mm-hmm.
And let's say you get a $75 move, but I go 2 times the expected move.
Mm-hmm.
So I'm $100 away.
Mm-hmm.
If it goes $75, if I do the 1 week options, that's a big loser. If I do the daily options, that's a winner.
Netflix, $1,000 stock. Let's just assume that you're going to be spread. I know big mocker like you doesn't have to be.
I'm not going to do spread.
Big mocker like you doesn't have to be
mocker
spread,
like me.
But our audience might have to be spread. You're going to tell them to do the 0 day?
No, I'm not going to tell them to do anything. I don't tell anybody to do anything.
Okay. You know what? I'm done with you. Even the S&Ps, I don't know what bug crawled up your arse today, but it's there and it's living. Even the S&Ps for expiration are up 23 handles. SPX looks like it's up 20-ish or so, flirting with 5,300, 52.95 right now. NASDAQ up 95, not up as much as before. Russell up 7, and the Dow back down.
I'm going to give you a perfect example here. Taiwan Semiconductor, inside the expected move, may strangle up. Not down, up.
Yeah, $5.
May strangle is bid higher than you could sell it for in the close yesterday. That's why, Mr. Batista, that is exactly why you
has nothing to do with the weekly options.
That's why you can't trade the monthlies. That's all my point is.
The monthlies have not been advantageous for you.
The dailies gone, they're worthless. Covered them already. 3 cents. They're off the board.
Yes. The problem being Netflix has earnings after the market closes, and anybody could be left with a position on a larger than expected move in Netflix, which it has done in the past. Netflix has been one of your worst performers because of earnings in the past. Is that not true?
Not true.
If we look at the 8-day options, if Sadnov would have been smart enough to trade those yesterday, you'll see the puts are all down significantly, $3, $4, and $5, and the calls are all up $2 and $3 and $1. It would have been an advantageous trade. Oh my God.
Lucky thing I'm not listening.
Did she say no or something last night? What happened?
Lucky thing I'm not listening to.
I
do not like the way the premium.
Underwear too tight today? Oh, never mind. You don't wear any. Forget about that. I can't be.
I do not like the way these options are opening. They're very uninteresting.
It's like the opening is going to be the high on the opening side. I don't know if somebody was trying to get you to say that, but you did not say it. Volatility in by 55 cents. Enough trading just under 27. Volatility exploded yesterday, flirted with 28, closed just under it.
Very, very surprised by this Taiwan Semiconductor position not coming in, not even a freaking penny.
Not happy.
Not happy to be dead.
Not going to pay a lot for this muffler.
I am not going to pay a lot for this muffler. SMH, Taiwan Semiconductor, I closed my position.
335.
Yep.
What'd you sell it for?
Right around there, I think, I want to say.
Which one? What strikes the 125, 170?
I don't think you're gonna be able to figure it out because it's a bunch of different trades.
Some of the 170s, yeah.
Net, the best trade I made in there was selling the daily puts. But yeah, it's a tough one.
Agreed. Yeah, probably not. Yeah, it's a scratch. If a scratch.
Yeah, it's if.
Probably would have been better closing it yesterday for the amount of risk.
That's what I said.
Yeah, agreed.
Totally. That's the whole thing that's sticking in my mind. HYG, which is Dr. Tastytrade, markets are wide.
HYG, let's take a look at June. No, they're not. 70 cents, 75 cents. He said if you got filled at 70 cents, he was spot on.
I said 90, but I was gonna.
Huh?
I'll leave it in. I'll leave it in there.
He was spot on. The markets are tight. They're good.
SMH, let's take a look. We're a little.
Are you just going to be confrontational today? All the way? Should I tell everybody? Would you like me to get your Dave's Hot Chicken today? Let me remind you, got Dave's Hot Chicken today. You love a good Dave's Hot Chicken, and he also loves option trades today every Tuesday and Thursday, where you don't get any of this snarkiness. Where you can watch those podcasts from me, the bat.
Question is, should I cover this UNH? Yes or no?
You had a full loser. How much of a profit do you have now?
Profit?
How much less of a loss do you have now?
I pick up $5.
I close it.
Well, I didn't pick up anything yet. That's why I'd like to pick up.
Mm-hmm.
Doesn't look good for the good kids. All right, let's see what else we got here. That's UNH.
It's $20 wide.
$20 wide. What would you pay for it? You're on the dance floor.
I mean, probably 1560 or something like that. Probably.
I was thinking.
Get you closed.
Yeah, 15. Just get out of there.
I mean, it was trading at $20. You were shorted. It's trading.
I'm done.
1558. Sosnoff, who is a market maker here? That's right, the bat.
Take it off.
Take it all off.
Put it on the board. It's a gift from the gods.
So is that a win?
Be down, stock's down 100. Yeah, who knows?
You could have closed half or something like that. Kept contracts on.
All right, let's see what else we got here. We'll keep this going.
Do I say good job out of you on the UNH trade? No.
Nah.
UNH down 103. Let's take a look at the markets in June. Not good. No,
market doesn't look as good as healthy as I thought it would look.
What doesn't look as healthy?
This market.
Well, we rallied 50, 60 handles, 70 handles right on the close. Nothing.
I just filled the Shopify trade. I'm not sure whose trade that was. That was Dr.
Let's see what's hurting this market. UNH down 100, as we talked about a moment ago. CVS, what happened there? Down $4 and change, has earnings on May.
Where's that trading?
$64.
Yeah, I think it was Kai's trade in Spotify. Not Spotify, Shopify. Shopify, Spotify, they all sound the same.
Nvidia down $1, Shop's down $1.
Yep.
Amazon down $1.
Taking a look at all the different stocks.
What's on the upside here?
Costco.
Costco up 10 and change. Home Depot up 5 and change. TSM, as you just trade up 4. Some of your Chinese stocks. Baba up 4. Carvana, the car, up almost 3. Boeing up $2.70.
Boeing has been a pig.
Boeing has been a big. Caught a little bit of a bid today.
Taking a look, biggest winners. Everything's pretty. Tesla. Premiums coming in Tesla a lot.
Tesla basically unchanged. Apple up 63 cents.
All right, what do you make of this opening?
Volatility hasn't moved down 55
Nope,
cents.
has not moved.
I think the market stays. I think volatility kind of stays bid going into this long weekend.
Netflix, which was up $12 or $14 pre-market.
I think you had the highs on the opening. We had the highs already at 53.71. I don't know.
Okay, so Netflix. Here's my position. I'm short the May 765 1140 strangle. Let's take a look at
1140s have a 12 delta. 765.
Yes.
Has a 9 delta, basically delta neutral.
Basically delta neutral.
$15 and change. Going to use a lot of buying power to make that trade.
$113 expected move in May, and I'm $200 away on both sides.
That's correct. That's your wheelhouse.
2
times the expected.
All right, let's go to April. Let's see what we got.
Okie dokie.
So the expected move in April is $55. So let's go $120 away. So that takes me down to 8.
You are. Can I just say one thing? You are a stubborn SOB. Matter of fact, I did an interview yesterday, and they asked me one thing about Sadnov. What is he? I said, if he has conviction, he will be as stubborn as can be. And this is a great example. So please go right ahead. What are you going to do in the 0-day options? Go.
850.
850. I have never 850. You're going to trade an option for 50 cents.
2 times the expected move.
I know, but for 50 cents.
What do you care? It's 1 day. 850.
Well, why don't you trade the 1-day SPY options for 50 cents then, or the Qs for 50 cents? I mean, they have a very high correlation.
Oh, I want the 0 days here. 850, 1060.
850, 1060. This is a
$1.10.
$1.09 mid price, but yeah, sure. This is an example of being stubborn, ladies and gentlemen, right now. Okay, so enjoy this. Enjoy this. I hope you get filled. I want to see you get filled. I want to see you make money on the trade. I want to see you not take my phone call when Netflix is trading 1,100 or 600.
I didn't put the order in yet because I'm kind of thinking that it's trading. Feels like it's trading a little cheap now. I think it's going to be higher later. So Netflix is the kind of stock where if it's down like $2-3 all day and sits here like we're doing right now, Netflix, the premium will just sit here all day. If Netflix,
maybe even expand.
Maybe. No, I think it expands if Netflix goes up. I think if Netflix goes up like a couple dollars, then the premium explodes. Everybody wants the upside in there. Nobody gives a crap about the downside.
Okay.
So
I mean, I can give you that.
Yeah. So I think Netflix is all, and this market doesn't.
I'm a reasonable man.
So I thought after looking at the way we're opening pre-market, because this is the expiration, spot. What do you think the SPX is going to be? What do you think the opening print was? Up 20 or less?
It was just under 53. So it was like 52.95. I think I quoted it. If we're not right there at 50,
how much is that up?
10. It looks like.
You think 10?
10, 12, something like that.
I would have thought it'd been more, but still, it is up. And Netflix was down a couple.
You can find that with the SET. It usually comes out pretty quickly.
Yeah, it'll come out quickly this morning.
Yeah.
Let's take a look here and see if there's anything.
Anything? Bueller?
Well, Taiwan Semiconductor was a small winner. UNH was a luck box trade. And Netflix, we have done absolutely nothing on yet. Stock's up $2 now. I think they might pump a little premium in there to the upside.
Yep. Agreed.
I'm ready to go to Mr. Jones.
Let's do it. I can't wait to have a friend in the room. We're going to have Hear Me Out, Victor Jones next. We'll take a quick 90-second break and come back with more Tasty Live.
I'm not going to force it.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tastylive.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. That's right, with this man, Victor Jones, and hear me out. What's up, Victor?
Oh, yeah, Tom, Tony, Tasty Nation, how you doing? Gentlemen, Tom, I hear you're in a great mood today. Is that true? You're in terrific spirits?
You know what? When he's not right, he says, like, he tries to deflect it off on me. I'm in a great mood today.
Deflect, it's called deflect.
I'm a little bit, I wish the Bulls had played better last night, but other than that, I'm good.
I don't know.
I wish the Bulls were playing a
yeah.
little bit better in the market, too.
No, but
What do
I'm
you
good.
think? Kind of a weird open, huh?
Yeah, a little bit underwhelming, but good for the good kids. We're good with this.
Yeah, wouldn't it be perfect if they just let the market sit here for a couple of weeks and let everybody who bought that panic insurance or those expensive ass upside calls? Wouldn't it be nice if we just sat here and let everybody's premium expire for the next couple of weeks?
I mean,
is that wishful thinking?
I don't even.
I think it is wishful thinking, but
I'm not so sure it's wishful thinking. I can easily see that happening here. I could see us trading in this kind of range. There's so much juice. Everything is pumped so high. It's possible.
Well, the NASDAQ just went red.
Well,
yeah.
Instantly. So here's the question. Tom Sosnoff, here's what I like to do. You know, I like to go out there exploring and basically bring back things that I know you're not watching, you're not listening to. I listen to congressional testimonies.
You're right. I'm not listening.
He's oblivious. That's true.
I'm not.
He doesn't have an opinion.
I don't like when Tony tells me what I am, but I'm not oblivious. I just don't care about congressional testimony.
I figured. But Jerome Powell did give a statement and an interesting sit down yesterday at the Economic Club of Chicago, your neck of the woods. I'm surprised you weren't there.
Oh,
I'm surprised he didn't show up for coffee or something.
I mean, we're members. We love the Economic Club of Chicago. It's one of my favorite hangouts.
I heard they sent your invite in the mail, but they sent it through Hong Post, which is why it didn't arrive.
So it's not going to come.
We're holding it back.
Yeah.
We're thinking of moving the Economic Club of Chicago to Bad Coffee, though. We're working on it. Go ahead.
What a wild mix that would be. What a wild mix of patronage. I am curious. I brought back some quotes for you, which I would like to get your reaction on. And then I'm going to get you riled up towards the end of this.
All right, good. Get me riled up.
For now, just going to give you some quotes. So a couple of things that Jerome Powell said, a couple of topics from yesterday on waiting for more information. Surprise, surprise. He mentioned, for the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. Jerome Powell, get in line. I think the entirety of the world is waiting for more clarity on getting back to their 2% target and maintaining maximum employment. He said, I do think we'll be moving away from those goals, meaning away from getting closer to 2% inflation target and away from maintaining maximum employment. He said, I think we'll be getting away from those goals probably for the balance of the year, or at least not making any meaningful progress towards, again, bringing inflation down and maintaining maximum employment. As a reminder, their growth projection for 2025 is 1.7%, lower than where we had been previously, and an unemployment rate by the end of the year at 4.4%, which is higher than where we currently are, 4.1, 4.2%. He also mentioned we may find ourselves in the challenging scenario in which our dual mandate goals are in tension. This got a lot of play over the last 24 hours. If that were to occur, we would consider how far the economy is from each goal and the potential and potentially different time horizons over which those respective gaps would be anticipated to close. What he's effectively saying is, on one end, they're trying to fight inflation, and I say fight inflation, in quote. On one end, they're trying to fight inflation. On the other end, trying to stimulate growth. So if the bottom falls out in growth, in order to stimulate the economy, you would likely light a match with regard to inflation. In order to fight inflation, you have to dampen growth. And so he's saying that those two goals could be brought into tension, and that got a lot of play with sort of a stagflationary read-through. A couple more here before I get your reaction. When asked about whether there's a Fed put, this got a nice laugh in the audience. He said no. He mentioned that markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning, meaning sometimes markets go down. And I'm not here to prevent the markets from going down. I'm paraphrasing here. They're orderly and they're functioning just about as you would expect them to function. In other words, spreads are rising, treasury yields are rising, equity prices are going down. But as long as there is a buyer and a seller, and that's the function of the marketplace. On tariffs, he said the level of tariff increases announced so far is significantly larger than anticipated. He said that they're likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding this outcome will depend on the size of the effects and how long it takes for them to pass through to prices fully, and ultimately keeping longer-term inflations well anchored. On balance, I would argue that the statements in total were had a slightly more hawkish lean than I think the neutral expectation from the marketplace. That said, the implied rate cuts in Fed fund futures have about 4 cuts priced in to the end of the year. So mid-June, so the June 18th meeting will start the first cut, and then a fairly quick succession, meeting after meeting, 25 basis points into the end of the year is where we are now. I'm going to pause for just a second. Any of those statements or all of the statements in totality stick out to you as interesting, or anything you want to respond to before I start to rile you up?
Well, the first thing that comes to mind is you lost me at Jerome Powell said. Like, I seriously turned you off as soon as you said Jerome Powell. Like, I don't need you to parrot like Jerome Powell what he said. There's a reason, Vic. Like, we don't think the same way and do the same things, because when Jerome Powell was speaking yesterday, I had no interest in listening to him yesterday directly. Zero. So I have less.
You did watch the bonds with.
Well, I watched the bonds. I traded the market. I watched the bonds, of course, but I had no interest in listening to Jerome Powell. I just watch the market. I don't really care what he has to say, and therefore, you parroting what he had to say, I mean, just repeating it. Why would I care? I didn't listen to anything you just said. I mean, not because I'm not trying to be just like, I'm not trying to be annoying or
sound like
psychotic,
but you don't.
No, it's perfect.
But the reason
this is perfect.
Okay, listen.
So tell me why you don't care.
I don't care. I'm watching the market. Okay, Jerome Powell doesn't know anything. I mean, like those were all very nice things that he said. Congratulations. He basically said if you asked ChatGPT to write up a Fed speak based on what's happening right now, that's exactly the same message you would get. I mean, it doesn't matter to me. Like I just watch the markets and see what's happening. And, I mean, I think for other people,
bonds have been traded. They were 115 pretty much when it came out.
Bonds rallied a half a point yesterday. They're down a half a point today.
Inside the expected move, they are who they thought we were, no matter what Jerome said at this point. Yeah.
I mean,
the market had a bigger move, I think.
The market had a bigger move yesterday. It's come back a little tiny bit today. It was down 120 yesterday. It's up 30 today. But it was down 60 before that number came out. So if you it moved 60 handles after that number came out. It's come back 30 today. So the net result is 30 handles, which is 0.5%. That sent Trump into a tailspin, which is because he thinks it's personal, which it's not, because he doesn't understand how bonds work. And for me, it means absolutely nothing. I mean, it literally means nothing. I mean, everybody has to see how this stuff plays out. And it's ridiculous. Like the only thing I would have done the less Powell could say, the better for him, because he should have said, listen, we're just going to see how things play out. That's it. Because that's really all he can say. Like, this is a little bit of an unprecedented time. And nobody knows exactly how all this, when you start a war, whether it's a trade war, a physical war, whatever it is, when you start a war, I don't think anybody knows. There's a purpose for starting it, but I don't know. I mean, whatever your purpose is for starting it, but I don't think anybody ever knows how things are going to end up.
Right, but you have to go with the assumption that it was done with good intention.
You do not have to go with that assumption. You
have to go with that assumption. If you want to believe that it was done with good intention, you can. I've been very clear from day one that this is done out of spite and retribution and not good intention. This is done out of evil. That's all it is. It's getting back at enemies, and that's
you got a woke disease or something.
So I got no disease. This is the most obvious attempt at retribution and spite and ego that I've ever seen. And so the reason it's tough for Jerome Powell is because we've never seen, the U.S. has never, there's plenty of other wars that have been started for all the same reasons, but not in the U.S. And so he's got to see how this plays out. And that's the right answer. See how it plays out. Period. But there's nothing to debate. The market tells us everything we need to know.
Right.
We're down 30 handles. Over 2 days, this is a 30 handle move, and which is absolutely nothing. And for the bonds, it's an absolute scratch. Up a half a point yesterday, down a half a point today, nothing. So I'm looking at this move as, hey, it's business as usual. Let's try to, make back some of the premium we lost yesterday when they pumped a lot of juice in this thing. And I do think a lot of it's already come out this morning. And let's see how the market, if the market comes back or how it closes today. It'll be interesting to see. By the way, Netflix is up $10 now.
Netflix is up $10. NASDAQ up 85.
Yeah.
Front ran me a little bit. So let's go to the next part. Part number 2. Part number 2 is on April 4th, President Trump tweeted, it would be a perfect time for Fed Chairman Jerome Powell to cut interest rates. He is always late, but he could now change his image, and quickly. This was on April 4th. Given the statements that were made yesterday, I think markets are looking for a little easing from the Federal Reserve, or a little bit of a dovish take. They did not get it. In fact, he leaned more hawkish. There was a response this morning from Donald Trump. I think it was this morning, my morning. I'm not sure what time it was your time. But the ECB this is what he said. The ECB is expected to cut interest rates for the 7th time, and yet too late. Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical complete mess. Oil prices are down, groceries, even eggs are down. Not true. And USA is getting rich on tariffs. Questionable. Too late.
Okay, come on. Hold on. This is all propaganda. This is all ridiculous. This is nonsense and propaganda.
You got to let me get to the last line, Tom. Too late, should have lowered interest rates like the ECB long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. That's the line. Powell's termination cannot come fast enough. The idea that Donald Trump is sort of leaning on Jerome Powell, as we saw in Trump 1.0. Jerome Powell's term ends May 2026. There is a process to remove the Fed chair. It's not just simple, straightforward, as the president can fire him. It's a whole impeachment process. So my question, on one end, I think you look at the statements that are coming out of the Federal Reserve chairman as not particularly interesting, not particularly special, not particularly something that you need to pay attention to, something that could be, in your words, written by ChatGPT. On the other end, there's the independence of the Fed that's being picked at right now. And I wonder, what do you think, as somebody who doesn't really care what the hell the Fed is saying, on one end, but on the other end, I'm probably certain that you care about the independence of the Fed. What does Tom Sosnoff think about that statement, the leaning on Jerome Powell here?
I care about the Fed in the sense that I believe their role is to provide catastrophic relief and catastrophic insurance against an event that against certain events that can happen that are outside of their control, but that are parts of our economy. Like, for example, what happened in 2008, 2009, and what happened in over the issues we had on the fiscal cliff and different things throughout the years and the pandemic and things like that, where there's enormous stress on the system, and the Fed has to come in and they have to take special kinds of action, and that should be done, through an independent organization, which the Fed is. It should not be done through the executive branch, because that's not their area of expertise. Like, Trump says stuff, and listen,
It depends. If you're a sycophant and you think the guy knows everything, then he's probably wants to make himself the head of the Fed. I don't know. That's probably his game plan. I, on the other hand,
Did you say Jerome Powell's very good at what he does in the past?
I do.
Right.
I say he's very good at what he does, but I also think the Fed's hands are tied to what the market's doing. I mean, it's not. I don't understand what Trump doesn't understand about that. The reason interest rates are higher is because of the pressure that he's put on the marketplace with his tariffs. You can't have Jerome.
Interest rates are 5%. They're on the low end of their range.
They're in the high end of their most recent range.
Okay, but just like statistics, you could take at any time frame and find something that fit for you.
The point is, if he wants lower rates, then peel back your tariff policy. Everything's related. Okay, the only reason rates are as high as they are is because of all the tariff stuff.
To play devil advocate for a quick second, if somebody's been lobbing tariff bullets at you for years, and you retaliate. Thank you, with tariff bullets to them, is that you starting the war, or is that you?
Yes, it's you starting the war.
Well, you just said retaliate. So, I mean, you're retaliating. It's not just
you said retaliate. Okay, I mean, this is
okay. Well, that's the trade war. That's the other side of the argument. Just presenting both sides.
I'm not actually interested in both sides.
I know. I listen to you and Dylan all the time. It's always one-sided.
My point is, you can't start here. The simplest way to say it: you can't kill your parents and then say you're an orphan and plead for mercy. Plead for the mercy of the court. Okay, and that's essentially what's happening here. It's the same exact thing.
Not an example.
Trump killed rates and then pleads for the mercy of the court to get rid of this.
Today you say Powell's comments are not important. Yesterday you said they were very important.
I did not say they were.
Back.
Stop. I don't care what Powell says. I didn't listen yesterday. Not listening today.
He got it right. I mean,
I guess the weird thing for me,
that side is just
the weird thing for me is, while the statement leaned hawkish, the Fed fund futures actually moved closer to pricing in the fourth cut for the year. So regardless of what he said yesterday, the implied odds say that in June we're going to start a 100 basis point cutting cycle. We might need to back off that.
There was a rally.
The weird part about this statement, in my personal opinion, is it's a reaction to words and not necessarily markets. If you take it at face value.
If you looked at the bond market yesterday, the bond market rallied, and if anybody in the Trump administration actually understood how this stuff worked, the response today would have been the correct response on his Truth Social, wherever he writes all this crap. The correct response would have been, you see, the bond market got it, and they rallied yesterday, which lowered rates. I mean, that is the correct response. The correct response is not we're going to terminate Powell because he's an idiot and he should have lowered rates. The correct response was, you see, even with what Powell said, we got it right. That was the correct response. But everybody in that executive branch is just too freaking stupid to understand that a rally in bond market yesterday meant that rates were actually lowered. So they had to come out with all the stupid statements today about disrupting the Fed, and now bonds are down. My whole point is, if they just understood,
bonds are down 8 ticks. They're in.
I understood.
Inside the expected move. They were up 8 ticks. It would be. You could make the same argument. They didn't do anything.
Yesterday, after all that news, the market sold off, but bonds rallied yesterday, pushing interest rates lower. The correct response was, you see, the marketplace understands what we're trying to do. That's the correct response. Not.
But the equity market went lower, and that trumped the news.
Hold on, stop. It's not about when the President of the United States, it's not like some other yin yang. It's the President of the United States, it's the leader of the free world, writing, hey, we got to terminate the chairman of the Fed. When you write that, you destabilize markets. Period. That's what it does. There is no benefit to doing that. The only person that would write that in that situation publicly, okay, is somebody that doesn't get it or is trying to bully the marketplace. It is not normal behavior. Write.
That's his. You're trying to say, like a power puncher, you want him to all of a sudden be a counter puncher.
Oh my God. You cannot.
You can use the same type of analogies. I mean, or all of a sudden you want him to win on points. He doesn't.
What does terminate the chairman of the Fed mean? You want somebody to kill him?
No, it's just a stupid statement. Well, I mean,
I'm just asking, what does that mean? How does the leader of the free world say that? That's freaking stupid.
Well, when other Fed chairs have joined the Democratic Party in the past, after they've done with their being Fed chairs, it seems like, again, just playing devil's advocate stuff. I'm not.
Like, who are you talking about?
I will Google search it for you.
Go Google search it.
Okay.
Okay. Most of them stay out of it.
Okay.
But go ahead.
Okay.
I would agree with you that I don't think the statement furthers the goals. I do agree it adds a risk premium to U.S. Treasury. And if you want to give him some benefit of the doubt, it's like knowing that the cuts are coming. It's like some public posturing in front of the cuts to look like you had something to do with it. And I think that's the more generous interpretation of what this
cuts
is.
are coming.
Though I don't think it's helpful.
There's no doubt about it. Rates are going to be lower. That's why. Listen, I'm long bonds. I'm keeping it really simple. We are long bonds right now, and we're staying long bonds because I think rates are going lower. Period. But there's a lot of different ways to handle this and talk about it. You don't have to try to interpret what everybody's saying.
Federal Reserve Bank of Philadelphia has 39 Democratic and 5 Republican economists. The Democratic to Republican ratio is 7.8 to 1.
So just because the Fed lowers the front end, it does not necessarily mean that the long end has to go down with it. And I think we saw that in September with their jumbo cut of 50 basis points. They followed up with 2 25 basis point cuts, and the long end lifted throughout that entire period. So I just want to put it out there. Even though you have this position because you believe the cuts are coming, it does not necessarily have to work out where the long end plays ball and it comes in along with that short end falling. You could end up seeing a steepening. I'm just putting that out there for people. I know you already know this.
I agree with you. It doesn't mean that the long end has to come down, but it's usually, that's the market that everybody quotes is the 10-year for the most part. So, we're quoting the 20-year, but for the most part, they move in tandem. The correlation is like 90%. And you can quote the 2-year or the 90-day if you want to, but that's a tough market for most people to discuss when they talk about
I agree, but the short end is going to move based on policy. The long end is going to move based on growth and inflation expectations apart from what the Fed policy is. And I know you know that. I'm just putting that out there for anyone who's not as familiar.
Vic, I think the key that you're missing, and that really is important for people to look at, just look at the damn prices. Like, that's the reason we have all these prices in front of us. That's the reason we have screens. That's the reason we do what we do here. Because, go to 10Y and just take a look at it. /10Y. There's your 10-year yield. And you can look and see where it was a week ago, 2 weeks ago, whatever you want to do. You can look at 2YY if you want to see the 2-year. And you can actually see the prices. It's not difficult. You can just go on the there you go. So you can see what's happening. And
speaking of price, I think in correlation, one of the most interesting moves yesterday was the fact that at one point in the day, the NASDAQ was down 2% and Bitcoin was up 2%. The NASDAQ ended up down something like 3%.
You tweeted that on one of those social media sites. I remember seeing it.
Bitcoin has...
That's right.
Bitcoin has really decoupled.
Go ahead.
Bitcoin has totally decoupled. I don't even know what it tracks anymore. I think the only time they sell off Bitcoin is if there's an asset squeeze. Like if it's like a broad-based, like when they sold stocks down huge a couple weeks ago, Bitcoin had an ugly day. But for whatever reason, I just don't think people that are long digital assets pay much attention to the, that's why firms like Coinbase don't really focus on equity markets and things like that. I know they want to branch out and things, but I just don't see their customers, dumping Bitcoin because stocks go lower.
Yep.
The risk to Bitcoin long term is probably much more so in the quantum computing space and in the regulatory space if they push too far in one direction. So the risk to Bitcoin is probably a technology risk, and it's probably something different, but I don't think it's an equity risk.
I think we have seen Bitcoin go through many different cycles. Whether or not you believe this is just quasi-stagflationary conditions or you believe bona fide stagflation is ahead, the likelihood that we get to see Bitcoin navigate an entirely new economic cycle for its short lifespan is higher than it was, let's call it 6 months ago. And I think for all the cycles we've seen it go through, we haven't seen it go through a bona fide stagflationary condition.
Yep.
And this would just be another notch on Bitcoin's belt to get through it and to prove that it's not just magical internet money. It's something more sustained than that.
I think the biggest risk to Bitcoin, in addition to the things I mentioned before, quantum computing and regulatory, is also going to be displacement by other digital currency, and I think that's where the Bitcoin risk comes into play, is if they move off of kind of private blockchains onto something different. I just think that the risk is going to be.
Inflation's come down, right?
No, it hasn't.
I think I get what you're saying. You're effectively saying Fartcoin is going to challenge Bitcoin for primacy.
No. But there could be central bank coins. There could be, of
course.
There could be, the U.S. could launch a digital currency. I'm just saying. I think
government-issued programmable currency, 100%.
I think the challenge. I think the challenge comes from there, not from. I don't think the challenge comes from an altcoin. Let's put it that way. I think the challenge comes from much more of a centralized approach to an alternative currency or a government approach to an alternative currency rather than an independent, decentralized piece of technology.
Which is why Tony and I have been working so hard to launch our altcoin, which will be ready.
I have one. I don't have a coin. I've got an alt something. I'm going to find out exactly what it is. I'm putting it in my wallet.
You should launch an alt.
I've launched one. You've launched one too. Not a coin, but we've got something. I'm going to learn a little bit about it today. Hopefully, I'm going to get one in my wallet.
Yeah, you'll see. You'll be joining the Haktua girl in jail. Hopefully.
Hey, if I'm joined one time, okay?
You and her are going to be in a cell together.
Well, you can't have a Hawk 2 without me, okay? That's why.
Just telling you. That's who you're going to be sharing a cell with. You and your old coin. All right. Thanks, goodbye, Mr. Jones.
You are priceless. Goodbye, Mr. Jones. I'm going to miss you. I'm going to miss you very badly.
That's exactly where you're going to end up.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a market measure.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies. Look who's backtesting. Tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tastylive.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. I'm Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. Same thing with college. She went to a different college. I went to a different college, but we both ended up at the CBOE together. Yep.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tastylive. That's right, with a market measure sponsored by the CBOE. Sign off, UNH, 465 and change. You should have held it. You would have been up another $3.
Oh, my God.
I told you to do half. Said you can do half.
I'm not a half guy. You're a half guy. I'm not a half guy.
You're half a man.
Yeah.
What you are.
Man.
NASDAQ unchanged.
Yeah.
Nothing to see here. Volatility down 41 cents. Even the S&P's up 8. Dow down 500 on UNH.
They just started to sell off gold a little bit.
Don't even say that. I mean, it is $24, and it is a decent-sized move, 0.75 percentage point. But man, gold has been a head fake a couple of times on some sales.
Yeah, I mean...
But encouraging, I will give you that. I will help you with that.
Oh my God, save me now. Serenity now. Serenity now.
Mm-hmm.
Rolling down calls in gold because you know what? I don't want to be caught long gold with your money for 1 second.
Understood.
They do kill premium in there to the downside though.
Mm-hmm.
That's the good news. I don't know. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tastylive. Thank you for spending the morning with us. Tastylive.com/events. Check it out. Tastylive.com/events. We got a ton of stuff coming up. You want to check out that page. Also, there is no show tomorrow. So markets are closed for Good Friday.
But we will have first call on Sunday night, 4:55. I know it's Easter, but you want to join us?
I know it's Easter, but shut the front door.
That's right. You don't have to if you don't want to. We'll be on Sunday night, 4:55, first call. A little bit short in edition.
GFY.
But can't wait to do it Sunday, so looking forward to it. But if you have some time this weekend, go to tastylive.com/events and sign up for an event to a city near you.
Please do. I'd love to see you. I haven't been out on the road for quite a few years. I'd like to see your face again. Press the flesh.
This is Expiration Friday today. This is Expiration Friday on a Thursday, just so you know. What did set come out at?
Oh, I'll take a look. I mean, usually when somebody asks me for a position, I say, you got a position? Let's take a look here.
Just checking to see where the SPX marked up.
53.32?
That sounds about right. Where did it close?
53.32. That's the 16th. Sorry, nothing yet.
Nothing yet.
Yeah, nothing yet. 15.32. That's what I see here, right? 15.32. This is the 16th. Yeah, April 16th. Nothing yet.
Okay. Yeah, I didn't have a position on in there this morning, but we'll see what happens. Market looks
undecided. So no volatility in by 40 cents. Even the S&P's up 4, Nasdaq down 15, Russell up 2. Mixed bag of tricks with the Dow, the biggest move to the downside by 1.5%. All on UNH.
very much an undecided market so far. Nvidia's kind of weak.
Let's take a look at Nvidia. Yeah, down $3 and change. I would say that's very weak. As a matter of fact, I looked at Nvidia earlier. Nvidia got up to 104. It's 101 and change right now.
Yeah, sick puppy. I got a couple of Nvidia positions on. I probably should.
Oh, do you?
I probably should mess with them. What's the IV rank in there? It's nothing great. Huh?
45 has earnings May 28th.
Yeah. All right. Anyway, let's do this.
Let's do this. We are.
We have a market measure for you today. It's a quick one. We're going to talk about worst losses. All right.
Oh, I hate this subject.
I know I hate it too, but I think the guys thought we had to do it. There were some huge moves in the markets last couple of weeks.
Yeah.
If you did a 0 DT naked, forget it. I know most people spread them off, but if you did a naked, what's the most you think you can lose in 10 minutes? Let's put some context around this.
I mean, on those days, a lot more than you would expect. I'll put it that way. There was no way you could throw a number. I could throw a number out.
SPX, a one lot. So just to put some context.
Yesterday, SPY moved 14 handles. I didn't think SPY would move 14 points in a day.
So 100 points in the SPX is $10,000 on a one lot, right?
Right.
Can you lose 100 points in 10 minutes? Because we had a 100-point move. We had a couple of 100-point moves in 10 minutes.
If we didn't have last week, I would say no. We had last week, I would say you're probably pretty close just by doing the math.
I would have lost almost $20 on the Iron Condor I did yesterday if I didn't take it off for a $1 winner, $1.25 winner, whatever. Crazy.
We try to talk about managing the winners, and that's it.
Fastest losers on bad days in the 0 DTs here. Let me put it this way. Fastest loser compared to the fastest winner.
Okay, let's try it.
No. I'm asking you a question.
Oh.
How much more do you think how much more can you lose than you can make? This is a tough question.
No, I don't think so, because when you sell, it moves a lot. It's got to be some 2 to 1 against you. I don't know, money wise.
I think it's more like 10 to 1.
Oh man. Okay. Well,
if you can move 100 points in 10 minutes.
Yeah.
You can't collect that much.
You could make an argument if you did the 2-day options, just because of the way the market moved, you didn't lose anything, you made money. This is very granular.
We did the zeros.
I get it.
So how much could you make in 10 minutes? How much could you lose in 10 minutes? And what were the worst losers in the outlier moves that we had in the last 2 weeks? I don't know. We're going to take a look.
Oh, God, this is depressing.
I know. We're just taking a look.
Apple up $1.60.
Because the extremely short time frame until expiration, 0DT option prices can change quickly. Recent days have seen historically rapid movements in the SPX and the 0DT options have responded accordingly. While the buying power reduction regulations ensure that retail customers almost exclusively sell defined risk positions, let's look at some of the benchmark velocities in the 0DTs. I'm sorry, I meant breakneck, not benchmark.
It's okay.
Breakneck. Let's go next slide.
Break your neck.
We sold 20 Delta Strangles at every opportunity, both at the open and every 10 minutes for a snapshot. For each such trade, we found the 10-minute increment with the largest change in mid-price over the rest of the day. We picked out the most extreme examples. These are the worst of the worst, okay?
Okay.
The worst of the worst. Because everybody always wants a worst case scenario. Well, with the size of the moves we had the last couple of weeks, that is your worst case scenario, right? We haven't seen moves like that.
Right. I mean,
it's your worst case
could be
scenario.
worse, but in recent history, those are the worst.
As a treat, the research team also looked at the most successful scalps. So we're not going to take it all away from you. We're going to give you a treat too. Let's go to the next slide, John. We'll go through this fast. It's fun. So
fun, not fun.
Fun, not fun. 4-7, 4-7, and 4-4. At 9 o'clock in the morning, at 9:15 in the morning, at 2:35 in the afternoon. Selling a strangle that was $300 wide, the 20 Delta Strangle. The worst 10-minute P&L in the morning up 4-7 was $9,000. You lost 90 points.
In 10 minutes.
In 10 minutes. The second
That's why
worst
you gotta
was
respect
4,300. The third worst on a strangle, this is a wide strangle, it's not a straddle, was 3,300. Those numbers surprise you? 10 minutes. I mean, honestly, I've lost more than 3,300 in 10 minutes before. But
yeah, they surprise me.
But this is a one lot.
Yeah, I would not have guessed that big.
One.
Yep.
These are one lots.
Yep.
Okay. These are 10-minute positions at 9 in the morning and 2:35 in the afternoon for 9,000, 4,000, 3,000. Let's go next slide. This is the most sudden losses in straddles. These are going to be bigger, and they are.
Mm-hmm.
On 4-7 at 9:05 in the morning, the straddle lost 12,600. What happened at 4-7 at 9:05 in the morning?
I don't think anything
4-7.
happened. I just think that's when...
Was 4-7 a Monday morning? Was it that Monday morning where they opened down 250?
4-7 was the Monday morning.
It was. 4-7 was a Monday morning. And they opened down 250. They opened down, Gesundheit.
Thank you.
They opened down and went lower, right?
On 4-7, we opened at 5,007. Our low was 4,800 and change.
Yeah. They dropped a quick 100 points. That's what happened.
Right.
The
high for that day was 52.86. So if we didn't sell off, I don't have time up here. If we didn't sell off before 9:05, which I think is when we had to probably had to sell off. They're looking at the largest magnitude of the move. It was right there.
So the other straddles lost 6,000 and 3,000 on later in the day at a different date. So realistically, that was kind of really an outlier.
Mm-hmm.
So you're talking about, they're still big numbers.
Yeah.
These are undefined risk trades, all that kind of stuff. Let's go to the next slide. So these are your best scalps in 10 minutes. 4-8, and then at two different points in 4-7, where they killed premium the other way. That's how wild this day was.
Yeah, no kidding.
$1,500 in 10 minutes on a one lot.
That's when you're saying to yourself, what can't I do wrong? This is beautiful. It's so easy.
So the guy that sells the straddle.
You're right. It's 10-1. I mean, not quite, but close enough. Whatever.
No, it's actually
7-6-1.
It's actually like 4 or 5 to 1. Yeah, 4 or 5 to 1. It's not really 10 to 1. And if you look at 4-7, which was that Monday, yeah, it's about 4 times. But that's still a lot of money in 10 minutes to make.
Yeah.
So if you do it at 9:15 in the morning, you're like, this is the worst business in the world.
Sure.
And if you do it at 12:35 at lunchtime, you're like,
it's like shooting fish in a barrel.
Why didn't I learn about this before? Crazy. That's both efficiency and kind of neat to see. Let's go next slide. So some of the takeaways. Last Friday and Monday were among the most turbulent days in market history. Even the bounce on Monday morning was painful. This resulted in some zero DT positions losing money at an almost unbelievable rate. A short straddle lost $13,000 in 10 minutes on Monday morning. Of course, realistic zero DT trader had long strikes and defined risk and an excellent reason to appreciate our buying power requirements. While zero DT trading is some of the most not even sure what that word is. Say it. Yeah.
What is it? Let me see if it's a real
available
word.
to retail traders. I'm not sure if it's a word.
Yes.
Sticking to
puissant, having great power or influence, Sosnoff. Puissant.
I think these guys do it just to torture me. Puissant. Okay.
You are puissant, Sosnoff.
Sticking to defined risk means as long as we don't replace losers with fresh trades, there is only so wrong a day can go. They really had to use puissant.
Mm-hmm.
I don't even know if that's how you pronounce it. Puissant.
Good job out of you. Great job out of the team. We're going to take a quick 90-second break and come back with your friend of mine. Ooh, even the S&P down 15, NASDAQ down 110. Volatility basically unchanged.
Just went the exact opposite way.
We're going to take a quick 90-second break and come back. We got more Tasty Live immediately following these messages. Then Scott Sheridan, Tastytrade World Headquarters. Are we going to the phone line, Sosnoff, because it's Synthetic Friday?
We certainly could.
We certainly could. Does that mean I make a call to action? It's a little unclear. And you rule with an iron fist, so be clear.
I'm puissant.
You're puissant. So are we taking phone calls or not?
Sure we can.
855-238-2789 or 855-BE-TASTY. The phone number will be below in just a moment. Give us a buzz. I would love to hear from you. 855-238-2789 or 855-BE-TASTY. Call in now. Phone line's open.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
I had the, what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine?
Crackers?
I went snorkeling.
You went snorkeling?
I said the last time I went snorkeling.
And the fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
It just doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh, for what? For just funsies?
For my birthday.
Oh, wait, I didn't know it was your birthday this weekend?
Yeah.
Oh, happy birthday.
There you go.
I didn't know you were an Aries.
I am an Aries.
Yeah, that kind of tracks.
Something. What is your sign?
I'm an Aquarius.
Aquarius?
I'm an Aquarius, yeah. Tom's a Pisces.
Pisces.
Yeah.
That makes a lot of sense,
It
actually.
does.
Yeah.
It really does.
That kind of tracks.
I don't even know what that means. Sure. Whatever.
I think it means you like fish.
What happened, girl, during last call?
I lost my
You want to talk about it?
I lost my beret.
You didn't lose it.
I found it.
So you
I'm thinking of getting rid of it.
Oh, new look?
I'm thinking of the new look.
You should do a faux hawk.
Oh,
What is
I think you nailed it. No, I don't know.
No, cornrows.
I could see rocking some cornrows.
Yes, cornrows.
I think you should go to Flavortown and just get the Guy Fieri spikes.
Boom, platinum tips.
Platinum, yep.
Is it true? Did you skip the beret yesterday?
On the clothes.
Oh, it looked like it looked like a decrepit old grandmother. It was so gross.
It's like that old monster from Tales from the Crypt.
Get the full scoop by checking out the archives at tastylive.com.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, my friend, with this man. Tastytrade World Headquarters, your friend of mine, the very popular Mr. Scott Sheridan from the Scott Sheridan Studios. How are you, Mr. Scott Sheridan? Oh, before you answer that, we're taking your phone calls, 855-238-2789 or 855-BE-TASTY. Phone lines are open. They're open right now. The sooner you call in, the faster I can get Scott to get a word in edgewise because Tom won't interrupt him. Take it away, Mr. Sheridan.
The king of interruptions.
Okay, really quickly. Good morning. How are you? Happy Synthetic Friday. The Bulls stink. They're embarrassing. Now it's really sad that as a Chicago fan, we've got a little bit of hope with the Cubs, but they'll let us down for sure because it's the Cubs.
They've been playing good. Really They've been playing good. Give them the benefit of the doubt right now.
I said we got the Cubs, but it's the Cubs. Okay. I grew up a lifelong Cubs fan. You guys have been transported, so maybe 40 years. Yeah. So you're synthetic Cubs fans. Here's my problem. I'm already thinking, because they showed Caleb Williams at the game last night, I'm already thinking, when are the Bears going to trade him?
Hold on. Did you see what they had Caleb do?
No.
It was great.
I didn't see it. I just saw him sitting on the bench. He was right. It looked like he was right by the scorer's table.
Yeah. So somebody gave him a football, and they threw him a football. Did you see this? Oh, it's really good. Somebody threw him a football. He signed it, and they said throw it up in the stands. So he winged it up to all the way back to he threw like a 60-yard pass to some fan.
I probably killed somebody.
No, they were all screaming it was like a T-shirt thing, But did you see this?
Oh, that's awesome.
Mm-hmm. Oh, it's great. John, you got it? Can you play that?
Did the kid catch it?
You couldn't see.
Oh.
But you could see it. He's threw let's put it this way. If anybody else tried to throw a football that far, they've thrown it 3 rows.
Right.
He threw a perfect spiral to the upper deck.
That's great.
It was great. John, if you can find that.
We've watched you throw a football, and we know it's not easy to throw a football. We've watched you kick a football.
No. It's kicking. That's a good video. That's priceless.
Used to be
that might end up in the Smithsonian one day. Of all the tasty content, I think the football kicking in the alley, that's my vote.
It's a good one.
I mean, there was some good content, but I think the football, the field goal, that was a good one.
I think you guys are a little bit, I think you need to maybe get your priorities in order.
Getting attacked. Hold on. Wait, for what belongs in the Smithsonian?
No, I want to find this Caleb Williams throwing this thing.
855-238-2789 or 855-BE-TASTY. I know it's not Thursday, but I know it's not Friday, but it's Synthetic Friday. This Thursday has its expiration. I got 4 or 5 lines open. Give us a buzz.
And if you can call in, if you don't have any questions about trading or about the business, if you can call in with suggestions for what Tom could do on his day off, because he needs help, because he hates.
He's got a big day plan.
Big day plan. I'm playing golf.
Oh, wait a minute. Oh, wait, you are? The Goy? And then you're going to the game with the Goy?
No, I'm playing golf in the morning.
You backed out?
I backed out. I'm playing golf in the morning with
What'd you tell him? Hammy?
What?
What'd you tell him? Hurt hammy? Can't get there?
No, I wanted to play golf. So I'm playing golf in the morning. And then...
Is it the Dream Foursome?
It's
Butchie, Slappy, Mikey Butler, or Donnie. It's Butchie, Slappy, Donnie, and you. Or Jules. There's no way Jules is playing this early in the season. Who is it? Come on.
You got it.
Didn't get the nod.
No,
he's 5 or 6.
It's Slappy.
Wait, I'm going Slappy, Donnie, Butchie. Mikey Butler didn't get the nod yet. This is old school.
Slappy, Donnie, JJ. Oh, boy.
Slappy.
Oh, here you go. Here, Scott, watch this.
Watch it.
So he signs it, right?
Nice.
You know what? Great throw. Jay Cutler could have made the same throw, and Jay Cutler wasn't getting good for the Bears either. So who knows? Jay Cutler could have made the same throw, but he wouldn't have. That's the difference. Jay Cutler was such a prick. He wouldn't have given the ball away to anybody. He would have stuck it under his shirt and ran away. Jay Cutler would have. Whatever. He would have Aaron Rodgered it. Shows me nothing. Oh, come on. I mean, just saying he's got to learn how to read a defense. That'll impress me. Oh my God,
he's going to be unbelievable. If you want to sell him, he's going to be unbelievable. He had nothing. He had no coach. He had no line. He had nothing.
He did have no line. I will give you that. He was great in college. I'm just saying, you go to a Bulls game and then all of a sudden you see a spiral coming. What if you weren't watching? Believe me, other people were watching. They would stop that ball. He threw kind of a.
Let's get back to golf. Go back to golf. Yeah. Where are you playing? Oh, you don't want to announce.
We're playing Harborside.
Western. Oh.
First round.
What's the temperature? Because if the wind's blowing, oof.
It's going to be cold in the morning, but it's going to warm up to about 70 if it doesn't rain. It's supposed to rain in the middle of the night. By what? It should be fine. What?
By the time you're done?
Yeah, then if I make it, I can get to the Cubs game. But I don't know if I can make it.
Okay, it's probably in the 40s when you tee off. And if the wind's blowing, oof.
No, it's not 40s. I checked. It's could get up to 70. Believe it or not. I seriously.
Are you going out?
The low tomorrow is 57.
Oh, that's pretty good.
The high is 80. The high is 80.
All right.
Along
Shorts
the lake,
and Crocs,
you can discount that, Sosnoff, by quite some bit. What?
Are you looking at Scottsdale weather? First of all, 80. I don't think so. More importantly, what's the outfit?
What time you going out, Saz? We're teeing off like 8:30. 8:30, you should be fine. It's going to rain earlier in the morning at 6, which means all the grass will be wet. The ball's not going to roll.
I'm a mutter.
You're going to be wet.
I'm a mutter.
Your Crocs are going to be wet. You're going to have to be a mutter. You're going to have to be a mutter. And there's only about a 20 to 40% chance of rain on Friday. And it's later. It's early in the morning, like the wee hours, 1, 2, 3 o'clock.
I have a 6:15 breakfast, an 8:15.
Nice. Slight drizzle at 6:15.
Wait a minute. Well, that means 6:15. Oof. Slappy's meeting with Ann Sathers.
Here's my day. 6:15 breakfast. 6:15 breakfast. What?
Where? Ann Sathers?
Oh, you don't know the place. We go to places that you go.
Right now you're on a need to know places.
It's not bougie enough for you. It's like a little diner.
Oh my God.
It's not Sheridan worthy, okay? So we go to a fun little diner that's open at 6 a.m. Then we go tee off. Then afterwards, if I can make it, I'll make it to the Cubs game.
You're going to be in too much pain. I strongly recommend a leave or two before you go. You won't be walking straight on Saturday. Sunday's going to be a disaster for you. So just plan on doing nothing on Sunday.
But Sunday it's Easter, so I have to cook my ham.
We'll start that now.
Warm up your ham.
I have to, according to Tony, I have to warm up my ham.
Warm up his ham.
But I'm making eggplant parm, so that's my big thing.
Oh, Tony, you got to him. You know, if you notice,
we can have an eggplant parm.
Get to me. I've been eating eggplant parm before he was born.
You do everything Tony does, but like 5 or 10 years
later.
Oh
my God!
Thank you, Scott, for finally admitting it. It's near the end of my career. Finally, somebody admitted it. Thank you very much. Thank you.
I think I introduced.
I got pictures of you at a wedding. You look very Batista-like. Very Batista.
I think I introduced him to eggplant parm.
Oh my God. We invented eggplant parm.
Who's we?
Brooklyn.
We were eating veal parm before you were born.
Veal, sure. We couldn't afford it. That's why we invented eggplant parm.
See?
Veal.
Right?
You know,
I'm on Tony's side.
Chicken cutlets. I would go into my mom's refrigerator. There'd be chicken cutlets just sitting there cold, pull them out, put them in the toaster oven, eat them up. It was beautiful. You kidding me? I've been walking around with chicken parm my entire life.
I introduced chicken parm to Chicago, just in case you don't know.
You're the chicken parm king of Chicago.
It didn't exist here before.
Yeah.
All you had was chicken Vesuvio.
Okay.
Well, not you, because you were here. All he had was chicken Vesuvio.
In Chicago, it was chicken Vesuvio. You're right.
Yeah.
855-238-279 or 855 be tasty.
I brought
and vodka, vodka sauce.
Yeah.
That's
Which I never
Chicago?
got, by the way.
What?
Vodka sauce is Chicago?
I believe
Anyway,
so.
we're playing. Yeah. So I got a full day tomorrow. Saturday, I probably will be
Starboard?
dead.
Port or starboard?
Port.
Nice.
Like it's going to make a difference. They're going to suck on either one.
Yeah.
Okay?
Of course, it's so
a little
hard.
bit of wind.
Yeah.
I
Wind
want to
and
know
rain.
who breaks down
Sleet,
first. The
snow.
wind, rain, the cold.
Oh my God.
Traps all
In
everywhere.
Crocs, your socks are going to be soaking because you have Crocs with
The thing that
holes
sucks
in them.
about that course is you can't roll the ball up on any hole because every hole's uphill.
Can't roll the ball up or improve your lie.
No, you can't roll the ball up. You can improve your lie. You just do that. You know, we play
country golf.
full cheating.
Yeah, move.
Full cheating. All right, listen. I hate golfers like you.
All right,
hate golfers like me.
You're good, and you won't play the game. Well, you used to be good.
Oh, I'm sorry.
Yes,
I'm sorry.
I actually have.
I'm sorry. I have to drive in the middle of fairway. I'm going to play out of a divot.
Oh, I'm sorry. You're not playing at your country club where there are no divots. Oh, I'm sorry.
We play. You can roll the ball in the fairway.
You roll the ball everywhere.
No,
fairway. Oh God.
All right, should we do some business and then
Yes,
phone calls?
do your list. I've got Alabama and Florida on the line. 2 or 3 calls will be fine. We only got about 15 minutes. Please go.
Top 15 symbols going through the system. First 40 minutes of the day. No broad-based indices or futures. Time for you. Number 15, AMD at a 56 for everybody else. NVIDIA at a 44. Tesla at a 50. UNH at a 66. MSTR at a 24. GLD at a 78. Netflix at a 61. PLTR at an 80. Apple at a 53. Amazon at a 61. TSM at a 35. Meta at a 64. TQQQ at a 60. Microsoft at a 55. Lilly at a 52. And number 50 for Tom AMD at a 56. We're rounding out the next 10. Schwab at a 38. HTZ at a 124.
Hold on 1 second. Hold on, Scott. What did Schwab do on earnings? Forgot to check.
I forgot to check too. W. Good job out of you. Up $1.20, 77 or so. It opened at 79. It's 77. So it's sold off.
Got it. Okay, keep going, Scott.
Sorry to interrupt you.
Sorry to interrupt your important list.
God, you seriously are priceless. You know what? I hope it rains and sleets tomorrow as you're teeing off. So far at 60.
All of Tasty
Intel at
Nation
65.
is actually praying for that.
Slappy won't be happy.
Oh my God. Slappy's hitting the ball well. I did a 72, SOXL to 60, SLV at a 52, SMH at 47, and Boeing at a 45. Slappy had a good round out here. He was hitting the ball well, so be ready. Make sure he gives you at least 5 aside.
Yeah, because he's a professional, but he's playing with your clubs. Now when he plays with his own clubs, they're like, from the 1960s. He'll be.
They are. His clubs are. Those belong in the Smithsonian. Okay, the fact that somebody still has those in a bag, he's got like ping zings from like literally the late
Thank
80s.
you, Tony from Mexico. I just replaced my ping zings from some 25 years ago. Remember I bought them? They were $900.
Ping zings?
Yeah.
900 and change, like just under 1,000.
And the question was what dot? Blue, green, black, red. They tell you what dot you got. Right?
We thought they were awesome.
I loved those clubs.
I know.
Loved them.
No, I still have them in my garage. If you want them, you can have them.
I don't want them.
We're going to go to Birmingham, Alabama. I got Scott. Scott, I want you, sir. How are you?
Hey, good morning. How you guys doing?
Doing great, man. Thanks for holding.
I'm going to try to throw a little Southern charm into your Chicago dialect here, so I hope it don't throw you guys. I'll talk real slow so y'all can understand me. So Hey, I just wanted to give you guys just a shout out because I've been trying for several years to learn this skill, and I've had my moments where I've been okay, and then I get frustrated and I quit and I come back to it. I've spent all types of money on coaching and everything, but I found you guys a few months ago, and I got on your platform, and I am starting to be profitable. So I just wanted to say thank you for everything you guys do, and you do a lot of it for free. But thank you for taking the time to do this. And even though we may not sound the same with the words that are coming out of my mouth, I understand you guys talk like I do. And so I understand that you're not always talking above my head. So thank you so much for what you've done.
Thank you, brother. It was very nice of you to call in.
Very nice.
Say that, man. Appreciate
Hopefully we don't sound like you. Do we sound with that drawl, that Alabama drawl?
Do we sound as bad to you as you sound to us?
If you saw my wife, you'd understand how beneficial it is to be able to talk like this.
I hear you, my man. I hear you, my man. We could take that conversation offline. Send pics or it didn't happen. Thank you, my friend. Appreciate your time. Great call. Great call. 855-238-2789 or 855-BE-TASTY. I'm going to go to my friend Doc in Naples, Florida. Doc, how's the weather down there? You're only about 30 minutes from me. Where are you?
Well, now 81. 81 is good for you now?
Yeah.
Oh, yeah.
Sounds good.
Yeah. My question is, first of all, thanks for all the live sections that you have before. It was really good to understand how can we work on this scenario. I'm pretty comfortable for this year because I started with some ladders, selling call spreads and buying put spreads, and they are good, of course. Now since January I'm doing this. My question is, now I have my put spreads with negative data because I've already rolled down to guarantee some profits. When I look at the platform, it's like a delta beta and theta positive, delta beta positive, sometimes. How do you deal when you have a mix of selling volatility plus positions that are already in profit, buying volatility? How do you increase your theta with that? Sell more vol. How do you deal with that?
So you're saying how do you? I got it kind of confused.
He's got profitable put
Yeah,
spreads that are now negative.
Because I have 3 profitable put spreads that I bought for a debit, but they are now with a credit because I roll down when the market's crashed. And now those positions are theta negative.
Correct.
But they are already in the profit zone.
I see. So why, Doc, why don't you take some profits on those and then reestablish the positions in May or June, just reestablish an out of the money position again. Like it sounds
those positions are already on June.
Oh, the positions are already in June.
Yeah.
Well, but they sound, so what you're saying is what started off as positive theta is now negative theta but they're all winners. So why don't you just take your profits and reload?
Yeah. Take the profits and recenter.
Take your profits and recenter in June. Yeah.
Right.
I mean, I don't
you
like,
think it's more?
But I don't like when you have when they're so deep in the money.
It's more delta play now than anything else.
Yeah, now it's just
delta assumption.
Now it's just a pure directional play. Just take some profits and move on.
The strategy worked in your case. Awesome. Now you have delta direction. If that doesn't fit your assumption, which I'm assuming it doesn't because you were more of a neutral type strategy when we put it on, take it off. Recenter.
Yeah.
You can recenter with a little bit of delta.
My point is that, at least, and tell me if I'm wrong, as soon as they are deep in the money, I roll them OTM. For example, I have one position for that is 4,600, 4,500 for June. After rolling, those positions still have some profits.
Yeah,
it's good.
Yeah, I mean,
my question is, how can I deal with my delta beta and the theta, because now I have minus 5,000 extrinsic value. That's the question.
Yeah, I mean, I recenter. I basically recenter the positions. I think you've got as much out. I think you've got as much out of those positions as you can. I recenter those.
And good job with the management of the whole thing too.
Yeah, good job and recenter.
Yeah.
Okay, perfect, great. Thank you so much. Hope to see you so many products again.
Yeah, we'll be there for sure.
Awesome,
Thanks.
man. Well, good job out of you.
Bye-bye.
Well, not so good a job out of you, Tom, but great job out of you today, Scott.
Want to know what the SPX did?
Yeah, sure. Oh,
24.58.
58 would
No.
be
24.58 is how much it was up.
okay. 24.58 is how much it was up.
Yeah, so it was an up opening by 24.58.
Which got us right to 5,300, which is what we thought. It was
53.28.
52.95 is what I quoted, I think, right after the opening.
53,028. It was up 24. So it was an up opening.
Yes, which was what we kind of expected, right? Even the S&P down 3, NASDAQ down 64. Because markets are dynamic, so I don't know. Mr. Sheridan, see you soon.
See you soon.
Awesome, my friend. Sounds great. We're going to take a quick 90-second break and come back. We got more Tasty Live immediately following these messages. Thanks. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with trades from the research team. Who is our first researcher? That's right. We're going to piss Tom off more than a little Mr. Fresh and Clean Dad. What's up?
So much like Sharp Dressed Man Better.
See? I told you.
What up, Gad?
It's okay. I'm good. What's up?
Did you say it's okay? You're Gad?
I'm good. Yeah.
Oh, you're good.
Yeah. Good.
Please, it's okay. I'm Gad.
I like it's okay. I'm Gad.
Yeah.
I like that better. You should do that from now on. That's right. When somebody asks you how you doing, say, I'm okay. I'm Gad.
Yeah. I don't like many follow-up questions. Because you'll be asking, oh, what's going wrong? What's up? What's up? You know?
Mm-hmm.
Because it's okay. It's not yes or no. It's maybe I'm okay or good.
Yeah. See that?
Yeah.
What do you got for us today?
So today I got SMH.
SMH.
Yeah.
Okay. I don't have an SMH position on right now. I've been carrying an SMH position pretty much all last year. This year, I've been quiet in there.
It's had an IV rank in the teens. It's now got an IV rank in the 50s.
Exactly. Yeah.
Yeah. Maybe that's why I didn't have it on. Plus, it's next to that. It's impossible to trade. I mean, it's liquid enough.
It's liquid enough. Yeah. And some trade is worth it trying sometime.
So I haven't done it. Got for us here a little Iron Condor action style. Now $5 was wide.
$5 wide.
Yeah.
You got 176.71.
Yeah, 176, 171 for put side, 215, 220 for call side.
176, 171, and 215.
220 for call side. Yeah.
1/3 the width of the strikes.
Yeah, one with. Yeah.
Yeah. What's the stock doing this morning?
It's up.
SMH looks like it's up about $1.50, $2.
Yeah, up to $2.
All right. So this thing should trade. What do you think? You think you have $1.95?
Yeah.
It's very possible.
Do you think it's possible or impossible?
No, it's possible.
Yeah.
Yeah, I got to see where everything opens, but sure.
Okay.
I mean, you already got a little bit of skewed this a little bit to the upside.
Yes. Yeah. Exactly. Yeah.
Okay.
Good.
Beautiful.
Good. Thank you.
Thank you, sir.
Nice job out of you. Who's our next researcher? Is this an oxymoron? Personality. Kai.
What's up? It's Kai.
I am Kai.
Yeah, I'm Kai. Right.
That's right. How you doing?
I'm good. I'm Kai.
There you go.
Yeah.
Thanks for playing along. I appreciate it.
Yeah, no, make it right. Yeah.
I am Kai.
I am Kai. What you got for us today?
Shopify Strangle. May, because earnings is right before expiration. So
we have a Shopify Strangle on. So far, no bueno. Shopify Strangle. Oof.
It still has one of the highest IVR.
It does, but
very rich premium.
Like I said, no bueno yet.
We are We're in the 75.95. Where's the stock?
Oh, okay.
What do you want to do?
94 right now.
Yes.
Yeah, we have the 75.95. You want to do the 65?
84, yeah, 84 right now.
You want to do the 65?
65, 105. So roughly 15, 16 delta. Slightly small delta on the put side.
Saz, what do you think? Ivy rank us.
I mean, I have the other one on. I need to make some money back. What price do you think you're going to get filled at?
Mine is 65, 105. But you probably can just, you're not gonna widen your strikes.
I didn't widen the strikes because I'm inside of you right now. Mm-hmm. Like I said, I have the 75.95. I'll put this on. This is the
May.
Yeah.
You have May, okay.
Yeah. Let's put this on. So this is the 65.105.
Yeah. So 16 delta.
All right. Let's check it out.
Beautiful.
Let's get it on.
Very nice.
Let's get some trades on today. We got to get some stuff going on.
Cool.
Look at Sosnoff. Let's get it on.
Something like a recipe. Bits and pieces.
Weird scientist.
Hey.
Where's Data?
Hey.
How you doing today, Data?
Doing well. Double D himself.
Double D himself. Dr. Data.
Hey.
I'm Double D. I'm doing good.
I got jokes today.
Okay, so today I'm looking at HYG. This is the high yield. You think, why is he trading HYG? So,
well, let me ask a question. Why would I trade HYG?
Well, I'm glad you asked that way. Thank you. You just set me up perfectly. So I looked up.
Does this trade at all?
Yes, it does. So the CBOE just posted like this thing on products. And so I looked this is in the top ETF trades of 2024. SPY number 1. Q's number 2, and then you have IWM, but then also in the top 10 you have EEM, FXI, TQQQ, HYG, which is 2% of all ETF trades is in HYG. Look at the volumes on here. Look at the open interest.
Open
on here. Look at the volumes. There's a lot.
May or June here?
I'm doing June.
You're in June, and they've got good open interest in June.
Really good, isn't there?
Let's take a look. Yeah. Well, you're right. I mean,
I was surprised.
90,000, 188,000, 200,000. Okay.
So this wasn't even in my watch list until
Which one are you selling?
I was doing the 75, and it looks like there's quite a bit of.
What price?
I'm kind of fishing here. I put here 90. That's not realistic, but I'm just going to price it high and then kind of see where the market settles on the open. Probably get 80, something like that. But if you look at it, if you get 80, right? 80 over 1,300, that's 6%. 6% real return on capital is possible. You multiply that times 64 into 365, and that's 35% annualized. So, am I going to get that? Unrealistic, but a fraction of that. So, the return on capital is okay.
You threw some math in there.
I did.
I mean, I don't like.
I mean, I haven't traded this thing in like 2 or 3 years.
I haven't either. Yeah.
I haven't either. I would love to see the markets on opening, see if they get any tighter. I haven't watched it.
Crappy right now.
I can't. Yeah, they're very bad right now.
Yeah, they're really bad right now.
So I can't comment on it. But I'm intrigued by the math. So okay.
I put the order in.
Excellent.
Beautiful.
Thanks,
Good job out of you. Who is our last researcher? What's up, young lady? How are you?
Great. Thanks for bringing the energy while Tom's giving stank face. I appreciate that.
Oh my God.
You're welcome, Julia. You're welcome. You're welcome.
I know. Someone's got to bring us up on a Thursday.
Today.
I'm just saying.
You don't warrant one.
Oh, that's okay. What are you going to do?
Can't do much, Julia.
Okay. Why am I even trying? Okay, let's do an Iron Condor so Tom doesn't buy the wings. There we go. So today I'm looking at the Qs, pretty juiced premium. I assume you have a bunch of positions on in here, but I was actually looking at the 29 days, so not as mechanical as ideal, but I didn't want to get into the 64 days yet. So this it's moving a bit this morning. It was up a little bit more when I started looking at this maybe like 30 minutes ago, but now it's up about $3 and change. So this is adjusted for that move this morning. So I'm looking at the 405, 485 short strikes going $10 wide. So this is, more of a Tom suited trade, a bigger position, at least for me. So 748 in buying power for 252 in credit. The pop is like 64%. But I felt like the premiums were pretty juiced in the 29-day contracts. It seems like there was some opportunity there. I also felt kind of more comfortable making a shorter term directional assumption around this underlying versus a longer term one. So that was the kind of justification for kind of sticking with the 29 days instead of going further out.
I don't hate it. I mean, I have a tighter one on right now.
A tighter one on?
I have a tighter.
Not from entry.
No, I have a tighter strangle on. 420,
tighter
465.
strangle on. Okay, that makes a little more sense. Yeah.
Yeah, 420, 465.
I wanted to say around the expected move on this one. I think it's going to wind up a little bit tighter depending on where we open. But I did want to say around the expected move, say defined risk especially like 29 days, looking to manage this. Yeah, probably pretty aggressively. But yeah, let's see where we wind up. That was my rationale.
All right.
Sounds logical.
All right. I'm gonna do exactly this. I'm gonna widen the strikes. I'm going to buy back my strangle. I'm going to widen the strikes. I'm going to add contracts.
To the 29 days. Wow.
Yeah, can't do any better than that.
I'm not going to. 29 days keeps me in the maze. I won't roll to June till a week from tomorrow.
Yeah, I'm not going to sell past the close on that one.
Yeah.
Hell yeah. All right.
Did she say knock yourself out? I didn't hear her say that.
She did. She said knock yourself out.
I didn't hear that. But I'm going to change. What strikes did she put up here? She put up 485, 405.
485, 405 short strikes, and then $10 wide. Yeah, so 252 in credit, and then 748 in buying power. The dyslexia is strong today. That's going to come in real handy.
Yeah, I think it's the 485, 400.
Okie dokie.
Okay.
Okie dokie, artichoke. There you go.
Me and my little artichoke are going to take a quick 90-second break and come back. We got the opening bell next. Thanks, Julia. Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. That's right, with this man, Victor Jones, and hear me out. What's up, Victor?
Oh, yeah. Tom, Tony, Tasty Nation. How you doing? Gentlemen, Tom, I hear you're in a great mood today. Is that true? You're in terrific spirits?
You know what? When he's not right, he says, like, he tries to deflect it off on me. I'm in a great mood today.
Deflect. It's called deflect.
Like
I'm a little bit, I wish the Bulls had played better last night, but other than that, I'm good.
I don't know.
I wish the Bulls were playing a little bit better in the market too.
No, but I'm good.
Think? Kind of a weird open, huh?
Yeah, a little bit underwhelming, but good for the good kids. We're good with this.
Yeah, wouldn't it be perfect if they just let the market sit here for a couple of weeks and let everybody who bought that panic insurance or those expensive ass upside calls? Wouldn't it be nice if we just sat here and let everybody's premium expire for the next couple of weeks?
I mean,
is that wishful thinking?
I don't even.
I think it is wishful thinking, but
I'm not so sure it's wishful thinking. I could easily see that happening here. I could see us trading in this kind of range. There's so much juice. Everything is pumped so high. It's possible.
Well, the NASDAQ just went red.
Well,
yeah.
Instantly. So here's the question. Tom Sosnoff, here's what I like to do. I like to go out there exploring and basically bring back things that I know you're not watching, you're not listening to. I listen to congressional testimonies.
You're right. I'm not listening.
He's oblivious. That's
I'm not.
He doesn't have an opinion.
I don't like when Tony tells me what I am, but I'm not oblivious. I just don't care about congressional testimony.
I figured. But Jerome Powell did give a statement and an interesting sit down yesterday at the Economic Club of Chicago, your neck of the woods. I'm surprised you weren't there.
Oh,
I'm surprised he didn't show up for coffee or something.
We're members. We love the Economic Club of Chicago. It's one of my favorite hangouts.
I heard they sent your invite in the mail, but they sent it through Hong Kong Post, which is why it didn't arrive.
So not going to come.
We're holding it back.
Yeah.
We're thinking of moving the Economic Club of Chicago to Bad Coffee, though. We're working on it. Go ahead.
What a wild mix that would be. What a wild mix of patronage. I am curious. I brought back some quotes for you, which I would like to get your reaction on. And then I'm going to get you riled up towards the end of this.
All right, good. Get me riled up.
For now, just going to give you some quotes. So a couple of things that Jerome Powell said, a couple of topics from yesterday on waiting for more information. Surprise, surprise. He mentioned, for the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. Jerome Powell, get in line. I think the entirety of the world is waiting for more clarity on getting back to their 2% target and maintaining maximum employment. He said, I do think we'll be moving away from those goals, meaning away from getting closer to 2% inflation target and away from maintaining maximum employment. He said, I think we'll be getting away from those goals probably for the balance of the year, or at least not making any meaningful progress towards, again, bringing inflation down and maintaining maximum employment. As a reminder, their growth projection for 2025 is 1.7%, lower than where we had been previously, and an unemployment rate by the end of the year at 4.4%, which is higher than where we currently are, 4.1, 4.2%. He also mentioned we may find ourselves in the challenging scenario in which our dual mandate goals are in tension. This got a lot of play over the last 24 hours. If that were to occur, we would consider how far the economy is from each goal and the potential and potentially different time horizons over which those respective gaps would be anticipated to close. What he's effectively saying is, on one end, they're trying to fight inflation, and I say fight inflation, in quote. On one end, they're trying to fight inflation. On the other end, trying to stimulate growth. So if the bottom falls out in growth, in order to stimulate the economy, you would likely light a match with regard to inflation. In order to fight inflation, you have to dampen growth. And so he's saying that those two goals could be brought into tension, and that got a lot of play with sort of a stagflationary read-through. A couple more here before I get your reaction. When asked about whether there's a Fed put, this got a nice laugh in the audience. He said no. He mentioned that markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning, meaning sometimes markets go down. And I'm not here to prevent the markets from going down. I'm paraphrasing here. They're orderly and they're functioning just about as you would expect them to function. In other words, spreads are rising. Treasury yields are rising, equity prices are going down, but as long as there is a buyer and a seller, and that's the function of the marketplace. On tariffs, he said the level of tariff increases announced so far is significantly larger than anticipated. He said that they're likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding this outcome will depend on the size of the effects and how long it takes for them to pass through to prices fully, and ultimately keeping longer-term inflations well anchored. On balance, I would argue that the statements in total were had a slightly more hawkish lean than I think the neutral expectation from the marketplace. That said, the implied rate cuts in Fed Fund futures have about 4 cuts priced in to the end of the year. So mid-June, so the June 18th meeting will start the first cut, and then a fairly quick succession, meeting after meeting, 25 basis points into the end of the year is where we are now. I'm going to pause for just a second. Any of those statements or all of the statements in totality stick out to you as interesting, or anything you want to respond to before I start to rile you up?
Well, the first thing that comes to mind is you lost me at Jerome Powell said. Like, I seriously turned you off as soon as you said Jerome Powell. Like, I don't need you to parrot like Jerome Powell what he said. There's a reason, Vic. Like, we don't think the same way and do the same things, because when Jerome Powell was speaking yesterday, I had no interest in listening to him yesterday directly. Mm-hmm. Zero. So I have less.
You did watch the bonds with.
Well, I watched the bonds. I traded the market. I watched the bonds, of course, but I had no interest in listening to Jerome Powell. I just watched the market. I don't really care what he has to say, and therefore, you parroting what he had to say, I mean, just repeating it. Why would I care? I didn't listen to anything you just said. Mm-hmm. I mean, not because I'm not trying to be just like, I'm not trying to be annoying or
sound like
psychotic,
but you don't.
No, it's perfect.
But the reason
this is perfect.
Okay, listen.
So tell me why you don't care.
I don't care. I'm watching the market. Okay, Jerome Powell doesn't know anything. I mean, like those were all very nice things that he said. Congratulations. He basically said what if you asked ChatGPT to write up a Fed speak based on what's happening right now, that's exactly the same message you would get. I mean, it doesn't matter to me. Like I just watch the markets and see what's happening. And, I mean, I think for other people,
bonds have been traded. They were 115 pretty much when it came out.
Bonds rallied a half a point yesterday. They're down a half a point today.
Inside the expected move, they are who they thought we were, no matter what Jerome said at this point. Yeah.
I mean,
the market had a bigger move, I think.
The market had a bigger move yesterday. It's come back a little tiny bit today. It was down 120 yesterday. It's up 30 today. But it was down 60 before that number came out. So if you it moved 60 handles after that number came out. It's come back 30 today. So the net result is 30 handles, which is 0.5%. That sent Trump into a tailspin, which is because he thinks it's personal, which it's not, because he doesn't understand how bonds work. And for me, it means absolutely nothing. I mean, it literally means nothing. I mean, everybody has to see how this stuff plays out. And it's ridiculous. Like the only thing I would have done the less Powell could say, the better for him, because he should have said, listen, we're just going to see how things play out. That's it. Because that's really all he can say. Like, this is a little bit of an unprecedented time. And nobody knows exactly how all this, when you start a war, whether it's a trade war, a physical war, whatever it is, when you start a war, I don't think anybody knows there's a purpose for starting it, but I don't know. I mean, whatever your purpose is for starting it, but I don't think anybody ever knows how things are going to end up.
Right. But you have to go with the assumption that it was done with good intention.
You do not have to go with that assumption. You have to go with that assumption. If you want to believe that it was done with good intention, you can. I've been very clear from day one that this is done out of spite and retribution and not good intention. This is done out of evil. That's all it is. It's getting back at enemies, and that's
you got a woke disease or something.
So I got no disease. This is the most obvious attempt at retribution and spite and ego that I've ever seen. And so the reason it's tough for Jerome Powell is because we've never seen, the U.S. has never. There's plenty of other wars that have been started for all the same reasons, but not in the U.S. And so he's got to see how this plays out. And that's the right answer. See how it plays out. Period. But there's nothing to debate. The market tells us everything we need to know.
Right.
We're down 30 handles. Over 2 days, this is a 30 handle move, and which is absolutely nothing. And for the bonds, it's an absolute scratch. Up a half a point yesterday, down a half a point today, nothing. So I'm looking at this move as, hey, it's business as usual. Let's try to, make back some of the premium we lost yesterday when they pumped a lot of juice in this thing. And I do think a lot of it's already come out this morning. And let's see how the market, if the market comes back or how it closes today. It'll be interesting to see. By the way, Netflix is up $10 now.
Netflix is up $10. NASDAQ up 85.
Yeah,
front ran me a little bit. So let's go to the next part. Part number 2. Part number 2 is on April 4th. President Trump tweeted, it would be a perfect time for Fed Chairman Jerome Powell to cut interest rates. He is always late, but he could now change his image, and quickly. This was on April 4th. Given the statements that were made yesterday, I think markets are looking for a little easing from the Federal Reserve, or a little bit of a dovish take. They did not get it. In fact, he leaned more hawkish. There was a response this morning from Donald Trump. I think it was this morning, my morning. I'm not sure what time it was your time. But the ECB this is what he said. The ECB is expected to cut interest rates for the 7th time, and yet too late. Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical complete mess. Oil prices are down, groceries, even eggs are down. Not true. And USA is getting rich on tariffs. Questionable. Too late.
Okay, come on. Hold on. This is all propaganda. This is all ridiculous. This is nonsense and propaganda.
You got to let me get to the last line, Tom. Too late, should have lowered interest rates like the ECB long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. That's the line. Powell's termination cannot come fast enough. The idea that Donald Trump is sort of leaning on Jerome Powell, as we saw in Trump 1.0. Jerome Powell's term ends May 2026. There is a process to remove the Fed chair. It's not just simple, straightforward, as the president can fire him. It's a whole impeachment process. So my question, on one end, I think you look at the statements that are coming out of the Federal Reserve chairman as not particularly interesting, not particularly special, not particularly something that you need to pay attention to, something that could be, in your words, written by ChatGPT. On the other end, there's the independence of the Fed that's being picked at right now. And I wonder, what do you think, as somebody who doesn't really care what the hell the Fed is saying, on one end, but on the other end, I'm probably certain that you care about the independence of the Fed. What does Tom Sosnoff think about that statement, the leaning on Jerome Powell here?
I care about the Fed in the sense that I believe their role is to provide catastrophic relief and catastrophic insurance against an event that against certain events that can happen that are outside of their control, but that are parts of our economy. Like, for example, what happened in 2008, 2009, and what happened in over the issues we had on the fiscal cliff and different things throughout the years and the pandemic and things like that, where there's enormous stress on the system and the Fed has to come in and they have to take special kinds of action. And that should be done, through an independent organization, which the Fed is. It should not be done through the executive branch because that's not their area of expertise. Trump says stuff, and listen, it depends. If you're a sycophant and you think the guy knows everything, then he probably wants to make himself the head of the Fed. I don't know. That's probably his game plan. I, on the other hand,
Did you say Jerome Powell's very good at what he does in the past?
I do.
Right.
I say he's very good at what he does, but I also think the Fed's hands are tied to what the market's doing. I don't understand what Trump doesn't understand about that. The reason interest rates are higher is because of the pressure that he's put on the marketplace with his tariffs. You can't have Jerome
rates are 5%. They're on the low end of their range.
They're in the high end of their most recent range.
Okay, but just like statistics, you could take at any time frame and find something that fit for you.
The point is, if he wants lower rates, then peel back your tariff policy. Everything's related. Okay, the only reason rates are as high as they are is because of all the tariff stuff.
So please, devil advocate for a quick second. If somebody's been lobbing tariff bullets at you for years, and you retaliate. Thank you, with tariff bullets to them. Is that you starting the war, or is that you?
Yes, it's you starting the war.
Well, you just said retaliate. So you're retaliating. It's not just
you said retaliate. Okay, this is
okay. Well, that's
a trade war.
That's the other side of the argument. Just presenting both sides.
I'm not actually interested in both sides.
I know. I listen to you and Dylan all the time. It's always one-sided.
My point is, you can't start here. The simplest way to say it: you can't kill your parents and then say you're an orphan and plead for mercy. Plead for the mercy of the court. Okay, and that's essentially what's happening here. It's the same exact thing.
Not an example.
Trump killed rates and then pleads for the mercy of the court. Get rid of this.
Today you say Powell's comments are not important. Yesterday you said they were very important.
I did not say they were.
Back.
Stop. I don't care what Powell says. I didn't listen yesterday. Not listening today.
He got it right.
I guess the weird thing for me,
that side is just
the weird thing for me is, while the statement leaned hawkish, the Fed fund futures actually moved closer to pricing in the fourth cut for the year. So regardless of what he said yesterday, the implied odds say that in June we're going to start a 100 basis point cutting cycle. We might need to back off that.
There was a rally.
The weird part about this statement, in my personal opinion, is it's a reaction to words and not necessarily markets. If you take it at face value.
If you looked at the bond market yesterday, the bond market rallied, and if anybody in the Trump administration actually understood how this stuff worked, the response today would have been the correct response on his Truth Social, wherever he writes all this crap. The correct response would have been, you see, the bond market got it, and they rallied yesterday, which lowered rates. I mean, that is the correct response. The correct response is not we're going to terminate Powell because he's an idiot and he should have lowered rates. The correct response was, you see, even with what Powell said, we got it right. That was the correct response. But everybody in that executive branch is just too freaking stupid to understand that a rally in bond market yesterday meant that rates were actually lowered. So they had to come out with all the stupid statements today about disrupting the Fed, and now bonds are down. My whole point is, if they just understood,
bonds are down 8 ticks. They're in.
I understood.
But I expect to move. If they were up 8 ticks, it would be. You could make the same argument. They didn't do anything
yesterday. After all that news, the market sold off, but bonds rallied yesterday, pushing interest rates lower. The correct response was, you see, that the marketplace understands what we're trying to do. That's the correct response. Not.
But the equity market went lower, and that trumped the news.
Hold on, stop. It's not about when the President of the United States, it's not like some other yin yang. It's the President of the United States, it's the leader of the free world, writing, hey, we got to terminate the chairman of the Fed. When you write that, you destabilize markets. Period. That's what it does. There is no benefit to doing that. The only person that would write that in that situation publicly, is somebody that doesn't get it or is trying to bully the marketplace. It is not normal behavior. Write.
That's his. You're trying to say like a power puncher. You want him to all of a sudden be a counter.
Oh my God. You cannot.
You can use the same type of analogies. I mean, or all of a sudden you want him to win on points. He doesn't.
What does terminate the chairman of the Fed mean? You want somebody to kill him?
No, it's just a stupid statement. Well, I'm
just asking. What does that mean? How does the leader of the free world say that? That's freaking stupid.
Well, when other Fed chairs have joined the Democratic Party in the past, after they've done with their being Fed chairs, it seems like, again, just playing devil's advocate stuff. I'm not.
Like, who are you talking about?
I will Google search it for you.
Go Google search it.
Okay.
Okay. Most of them stay out of it.
Okay.
But go ahead.
Okay.
I would agree with you that I don't think the statement furthers the goals. I do agree it adds a risk premium to U.S. Treasury. And if you want to give him some benefit of the doubt, it's like knowing that the cuts are coming. It's like some public posturing in front of the cuts to look like you had something to do with it. And I think that's the more generous interpretation of what this
the cuts
this
are
is.
coming.
Though I don't think it's helpul.
There's no doubt about it. Rates are going to be lower. That's why. Listen, I'm long bonds. I'm keeping it really simple. We are long bonds right now, and we're staying long bonds because I think rates are going lower, period. But there's a lot of different ways to handle this and talk about it. You don't have to try to interpret what everybody's saying.
Federal Reserve Bank of Philadelphia has 39 Democratic and 5 Republican economists. The Democratic to Republican ratio is 7.8 to 1.
So just because the Fed lowers the front end, it does not necessarily mean that the long end has to go down with it. And I think we saw that in September with their jumbo cut of 50 basis points. They followed up with 2 25 basis point cuts, and the long end lifted throughout that entire period. So I just want to put it out there. Even though you have this position because you believe the cuts are coming, it does not necessarily have to work out where the long end plays ball and it comes in along with that short end falling. You could end up seeing a steepening. I'm just putting that out there for people. I know you already know this.
I agree with you. It doesn't mean that the long end has to come down, but it's usually, that's the market that everybody quotes is the 10-year for the most part. So, we're quoting the 20-year, but for the most part, they move in tandem. The correlation is like 90%. And you can quote the 2-year or the 90-day if you want to, but that's a tough market for most people to discuss when they talk about
I agree, but the short end is going to move based on policy. The long end is going to move based on growth and inflation expectations apart from what the Fed policy is. And I know you know that. I'm just putting that out there for anyone who's not as familiar.
Vic, I think the key that you're missing, and that really is important for people to look at, just look at the damn prices. Like, that's the reason we have all these prices in front of us. That's the reason we have screens. That's the reason we do what we do here. Because, go to 10Y and just take a look at it. /10Y. There's your 10-year yield. And you can look and see where it was a week ago, 2 weeks ago, whatever you want to do. You can look at 2YY if you want to see the 2-year. And you can actually see the prices. It's not difficult. You can just go on the there you go. So you can see what's happening. And
speaking of price, I think in correlation, one of the most interesting moves yesterday was the fact that at one point in the day, the NASDAQ was down 2% and Bitcoin was up 2%. The NASDAQ ended up down something like 3%.
You tweeted that on one of those social media sites. I remember seeing it.
Bitcoin has...
That's right.
Bitcoin has really decoupled.
Go ahead.
Bitcoin has totally decoupled. I don't even know what it tracks anymore. I think the only time they sell off Bitcoin is if there's an asset squeeze. Like if it's like a broad-based... Like when they sold stocks down huge a couple weeks ago, Bitcoin had an ugly day. But for whatever reason, I just don't think people that are long digital assets pay much attention to the... that's why firms like Coinbase don't really focus on equity markets and things like that. I know they want to branch out and things, but I just don't see their customers, dumping Bitcoin because stocks go lower.
Yep.
The risk of Bitcoin long term is probably much more so in the quantum computing space and in the regulatory space if they push too far in one direction. So the risk to Bitcoin is probably a technology risk, and it's probably something different, but I don't think it's an equity risk.
I think we have seen Bitcoin go through many different cycles. Whether or not you believe this is just quasi-stagflationary conditions or you believe bona fide stagflation is ahead, the likelihood that we get to see Bitcoin navigate an entirely new economic cycle for its short lifespan is higher than it was, let's call it 6 months ago. And I think for all the cycles we've seen it go through, we haven't seen it go through a bona fide stagflationary condition.
Yep.
And this would just be another notch on Bitcoin's belt to get through it and to prove that it's not just magical internet money. It's something more sustained than that.
I think the biggest risk to Bitcoin, in addition to the things I mentioned before, quantum computing and regulatory, is also going to be displacement by other digital currency, and I think that's where the Bitcoin risk comes into play, is if they move off of kind of private blockchains onto something different. I just think that the risk is going to be.
Inflation's come down, right?
No, it hasn't.
I think I get what you're saying. You're effectively saying Fartcoin is going to challenge Bitcoin for primacy.
No. But there could be central bank coins. There could be, of
course,
there could be, U.S. could launch a digital currency. I'm just saying. I think
government issued programmable currency, 100%.
I think the challenge. I think the challenge comes from there, not from. I don't think the challenge comes from an altcoin. Let's put it that way. I think the challenge comes from much more of a centralized approach to an alternative currency or a government approach to an alternative currency rather than an independent, decentralized piece of technology.
Which is why Tony and I have been working so hard to launch our altcoin, which will be ready.
I have one. I don't have a coin. I've got an alt something. I'm going to find out exactly what it is. I'm putting it in my wallet.
You should launch an alt.
I've launched one. You've launched one too. Not a coin, but we've got something. I'm going to learn a little bit about it today. Hopefully, I'm going to get one in my wallet.
Yeah, you'll see. You'll be joining the Haktua girl in jail. Hopefully.
Hey, if I'm joined one time, okay?
You and her are going to be in a cell together.
Well, you can't have a Hawk 2 without me, okay? That's why.
Just telling you. That's who you're going to be sharing a cell with. You and your old coin.
right.
All right.
Thanks, gentlemen.
Goodbye, Mr. Jones.
You are priceless. Goodbye, Mr. Jones. I'm going to miss you. I'm going to miss you very badly.
That's exactly where you're going to end up.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a market measure. Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with a market measure sponsored by the CBOE. Sign off, UNH, 465 and change. You should have held it. You would have been up another $3.
Oh, my God.
I told you to do half. Said, you can do half.
I'm not a half guy. You're a half guy. I'm not a half guy.
You're half a man.
Yeah.
What you are.
Man.
NASDAQ unchanged.
Yeah.
Nothing to see here. Volatility down 41 cents. Even the S&P's up 8. Dow down 500 on UNH.
They just started to sell off gold a little bit.
Don't even say that. I mean, it is $24, and it is a decent-sized move, 0.75 percentage point. But, man, gold has been a head fake a couple of times on some sales.
Yeah, I mean...
But encouraging. I will give you that. I will help you with that.
Oh my God, save me now. Serenity now. Serenity now.
Mm-hmm.
Rolling down calls in gold because you know what? I don't want to be caught long gold with your money for 1 second.
Understood.
They do kill premium in there to the downside though.
Mm-hmm.
That's the good news. I don't know. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thank you for spending the morning with us. tastylive.com/events. Check it out. tastylive.com/events. We got a ton of stuff coming up. You want to check out that page. Also, there is no show tomorrow. So markets are closed for Good Friday, but we will have first call on Sunday night, 4:55. I know it's Easter, but you want to join us?
I know it's Easter, but shut the front door.
That's right. You don't have to if you don't want to. We'll be on Sunday night, 4:55, first call. A little bit short in edition.
GFY.
But can't wait to do it Sunday, so looking forward to it. But if you have some time this weekend, go to tastylive.com/events and sign up for an event to a city near you.
Please do. I'd love to see you. I haven't been out on the road for quite a few years. I'd like to see your face again. Press the flesh.
This is Expiration Friday today. This is Expiration Friday on a Thursday, just so you know. What did Set come out at?
Oh, I'll take a look. I mean, usually when somebody asks me for a position, I say, you got a position? Let's take a look here.
Just checking to see where the SPX marked up.
53.32?
That sounds about right.
Mm-hmm.
Where to close?
53.32. That's the 16th. Sorry, nothing yet.
Nothing yet.
Yeah, nothing yet. 15.32. That's what I see here, right? 15.32. This is the 16th. Yeah, April 16th. Nothing yet.
Okay. I didn't have a position on in there this morning, but we'll see what happens. Market
looks undecided. So no volatility in by 40 cents. Even the S&P's up 4, NASDAQ down 15, Russell up 2, mixed bag of tricks with the Dow, the biggest move to the downside by 1.5%, all on UNH.
Very much an undecided market so far. NVIDIA's kind of weak.
Let's take a look at NVIDIA. Yeah, down $3 and change. I would say that's very weak. As a matter of fact, I looked at NVIDIA earlier. NVIDIA got up to 104. It's 101 and change right now.
Yeah, sick puppy. I got a couple of NVIDIA positions on. I probably should.
Oh, do you?
I probably should mess with them. What's the IV rank in there? It's nothing great.
45 has earnings May 28th.
Yeah. All right. Anyway, let's do this.
Let's do this. We are.
We have a market measure for you today. It's a quick one. We're going to talk about We're going to talk about worst losses. All right.
I hate this subject.
I know I hate it too, but I think the guys thought we had to do it. There were some huge moves in the markets last couple of weeks.
Yeah.
If you did a 0 DT naked, forget it. I know most people spread them off, but if you did a naked, what's the most you think you can lose in 10 minutes? Let's put some context around this.
I mean, on those days, a lot more than you would expect. I'll put it that way. There was no way you could throw a number. I could throw a number out.
SPX, a one lot. So just to put some context.
Yesterday, SPY moved 14 handles. I didn't think SPY would move 14 points in a day.
So 100 points in the SPX is $10,000 on a one lot, right?
Right.
Can you lose 100 points in 10 minutes? Because we had a 100-point move. We had a couple of 100-point moves in 10 minutes.
If we didn't have last week, I would say no. We had last week, I would say you're probably pretty close just by doing the math.
I would have lost almost $20 on the Iron Condor I did yesterday if I didn't take it off for a $1 winner, $1.25 winner, whatever. Crazy.
We tried to talk about managing the winners, and that's it.
Fastest losers on bad days in the 0 DTs. Here, let me put it this way. Fastest loser compared to the fastest winner.
Okay, let's try it.
No. I'm asking you a question.
Oh.
How much more do you think how much more can you lose than you can make? This is a tough question.
No, I don't think so, because when you sell, it moves a lot. You're it's got to be some 2 to 1 against you. I don't know, money wise.
I think it's more like 10 to 1.
Oh man. Okay. Well,
if you can move 100 points in 10 minutes.
Yeah,
you can't collect that much.
You can make an argument if you did the 2-day options, just because of the way the market moved, you didn't lose anything, you made money. This is very granular.
We did the zeros.
I get it.
So how much could you make in 10 minutes? How much could you lose in 10 minutes? And what were the worst losers in the outlier moves that we had in the last 2 weeks? I don't know. We're going to take a look.
Oh God, this is depressing.
I know, we're just taking a look.
Apple up $1.60.
Because of the extremely short time frame until expiration, 0 DT option prices can change quickly. Recent days have seen historically rapid movements in the SPX and the 0 DT options have responded accordingly. While the buying power reduction regulations ensure that retail customers almost exclusively sell defined risk positions, let's look at some of the benchmark velocities in the 0 DTs. I'm sorry, I meant breakneck, not benchmark.
It's okay.
Breakneck. Let's go next slide.
Breakneck.
We sold 20 Delta Strangles at every opportunity, both at the open and every 10 minutes for a snapshot. For each such trade, we found the 10-minute increment with the largest change in mid-price over the rest of the day. We picked out the most extreme examples. These are the worst of the worst. Okay? The worst of the worst. Because everybody always wants a worst case scenario. Well, with the size of the moves we had the last couple of weeks, that is your worst case scenario, right? We haven't seen moves like that.
Right. I mean,
it's your worst case scenario.
Worse, but in recent history, those are the worst.
As a treat, the research team also looked at the most successful scalps. So we're not going to take it all away from you. We're going to give you a treat too. Let's go to the next slide, John. We'll go through this fast. It's fun. So
fun, not fun.
Fun, not fun. 4-7, 4-7, and 4-4. At 9 o'clock in the morning, at 9:15 in the morning, at 2:35 in the afternoon. Selling a strangle that was $300 wide, the 20 Delta Strangle. The worst 10-minute P&L in the morning up 4-7 was $9,000. You lost 90 points.
In 10 minutes.
The second worst was 4,300. The third worst on a strangle, this is a wide strangle, it's not a straddle, was 3,300. Those numbers surprise you? 10 minutes. I mean, honestly, I've lost more than 3,300 in 10 minutes before. But
yeah, they surprise me.
But this is a one lot.
Yeah, I would not have guessed that big.
One.
Yep.
These are one lots.
Yep.
Okay. These are 10-minute positions at 9 in the morning and 2:35 in the afternoon for 9,000, 4,000, 3,000. Let's go next slide. This is the most sudden losses in straddles. These are going to be bigger, and they are.
Mm-hmm.
On 4-7 at 9:05 in the morning, the straddle lost 12,600. What happened at 4-7 at 9:05 in the morning?
I don't think anything
4-7.
I just think that's when
was 4-7 a Monday morning. Was it that Monday morning where they opened down 250?
4-7 was the Monday morning.
It was 4-7 was a Monday morning, and they opened down 250. They opened down Gesundheit.
Thank you.
They opened down and went lower, right?
On 4-7, we opened at 5,007. Our low was 4,800 and change.
Yeah. So they dropped a quick 100 points. That's what happened.
Right.
The
high for that day was 52.86. So if we didn't sell off, I don't have time up here. If we didn't sell off before 9:05, which I think is when we had to probably had to sell off. They're looking at the largest magnitude of the move. It was right there.
So the other straddles lost 6,000 and 3,000 on later in the day on a different date. So realistically, that was kind of really an outlier. So you're talking about, they're still big numbers.
Yeah.
But these are undefined risk trades, all that kind of stuff. Let's go to the next slide. So these are your best scalps in 10 minutes. 4.8, and then at 2 different points in 4.7, where they killed premium the other way. That's how wild this day was.
Yeah, no kidding.
$1,500 in 10 minutes on a one lot.
That's when you're saying to yourself, what can't I do wrong? This is beautiful. It's so easy.
So the guy that sells the straddle.
You're right. It's 10-1. I mean, not quite, but close enough. Whatever.
No, it's actually
7-6-1.
It's actually like 4 or 5-1. Yeah, 4 or 5-1. It's not really 10-1. And if you look at 4-7, which was that Monday, yeah, it's about 4 times. But that's still a lot of money in 10 minutes to make.
Yeah.
So if you do it at 9:15 in the morning, you're like, this is the worst business in the world.
Sure.
And if you do it at 12:35 at lunchtime, you're like,
it's like shooting fish in a barrel.
Why didn't I learn about this before? Crazy. That's both efficiency and kind of neat to see. Let's go next slide. So some of the takeaways. Last Friday and Monday were among the most turbulent days in market history. Even the bounce on Monday morning was painful. This resulted in some zero DT positions losing money at an almost unbelievable rate. A short straddle lost $13,000 in 10 minutes on Monday morning. Of course, realistic zero DT trader had long strikes and defined risk and an excellent reason to appreciate our buying power requirements. While zero DT trading is some of the most not even sure what that word is. Say it. Yeah.
What is it? Let me see if it's a real
available
word.
To retail traders. I'm not sure if it's a word.
Yes.
Sticking to
puissant, having great power or influence, Sosnoff. Puissant.
I think these guys do it just to torture me. Puissant.
Okay. You are puissant, Sosnoff.
Sticking to defined risk means as long as we don't replace losers with fresh trades, there is only so wrong a day can go. They really had to use puissant. I don't even know if that's how you pronounce it. Puissant.
Good job out of you. Great job out of the team. We're going to take a quick 90-second break and come back with your friend of mine. Ooh, even the S&P down 15, Nasdaq down 110. Volatility basically unchanged.
Just went the exact opposite way.
We're going to take a quick 90-second break and come back. We got more Tasty Live immediately following these messages. Then Scott Sheridan, Tastytrade World Headquarters. Are we going to the phone line, Sosnoff, because it's Synthetic Friday?
We certainly could.
We certainly could. Does that mean I make a call to action? It's a little unclear. And you rule with an iron fist, so be clear.
I'm puissant.
You're puissant. So what? So are we taking phone calls or not?
Sure we can.
855-238-2789 or 855-BE-TASTY. The phone number will be below in just a moment. Give us a buzz. I would love to hear from you. 855-238-2789 or 855-BE-TASTY. Call in now. Phone line's open.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Pizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm. Okay, I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm going to be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right. I know it's on there.
It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5, just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC's proud?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce.
I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say.
It's an elevated. It's an elevated.
It's an elevated nothing.
It's a chicken. It's actually pretty good.
We are ready to build. This is make or break for this team.
It's down to the last 2 minutes, and it's time to rock and roll, baby.
That's all I got is 2 minutes, and that's on a good night.
I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime.
I think we're going to overtime. Here it comes.
Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof!
Take one. Hey, baby. I like the looks.
Okay, well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well,
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me, and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out in a blaze of glory. Take me now, but know the truth. 'Cause I'm going out in a blaze of glory. Lord, I never
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Move
like we do it, like we do it.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. Did you know what he did? And we've got those cards with us, and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card, and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tastytrade.
Tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tastytrade's low commissions. Try it out and leave us a review.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And tastylive in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. that education piece is highly important. I found that Tasty offered that.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tastytrade.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day is
close.
starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back.
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's
Oh,
game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny
this is-
Cancelleri. Bam!
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, Katie McGarrigle in the house with me today. And if you want to come join us, hop over to YouTube, type in tastylive, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend with my buddies, Mike and Katie. Katie, good morning. How are you?
Good morning.
Yes.
Coffee's still kicking in.
Yeah?
Yeah.
Well,
Happy PGA Thursday.
We had no cold brew today.
Happy Maundy Thursday.
Monday.
Celebrating, I think, the Last Supper. Day before Good Friday.
Yeah.
I didn't know that.
Checks
Maundy
out.
Thursday.
Yeah.
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 How are you two?
Doing good. Doing good. We're both. So there's this thing called Lake Michigan, right? And
Right.
I'm gonna be over here.
You going to
on
Michigan?
a golf trip, and Nick's going over here on a golf trip.
Okay.
So we're separate, but
Gonna
we're gonna
wave
be
to each other?
Yeah, we're gonna be elevated like similarly, and we can swim across the pond if we need to.
Just trying to get away from him, for the weekend.
Yeah.
We're going as far as possible.
Yeah.
Okay.
But things are looking up.
Yeah.
Fun weekend ahead,
Yeah.
and we're taking advantage of it.
When are the respective tea times?
Tomorrow morning.
Tomorrow morning and Saturday morning. Yeah. And then back Sunday.
Yes.
Yeah.
Well, I will be in Michigan for a little bit on Sunday, so maybe, Mikey, we can wave to each other on the highway or something like that.
Yeah, we can stop at Waffle House and grab a little brunch.
Oh, I'll stop at the Hammond Casino on the way back.
Yeah.
There you
go.
Yeah.
Well, now there's one in Homewood where my family
Really?
is from. Yeah. There is a large casino in Homewood now.
Interesting.
I've not been
What is it called? What's the brand name?
Is it Circa?
Pause for dramatic effect. Wind Creek.
Oh, so it's Indian casino.
Yes.
Yeah.
Yes.
Hey, there you have it.
Why not?
More entertainment.
Yeah.
Why not? Why not is correct.
Yes.
Yeah. But otherwise, I never even got to ask you, how did your Masters picks go?
Mikey won the Tasty tournament, Tasty bracket thing.
Congrats.
Thank you. I had Justin Rose in like every pool and every lineup that I did, and it almost came to just pure glory if he would have won. But happy for Rory getting his Grand Slam. I'm glad I went to playoffs. Give us some extra free golf. We'd love to see.
Yeah, it was a good watch.
But yeah, it was fun. It was good. It's good.
Yeah. One day we'll make our way there.
Yeah. We gotta put our name in the lottery system.
I'm in it.
Oh, you are?
Yeah.
Every year you do it?
I think it renews every year.
I don't know. We're gonna have to look at. I think you have to resubmit it every year. But we'll have to look into it next year because I didn't do anything this year.
Yeah.
But yes, would love to go.
There's also a live event in Chicago coming up.
Yeah.
I think in like August or something.
Yeah.
It'll probably be like the same day as the Tasty Chicago event or something.
Yeah, that we'll somehow miss.
Yeah.
We'll miss the live.
Yeah.
because of our weekend obligations that were not negotiated in our contracts, but that we do out of the goodness of our heart.
But yes.
So make it worth it. Sign up. tastylive.com/events.
Hell yes.
Yeah. Speaking of events too, I mean, I know you guys are all big golf heads, but are you watching WrestleMania this weekend?
I am not. I didn't know it was happening, but maybe I will now. When is it?
Saturday and Sunday, but frankly, I just like watching it because I think that they, as a marketer, I think they do some really interesting like marketing placements and stuff like that. So that's kind of mostly, also my fiance loves wrestling, but I'm sure I'll get roped into watching that a little bit as well.
Where are they hosting it?
That is a good question. In Nevada.
Yeah, I mean the WrestleManias are obviously the biggest ones. It's the Super Bowl of wrestling. Ultimately.
Yeah.
So yeah, that'll be fun.
Yeah.
Maybe I will
I've been
check
watching a lot of Dark Side of the Ring in preparation.
Yeah, I mean honestly, the Vince McMahon docuseries was one of the best I've watched this year.
Yeah. Yeah.
It's
Some
wild.
crazy stuff going on with that crew of people.
Yeah.
It's kind of like, true crime adjacent for me though, so I kind of enjoy it.
Yeah.
I
get that.
I love my true crime docuseries.
I get that.
Podcasts. What else is going on? How are you faring? Are you just in pause mode after yesterday's moves?
Mikey's back. He had a earnings trade in TSM.
See the Oculus?
No.
No.
That is still me, but he's back. He's back.
I placed a bullish trade in TSM. It opened up $5. I closed it immediately, and now it's only up $1.
Yes.
So
Shout out.
They reported earnings this morning. They were one of a handful. UNH was another one, which is having an astronomical move to the downside here. Down $132, 22%. One of the biggest companies. I think it was like a $700 billion or so yesterday. It's now at like $500 billion, but it's one of the biggest components in the Dow, which is why the Dow is so weak today. That's a huge move. I think it was. We can even look at what the expected move, but it was nowhere near this. So the stock down 132. That puts it at like 580-ish. Let's see what the straddle was trading at. So we look at the straddle just to give you an idea. Where's my change? 580. So this was traded. The put was trading at like $12. The call was at $14. So it was about a $34, $35, $36 expected move, and the stock is down. Oh, Mikey didn't see it.
I saw the head bob.
Yeah.
It's allergy season, all right?
I know, but you do the
pure silence.
The silent sneeze. You just hold it in.
It's a wild skill.
Let that be free.
Yeah.
35-ish dollar expected move on UNH. It's down 130. So that is a tail move. Huge move in UNH, leading the Dow lower. For the rest of the market, it's been a very much a chop fest as it has been all week. We had a little bit of a move yesterday, obviously down 100 and change. They had a little bit of a bid into the close, so it wasn't as bad as kind of it seemed like it was on the close. Or at 3 p.m. they rallied like 100 points-ish from the lows, in the NASDAQ at least, and the E-minis probably like 25-ish. But we've had about a 100-point or 90-point intraday range here today. 52.85 the low, 53.71 the high, and the E-minis were up 14 at the moment. It's been a very, very choppy session today. It is an expiration day as well, because tomorrow, PSA for anybody that didn't catch it earlier, the markets will be closed for Good Friday. So, today is expiration. NASDAQ down 30 right now. It's been chopping around. The Dow down 550, as we were just talking about. It's the weakest of the group. And the Russell up 3. Everything basically unchanged, I would call it, besides the Dow. Oil catching a little bit of a bid forward / CL 63.76, up $1.93. That should be helping your long MCL contract. Volatility futures not moving a whole lot. 27.15 down 30 ticks. They've actually just moved about 20, 30 ticks in the last 5-ish minutes or so on this little bit of a sell-off here. But volatility remains bid and has been staying bid. We just had expiration on Wednesday, so we're rolling into the K contract here. That's the active contract at 27. I haven't looked at it to see if we are in any sort of backwardation here. Get the J out of here. So we do have a little bit of backwardation here, about a point-ish. So it is still very, very high. Rest of the market, you got the bonds down to 18 ticks. You got gold finally having a little bit of a breather, down $35. Woo woo!
There go the cherry disco.
Oh,
whoa!
Yep. Silver down 63 cents. Bitcoin basically unchanged here, up 200. Spot up 700. It has kind of held its own though into this down move, recent down move.
Yeah. And the biggest news of the day, Jason's birthday.
No, happy birthday, Jason.
Yes.
Happy birthday, Jason. For those that don't know, Jason is like a longtime Tasty OG. Started as a super fan, is now just basically running the show on the trade desk alongside the homie Kev.
Yes.
So big happy birthday to Jason.
Yes.
Jason eats, breathes, sleeps.
Tasty.
Tasty.
Everything tasty.
Yeah.
Yeah.
He's the culture.
He was born in the fires.
Yeah.
Of the tasty.
Born in the darkness.
He was born in the darkness.
Molded by it.
Yes, he was molded by the darkness. Yes, he was. Beautiful.
I love that reference. My favorites.
I was born in it. Yeah, happy birthday, Jason.
Yes.
We grew up next to each other. Do you know this
Really?
story?
Yes, well, because he's
Did you
friends
know
with
each
Dean.
other?
Yeah. So he grew up down the street from where I grew up, and we just arrived here. There was another developer that grew up in my neighborhood that ended up working here too.
It's
So
just like the Buffalo Boys, but it's the Palatine peeps.
Exactly. But yeah, Jason grew up down the street from me. So my friend used to have driveway parties across the street from his house, Jason's house, and I used to see Jason like driving up and leaving his place when I was like
never
17.
invited him?
Well, we weren't we were in separate like groups
Cliques.
then. Yeah. Because he's a year older than me, I believe.
Now here we are.
And now here we are in cahoots.
In cahoots.
Mm-hmm.
Talking to Tasty Nash. Drop your questions in the chat. We got a couple trade ideas.
Yeah.
Cool.
Got a unique expiration, as you said. Nick.
Yes. Oh, quick PSA.
Yeah.
No Netflix today.
Well,
Netflix does have earnings today after the close, which is goofy.
Well, if we want to pull up the slides real quick, I did trade Netflix today. But
You did?
Not the
Well,
0 day.
It'll
It'll
a
queue
bad
up.
boy.
Well, no, I'm a good boy.
You're a naughty, naughty boy.
So Netflix. So yeah.
After my email this morning.
Go on.
Naughty.
No, I listened to the rules.
He said, cool. Anyways.
Yeah. So GFY.
Cool.
That's what he said.
But yes, go on.
You can explain it now, Mr.
Trade ideas. I don't know what to do with these. They're just going down.
Yeah, those were the ones that were on my nether region.
Oh, good.
So just be careful. I don't know if you want to,
Thanks. That's great.
you have a little piece of me there.
Yeah. Plug your ears.
I mean,
HR.
Anyways, Netflix has earnings after the close today, but also there is no trading tomorrow. So very unique scenario. I don't think I've ever seen this in history of trading in my career.
Very goofy.
But if you are trading a 0 day in Netflix, if you're a defined risk too, you must be willing to take the stock. Like you need to have a large account, even if you're doing a 5-point wide spread at Netflix, because worst case scenario, your short or long option expires in the money, your other option does not, and you are now left with 100 shares long or short of Netflix if you're doing 0 day. Because they announced earnings after the close, this market will move. There's a 50-point expected move after the close today, almost a 90-point expected move for the 8 day. So to save yourself from potential assignment risk that's not protected, if you do a spread in the 8 day and you're assigned, you're still protected because you have the long option that protects you.
And you probably won't be assigned.
You probably won't be assigned in the 8 day. But if you're in the 0 day, you absolutely will be assigned if it's in the money. So just avoid it altogether, I think is the name of the game here, the 0 day stuff.
Yes.
But I am trading Netflix for earnings. I posted Thomas's earnings preview in the YouTube chat. If you want to join us on YouTube, just pop over to tastylive. You'll see this video streaming live. I'm bullish on Netflix. I think they're going to be the next live sport streaming service that everyone subscribes to. A little birdie told me that the UFC contract with ESPN Plus expired. And
not insider information.
Not insider information.
The birdie is not an insider. This is public knowledge.
Yes.
Netflix contract expired with ESPN Plus. If you wanted to watch UFC, just as an example,
that would be an HR.
And there goes the business.
Yes.
But I heard that Dana White met with Netflix the day that the contract expired.
Yes.
So,
again, public information.
Yeah. Hearsay.
Allegedly.
Could be fake news.
Allegedly. But yeah, I mean, Netflix, last year they had the big boxing event. The streaming quality was terrible during it, but they'll work through those kinks. But they also had Christmas Day football games, and like you're not seeing any other streaming service do this kind of stuff other than Amazon, really. So if Netflix can really take a hold of live sporting events that everyone wants to watch, that's going to be great for Netflix. Also, Netflix is around that $1,000 mark. We've talked about this before, but a lot of companies talk about stock splits when it gets to the $1,000 mark because it begins to be less affordable for smaller accounts. They want to make it more affordable. So maybe you see a 5-to-1, 10-to-1 split here, and Netflix comes down to $100 or $200. Yeah. If that happens, you're going to see a lot more investment in Netflix, I think, just in general as a household name. So I don't know. Regardless, I'm going out to May to avoid the 0-day stuff. And I sold just a small put spread here. So sold the 900, bought the 895, collected $1.40, cookie cutter setup. It's within the expected move in May, but it covers the expected move for earnings ultimately. So even if it goes in the money,
totally fine.
I'll have 30 days left to see what happens.
Yes. The biggest issue with the expiration today is the expiration risk, because like the market, the options will close at 3.
Yeah.
So, if we close at 975 and you have an option at 1,000, you would on a close, you would think that option is just expiring out of the money. It's not over, because in the overnight session they're going to report earnings. If the stock moves and has a big move up or down, the options can be exercised or assigned. The biggest problem is that it's by request. So the exercise and assignment happens in the overnight session. You don't know until Monday if your option was exercised. And so even if you have a $5 wide spread or a 10-point wide spread and you don't exercise your long option, which is a risk in itself, because you don't know if your option is going to be assigned or if the stock is going to stay where it is. Like there's so many things there that can happen. But you could come in Monday with an unexpected short or long stock position, depending on where the stock goes, obviously. And that's a huge position. It's a $100,000 position per contract if you're assigned 100 shares. And then you're on the hook for the move in the stock on Monday. So no 0-day stuff.
Yep.
No expiration stuff today. So I like that you went to May. You get a pass.
Get a pass.
A light spanking, but a pass.
A pass is an A plus.
An A plus.
A C minus.
I'll take it.
You're fine.
I've had worse.
Yeah.
Look at all of us with our middle finger rings. I just saw yours, Nick.
Yeah,
you took the leap?
I'm an Aura boy.
You're an Aura boy?
Yes.
It's just a regular one, but.
Yeah. I am very concerned that it does signal potential
hands off
engagement/marriage. Which
I thought you were going to say like heart palpitation issues from extreme amounts of coffee.
That too. I'm very, very. I don't know. I'm ready for the disappointment of my metrics just based on my habits.
Well, you're going to be really active this weekend.
Yes.
I do like the data, though. Data's great.
I do
love
like
the data.
Yes, it's very nice.
Good stuff.
Just another thing that tracks all my stuff. Yeah. Has my
yeah. It knows your whole life.
It just whatever.
Yeah. Yep. Well, congrats.
Thank you.
I feel like we're kind of part of Captain Planet,
Yeah.
Like earth, wind, water, fire.
But honestly, yeah, 100%. But honestly, all you have to do, if you're like locking eyes with a lady, and you think something's going on, and then you see her, if you see her look at your hand, all you have to do is, it's not an engagement ring.
Just shout it.
Just yell.
Yeah.
Just shout it across the bar.
Yeah.
That sounds.
I like that approach.
Yeah.
Just don't even wait until you make eye contact. Just announce yourself in the bar.
Yeah.
Just right when you get carded, just be like, "Ladies, I'm single. Come talk to me."
Yeah. Hear ye. Start it with that.
Thanks, guys. That sounds like really great advice. I appreciate you guys.
As long as you start the sentence with "hear ye," you're golden.
Yeah.
Yeah.
I think you'd actually get a lot of attention because I don't think that younger people know how to talk to women in bars anymore.
That's accurate.
Thank you.
Yes.
Thank you.
But we'll save that for, our Patreon that we should probably start. And
Tasty After Dark.
Yeah, we'll talk trading now. All right, so
Yes.
Mikey's doing Netflix. Nikki,
Yes.
you're looking at the Oobs.
I'm looking at Uber. I was kind of just scanning through the S&P 500. I wanted to find something that was in the $50 to $100 range to put on like a little bit of short premium here. Uber does have earnings coming up May 7th, so a couple weeks from now. Hopefully I'm out of this by then, but if not, I'll be holding it through then. But it's kind of been range bound. It's been actually relatively strong compared to the rest of the market. I mean, it's in the middle of where it's been trading over the last year or so, but it has been strong into the weakness in the market. Trading at $75 or around there, it's a very approachable stock if you're smaller sized account. If you're trading naked or even like wide spreads, it's an interesting trade here too. So, of course, I had to go a little spicy here. I went into the May cycle. I sold the 67 put. I then did the 75-80 call ratio spread. So naked put call ratio, you have like risk profile synthetically the same as like a short strangle, but you're collecting a little bit less of a premium. I got filled at $1.80 on this position. You basically sell the put to, and then the call ratio you're doing for basically a scratch, small debit. Depending on what happened with volatility in the last, couple hours here. So I would call this a bullish trade. It's a bullish to neutral trade because you have a lot more room to the upside relative to where your risk is. So you got to break even down at, 66-ish. And then on the upside, it's at 86-ish. So you're basically covering the entire range that it's had over the last year, maybe a little bit less on the downside, but really a short premium play, short volatility play, a little bit of direction to it. If you get that kind of chop up, you can make up to $680 on this. That's the $1.80 that you get in credit, plus the $5 wide call spread that you have there on the upside. If you pin 80 at expiration, that's obviously not something that I will be trying to get out of it. But I would be happy with making, if this comes in pretty quickly, maybe $100 in profit. Or if you get a little bit of a vol crush and a little bit of a drift higher, maybe you're able to buy that short put and then buy the 85 call and turn it into like a risk-free butterfly on the upside. Give yourself a shot into earnings.
All right. Sound
$1,100
logic.
in buying power, so
Yeah.
relatively approachable.
Yeah, like you said, wide range as well.
Yeah.
Okay.
Yeah.
I like it.
Not too shabby. I might mess
Thank you.
with that a little bit.
Thank you.
That's on the follow page now.
Yes, unless I was a
Oh, I see
naughty.
it. Nope, just making
On
sure
there.
so I can easily duplicate it if I want to proceed.
Yes. I did a very similar trade in IBIT as well, but that one I did a little bit later on. So, and I like this one better.
We love our IBIT.
Yes.
I've just got that long 50 call,
Yeah, that one's left over from.
something else, from some
like,
crab or something.
Yeah.
Fair enough.
Yes.
All right, I am going down a longer time horizon route. I've talked about this maybe on the last couple of different trade ideas, but we're about to start to see more earnings reports, and therefore that's been a big consideration for me as I've been looking for positions to put on. I feel like right now with some of the futures options stuff, like I'm covered-ish and or haven't really found anything I want to dabble in due to just like price extremes and stuff like that. Still looking at FX futures options for sure, just as a little sidebar. But here, I was just looking for something that would just give me a little bit more time to be right if we kind of continue to drag along these lower levels that we're just seeing all across the board. So going to something super cheap with a zebra, with a stock substitution type trade. So going to American Airlines, you can of course look at some of the other airlines as well. They definitely all have similar charts, so to speak. So I'm long 2 of the 8 calls in the June expiration. So like I said, 64 days out, lots of time to be right here, and short one of the June 10 calls. So as you can see by this screenshot, it is like basically a, I don't want to say perfect, but it gives you 100 deltas worth of long exposure here. You, of course, can definitely still buy the shares and then sell a call against it if you wanted to do more of a traditional covered call style. You can sell like the first in the money option and pick up around $100 in credit or so. So there's lots of different strategies you can kind of employ if you're just looking to get long something that is cheap and on its butt. But I just decided to go with the zebra. So I got filled here at 310, so that's the most I can lose. That's also, of course, the buying power effect, but just hoping for a little bit of a recovery in the airlines over the next 64 days. Nothing overly complex.
Very nice.
Would be happy with $100 from this.
Earnings coming, I think, early next week.
Yeah, earnings are definitely before that, but
24th,
again, why I was comfortable just kind of holding on to this thing.
Yeah.
So we shall see.
I like it.
I'm working it for 315.
And you can absolutely do like the May contract and spend a little bit less, but I just wanted to give myself like double the amount of time to be right.
Mm-hmm.
I like it.
But June just feels so far away at the moment. I know it'll be here
In
before we know
short
it.
order. Yes.
I was filled at 315.
There you go.
Wow, so much is going to change by the June expiration. We're going to be able to like go outside and get sunlight.
I
It's
know.
gonna be crazy.
What a concept.
What a concept.
We're going to have done our first event,
Yeah.
DC,
Yes.
June 10th, 12th.
12.
Are you going to be able to handle the three of us?
12.
That remains to be seen. This will be very much a test pancake for my resolve. I'm just kidding.
Because you've had me and Mike, now adding Orion in there.
Orion, yeah. But I feel like
Ryan's a nice wild card. I like
he's
it.
definitely, he's like
the
either
Ryan
over here or over here.
Yeah.
That's the fun part about this.
Ryan is as volatile as Bitcoin.
Yeah.
You know?
Yes. 70, 80.
It's gonna be great.
Implied volatility, no doubt.
Yeah.
Yes.
That'll be very interesting for me because, he'll either be on like Team Katie or he will be on Team Mike and Nick.
I'm pretty sure he's going to lean Mike and
Yeah. First event, he's leaning. He's leaning on our side.
I'm pretty sure the monster, he was also born in the darkness.
He was. And he's a Buffalo boy.
There you
so
go.
that just naturally comes with its own bag of tricks.
Just a baseline. Yeah.
Yeah.
Buffalo boys you be careful with those guys.
Yeah. No,
Yes.
it's going to be a fun time. tastylive.com/events.
Yep. All four are listed right now. DC, June 12th. Seattle, August 10th. Dallas, October 12th. San Diego, November 2nd. It's going to be great.
Oh, yeah.
Yes. You can sign up for all of them, too.
Yeah.
They're all listed there.
Yeah. And
Yep.
drop like your restaurant recs in.
Oh, yeah.
Both like, casual and highbrow.
Yeah.
Always happy to hear
Yeah, we're gonna
where
do
the
some-
spots are.
We're going to do some pinky up.
Oh, pinky up.
Yeah.
Are we going Miami level pinky up?
Oh, yeah. Oh, yeah.
We're gonna rub shoulders with Stunna.
Yeah.
Yes.
Remember?
Just for all for the chimichurri.
Yeah.
Yeah, we're going to go. We're going to have some fun.
It's going to be great.
I hope we see some influencers in the wild again.
We will.
That was
I'm
great.
sure we will.
Yes.
But yes, join us on the live event tour. It's always a grand old time. And there will be beer and wine. So
Oh yeah,
there
I
you
keep
go.
forgetting about that.
Yeah.
There's gonna be libations.
But yes, tastylive.com/events. Sign up for them now.
Yeah.
They're smaller venues. All kidding aside, they are smaller venues. So if you're going to go or you're thinking about going, sign up sooner than later.
Yes. Yeah, it's a good way to meet people too. Like we
Yeah.
get the question all the time, how do I meet other traders in my area or what have you? So
Yeah.
this is a really good way to kind of network and, find your people, so to speak. So don't be shy.
Yes.
Shake some hands.
And there will be drinks.
Yeah.
Beer and wine only. We couldn't get the fun
Patron
for the Patron. I asked.
Yeah.
What's the one in like the blue and white ceramic bottle?
Casa Azul.
Casa Azul.
Just immediately knows.
Yeah.
I love it.
Yeah. It'll be fun.
That's it's not that great. It's just a
Just
gimmick.
Yeah.
It's
just what they, charge an exorbitant amount of money for.
Yeah.
Speaking of gimmicks, we watched the UFC event at our friend Ryan's stepdad's place.
Huh.
And he has a basement bar, an amazing basement bar. But he was telling us the story of these whiskey bottles that they go on these ships.
Jefferson's O ship.
Jefferson's
One of my
Ocean.
favorites. But I know it's a gimmick.
It's a gimmick, but it's like a cool gimmick. So they put these whiskey bottles on the ships, and then they sail around the ocean.
To
And
like
you
toss them and
Exactly.
tear them and stuff.
Right. So we were talking about like the true gimmick that's going to really boost the value is if that ship goes through a hurricane or something like that. And then you have the Jefferson's Ocean's Hurricane Edition.
Yeah.
Yeah.
I
Now
saw
it'll go
that.
for just insane amounts.
I saw that. Don't ask me why I was watching this, but I saw that kind of similar thing on like an episode of Moonshiners where they went to an abandoned amusement park and put the barrels on one of those like swinging like things, so the natural just motion of the wind on this like hilltop was like helping with the distilling. I don't know, but yeah, that was their whole shtick too.
I love it.
Anybody knows what I'm talking about.
Who would have thought we'd be doing this stuff?
It's one of those things like when you're sick when you're a kid and you stay home and watch The Price is Right. Like I think it was one of those things where I was just like home and Moonshiners was like the only thing on.
Yeah. And you're like, huh, let's learn about this.
Yeah.
All right. Let's pop over to the YouTube chat. I see some people in there. H. Montero, big fan of CM Punk. Are you for or against that?
Chicago native. We
Is
have
he?
he's definitely Chicago. Me. We have a friend that got blocked by him on Twitter, and that's like his claim to fame.
Love that.
I don't have any strong feelings about any of these wrestlers. I don't know them.
Is this friend's name Evan?
No. His name is Tyler.
Ah.
Yeah. So, but yeah, CM Punk. I don't know any of the backstories of anybody else, but
Unreal. I love that. Getting blocked by a wrestler.
yeah,
professional wrestler.
he like DM'd him or something. He was like, "Hey, I just saw you in Bucktown" or something like that.
My God.
He really got me.
So it wasn't even anything malicious. It was just like, hey.
Yeah, like don't dox me, bro.
Love it. All right. Let's pop over to the platform. Let's get through some of these questions.
Yes. Great ideas if you got some too, I guess.
Yes.
Please.
Capital fresh and ready to rock.
Aaron, problem child in Tesla, May.
Okay.
Short the 285 call and put with a long 270 put and 300 call. So an iron fly, 15 points wide. Total credits $350. Yeah, that's a tough one because
earnings next week, middle of next week.
Yeah.
Lottery ticket.
Yeah, pretty much.
Yes.
And even if you get the move, you're still going to have to hold it to expiration because the credit you have is too low for the spread width. Like right now in May, the 240, 255, 225 is trading for $1,300. So you really got to hold this to expiration. Good news is it's a defined risk, and they have earnings coming up that could bring that price up to 285. But yeah, it's a tough one.
$100 more to lose.
Yeah.
I think you'd take the shot. Your risk into the end of next week is, maybe $100, $150 in your favor or $40 or $50 against you. So I think you take that shot on a 50-50 probability trade.
Yeah.
Yeah. Yep. Are we still holding that SLV Zebra we put on a few weeks back?
There's nothing to do with like these types of trades.
Yeah.
In my opinion. I mean, like, and frankly, it's up. Mine is up small. Mine's up like $30. So yeah, I'm just kicking it right now.
Yeah.
Which one do you have? I have the 30-31 in May.
I have the 28.29.5
Okay.
in May. So I'm in the money, obviously, but I need a little bit more to kind of.
Yeah. So yeah, whichever one you have, like mine is underwater, down $100. The short call at 31 has lost about half of its value. So you could consider closing that if you wanted to add more risk to the trade. It adds 43 cents of risk to the trade if you buy that option back for 43 cents. But it's not going to hurt me if we see a rally. And it's only down $100, and we're basically right at the money at 30.31. So if we see a rally back to the recent highs, it'll be a profitable trade. So I'm just going to leave it on. But if that short call loses more value and it's only worth like 10 cents, then I'll take it off. So that's really the only thing I'll do here for that one.
right, who's next?
SPY 500 strike long call expiring June 20th. When should I sell it? 10% loss as of now. Is it a long call? Probably.
June?
June. 500 strike long call, I assume.
Yeah, it's a tough one with vol so high. You can even see here into this, $3.50 move. You're only making, 2/3 of that.
Yeah.
Yeah. So you're in June. I mean, you could
sell something against it.
Yeah, you could sell something against it if you're weary of the moves. Yeah, you could sell something in May against it. You could sell something next week against it.
Mm-hmm.
So the April 25th cycle, an 8-day, so just going into next Friday, like you could sell the 545 for $2 or really anything under there. Just make sure that if you create a spread, just make sure that the spread width is less than your total debit paid or around it.
Mm-hmm.
If you're selling something against it, so you have no upside risk. But yeah, it's in June, so it's tough to say what you're going to do with it. It's really just comes down to your risk tolerance.
It's a directional shot.
Yeah.
I mean, I'd probably sell something against it.
Yeah.
I mean,
there's just so much premium in the near term cycles.
Much vol too. I mean, getting a little bounce from yesterday. So, if you waited, you're kind of getting paid in terms of the premium that you'll get selling it today versus yesterday near the close. You're getting a little extra juice here. So I would do something. 8-day or go into May. I don't mind the 8-day, just if you want to, have the hedge into next week, all else equal. If the market's, down 30 or 40 points net, you'll save yourself the whole move at a $3 option or something, a 540 strike.
Yeah.
Yeah. Tom asking about the Netflix stuff. Does Tasty offer counter execution advice? Am I able to call the trade desk to ask for execution after hours? You can call to exercise an option, but it's just going to be a hairy scenario.
The problem is you won't know if your option is exercised.
Yeah.
So if your short option is like right where the stock is, or if the stock moves in the after hour session, like you don't know if your option is exercised. So that's the biggest problem. So just avoid it. Just close the trade, roll it to next week, and you can play it that way.
Yeah.
But that's the biggest issue. It's nothing Tasty related. It's just how the option market works in the overnight session. Like it's by request, and so if you have a tight call spread and it's right at the money, or even if it's in the money and you exercise your long and the short doesn't get exercised, now you're long stock into Monday at that price. So it's just an awful situation. It's a goofy thing that I feel like one of the exchanges would have said something, stock this big, right. Hey, move this earnings.
Right.
But whatever.
Yeah.
It stinks. Just avoid it.
Theta trader looking to sell a put in SPY, but fearful of downside movement. Yeah, I mean, if you're selling a put in SPY, for me, like you're planting your flag and saying, I'm just going to accept the intrinsic value risk here if we drop below it. Mm-hmm. You're getting paid to take the risk with the heightened implied volatility here. So it's really up to you. But I think if you're selling a naked put in SPY, you got to be willing to ride the storm.
Yeah. Do a wide put spread.
Yeah.
It'll hedge you a little bit. You won't use as much capital.
Yeah. Any thoughts on double diagonals for earnings trades? Very rare that we do them. I've done double calendars before, but the problem with double debit trades on both sides is that one of them is going to be a loser. Mm-hmm. And you have to offset your losses on the one side with premium collection on the short option. So like I think you have to be collecting 50% of the value of the long options you're paying. So like if you're buying a put for $1,000, you need to be collecting $500 on the short option. And same thing for the other side. And that's really going to be the setup that enables you to see a decent profit after the fact if it goes in the money. That's it. Let's see.
Minis looked like they were going to have a nice little
yeah,
rally.
I know.
They were up like 40 something. Now they're only up 20. Chop fast. Chop, chop, chop. Going into a weekend, you got the holiday too.
Yeah.
This week has been really light in trading volume, even on the down move too. Not a total shock to see us basically doing nothing all day today.
Breather.
Yeah, a little bit of a breather. I think everybody deserves it, I think.
I think so too.
I think so too. So, I mean, you could see even like this week, volumes are what, half of what we've seen
Yeah.
over the last, couple weeks, if that. And I just pulled up the volume subgraph here. Yeah, it's nice to have a little breather here.
Yeah.
I'm okay with that.
For sure.
Fall crush the other day, Monday, Tuesday. A little bit of a pop yesterday.
Yeah. I could just use a little more bullish price action for some of these naked puts. But
Yeah.
Stonk Messiah wants us all to short SPX so we can reach a bottom finally.
Oh, no.
No.
I thought about actually doing a broken wing butterfly in SPX because mine was closed. Mine was what, AM settled this morning or yesterday. I don't remember. I covered it.
Yeah.
That free one we had on. That was like pinning.
Uh-huh.
And then by the end of the day yesterday, it was pretty deep in the money. So I just got out for a nice, $200-something winner. But
I did put on that downside Qs diagonal a couple days before the historic record-setting intraday upside range in the NASDAQ. So I am at least
the
doing
reverse
just good.
indicator.
Yeah.
I will say these sort of trades are very interesting right now because of how much volatility there is and how wide the put skew is to the downside. So broken wing butterflies right now look very interesting because you can go super, super wide. Like I just did one for the end of May, one day before my birthday, if you want to get me a birthday gift. May 31st, my birthday.
And it's
So subtle.
what's our address here? 1330.
1330 West. Send it here, address to me. Thank you. You can go 200 by 400 and do this for basically nothing for a $1 debit. And that, we've done these pre 2025 for, 50 by 100. Like that's kind of the best you could do.
Right.
And these are very far out of the money, or at least seem very far out of the money. Talk about 4,500. Hope we're not there. I hope that doesn't come. That would be bad.
I know.
That would not be fun.
Like the dark circles under everybody's eyes are already here.
Oh.
I think we would actually look like we were Walking Dead.
Yes.
If that were the case.
Yes.
And I think everybody in the world as a whole would also collectively look like that. So that's not just a selfish, tasty only thing.
Yeah.
Be rough times.
And more people than Nick would be after my 20-pound bag of rice. So.
Did you replenish?
Not yet.
Gotta
Next
hit up
week.
the co.
Yeah, next week.
Costco's closing for Easter, so make sure. Well, I guess you're gone anyways.
There you go. Yeah. Theta Trader, I've said it before, I'll say it again. I kind of like put ratios in this environment, but then you have to wait until near expiration if you're right.
Yep.
Embedded long put vertical for emotional hedge, I suppose. Yeah, the put vertical still does stuff. It's just getting value out of it with IV so high, it means you have to hold it to expiration to get the extrinsic value out of the spread if it's in the money.
Gotta
But
be wide too.
Yeah, but the nice thing about this environment is you're seeing a lot of downside premium really flatten out in terms of the premium that exists in SPY.
Mm-hmm.
So when you go to SPY and you go to set up like a 500, 495 put spread and you realize you can only collect 90 cents and risk $4, that tells you that if you did a put ratio there, you'd be able to collect more than what you would in an environment where you're collecting more for the credit spread. So, yeah, put ratios, you can get really wide and still scrape by with the credits. Like in May, a 500.
You can go 20, 25 points wide.
Yeah, it's crazy.
For basically a scratch, which has never been, we have very rarely seen that much, especially with where the SPY is right now.
Yeah.
It's a way different price than when it's at, when it's at 600, you're talking about way different option prices are higher, all else being equal, but with volatility this high, they're priced at what I would imagine a $600 or $700 underlying would trade at.
Yeah. So yeah, SPY, like Nick said, you can do 25 points wide in May and collect 25 cents.
29 days too, and get 25 points wide.
Yeah.
That was never a thing.
Yep. So yeah, definitely on the table.
Yes.
When's the NFL draft next week? Yeah, 24th.
Did you guys get the invite to the Clink party?
I did not.
No.
Oh, you better go over there.
Wow.
He's cooking up. He's got a nice pizza oven.
I've heard about this party.
Yeah.
I've heard that he does a really good job.
He does. He does. You should go. I can't make it, so I can pass
Just show up.
my invite on to you guys.
Congrats on your invite.
Thank you.
The selective cool party.
But yeah, 24th, I believe.
Thursday next week?
Yeah. What are the Bulls? The Bulls. What do the Bears have? Anything?
I think we have the 10, the 9.
Ooh. So we got something.
Something like that.
We say that every year. Malarkey.
We'll be fine. It's our year.
Is it?
It could be our year, actually.
We're winning the off season for the 12th year in a row.
Right.
Truly.
Right.
How about a double broken butterfly on Tesla for earnings? The Batwings.
Double B dub?
That's the Batwings, people.
Yes.
If you look at the expiration risk graph, you're going to see some Batwings.
Yes.
Is there a setup that makes sense? You could go to the 8-day if you want, or you can go to May.
If you're trying to get it into earnings.
But yeah, the May cycle allows you to go wider, for sure. So like just wrapping around the expected move, like the 270, 280, 300, and then the 215, 205, 185. Collect like $1.50. There you go. Yeah, there's the Batwings, and then if you want to define risk,
you buy the wings.
You
You probably have to do, if you're going to do broken wing butterflies, you got to do all calls and then the all puts, just to avoid the capital requirement.
Yeah.
Yeah, I think this is a better trade than a double diagonal because this doesn't have long volatility to it.
Or a debit cost to it. I mean, you can do these for a net credit, and if nothing happens, you'll make some money on this.
So question for you both, why, I understand, I'm just asking as a devil's advocate question, why do something like this as opposed to just buying the straddle?
This is more...
If you're thinking it's going to go...
Yeah, if you're thinking buying the straddle is a tail trade, it's not to the expected move.
Sure.
So this is more of a trade on, I don't know where it's going to go, but I think it's going to go basically to where it's expected on either side of the stock. The straddle is more I think the market is underpricing this. I think it's going to go
2x,
big move,
3x,
both sides.
Yeah.
Fair enough.
So
and if it doesn't move, you're losing on the long straddle. This, you're actually going to make money.
Yes.
Because the long options that are closer will still hold on to value more than those short options.
Yes. We could show this.
But yeah, they're both playing for directional move for sure. This has undefined risk too. So if you're looking to define risk, then maybe you do something like the long straddle, or what do we call it, where you buy the wings and you sell the... Yeah, you buy the straddle and you sell the strangle.
Straddle strangle swap.
Yeah. And if you do that for a debit less than the width of one side, that's another one where it's hard to do.
Yeah.
But yeah, I think there's gonna be a lot of things on the table for Tesla next week.
I have an Iron Condor on already, so
There you go.
I'm set. My
There you go.
I think last one here. Whoa, what do you think about a calendar in SPX?
Sure.
I like it.
Calls?
Yeah, I think for calendars, we're just going to make it slightly directional. I like just going to the expected move or around there. So like for the short option. So like if you're doing a May, June calendar,
We
selling.
going call or put?
Let's do call. Let's be permables.
Okay.
56.25 expected move in May to the upside, and then you buy the 56.25 in June, which is inside the expected move for June, which is what you want. Expensive, very expensive, $5,200. So you could do this in SPY too,
Or
Plus the
XSP.
cost, or XSP. But yeah, I like the idea of it. I mean, when you look at the time differential, you're looking at 28 days versus 63 days, which is about half. When you look at the premium differential, you're looking at 6,000 versus 8,000. So right now, you're not really getting too much premium boosted in the near-term cycle if you're looking at May versus June. But you'll still make money if there's an upside move on this trade, because your long option in June will appreciate more than your short option in May. And I think that's it. Yeah. One more. Put spread in Palantir. 70.75, 29 days out.
70.75. I kind of like what I did with my Johnny Trader account yesterday. I did a broken wing butterfly on the call side. So it doesn't totally play bullish, but you obviously have no risk to the downside, but you have that extra profit potential to the upside. This one, do they still have the extra capital requirement? Yeah. Maybe like a wide. 2 cents. I want to get as wide as possible. I might do like, for a small debit, use about $1,000 in buying power. The one that I did was a 97.5, 105, 120. And I did it for a 60-cent credit, so it's marked a little cheaper here. Maybe I do this, like the 9,500, 115. Those have earnings May 5th. I don't know. I'm going to hold off. I want more strikes. They only have $5 wide strikes. So once this expiration rolls off, May, we'll probably have dollar wide strikes here. So I can go a little bit more.
Granular.
Yeah.
Fair enough. Question for you to wrap things up. Knowing that, kind of like what we started with at the top of the show with the move we're seeing in the Dow because of the United earnings, is there a bullish play as a catch-up trade in like DIA?
Certainly could. You mean like just to play for a bounce in UNH?
Yes. Well, yeah, to play for like the Dow to take a breather and kind of, get back on par with the other indices.
Yeah, I think you could go into DIA. It's not as liquid as the other ETFs, but obviously it's fine to trade, 10, 15 point wide spreads. But yeah, I actually haven't really traded it in quite some time.
Yeah, neither have I, which is kind of why I was like, oh, that would be maybe interesting. But to your point, like you're saying 20-cent wide bid-ask spreads, a little tough.
Yeah.
And to just bookend this, every time I think about the diamonds, I think of Diamond Dallas Page, just to let you know.
Nice. Full circle moment.
Yep. Yep.
How far have I fallen?
But it's good because we have a long weekend, no trading tomorrow.
There you go.
No trading tomorrow.
Disconnect your brain.
Oh, it's going to be great.
Yes.
Unplugged.
Go play some golf like us.
There you go.
I would love to go to the driving range.
We're gonna bring you all summer. You're
Please.
cart girl for us.
I'm waiting to be cart girl.
Driving range cart girl.
Yes.
Yeah. Just give me just the cart. Speaking of, my little brother just bought a golf cart. Very proud for him. Yep.
Love
he lives
that.
on a golf course.
Oh, magical.
Yeah.
Magical.
In Florida. So.
Smart man.
Yeah.
But yeah, markets are normal today. No trading tomorrow. If you're trading futures, I would just look at there might be something going on, but no equity trading tomorrow.
Yeah, I think it might be an early close, noon or something.
Yeah. Should we wrap it up?
Yes, do it. I'm hungry. I'm starving. Dave's hot chicken.
All right. Well, that wraps up this edition of Options Trading Concepts Live. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. Nick at Trader Nikki Bat. Happy PGA Thursday. Happy Monday Thursday. Happy long weekend. Stay away from 0-day Netflix earnings. Good luck. Good trading. Peace.
Peace.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
We are back. It is Thursday, April 17th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, it's technically Friday. How are you?
Synthetic Friday. We don't have these too often when you have a Friday off. So this is kind of interesting. I'm good, my friend. I'm ready for the weekend, man. We need a break. We need a goddamn break, Chris, from all of these news, all of these headlines. We need a break. That's what we need.
I said this the other day to Tom and Tony. They're like, "How you doing?" I said, I'm tired, boss." It's like Green Mile tired,
boss.
Yeah,
dog tired.
It's been a few weeks, right? And so this long weekend perhaps gives people a chance to reset here. Certainly, when we think about the news flow, bad news has been abundant. The data today was not great. The housing starts, the building permits figures were horrific. Are we surprised? It's coming down the pipeline, and the tariff policy is here. It's already in play. So the economic data is showing us things that the market was pricing in. The stock market declined, of course, before all this happened. The market is the best economist, as one Stanley Druckenmiller might say. So not much of a negative reaction there. But it being a synthetic Friday, Jamal, our very own Thomas Westwater sent me an interesting set of data earlier. Did you know that over the past 3 months, only one day of the week has produced average losses for gold? And that's been Friday. And so if today's a synthetic Friday, then we have traders who are basically closing their books out and behaving in a manner consistent with what they do prior to a weekend anyhow. We will get there in a moment, of course. Jamal, let's talk about what Fed Chair Powell said yesterday. Fed Chair Powell, of course, at the Economic Club of Chicago, pointed out that there is no Fed coming to the rescue for the stock market. Likewise, noted that they can't really do anything on the rate cut side of the equation because they can't quantify the impact one way or the other. Ilya provided the perspective yesterday on overtime, which I thought was interesting, that Powell effectively laid out the ingredients that Trump needs to put together in order for Powell to cook up a rate cut. We need clarity. We need to know what the tariff levels are. We need to know if they're going to be in place for the next few months or this is a permanent shift now for the next time immemorial. And without that data, we can't cut or hike or do much of anything. So the market sees odds for a rate cut in May drop from about 16% down to 9.5% right now. Do you think that's a problem for broader equity markets that the Fed is not willing to step in right away?
I don't know if it's a problem, but it underscores everything that we've been talking about over the last several weeks. There's a huge disconnect, obviously, between the Trump administration and what's going on with the Fed, and what the Fed feels, is really a crisis situation where we would need to lower rates and we're not. And I tell you, it makes for an interesting trading environment when you have ECB, lowering for the 7th time in the last several months. A few other developed markets are starting to lower, and we are having to stay still because we just don't know the economic fallout to the extent the economic fallout will be from the tariffs. Of course, obviously, the Fed seems to be a little bit more worried about the inflationary, the inflationary issues that it's going to bring forward. So. Yeah, it underscores everything, and it lets you know how different this market environment is, right? When you look at a lot of the market internals, a lot of the moves that we've had, things like gold going the way that it has, and looking at that ratio between gold and silver being well over 100, which, like I've said in the past, usually indicates the idea of war. And essentially, this is a war, right? This is a tariff war. So when you see all of these things, you see the movements that are being, in the stock market that are being compared to 08, to 2020, right? Other major crises. And yeah, a lot of times we end up talking about how history might not necessarily repeat itself, but it rhymes. But this rhymes totally differently, man. And this is the underscoring of it, right? Like, you can't, I know you've seen those things, right? Where you have a situation of the arc, the story arc here, right? Where you manufacture a crisis, fix the crisis, and then, essentially you say that, you fixed everything. And I guess if you're manufacturing a crisis, you need the Fed to cooperate and lower rates. And I'm not going to lie. Like, I'm not making this political. I understand. I typically would have probably differed on this opinion maybe 5 to 10 years ago. But I actually kind of, after everything we've been through, when you look at 2022 and the way the market moved then and the things that have happened in 2023, et cetera, I kind of side with the Fed on this one. We really need to be able to have a cushion to be able to pull the levers in case there really is a huge fallout, and then lower rates.
Yeah, the Fed right now is kind of trapped in a corner for the short term. From the data itself, if you look at the 2024 trade levels and you just assume nothing else changes except for the fact that we changed the tariff rates here, no substitution effect. You're talking about inflation that's going to go to 5% year over year by the end of this year. It's just what the math holds. Now, obviously, there would be substitution effects because people aren't just going to continue to plow forward and buy their, medical syringes from China at a 245% tariff rate. They're probably going to go somewhere else. So even accounting for substitution, you're still looking at a potential spike in inflation that carries us into the 3.5-4% level. And in that environment, if inflation's running up to 4%, can the Fed cut? No, they can't.
Don't see how.
It might be transitory, and the Fed's own modeling is we don't really care about the rise in inflation so long as it doesn't become persistent and foundational. What they really care about is making sure that they can provide support once that transitory inflation wave is passed over, and they can cushion a decline in real economic output. Stocks today.
Well, that's the thing, right? I mean, this is extremely transitory. I mean, we talked about transitory in 2022, and it was like, well, how long is transitory? I know I kind of made that argument. Is it 6 months? Is it a year? This is extremely transitory because, again, only a few things have been instituted so far, mostly against China. We got a 90-day pause on the other stuff, and who knows what happens after that 90-day pause. So you talk about transitory. It's as transitory as it gets.
You know, sometimes it's a bad word to throw around, and I understand why it makes people uneasy. The Fed's banding it around again. Today, is this a good day for stocks? Perhaps. Inside day, not exceeding yesterday's highs or lows in the S&P 500. We try to rally today, and we can't climb back above our one-week moving average. So not exactly a ton of momentum. There's a big divergence here, of course, which has been covered numerous times, but Dow futures are down by 0.81%, in part because United Healthcare is off 22% here today, warning of higher costs. I wonder if a healthcare company is seeing higher costs. Will they raise our rates? Yeah, they're going to raise our rates. So that seems problematic. But going back to the main indexes here, yesterday the markets fall back when Powell's speaking. Ultimately, we're not putting in too great of a recovery today. There's also the whole AMD NVIDIA side of this, where yesterday's market was largely defined by the fact that NVIDIA's taken a $5.5 billion charge off. AMD's taken an $800 million charge off. The export market to China is effectively closed, so these H20 GPUs are worthless now. There are legitimate cash flow concerns that are piling up, and I think that's indicative of what we're going to see in the news moving forward, Jamal. Some companies just aren't going to be able to move inventory and facilitate business the way that they did previously as long as these tariffs are in place. And if NVIDIA's taken a $5.5 billion charge, what about companies that don't have their balance sheet? How's that going to impact their operations? It's troublesome, to say the least.
Yeah, big time. I mean, we're seeing more and more stories, which, again, I always say, I mean, when you're starting to see a lot of the regular news, NBC Nightly News, et cetera, cover of the stuff that we're talking about day in and day out, that's when you know there's a real issue in the market. Now, you're seeing a lot of these stories come out, like you said, of these vendors or different companies that get supplies from China, for example, and how much their costs are going to go up. So it's a recurring theme. And I don't know. We discussed this on Monday on Engineering the Trade when I had Josh Fabian on the show. And the question was, is it over? And I said, no, it's not over. Obviously, you got moves like tomorrow, like yesterday, that I think we're going to continue to see every now and again. Have we seen lows? I would like to think so. But it still makes it for a hard trading environment when you have, days like Monday and Tuesday, and then you have a day like yesterday. It makes it really difficult.
Listen, the layoff headlines are starting to come in a little bit here. I saw that there was another company in California that has to shut down its factory. It's a beverage producer, which apparently they can't withstand the weight of the tariffs. Here's the thing, though. Like initial jobless claims, they haven't even started to process or show this. So is it in the data yet? No. 215K today on those claims versus 225K expected. That's actually a really nice figure, all things considered, especially in context of the federal layoffs that are occurring.
Mm-hmm.
So the private market for now has been able to absorb that. I suppose that's the silver lining throughout all this. Do we have any improved technical structure, though? Forget the narrative. No. There's nothing good to like on the long side here still, as far as I'm concerned, especially with yesterday's action. The slope of the 1 week moving average is now negative again after yesterday's close. It still sits below the 1 month moving average, which all else considered here, Jamal, we closed below it on February 21st. And this has really been some pretty rock solid resistance on the way down. Until we get through there and really show some life above it, really like 19,250 in NASDAQ or 5,500 in ES, I don't think that we can move away from the mindset that this is still sell the rip as opposed to buy the dip.
100%. Like you said, 5,500 in ES, I think, has been sort of set as this upward bound for sure. I mean, just being candid, I think what I'm going to do today is there's a few option positions that I've made some money on. I'm like, 20%, 20%. I might end up closing a bunch of those just to sort of get some capital for the weekend and be able to redeploy maybe, sometime next week if things get uglier and vols go right back up, because we're in the middle of that vol range that we've already set for the past month and a half or whatever, how long it's been, almost 2 months now, actually, when I think back, because it was February 19th, right? Like that really the downtrend really started February 19th, February 20th. And so, yeah, we're coming up on 2 months that basically VIX has been inverted, maybe quite at least a month and a half it's been inverted, the VIX term structure, which again, that usually settles down after we you know what, I need to find the chart again that shows the longest times that VIX has been inverted, because we definitely are not near some of the longest times where the VIX curve has been inverted. You'd have to go look at 2022 or maybe 2008 or something like that. But again, these are the times that it keeps lining up with, and just very different crises, if you will. So I think you really got to be real nimble if you're trading this environment. If you're on the sidelines, good for you. That makes sense. But if you're trading this market, I think you have to be very nimble, and I think you got to take quicker gains. For example, I mean, we're always talking about closing at about a 50% gain on a lot of the option positions, tasty style. You might have to do quicker. You might have to do 20 to 30% on some of these gains, and know that you're going to get another opportunity, because again, there's just so much, there's just such a lack of clarity with regard to the tariffs. And again, I mean, we're already within a 90-day hold, probably 10 days within. No, we're not even 10 days. That was early this week, wasn't it? Again, exhaustion, man. I don't know. I'm trying to keep up with these headlines, dude. It's like, it's wild. It's wild.
You see like the slightest bit, oh, look, the market's getting back into contango. Well, actually, what's 3 months after April, Jamal? Is that still July? Oh, okay. Yeah, there's a little kink here in the volatility term structure that's emerging now. It wasn't like this a few days ago. It was still full backwardation, if not as extreme as it was
I'm not
last
sure
week.
That little July dip right there. A lot of times you'll see that and you're like, it's a one-off. But I got a good friend who's been looking at vol structures for years, and sometimes those actually mean something. I'm not sure what that's telling us yet. I don't know if there's some type of resolution expected. I mean, is that 90 days? I don't know.
That's 90 days, right?
I mean, again, these June, so the June fixed futures are pricing in, these are 30 days forward. So that's pricing, that's May options. That's May SPX options that's pricing. So I don't know, dude, but it's telling us something.
I think that's the tariff, the deadline to get all the trade deals done. We're probably going to get another extension, right? If you just think about you get 70 countries and you have 90 days to do it, it means you have to average a trade deal every 30 hours. We haven't seen any trade deals come out yet. So unless there are huge announcements right around the corner, one has to presume that either July is going to be a kick the can down the road moment, or the brunt of those ridiculously reasoned tariffs with that formula, just goods imbalance over exports. Anyway, that goes back into effect. So you mentioned the S&P options here. This is Friday, right? Tomorrow the market is closed. So I think this is also one of those moments where, keeping in mind you have less time to make position adjustments, the prudent thing to do is just scale down and maybe scale out. What could happen in 3 days here, Jamal? A lot can happen in 3 days, Jamal. Mm-hmm. It is a long while. Empires will rise and fall before Sunday's futures market open. And I think that's something prudent that people need to keep an eye on right now.
Yeah, I absolutely agree. I think I said that backwards too earlier. You're right. The June futures VIX futures are looking at July VIX options. So it's 30-day forward looking. So yeah, that is that 90-day time period, and I think that's probably why there's that little bit of dip. But you're right. There's a lot that can happen over the weekend. There is definitely size weekend risk, especially the longer the weekend, the more the discussion is going to happen. So take that in mind. And like I said, I think I just, for sanity's sake, I'm going to close a few positions that are working, maybe that aren't, and be able to just have capital in case, things get crazier.
Is this a good day for the market? Listen, if you're a domestic company, you're probably doing pretty well. If you supply and source your goods locally, you're doing okay. But the sector breakdown right now, as we, turn the halfway mark of the trading day a little bit past it, no bueno. Oil, energy, utilities, consumer staples, those are your top performers. That's not exactly a screaming risk-on composition right now. But it also goes back to a conversation we've been having on overtime, is if you're trying to sell vol in this market, sell vol in the names that have held up so far. Like I know everyone wants to get the long delta exposure in the Mag 7 names because they're going to rip, but as unsexy as they are, names like Pepsi, Coca-Cola, Philip Morris, those are the ones that right now are driving this or are retaining their potential. Philip Morris actually here, I believe, is sitting at a new all-time high. Yeah, Philip Morris is sitting at a new all-time high. People aren't going to give up cigarettes during a recession, Jamal. What? That's not happening. If anything, I could make the argument for more cigarettes during the recession, Jamal. Okay. So, yeah, XLK today down by 0.23%. So, yeah, the NASDAQ is up now modestly, but you're not getting the sector performance, the growthy stuff that indicates you should feel comfortable as a bull.
No, you're not, and it's going to be some time. They're probably the most affected by the headlines. So, again, these are the ones where I know I have a few positions here and there. These are the ones where I'm going to take. I don't have any retail, but again, it's another area that's been getting hit hard that we know, and it's this seesaw market is definitely really hard to trade, and you don't see any clarity coming anytime soon.
The one chart that gives me hope. There's a place to have hope in equities, aside from utilities, which XLU has been an AI play. It's been holding up. Obviously, if we're going to reduce our supply or mix of energy from foreign markets, then domestic energy producers are going to have a little bit more vig, if you will. That's why we've been talking about names like Exelon and Duke over on overtime in recent weeks and months. But it's the banks that give me the most hope. If I want to hang my hat on something that potentially looks like it's turning the corner, we had this very wide range that was carved out over the number of months. We did break down through there back at the start of the month. We are trying to climb back into this multi-month range in XLF. Bless you. If we do ultimately see XLF rally into here, that becomes something where you can kind of hang your hat on, okay, I'm going to look at some individual banks for growth opportunity. Banks are the sector that you want to see lead. If you're really talking about a crushing blow to the U.S. economy, banks would be doing a lot worse. I suppose that's a silver lining in this market, although KRE here, still trying to climb out of its own downtrend that's been a mess for a few weeks. Not a good day overall, though, for an equity trader. It's an ugly composition. United Healthcare is not helping the Dow.
Yeah, I know. Yeah, banks, coming into the week, I was wondering how it was going to play out. Well, I should, again, going back to Friday, started it off, right? And I was a little worried, really I was, given they were the start and, what they said was going to set the trend. But all of them pretty much did well on earnings, which is a good thing to see.
Do you find any value in forward guidance right now from any of these companies? How can they possibly give any reasonable guidance?
Yeah, I find that not so much the forward guidance per se, because again, that could change, but just what they say. Like, it's interesting to hear them specifically say how this situation might affect them, right, and their industry. So that's the biggest thing I take away. Even with the UNH thing, I actually was initially trying to specifically find if there was a tie to the tariff stuff, and I think it's loose, but more they were worried about Medicare, and then again, what Mehmet Oz is going to do as far as that goes. So, you do want to at least kind of have an idea, because again, I mean, from the outset, everybody was trying to figure out, okay, this industry is going to benefit this, and like we always do that. And I think that's honestly a little bit harder to do this time around. I think just about everybody's going to be affected in some way. So I just want to hear what they say specifically to them in their industry as opposed to the numbers.
People need to stop playing pickleball. That's the problem. and I say that almost tongue in cheek, but no, if you read through some of these reports, like since pickleball became popular, there have been the rate of hip replacements has just surged.
Oh, I know.
Among seniors.
I'm in a town where they do a lot of it too.
Yeah. The Medicare stuff, listen, this is why the tariffs are problematic, because if we're putting tariffs on pharmaceutical drugs, if we're putting them on medical supplies, then the cost of all these procedures goes up. And so the insurance rates, the replacement cost, if you will, goes up. That's why with all the auto parts, if you have a car and something breaks, to get that part fixed, it's more expensive. So it's a more expensive vehicle that you're now insuring. So it goes up. That's one of the knock-on effects of these decisions when we don't really have a plan in place to find the appropriate off-ramps and reorient the supply chain. Nevertheless, Jamal, we can move on from stocks right now. 52.5 IVR. Sell the rips, don't buy the dips right now still. Recession looks like it's imminent. And one more fun fact about trade here, Mr. Chandler. Shipments between U.S. and China down about 45% now, year over year, in the most recently available private tracking data. I tweeted it last night. Go to my Twitter feed at CVECUFX to check it out. But if we're grinding to a halt between the world's two largest economies, there is going to be an economic knock-on effect that stocks just are going to hate.
Yeah, no, it's 100% true. And I know we don't usually do this, but I just happened to see a pretty good question in the chat asking about buyers at certain levels, and let's just say S&P 500, asking if buyers live higher. I don't know what you think on this. I think they do. I just don't know exactly where. It's not at 5,500. We've been rejected so hard at 5,500 twice. I think we need, where do buyers live? I would say at maybe 5,550, maybe 5,600, I think buyers live. But I mean, we've been rejected fairly strongly at 5,500. We need 5,500 and some really positive news. And then that's why I say 5,550, maybe 5,600. I don't know what you think, but
I think right now in ESM5, we have those pivots in the middle of March that gave us a rally, the rally that we had going into Liberation Day. And ever since then, kind of a stopping point right near 5,500, and then resistance once, twice. And we're beginning to just coil. Maybe that's the play, Jamal. Forget let's just play for a boom in some direction. They're on the reverse iron fly, call it a night.
Funny you say that. Because that's actually what I was looking at. But I just, so if you look at like SPX or you can look here too, whatever, ES, I was looking at sort of call butterflies, but I just can't reconcile as to example, I was looking at, I looked at Fridays. I looked at next Friday, but then I looked at May 2nd, right? You could walk yourself into this idea that come May, all of a sudden, 1st and 2nd, especially if it's a Friday, end of the month flows and next month flows kick in, and all of a sudden we're at 5,500. I was looking at the 5,500, 5,550, 5,600 call butterfly. But I just couldn't really, it's a play. It's something to do. And honestly, I might do it at the end of the day here. I'm going to wait till the end of the day just in case we slide, I'll just get end of the day prices. But I might do that. It's a really cheap play. It's 2 weeks out. But who the hell knows what's going to happen 2 weeks out? I don't know. But it is a play. I did look at it.
What if we just did, let's just go to 53 on both of these. 100 points wide. Yeah, I'm not crazy about that. I went 200 points wide there. Well, that's part of the problem. So let's go back to 100 point wide on the wings. 80% probability of profit. As long as the market moves, I don't love the risk to reward or the buying power here.
No.
Obviously, similar setup in ES.
I think the only way you possibly, again, the way that we've been moving, I think this gets to kind of the question that someone has asked on the chat. If you're long the 5,500, short the 5,550 two times, and then long that 5,600, then that's actually where I think kind of the buyers live, around a little bit above the 5,500 level, right? Like that's where people start to get interested. But and it's a shot, but outside of that, who knows, man?
Yeah, and that's going to invite all the memes like, oh, you're telling people to buy now at 5,600. How come you didn't tell them to buy down at 5,000? Well, that's kind of how technical momentum traders behave.
For sure.
Right? So like, how long have you been doing this with me where I say, like, I know the shortcoming in the way that I approach markets is that I'm never going to catch the turn. But you have to accept that if you're going to embrace a particular trading strategy or style, understand the faults. And that's why you have to structure your risk in a certain manner as you scale in, as you scale out, right? And when the momentum turns, you kind of got to push it because you have missed the actual high or low, and you got to hope that you're right. So
yeah, I mean, nobody's stopping anybody from buying right here. I mean, we're not telling you not to buy right here. If you want to go ahead, cool. We're just saying it's a lot more risky down here because there's clearly a lot more nervousness. Whereas, again, to the question, where do the buyers live? The buyers are almost always end up being higher. I mean, take example, something like Nvidia a few years ago. People weren't interested in the stock when it was like legit before split 100, 200. Weren't as interested. All of a sudden, once it got to like 600, 700, people were super interested, right? So that's kind of what we're getting at. I mean, that's kind of how technical and momentum works.
Sure. We can move on to the bond market here today, which is seeing a little bit of softness as we make our way through the session. They were slipping back earlier here, Jamal. Yesterday, we actually had a pretty good 20-year auction. Not that it's carried over into today's session. ZB is slightly weaker at 114 and 18 ticks here. Ultimately, I'm still carrying my short put spread here in ZB. I've gone on enough about why it seems like from the messaging and signaling from the Trump administration, they are keened in on keeping rates low. And while I think the strategy that they've embarked upon is going to make it difficult for them to effectuate lower rates, I do think that there is a line in the sand that they've kind of shown their cards for. 4.5% of the 10s, 5% of the 30s. As long as we're above those levels, the market seems like it's stable. You can see 110 here in ZN as being more or less that line in the sand. I have directional neutral position on in here, short the Iron Condor in ZN. So I guess net between the two. At the two products at the long end of the curve, I'm leaning net long deltas. Yeah. But I think we're just due for a lot of chop right now. And if we do get a drive back down towards the lows, my first inclination is going to be, again, to sell puts against it. Because Donald Trump is apparently like us in one way, at least. He was up at midnight off after Liberation Day, seeing when the tariffs went into effect, watching the bond market. And so they've clearly established this as their pain point. And at first blush, do you think that they're going to let the bonds break them after they've declared this is the high in the VIX or the bond market's done with its yips? No, not the first time. They're going to put up some defense. My view, obviously not guaranteed. But I'll trade around it, at least for the short term, as it were, until I'm proven wrong.
Yeah, Team Iron Condor here too. On ZB, though, I just put that on. Coming into the week, I noticed that equity vol had fallen at the time. And when you go back to Monday, it had fallen from the week before. And the three things actually that had gone up in vol were gold, were oil, and bonds. And so I got an Iron Condor on in ZB. I did it on Monday, maybe, I think it was. I am short the 109 and the 121 strikes, and then 2 points wide on either side. So same with you. I just feel like this is a decent range. We'll trade around it, and that's what we'll do.
I don't think there really needs to be much more of a significant discussion around bonds right now. I know everyone's attention is on the equity market, but you have decent volatility. This is now the lowest volatility reading that we've seen since Liberation Day, quote unquote. Maybe the market is settling and normalizing. It's digested the worst of the news and is coming to terms with the new reality. That said, is this a great place to lay out a directional trade? I have a very difficult time saying I would want to get long here or put on long delta position, even with a short put spread. Just simply the recent pivot level that we climbed through, that appears to be holding up as resistance right now. We pivoted off of it at the end of March. Now we're treating it as resistance and falling back below our 1 week moving average, invoking a negative rate of change here, that negative slope in both the 1 week and the 1 month. And we have a holiday coming up around the corner. Listen, if you're going to do something short term, just be clear with yourself. You're punching a lotto ticket. Because you're saying that whatever happens over the next 3 days, if I have an expiry next week, can't manage my risk. I would not want to be putting on a new long position right now. But directionally neutral makes a ton of sense because we have clearly defined levels in both ZB and ZN to work around. Directional stuff, I would wait until Monday to reassess what the market looks like after we have 2 years off until the market opens on Sunday night. It's long. It's a long time.
In my experience over the years, when you have these big moves within a short period of time and vol, sort of explodes a little bit like it has, which is funny to say explode because we know normal for this thing is kind of single digits. It might be 11 vol right now. I'm not exactly sure the actual implied, but when you have those situations where vol picks up like that and you have those big moves in a short amount of time, it is going to start to calm down just a little bit, and that's why it's a pretty good time to sell vol in here. So that's why I decided to get short using the Iron Condor, because again, you have those defined ranges for the most part, and they're really wide, and those wings have really sort of jumped up in vol a little bit. So it seemed like a good trade.
Yeah, I'm with you there. Probably taking your precious metals today, Jamal. Is it something to write home about? It's 0.5% in gold. We had a 3% plus rally yesterday, folks. I didn't hear any bell. Gold is the only place that I find any sort of comfort in these days, outside of the utility stuff, which is a backdoor way of an AI play. Plus, if you're going into recession, utilities are one of the places that tend to weather the storm a little bit better than everywhere else. But gold here, pulling back today, if only perhaps because of the reason that today is a synthetic Friday. Our colleague here, Mr. Thomas Westwater, produced this great chart for me earlier, which I'm going to pop out here. It's not popping out here, Jamal.
Oh, no.
Okay, it's really embarrassing me right now. Why would you do this, computer? Okay, we're just going right through the Microsoft Paint thing. Median gold daily returns by day of week over the past 90 days. Typically, the middle of the week has been very good for gold prices. Fridays, on the other hand, over the past rolling 90 days, have produced a slight loss on average. Not huge, not enormous, about 0.2%. But there is no Friday this week. So this behavior of traders who are bidding up gold all week long and then jettisoning their positions ahead of the weekend, that's effectively happening right now and happening today. Have any of the underlying conditions that have driven gold higher changed whatsoever? No, they have not. Why not? Because central banks around the world are still buying gold. Investors are still importing gold at record numbers. COMEX vaults right now in the U.S. continue to see record stockpiles grow. There really isn't an alternative to the U.S. dollar. We can talk about de-dollarization in the sense that other countries see less of a need to hold dollars if their trade with us is going to fall. But there is no other intermediary in the currency world that can play the dollar's role right now. So you're going to put all your money out of dollars into yuan? Well, if China wants to become the world's reserve currency, Jamal, they're going to have to open up their current account, which means a massive yuan devaluation is going to have to come along with it. So if you think they're going to be the new reserve currency, you actually have to make a bet on the yuan weakening first. So you can't have it as a reserve in the short term because then you're putting your money into something that you know is going to weaken as a result of them trying to take the role of the reserve currency. So you can't go into the yuan. The euro market doesn't have a unified bond market. Japan, Korea, obviously not big enough markets in a sense, and demographic decline, Brexit. So you can't find another currency to fill that role. And I don't think anyone's putting their faith in the IMF's special drawing rights facility anytime soon.
I agree. That said, I decided to try an Iron Condor in here as well. Again, like I said earlier in the week, there were 3 things that had really been bid over the last week and change. And so, again, capping my risk because we've seen the moves that gold has made. I did it $200 in either direction from must have been Tuesday's move, I think it was. So obviously the big move yesterday didn't necessarily hurt, but didn't necessarily help the Condor. I'm still $100 away on the upside, which obviously could happen in a single day. But that's kind of the risk we take. And again, being it's capped, I'm not sweating too much. But like you said, the fundamental stuff has not changed around gold. The fundamental underlying reason why gold has been moving mostly has not changed. And as long as the dollar's starting to fall, this is going to continue to go higher. Will it go $100 at a clip? Obviously, I'm hoping not, but you are, and that's the two sides of a trade. That's the way things roll.
I wouldn't be upset if it continues to go up at a 3% a day, given my position right now. Definitely wouldn't be upset about that. The momentum is great. We are a little bit removed from the 1 month. We've talked about this numerous times over the past year, but when gold gets in that territory of being 5% or so away from its 1 month moving average, things tend to get frothy. And you could get a pullback. And gold is going to be the first thing to fall, by the way, if you start to see any significant trade progress coming from the Trump administration or a detente between the U.S. and China. I think then you'd have a big move back into stocks and a relief rally in bonds, a relief rally in the U.S. dollar, to which gold more or less has traded diametrically opposed to over the past several weeks. That said, Westwater rolled out his exposure yesterday. If you're coming up close to expiration as a momentum guy who has been riding this all year long, buy it, roll out the call spread, take profit, roll out the call spread. There's a trade in the chain that won't work, but this chain continues to work, so there's no reason to get off the train.
I know it's funny you say that about that 1 month moving average, because that's exactly what I'm keeping an eye on. And I am short the 30, 50, 30, 30. I could easily roll that up, that put spread up, but I don't necessarily know if I want to. I think, we have a lot of different rules. We have a lot of different sort of guidelines on a lot of these spreads, particularly Iron Condors. I just feel like a lot of times when I roll up, it doesn't necessarily work for me. So I'm just going to hold tight.
Yeah, I'm not keen on adjusting just one side of the Condor trade.
Yeah.
Usually you do. Yeah, usually you do. You're like, all right, I'm going to roll this down, and then the market bounces back. You're like, well, at least in my experience. Silver's off 1.53% today, although off the lows. I would point out that today's pivot, okay, what's this line shooting across the chart here? That's the 100-day moving average. This blue line down here, I should make that a little bit lighter. That's the 200-day moving average. I'm just going to make that quick adjustment right now. 200. Let's make this a little bit more legible on the screen. Just tone you down to there. That will work. That should be better. Is that better? No, I didn't click enter. There we go. There's your 200-day. Okay, so you have your 100-day, your 200-day. Silver burst through the 200-day at the end of last week. As we grind through this week, even today with support, holding above the 1 month, holding above the 1 week, holding above the 100. So we're clearly trying to reassert the momentum here. The effort is in place. Silver's back trading at levels it was in the second week of March. It's been a nasty decline, but it has rallied back. I'm still leaning long deltas here. I've been riding out the position I rolled out at the end of March. There's still 50-odd days to go to expiration, so I'm comfortable doing that in this environment. Traders that are just jumping in now, though, you are a little bit elevated from the halfway mark of the year-to-date high-to-low trading range, but you can still do something that's directionally neutral with a 43.3 IVR, and you can see how vol is coming in. Vol coming in is not necessarily a good thing long-term for gold or silver. You want to see it stay elevated. But if it is coming in, silver maybe not be able to climb to the heights that it did just a few weeks ago. It's going to be more of a jagged ascent than gold's rocket, and that gives you plenty of time to play for some theta decay.
Yeah, this is one of those things that shows you why during times of crisis, gold is just a little bit different than silver. And again, it speaks to that ratio, right? And right now that ratio is above 100. That shows you kind of the fear in the market because people are more keen to buy gold in these situations than silver, which I don't really like because I actually own some physical silver. So I was really hoping for this to go more, but it is what it is.
Whenever people ask me if I own physical silver, gold, Bitcoin, it's like none of your business.
Yeah, I know, right?
No. It's like we don't tell the government about that. We don't tell our wife about that. Like, what? You don't want to tell you about this? So, I don't have any physical silver, which is just I don't have any physical silver.
Yeah, I got some. You know what? I'm not going to tell them where. Yeah,
exactly. Yeah, you can tell me and. Just tell me over DM, and then you'll see me in your backyard with a shovel. But
yeah,
that's a different story. I keep silver in my backyard. No, oil here. This is something that we tinkered with yesterday, where we had this move off the lows. Jamal, the break-even rates that we have for production, $70 or so for a new well. Just north of 50 for the existing wells. When you look down here in oil prices, you're talking about absolute demand destruction. Yesterday with Thomas, we looked at a short put spread right now, trying to capitalize on this still high volatility here. So today's move is obviously helpful, a 3% rally here in oil. This may be a place, though, and as I look at this chart, seeing the move that was caught going into the weekend, I don't know, man. That seems like a good place as any for this rally to stop. The swing lows from early March now, the 1 month moving average here, that's where the market's pausing, 63.81 here as we make our way through the rest of the trading day. Bonds are closing, by the way, in 17 minutes for the rest of the session. I think oil, if you've been catching this move off the lows, it's a good place to reassess. If you can make a move through 64, you have a very legitimate pivot that's occurred down at these levels. And you probably have a more substantive rally ahead back into 70 or so.
Yeah, like I said, this is one of those three instruments that I mentioned where vol crept up over the past week. And this is one where I just put on a trade. I did a condor in here. And my strikes aren't too far off from yours as far as downside. But I ended up doing the 56.54 to the downside. And I did the 72.74 to the upside. So I'm
in 56.58 right now on the short put spread. 60 days to go.
I mean, I feel like 55, 56 is kind of that lower bound area that we kind of carved out, right? Of fear, if anything. So I decided we're in the same ballpark on that. Upside, you're right. I mean, I'd start to get nervous if this moved above 68 in a meaningful way. That's why I decided to go to 72 just in case, because maybe if it gets to 68, it kind of takes a breather. And I did go with June, which is a little further out, but that's what I did.
Do you have any feelings on natural gas down here? We just basically hit the swing low from late January, early February, and we're up against the 200-day moving average right now in natural gas.
We got enough problems without introducing natural gas into the situation here, okay? I mean,
that's fair. Yeah.
No, I actually don't. I don't have anything ever since the position from a couple of months ago. I haven't touched it. I haven't really been looked at it much given everything that's going on, but clearly it's calmed down a whole lot from the beginning of this situation, right? Because early on it was like, tariffs seem to be good for natural gas, and then for whatever reason, it's been in a serious decline.
Well, natural gas is kind of like wheat in that regard, where we have just so much of it on our shores. So if we're going to, leave the market and erect trade barriers, then in the short term we're going to be oversupplied. I would think that in a world, if the technicals mattered for natural gas, again, very different instrument than anything else that you'd ever trade. If it were to follow that path, the 200-day is not where this head and shoulders pattern points to. That gives you an extension closer to 2.7, and we're still at 325, just to round up. This move to the downside may not be broken. And in terms of being catching a falling knife, today is a red day. Actually, we've just flipped positive. Today's modestly positive. It's against the 200. Where's the momentum here? Slope is still negative on the 1 week, on the 1 month. You're catching a falling knife. You can look at the indicators. We're oversold. You got to be really tight here because the technicals still speak for more downside. I'm not going to catch the falling knife here ahead of a 3-day weekend. Not putting on a new position on Fridays, as it were, as some people like to say. Today's a synthetic Friday. Jamal, talk to me about the US dollar here. I know you're not the currency guy like I am, but I'm sure the dollar is something that catches your interest at these levels, given how it's behaving and not really serving a role as a safe haven throughout the equities decline.
Yeah, I mean, sorry, go ahead.
I say, what do you think about the dollar and its seemingly shifting role right now?
Well, for a lot of this whole situation, this crisis, it's kind of been sell America, right? I mean, it's been sell stocks. It was even sell treasuries for a little bit there, and the dollar has also been kind of swept up in that. And a lot of these other currencies have just gotten stronger against the dollar as a result. So I think it's probably one of the more worrisome situations in all this trading environment when you see the dollar moving to the downside the way that it has. So again, you're talking about a falling knife. I haven't exactly wanted to pick up dollars here because, and then it's also kind of counterintuitive, right? Usually, I think for those who are probably fairly new to the market in the last 3 to 5 years, you're usually, if you even paid attention to the dollar, usually markets were going down, dollar was going up, and markets were scared of a dollar moving to the upside. Now you've been seeing a lot of the opposite. So it just speaks to how strange this environment is overall when you see the dollar falling the way it has.
Volatility in the currency markets is coming back in. IVR of 38 in the Australian dollar, 41 in the British pound. Likewise, same for the Canadian dollar. The euro has that 60 IVR, which is intriguing considering how strong it's been, as does the Japanese yen at 57 IVR. You can see today the yen is off of that 1 week average here, which we've been continuing to ride up ever since we had our Liberation Day on April 2nd. Yesterday, we were looking at a potential shift in the position. Haven't been able to quite. Yes, actually was filled. Excellent. It was filled this morning. Rolled out from the 007, 0071 call spread. We've been talking a lot about the James Bond trade here, Jamal, over the past few months, right? Yen volatility was underpriced, and if you're going into trade wars and yada yada, the yen is probably going to be seen as a haven throughout all that. And so those conditions were ultimately fulfilled. No longer, there's no good reason to be long a short-dated call spread when you've crossed above the long strike, and we're sitting just south of the short strike. So rolling it out now 72.73. If we still see this tumult with the dollar, the yen has been a prime place of interest. It's up 10% this year off the lows. I think it's a decent way to just, again, continue the momentum here. The momentum against the dollar is strong even on a day like today. The Canadian dollar is up, about to close at its yearly high.
I mean, wow. Wow, it's crazy. Yeah, I have no words. Again, I remember two, three, maybe in January, I was, and again, those positions would have been gone, but I was interested in the idea of selling some of the vol because we saw the currency vol was bid then. We knew something was up. And it was for that reason I was interested, but I was like, you know what? I'm worried about the moves. And this is kind of what I was expecting at some point. I didn't know I was going to manifest, but wow.
I think this is perhaps the chart that, like, if Canada was really getting killed over this trade war, then their currency would be a lot weaker. I would also point to recent oil inventory and shipments data. I think the year-over-year growth rate right now let me take a step back. Up until a few years ago, the amount of oil that Canada exported to China was basically negligible compared to how much oil the United States exported to China. The most recently available figures that we have show, as of last month, Canada is now exporting more oil to Canada. I mean, Canada's exporting more oil to China than the United States is. So where's the economic fallout? Sure, they can't send more of their oil south of their border. They're just sending it west across the Pacific. No love lost. People like money. The Canadians are happy to take the Chinese money if they can't find the American buyer for it. And now we're kind of just sit here with like, well, who are we going to sell to?
They also said this week they're willing to make concessions to the car companies that are willing to stay. They'll make tariff concessions for them. I mean, and if you're wondering how they're able to do it, clearly this is how.
6C only has a 34.9 IVR. If we wanted to sell some put spreads against recent swing lows, you could certainly do that here. This topping candlestick pattern, the evening star, no fruition whatsoever. I think that just goes to show how the underlying strength right now is in the anti-dollar move, that even when you're getting these potential topping patterns, nothing. Even the euro riding higher, that 1 week moving average here. You could pick the top and say this is going to be it, but until momentum breaks, I don't think there's a reason to do so. That's just my cup of tea. Jamal, what's the one thing that traders should be aware of now as we make our way through this long weekend as they look to manage their risk for the rest of today while the markets are still open?
I think the fact that mostly vol has come in this week and things have gotten quiet, you could, on the one hand, think that that's a signal that things are about to calm down and this is what the next couple of weeks are going to be like. And maybe they are. Again, I don't know. I, on the other hand, am choosing to have this opportunity to probably close a few positions and sort of build up my capital reserves just in case things do get a little bit more wild, because it's been that type of market. Just when you think things are calming down, they don't. And again, I don't necessarily think we're going to reach new lows personally. Again, it's just my opinion. I don't think we're going to reach new lows, but I still think we can have, markets move around quite a bit. And we're going to have some ranges. And I think that gives you opportunities, to be able to sort of deploy capital in new ways. So there's still a lot of uncertainty, despite this has been somewhat of a quiet week. I think there's still a lot of uncertainty. That's the thing to keep in mind.
I would remind everyone, because this seems to be the one that's on everyone's mind. It's not futures related, of course, but general PSA. There are Netflix earnings trades today. There are Netflix earnings trades with options expiring in the April 17th today. given the potential move in the after hours trading, you have significant expiration risk even with spread trades. So use next week's expiry if you're trading the options, or further out, or just avoid entirely. But Netflix is a particular interesting animal with their earnings today and people not being able to manage the risk with markets closed. A friendly PSA from Nick Batista. So be sure to watch that if it's in your portfolio right now. What's next on the calendar? Tomorrow, with the markets being closed, it is a quiet day. There could be some Chinese data due out overnight. There may be a Fed speaker tomorrow, which is currently on the calendar. Otherwise, doesn't matter to us. Enjoy the day off. Get some rest. I'm looking forward to getting some rest from all. This has been a wild 3 weeks, and I don't think we're out of the woods yet. So, time to prepare.
Yeah, no, that's exactly what I'm going to do. I might play golf in the morning, actually. We might get some decent weather for a little bit. So I'm trying to sneak that in. Something relaxing, something calming.
We have an Easter egg hunt planned for this weekend. So that's going to be fun. Yeah. Although I've seen some people saying that they're dying potatoes this year because eggs are just still too darn expensive. I may have purchased too many eggs before prices went up. And so now I'm like, oh gosh, I have all these expired eggs. Save them for Easter.
Do you worry about the, you eat a lot of eggs. Do you worry about the expiration date, or what's your grace period beyond the expiration date if you have?
3 days.
3 days. Okay.
Yeah. Little bacterium can I get botulism? What's the worst thing that happens? No, but I'm generally, if I get close to the expiration, I just hard boil them. And even, we're just vamping here. It's the end of Futures Power Hour. I hope everyone has a good, if you don't come out for overtime later, or you're not here for engineering the trade, hope everyone has a good rest of your trading day. Of course, after this, we do have a video on demand for Dr. Jim Schultz, but then Jamal will be back for engineering the trade. And of course, we have the usual rest of the day schedule planned. Catch me on overtime at 4 Eastern with Ilya and Dylan Radigan. Okay, before we crash this car, Jamal, I'll see everyone later.
See you guys.
So I am going to show you the 5 most important pieces to the option return puzzle. 5 things that have completely changed the way that I trade. Boom. Hey, Jim Schultz here with you guys for another crash course, man. We are back, and this is the option returns crash course. And so over the next, 30, 40, maybe 85 minutes, we're going to work through the 5 most important pieces to the option return puzzle. But more importantly, we're going to work through why these are the 5 things that you need for consistency and sustainability in your option trading. And if you hang with me all the way to the end, in the final piece, we're going to talk about what type of returns you can expect from doing all of this in the world of options. All right. That all sounds pretty good, but with these gimmies, there's going to be some gotchas, as there always is. You might have to completely change the way that you approach the world of options. Which brings me to the very first piece of the puzzle. Prepare to make a 180-degree turn right now. And here's what I mean. I started trading options so many years ago the same way that almost every trader starts in the world of options, by buying options, whether it was long calls or long puts. Almost 100% of traders start on the long side of the option contract. And I mean, this makes sense because when it comes to long options, right, you always have the potential for effectively unlimited gains with limited risk. I mean, that's a win-win by anyone's calculation. The problem that I experienced firsthand, and that every option buyer experiences, is lying underneath the surface of these 2 gimmies are 2 formidable gotchas, as we are going to see when we break down this long put trade in Apple inside of the Tastytrade platform. So here we are inside the Tastytrade platform, and we're going to look at Apple for the purposes of this example. Right now the markets are closed. It's actually a Sunday afternoon, and so that's kind of nice from the standpoint of looking at prices and different things. We can examine things more easily in isolation. So right now you've got Apple at 176. let's say that I was bearish on Apple, and so I wanted to go the more traditional route that most traders start with, which is what we just referenced. I'm going to go in here to the trade page. Let's just say I'm looking at the May cycle with 33 days to go, and I want to buy a put to play and implement my bearish bias in the stock. So maybe I'm looking at the 170 strike put. Now, why I'm choosing this strike and, what the differences are, from one strike to the other, let's not get bogged down in those things right now because they don't really matter for the purposes of what we're going to work through. So let's say I go to buy this 170 put. So I click on the offer, and you can see this is a long put. You can see I'm paying $296 for it, and it's got all the other metrics. We're going to reference a couple of those here in just a minute. But if I click on the curve view, and I make sure my analysis tab is highlighted, you can see you can kind of toggle that guy on and off. If you toggle the analysis guy, the analysis button on, then what you see is you have a nice graphical representation of what you are up against or what you have working for you with a long put. You can see if Apple goes down to, again, kind of play my bearish bias in the stock, then I could potentially make a lot of money. If I even scroll over on the screen, you can see this line is sloped upwards, so I'm making more and more and more money. As you can see that right down here by the maximum profit being $16,704, and that, of course, would happen if Apple went all the way down to zero. Now, if I'm wrong, right, as we referenced there a few minutes ago, my losses are capped, right? The most I could potentially lose is going to be the debit that I pay on the strategy or the $2.96. So again, this looks like a really good situation by anyone's calculation. Well, the problem or problems or gotchas, I should say, are going to be at least threefold in this situation. Let's look more closely at the break-even point on the trade. Now, again, this is the break-even point at expiration, right? There are a lot more moving parts. There are a lot more things happening in the real markets, but it makes the illustration no less valid. I'm going to essentially have to jump over the hurdle that is covering the cost of the debit that I pay before I can make money on this trade. I'm going to need Apple to go down below 170 and jump over the cost that I've paid before I start making money. Yes, I can potentially make unlimited profits. Yes, I can potentially make a ton of money on this trade, but I need to be directionally correct. That's the first problem because that's really, really hard to do. Okay, the second problem. Look at this theta. Now, we're going to talk about theta in just a little bit inside of this very course, but what this number essentially shows me is that every day that passes is going to cost me money. Specifically, it looks like it's going to cost me a little more than $7 or 7 cents on the option price. That's going to be the hurdle that I need to jump over. In fact, it's going to mean the hurdle that I need to jump over is actually getting higher and higher and higher as time goes on. But thirdly, and this is essentially just a summary of the first 2 points that really drives the message home, because I need to be directionally correct to cash in on any of this profitability, because I need to jump over this negative theta hurdle that gets higher and higher and higher as time goes on, I'm left with a very, very low probability trade. I'm left with a very, very low probability entry. Long options are always going to be inferior probabilistic trades for you as a trader. And so be ready for that. Be prepared for that if you're going to take on the long side of the option contract, or you could even consider a different approach. So if you're looking for consistent, sustainable results over time, the truth is this: you're going to have a very hard time getting there with long options. You'll constantly be facing an uphill battle with trying to predict direction in an unpredictable market and overcoming the low probabilities that stem from time working against you. So naturally, you're probably wondering, all right, Jim, so what's the answer? Well, you, sir or madam, are in luck. Because the great thing about the options world and the options contract specifically is there are always two sides, the long side and the short side. And as we've just seen, the long side is a pretty tough go. So that begs the question, what about the short side? Well, that is where everything flips over and everything comes to life, as we're going to see by continuing with this Apple example. Except this time, we're not going to buy that put, we're going to sell that put. All right, so here we are, same situation. Still looking at Apple, same stock price, nothing has changed. We're still in the May cycle with 33 days to go. But instead of buying this put, we are going to sell this 170 put. So if I click on this guy, click on the put to sell, bring up the curve view with the analysis tab checked, let's look at how this situation is different. If you now look closely at what we have in front of us, you're going to see essentially the mirror image of what we had when we bought the put, right? When I bought the put, I was faced with potentially unlimited profitability with limited risk. Well, here I'm going to effectively have the opposite. Limited profitability with potentially unlimited risk, which of course is a very, very significant difference. But look at what else we have. You have Apple at 176. Look at where your break-even point is. You're collecting roughly the same as what you would have had to pay if you bought this put. Your break-even point is down around the 167 mark. And so essentially, if Apple just stays where it is, and it can even afford to go down a little bit, you are going to be in line to keep the credit that you collect on entry. So in other words, you don't need to be right directionally. That's a huge gimme. That is a huge gimme. Okay, secondly, look at this Theta number. Now, again, we're going to talk more about Theta specifically inside of this course, so I'm just glossing over, the basics of the basics right here. But what this number is telling me, because it's positive, I'm going to have time working for me, right? I'm going to have time working for me to the tune of about $7 per day. So again, I don't need to be directionally correct. There's no pressure to get the directional move right in the stock, and every day that passes works in my favor. But then, thirdly, look over at this probability. We were at 27% on the long put. We are now at 73% on the short put. The probability of profit, the probability that you make at least 1 penny in this trade at expiration, 73%. That is so much more effective of a foundation when it comes to what it is that we are trying to do over time, over the long term in our portfolios, that it's really, really, really hard to ignore the power of short options. Now, is there more to consider? Like managing that undefined risk and controlling your position size to defend against outlier moves? Like knowing when to enter a short options position and when to exit a short options position. Not to mention all the things you'll need to do or want to do along the way over the life of the trade. Yes, there's all that and then some. And that's why I would encourage you, in addition to this crash course, lean on all the other resources that are already available to you. You've got the Tastylive live show. You've got the Tastylive archives. Hey, you've even got the YouTube channel, including, shameless plug, a bunch of other crash courses that are already on the channel, done by yours truly. But when it comes to option returns specifically, and consistency and sustainability with those option returns, you have to be ready to make that 180-degree turn right now. Start focusing your energies on the short side of the option contract. Now, that being said, even if being on the short side of the option contract, selling options allows us to mitigate our directional risks and our directional exposure in the marketplace, we can't eliminate that directional exposure, which conveniently leads us right into the second episode of this crash course, where we are going to talk about Delta and how Delta impacts your option returns. And that second episode starts right now. Hey, Jim Schultz back with you guys inside of the option returns crash course, and we just learned, we were just challenged to move away from the long side of the option contract and embrace the short side of the option contract. Doing that leads to higher probabilities and more ways to win. But in addition to that, it also allows you to minimize your directional exposure by holding smaller delta positions. So you can significantly reduce your delta, which essentially allows you to significantly reduce your reliance on market direction with short option positions. However, for a single position, you can't eliminate delta completely. In fact, before we dissect delta and show you how it impacts your option returns, that brings me to the second piece of the option return puzzle. Day to day, delta is going to be the biggest factor impacting your returns. Now, this is not a guarantee. This is not necessarily going to happen every single day. There will certainly be days when other metrics in the return equation step up to the plate and steal the spotlight from delta. That will happen. But by and large, on average, you should expect delta to be the captain of the ship, so to speak, when it comes to the option returns that you're going for and the P&L on a given position day to day. All right, so now let's turn to how delta specifically impacts your option returns. And to do this, we can actually begin with a more or less textbook definition of delta. Delta measures how an option price will move when the underlying stock in the option moves. Even more specifically, delta measures how the option price will move when the underlying stock moves by $1. And to really better understand how all this works, let's take a look at a few examples. So for example, let's say you have an option on McDonald's that has a delta of 30. That means that for every $1 move in McDonald's, that option position will move by 30 cents per share or $30 in total, since the contract, every option contract, is always for 100 shares. Or let's say you have an option on Microsoft that has a delta of 50. That means that for every $1 move in Microsoft, that option position will move by 50 cents per share, or $50 in total for the contract. And lastly, let's say you have an option on Tesla that has a delta of 95. Here that means that for every $1 move in Tesla, that option will move by 95 cents per share. So almost the same as the stock itself, and $95 in total for the whole contract. And picking up right where that last example left off, deltas always range from 0 to 100. Now, they can be positive and they can be negative. We're going to talk about that in just a couple of minutes. But for right now, just think 0 to 100. If an option delta is 0, that would literally mean the option price will not move when the stock moves. This can only happen at expiration. Similarly, if an option delta were 100, that would mean that the option would move dollar for dollar with the stock. The stock moves by $1, the option moves by $1. This also can only happen at expiration. Now, there will be plenty of times where option deltas get close to 0, like 3 or 5 or 10, or get close to 100, like 90, 95, 97 before expiration, but at expiration is the only time when you will actually see a true 0 or 100 delta. All right, so now we're beginning to set a foundation for delta and how it's going to impact our option returns. Let's push this a little bit further to better understand bullish delta and bearish delta. So if you're bullish on a stock and you're using options, you will have either a long call or a short put or some complex strategy that features long calls or short puts. With either of these, you will have a positive delta position. This simply means that increases in the underlying stock price are beneficial for you. And here's how that plays out. With a call option, if the stock price increases, then the option price will also increase. That's the general relationship between stock price changes and call option changes. They follow each other. So if you buy a 40 delta call in Apple for $2 to establish a long call and Apple rises by $1, then the option price will rise by 40 cents and now be $2.40, ceteris paribus, or all other things being equal. This helps you, of course, because when you buy options, you want the option price to rise so you can sell it out for more than you paid for it at some point later. With a put option, if the stock price increases, then the option price will actually decrease. This is the general relationship between stock price changes and put option changes. They move against each other. So if you sell a 25 delta put in IBM for $1.75 to establish a short put position, and IBM rises by $1, then the option price will fall by 25 cents and now be $1.50, ceteris paribus. This helps you here because when you sell options, you want the option price to fall so you can buy it back for less than you sold it for. Now, if you're bearish on a stock and you're using options, you will either have a short call or a long put or some complex strategy that features short calls or long puts. With either of these, you will have a negative delta position, which simply means that decreases in the underlying stock price are beneficial for you. And here's what that looks like, where the same call option and put option relationships hold true. Stock price decreases would decrease call option prices, and stock price decreases would increase put option prices. So if you sell a 30 delta call in IWM for $3 for your short call, and IWM decreases by $1, then the option price will fall by 30 cents to $2.70, ceteris paribus. This helps you because you can now buy back the call that you sold for less than you sold it for. If instead you buy a 20 delta put in IWM for $4 for your long put, and IWM decreases by $1, then the option price will increase by 20 cents to $4.20, ceteris paribus. And again, this helps you because you can now sell out your put for more than you paid for it on trade entry. And of course, the opposite to all of this is also true. If you're bullish and the stock goes down, that's going to hurt your option position. And if you're bearish and the stock goes up, that's going to hurt your option position too. All right, so that's a nuts and bolts, stripped down to the chrome run through of how delta works in isolation. Of course, in real time, there's always a ton of other things that are impacting your option position. It's not just delta. But from a purely delta standpoint, as we begin to build up our foundation of understanding option returns, this is how delta works when it comes to dollar for dollar movements in the underlying stock. Now, over the life of a position, which might last days, it might last weeks, it might last months, the delta effects are going to be cumulative over time. Here's what I mean. Suppose we sold a put in Amazon for $2.50 that has a delta of 30. Now over time, delta itself isn't static, it is dynamic, and it will move and change as market conditions move and change. But for the purposes of this illustration, let's just assume that this position's delta stays at 30 over time. Let's say on the first day, Amazon rises by $1. This is good for us because a short put is a bullish position. And at a delta of 30, we know that the option price will fall by 30 cents and it will now be $2.20. But let's say on the second day, Amazon falls by $2. This is not good for us and will cause the option price to increase by 60 cents. So it's now at $2.80 and we currently have a loss on the position. On the third day, let's say Amazon rises by $1.50. So the delta impact will be negative 45 cents, bringing the option price down to $2.35. And on the fourth day, let's say Amazon rises another $2.50, yielding a delta impact of negative 75 cents, which brings the option price all the way down to $1.60. So a comfortable profit at this point. Okay, another example. Let's suppose we sold a call in TLT for $3 that has a delta of 40. And again, we'll assume that it stays at 40. First day, TLT rises by 50 cents, which is not good for us because we're bearish on TLT with this short call. The delta impact will be plus 20 cents, bringing the call price up to $3.20. Second day, TLT rises again by $1.50, which has a delta effect of plus 60 cents, bringing the option price up to $3.80, so an even bigger loss at this point. Third day, TLT drops, so giving us a little bit of relief, but only by 25 cents, which only has a delta effect of minus 10 cents. So the option price now is $3.70. And on the fourth day, let's say TLT rises by another $2, which will have a delta effect of 80 cents. So now the option price is $4.50. So a pretty significant loser at this point. Now, with these two examples, the most important takeaway is to see how the delta effects are indeed cumulative and they add up over time. And just as we referenced with our second puzzle piece, hopefully now you can see just how impactful delta can be on a daily basis from pretty modest moves in the underlying stocks. Sure, we had one winner and one loser in these two examples, but the stock could have just as easily chopped around over time, essentially yielding no delta effect in the end. A situation and a phenomenon that you might think is pretty uncommon, but it actually happens more regularly than you might think. Which actually ends up being the perfect segue, it's almost like this is all planned, into episode number 3 on Theta, which starts right now. Hey, Jim Schultz back with you guys for the option returns crash course. So far, we've moved away from long options and we've dissected how delta impacts option returns. It's now time to reveal the third piece to the option return puzzle. Time decay is your most reliable profit driver. And that is where another option Greek comes into play, Theta. With delta, we saw that how much delta the option position carries is clearly going to impact the P&L as the underlying stock moves around. With higher deltas leading to bigger P&L swings and lower deltas leading to smaller P&L swings. Well, here with Theta, just how impactful time might be to our P&L is going to be directly related to how much Theta we have on that position. And this is simply because that is precisely what Theta measures. How much does an option price change when time passes? Usually viewed in daily increments. Now, whether you choose to buy the option, play the long side, or sell the option, play the short side, plays a big role in determining how Theta is going to impact your P&L. Let's take a look. Simply put, option prices only have two components, intrinsic value and extrinsic value. The intrinsic value measures the inherent worth of the option. Like, is it giving the long side any additional benefit for having it? And the extrinsic value measures essentially everything else, like time premium, volatility premium, interest rates, etc. Well, at expiration, the value of the option will collapse down to its intrinsic value only. This is because when the option expires, there is no time left for any of those other factors like time, volatility, and the like to impact the option price. So in other words, at expiration, the extrinsic value of an option has to be 0. Well, this conclusion directly impacts option buyers and option sellers. When you buy an option, you are paying for this extrinsic value. You are paying for this because it is essentially what is giving you the chance to land a big score. More time or volatility are good for you as the option buyer. Well, if this extrinsic value decreases over time, which it does, all other things being equal, that is bad for you. And that simply means the passage of time is working against you. Hence, this is why long option positions have negative theta. Conversely, when you sell an option, you are collecting extrinsic value. You collect this because it is part of the credit that you pick up on order entry, and it serves as compensation for absorbing the risk that the stock will move against you. But again, this extrinsic value will decrease over time, which is good for you, so you have the passage of time working for you. Hence, this is why short options have positive theta. Now, admittedly, I kind of glossed over the components to option pricing, intrinsic value, extrinsic value. Well, the reason why I did that is because if you want to take a deeper dive on option pricing specifically, there's already a crash course on the YouTube channel. It's already out there. It's already ready for you. So I would encourage you to give that guy a look. But as you can see here with option returns specifically, having the passage of time working for you is uniquely beneficial. And to push this point a little bit further, by selling options and creating positive theta, this is what increases the probability of profit on these positions, as we've already seen with that Apple example. You can make money without being directionally right at all because you have the power of time working for you. Similarly, this is what decreases the probability of profit on long option positions. You have this headwind that you have to overcome. You have the negative theta. You have time working against you. So you have to get the directional move correct to overcome the obstacle that is in your path, that is time working against you. All right, so let's take a look at some profit examples with theta. Suppose you sold a put with a theta of $4. Again, remember, there are always a million other things impacting an option price. But if we just isolate theta to add to our foundation, that simply means that the extrinsic value will drop by $4 per day for the entire contract, ceteris paribus. This is 4 cents per share to match the option quote that is always given on a per share basis. But remember, every option contract is for 100 shares. So 4 cents a share, but $4 for the whole contract. So if you sold the option for $2 to begin with, or $200 for the whole contract, and it was completely out of the money, so its price is only extrinsic value, that means after the first day, the price will fall to $1.96. After the second day, it will fall to $1.92. After the third day, it will fall to $1.88, and so on. Again, we're keeping theta fixed over time, even though it is indeed dynamic, just to simplify our efforts a bit. Similarly, suppose you sold a call for $6 that has a theta of 5. Here, after the first day, the price will be $5.95. After the second day, the price will be $5.90. After the third day, the price will be $5.85, ceteris paribus, and so on and so forth. Okay, so that gives us a start to understanding how theta is impacting our option returns. But remember, theta will be working in concert with other things, like delta. So let's now combine what we learned from delta with what we just learned from theta and put these two together. Using our delta example from before, let's say we sell a put in Amazon for $2.50 that has a delta of 30, but now also has a theta of 4. Using the same stock moves from the earlier delta example, let's combine delta and theta together. The first day, Amazon rises by $1 and the extrinsic value falls by 4 cents per share from theta. This means the option price will fall 30 cents from the delta effect and 4 cents from the theta effect, yielding an option price of $2.16. The second day, Amazon falls by $2, which again is not good because a short put is a bullish position with positive delta. But again, the extrinsic value falls by another 4 cents from theta. So the option price increases by 60 cents from the delta effect, but it decreases by 4 cents from the theta effect for a net result of plus 56 cents, bringing the option price up to $2.72. Then on the third day, Amazon rises by $1.50 and the extrinsic value falls by another 4 cents from theta. So here, the delta effect is minus 45 cents and the theta effect is minus 4 cents for a net change of minus 49 cents, bringing the option price down to $2.23. So here, you can see how delta and theta are working together over time to impact the option price and thus your returns. Now again, on a day-to-day basis, delta is going to be the star of the show. It is going to cause bigger swings in P&L. But over time, as a premium seller on the short side of the option contract, time decay is going to be a far more reliable profit driver when it comes to your option returns. Because again, remember, the delta effects are cumulative and they will oftentimes cancel out as the stocks go up and the stocks go down and they essentially don't go anywhere. Well, the theta effects are always cumulative too. And so they're adding up over time. It may only be 4 cents a day or 5 cents a day or whatever, but over time, over the course of a couple of days, a couple of weeks, a couple of months, a couple of quarters, a couple of years, these can be really, really significant drivers to your total returns. All right, so delta has an impact on P&L. Theta has an impact on P&L. There is one more factor that also has a significant impact on your P&L, and that is going to be Vega and volatility. And that's the next episode that's going to start right now. Hey, Jim Schultz back with you guys for the option returns crash course. It is now time to reveal the fourth piece to the option returns puzzle. With the first piece, we know not to buy options, we know to sell options instead. With the second piece, we know that delta is going to be the biggest impact on our options P&L on a day-to-day basis. With the third piece, we know that time decay is actually going to be the most reliable factor to our option returns over time. Well, here with the fourth piece, here is what we want to understand. Play for volatility contraction. Why is that? Well, before we answer that question, let's back up and understand how volatility impacts option positions and option prices to begin with. So just like delta shows you how option prices change when the underlying stock price changes, and theta shows you how option prices change when the passage of time changes, Vega shows you how option prices change when the implied volatility of the stock changes. Specifically, Vega measures how the option price will change when the implied volatility changes by 1 point. So if an option had a Vega of 5, for example, that would mean that for every 1 point change in implied volatility for that underlying stock, the option price is going to move by 5 cents per share or $5 for the whole contract. If the option had a Vega of 12, now every point in implied volatility that changes is going to be worth 12 cents per share on the option price or $12 for the whole contract. Now, just like we saw with both delta and theta, you're going to have positive Vega and you're going to have negative Vega. So let's dive a little deeper into this idea. Simply put, if an option has positive Vega, that means increases in implied volatility help and decreases in implied volatility hurt. If an option has negative Vega, that means increases in implied volatility hurt and decreases in implied volatility help. And when it comes to options, the following is always true. Long options have positive Vega and short options have negative Vega. A call or a put, it doesn't matter. When you buy options, increases in implied volatility always help you because that increases the option price. So you are positive Vega when you buy options. When you sell options, decreases in implied volatility always help you because that decreases the option price. So you are negative Vega when you sell options. So how would that impact option prices specifically? Well, let's suppose you were looking at a put option in Disney selling for $3 with a Vega of 8. Furthermore, let's say Disney has an implied volatility of 30%. Let's say implied volatility suddenly rose by 1 to 31%. That would mean that this option would rise by 8 cents and now be selling for $3.08. This would help anyone who bought this put because the option price is rising, always what option buyers want, and hurt anyone who sold this put because option sellers want option prices to fall, not rise. Or let's say instead that implied volatility had suddenly dropped by 2. That would mean that this option would have fallen 16 cents and now be selling for $2.84. This would help anyone who sold this put, again because they want the option price to fall, and hurt anyone who bought this put because they want the option price to rise. And that is how changes to implied volatility impact the option price and begin to impact your option returns. All right. So what I want to do now is let's build a cumulative case using delta, theta, and Vega. Let's dive in. Sticking with the same Amazon example that we've been using, you sell a 30 delta put for $2.50 that has a theta of 4. Let's now also add that it has a Vega of 10 and the stock's implied volatility is 50. Again, for simplicity, we'll assume that delta, theta, and Vega all remain constant over time. So the first day that Amazon rises by $1, let's say its implied volatility also drops from 50 to 48. So here you have a delta effect of minus 30 cents, a theta effect of minus 4 cents, and a Vega effect of minus 20 cents, 10 cents per point, and the IV dropped by 2 points. So the new option price would be $1.96. $2.50 minus the 54 cents from Delta, Theta, and Vega. Okay, the second day, Amazon falls by $2. Let's say its implied volatility rises from 48 to 51. So here you have a delta effect of plus 60 cents, a theta effect of minus 4 cents, and a Vega effect of plus 30 cents for a net change of plus 86 cents, bringing the option price up to $2.82. On the third and final day in this example, Amazon rises by $1.50. Let's say its implied volatility falls from 51 to 47. So here you have a delta effect of minus 45 cents, a theta effect of minus 4 cents, and a Vega effect of minus 40 cents for a net change of minus 89 cents. This brings the option price down to $1.93, which would mean that your profit on the position would be $2.50 minus $1.93 for 57 cents per share or $57 per contract. Okay, so my hope is that you can now see how Delta, Theta, and Vega, direction, time, and volatility, impact option prices and in turn impact the option returns from your positions and your portfolio. Also notice how, again, in these examples, Delta was almost always, if not always, the biggest of the three. Now, this is almost always going to be the case. This is what we referenced earlier with that second piece to the option returns puzzle, with Delta being the biggest driver on a day-to-day basis. This is not something that you're always going to see, and it will be dependent on what you're actually trading and some other factors in the market, but most of the time, this is what you will observe. Of these three metrics, Delta, Theta, Vega, Delta will be the largest and the most impactful on a day-to-day basis. Now, I want to answer the question that we posed after we unveiled this piece to the option return puzzle. Why should we be playing for volatility contraction? Well, the answer is actually very, very simple. Most of the time, market volatility is in a state of contraction. Most of the time, market volatility is very stable and usually going down, like 80+% of the time. So naturally, we want to be positioned to take advantage of that, right? It's very similar to what we saw with positive theta and the passage of time. By selling options, we are positioned to benefit from the natural tendency of volatility to contract in the marketplace. This is because when you sell options, you're negative Vega. So you are positioned to take advantage of falling volatility by taking the short side of the option contract. Now, of course, there's a lot more to this, as my seasoned traders out there will know, with implied volatility rank, volatility clustering, binary events, and all sorts of other things. Not to mention, just because volatility usually contracts doesn't mean it's always going to contract. There will be times when you are going to have to manage potentially some pretty hairy positions where volatility is expanding rapidly. But those are all separate discussions for another time. Many discussions we've already had in those other crash courses that I referenced that are already on the YouTube channel. But here, I wanted to stay focused at the task at hand and really build up that foundation for understanding what impacts option returns, specifically from the short side, Delta, Theta, and Vega. All right, so now it's time to get into the final piece of this puzzle, which is going to be, what can I expect from doing all this? Like, Jim, I'm investing all this time, I'm investing all this effort. What types of returns can I expect by selling options and doing them the way that Tasty likes to do them? Well, let's take a look. That's going to be the final episode of the crash course that starts right now. Hey, Jim Schultz back with you guys for episode number 5, the final episode inside of the option returns crash course. So to this point, we've talked about selling options, not buying options. We've talked about delta's impact on option returns. We've talked about theta's impact on option returns. And we've talked about Vega's impact on option returns. Now, I want to reveal the final piece to the option return puzzle, and I want to answer arguably the most important question that you probably have when it comes to selling options. What type of annual return can I expect doing this? Now look, if you ask 10 different traders this exact same question, you are going to get 10 different answers. Some of them will be high, some of them will be low, some of them will be realistic, and some of them will be purely imaginary. Not to mention that there are so many different factors that go into determining what a specific individual's potential is going to be when it comes to generating returns. I mean, you've got skill level, you've got experience, you've got account size, you've got schedule, you've got so many different things. So it is a very, very difficult question to answer by and large. But for the final piece of the option return puzzle, I think that an annual return somewhere between 10 to 18% per year is a realistic target for most traders. Now, admittedly, that is almost certainly on the lower end of the spectrum when it comes to what you've likely heard is possible in the world of trading options. And just to be clear, I'm certainly not even going to pretend to be the arbiter of truth when it comes to what your potential returns could be. They could certainly be higher than this. I've seen it done. You could potentially do that. But when it comes to establishing some kind of baseline, some kind of reference point for most traders to wrap their heads around to determine if this is even a worthwhile endeavor, I think a 10 to 18% range is a realistic target for most traders, and here's specifically why I chose that range. So as we've gone through in this course, you have your three main profit drivers: delta or direction, theta or time, and Vega or volatility. Yes, interest rates and even potentially dividends do impact option prices too, but by and large, it's going to be delta, theta, and Vega that really move the needle in the end. Well, taking a closer look at those three, here's what we have. Direction, as a profit driver, is the least reliable. The market is unpredictable, prices are random, so putting any stock in delta as a profit driver in the short term is a mistake in my view. Yes, markets move higher over time, and over the longer term horizon, that should be factored in. But in the 45-day cycle that we like to trade, it's too random, it's too unpredictable, so direction doesn't factor into my range of returns at all. Volatility as a profit driver is more reliable than direction, given market volatility's tendency to contract over time most of the time, but still, it's very difficult to quantify just how much contracting volatility will add to your returns over the course of weeks, months, and quarters. Not to mention, volatility doesn't always contract. It expands too, and sometimes very rapidly at that. So for this baseline range of annual returns, volatility doesn't factor into my numbers either. But time, as a profit driver, this is the most reliable of the bunch by far. Again, we know that extrinsic values must be zero at expiration, and we know that by selling out of the money premium, we are selling options whose prices are 100% extrinsic value. So from the moment we press review and send on an undefined risk option trade, time is working in our favor. That's incredibly powerful, and thanks to the Tastylive research team, it can be quantified. So generally speaking, we like to hold portfolio theta at some percentage of net liquidating value, and the range that we typically target is 0.1% of net liq to 0.5% of net liq. So if we had a $10,000 portfolio, 0.1% would be $10 of portfolio theta, and 0.5% would be $50 of portfolio theta on a daily basis. If we had a $200,000 portfolio, then 0.1% of net liq would be $200 of portfolio theta, and 0.5% of net liq would be $1,000 of portfolio theta on a daily basis. Now, why we might choose one end of the spectrum over the other end of the spectrum is a longer discussion for another time, and you can find a ton of resources around that very question in the Tastylive archives and already on the Tastylive YouTube channel. But for now, all we need to understand is that the lower end of the spectrum, so 0.1% or 0.2%, is more conservative, and the upper end of the spectrum, so 0.4% or 0.5%, is a lot more aggressive. Therefore, let's say that we held 0.1% of net lick in portfolio theta, and let's suppose that every single one of our trades worked out perfectly. We never took a loser, and everything expired worthless. A very unrealistic outcome, but an important boundary for us to establish here. If that happened, and we assume 360 days per year, which is a typical accounting convention, then our annual returns from theta alone would be 0.1% times 360, or 36% per year. And if we held 0.2% of net lick in portfolio theta, our annual returns would be 0.2% times 360, or 72% per year. Terrific numbers, no doubt, but unreachable and unrealistic. So how do we use this reference point and turn this into something that is more meaningful and is more realistic? Well, this is where the Tastylive research team comes into play. The research team has found that when following our trading approach to managing trades and taking into account both the winners and the losers that you can expect when you do so, a reasonable expectation is that you capture 25% of the daily theta that you hold. So that means holding 0.1% of net lick in daily theta could yield a 9% annual return, 25% of 36%. Or holding 0.2% of net lick in daily theta could yield an 18% annual return, 25% of 72%. And that is where my 10 to 18% range comes from. Now again, these numbers are conservative and your mileage may vary, and maybe you feel like delta does require a home in your return equation. Or maybe you feel that volatility actually can be quantified when it comes to taking volatility's tendency to contract and turning that into a tangible return number, especially when you account for waiting for implied volatility ranks to spike before you sell premium. By all means, tinker with this, tweak this, make this your own. I encourage you to do that. But still, if we stick with the 10 to 18% range, the reality is this: if you were able to earn a 15% annual return consistently selling options, then you would be absolutely crushing it. I mean, that would be 5% more than the average annual return on the S&P 500 over the last however many years, and you wouldn't be tied to the market going higher to make money. You wouldn't require the market moving up to generate your returns. You would be able to fully customize your directional bias in your portfolio and still churn out 15% annual returns, a realistic target that I believe most traders with enough skill, experience, and understanding of the markets could achieve. That would be a wildly successful investing career by anyone's calculation. All right, so I can't believe it, but man, we are done. The option returns crash course is now complete. You are finished. And I really cannot thank you guys enough. I am so humbled that so many of you take time out of your day and time out of your schedule to invest in my content. Thank you. I really hope that it brought you some value in the world of options. If I can ever help you guys in any way, please, you can always reach out to me. You can email me, jschultz@tastylive.com, or we can connect on Twitter, X, whatever they call it these days. I am at jschultzf3. I appreciate you guys, and I will see you guys next time.
Tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
What's going on, everybody? I got to tell you, the markets are all over the place as they have been for several weeks, and things just got a little bit crazier yesterday between Powell and Trump. And you know it's bad when everybody, including the regular nightly news, is talking about all the stuff that's going on in the market. So we'll talk about what's going on there. ECB lowered rates. A lot to mention there. A lot of things for them to think about, given they're in an interesting they're in an interesting situation with their economy as well. A little bit different than ours, but yet they're still lowering rates. Why aren't we? We'll talk about that. China has expressed a potential chance of coming to the table on these negotiations with the U.S. with regard to tariffs, but there's a lot that they need, and we'll talk about what's going on there. And finally, what does UNH's earnings mean for the whole entire industry? We'll talk about those four things and more. We're not really going to look at earnings because, we're going to look at Netflix, but we're not trading it. And we'll probably take a look at the portfolio, maybe de-risk a little bit heading into the long Easter weekend here. But first, welcome to the most dangerous show on the Tastylive Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. And for those who were listening the other day, on Tuesday, when I talked about it's going to be my first game for my youngest son, first game last year, baseball. We won our first game. It was good. It was good. There's a new rule in our in our league. It goes fifth and sixth are together, third and fourth, grades are together, first and second. We're in fifth and sixth, and this last year after sixth grade, things have changed a lot. Like my oldest played baseball. After sixth grade, once you got to seventh grade, it was like a seventh and kind of eighth grade league. And it was like it combined two towns. It was like totally different because, after this age, sixth grade, 12, 13 years old, kids start specializing in sports, right? Some kids really lock in on the baseball. You can see the difference now, and kids start growing differently. It's a big difference, even my kid who doesn't play baseball at all year round, he's able to hang with the kids that do, mostly because, his athleticism is just starting to scream off the charts. He's gotten so much bigger, so much stronger, bigger, faster, stronger, always does well, right? So even though there's a lot of kids who are used to the speeds of baseball, he's able to compete because he's not even used to the speed, but it doesn't take him long to catch up. So anyway, this is the last year for us in baseball. And, it's kind of fun to just enjoy it, enjoy it this time around and see how it goes. But this year, a new rule in our league is the drop third strike by the catcher. Now, before, this didn't matter. It was like, whatever, kid struck out, third strike, whatever. But those catchers now, it's a lot more meaningful. They have to catch it. And you could tell it's going to be a big rule in our league this year. It's already having an impact on the league. It's kind of fun to have a new rule have impacts on leagues, right? That's what all leagues try to do. You're hearing all the offseason about NFL. They're trying to have, they're always having a new rule or remove, because even this year they've been talking about trying to get rid of the tush push, as they call it, the brotherly shove, whatever you want to call it. I don't know why they're trying to get rid of it. They say because of injuries, but come on, you can get injured in any given play in the NFL. What makes this play that much different? Is there something that shows that there's nothing, there's no data. If they did, they would have already gotten rid of it. There's no data that shows you can get exponentially more hurt on the brotherly shove than any other play in the NFL, right? They showed this with kickoffs, and that's why they revamped the way that they do kickoffs, right? So it's always interesting when new leagues are being introduced. Rules are being introduced to new leagues. I think it's going to be fascinating to watch, how things go forward, right? Anyway, let's pull up some slides. Let's talk about the week that we have at hand here. We got a long weekend coming up, of course, and long weekends essentially, mean risk. And I mean, honestly, I'm gonna probably try and fly through slides because markets are moving all over the place. I actually want to de-risk some. So we got a long weekend coming up. Obviously, Trump, Powell, had some words yesterday when he was here in Chicago talking about that the Fed's not going to cut rates. They're not in a rush to cut rates just because of what's going on with tariffs, et cetera. They really need a real crisis to arise. Obviously, you heard probably Trump's rebuttal to all that. He's ready to get rid of Powell at any given time. I don't necessarily know I don't remember what the deal is with that. I don't think he can outright fire him, because if he could, he would have already done it. But it's good that there's there is a independence with the Fed right now, because I actually agree with the Fed on this one. I mean, there's no real reason for them to cut rates when, again, we don't know the full scope of this tariffs, because again, he keeps instituting tariffs and then you pull him back, and then he really wants obviously these countries to come to the table with negotiations, which I'm all for that. That works too. I mean, if you can get these down, that's awesome. These tariffs that other countries inflict, but I tell you, until this is another added thing to the volatility of the markets. We've seen the big ranges in equity markets. Yesterday was another big range over 100 plus points in either direction. I don't remember the exact range of yesterday, but it was a big one. And so we're not going to stop getting these ranges until at least this showdown slows down between Trump and Powell, and who knows if it will. I mean, maybe it does lead to a situation where Trump gets the person that he wants in there, and oh boy, watch out then. Who knows what's going to happen. ECB lowered rates for the 7th time since June. They're down to 2.25%. We're still at 4.25 to 4.5, and we're probably on the higher end of most countries, most developed countries, that is. And it's interesting because, again, they're not worried about the scope of tariffs or et cetera, how it's going to affect them. And maybe, again, Trump said today that he's confident that he's going to get a deal done with EU. Maybe they're comfortable lowering rates because they feel like they're going to be able to operate in this environment. I'm not exactly sure, but clearly they feel comfortable enough, and they're also not worried about inflation. If they're lowering rates, clearly we are. So it's interesting to watch how these other countries are operating with their rates, given everything that's going on. It clearly is really damaging more to the U.S. than anything when you watch what's going on with the dollar, you watch what's happening with bonds, and obviously stocks. China. Speaking of rates, obviously they're at this. I don't know where they are. If it's 145% tariff or 200, I can't even keep up. I can't even keep up what China's tariff rate is right now. But they have expressed a willingness to come to the table and have negotiations. But they said first they need a point, man. First you got to stop doing what you're doing with Taiwan. And are you going to sanction us as it is, as speaking to the U.S.? So China has some demands, and they have a lot of other things that they're concerned about. So this is another thing that could obviously boost markets. Like if all of a sudden there is an idea on how we're going to handle these tariffs, and they're going to come to the table, and China and the U.S. are going to discuss things, well, that could really lift markets higher. I'm not saying that that's good when we move up 100, 200, plus points in a day, because again, you see what ends up happening after we have those big moves to the upside, like we did a couple of weeks ago. We got up to it was last week actually. We got up to 5,500, and then you saw it was sold off pretty hard, and that doesn't necessarily provide that much comfort. It's not like back in the day where you would have, and by back in the day I mean a year, 2 years ago, when you would have big up moves in the market, and then things finally are back to normal, and we settle down and we continue and we resume higher. That's not happening here. So, but if for some reason, like right now, if they were mentioned, China tariffs have paused for XYZ amount of time off the table, markets are going to completely skyrocket because, again, there's so many companies that buy from China, right? I mean, so this is not, this has to get resolved for us to really resume any higher in markets. And that's why I'm thinking about, I'm going to see where we end the day, but I'm thinking about doing a call butterfly at SPX probably 2 weeks out. Because again, the news is all over the place with this stuff. Finally, UNH, they reported very weak earnings, and they lowered their guidance. They're citing increased costs in Medicare as a big issue. This is going to be something for the whole entire industry. So you might want to be careful putting on vol trades in here, because this is another area. This is again, one of the things that we were relying on early in the year when most of the stock market, especially tech stocks, are tanking, was consumer staples, was healthcare. And now it's one of those scary areas. And UNH is one of those hard names to trade anyway. It's a really wide market. So I'm not putting any trades in here anytime soon. And it just told you, basically, you just found out today that there's a little bit of added risk with this whole Medicare situation. So something to think about. Leftovers. What countries are hit by the most earthquakes? Moving to the next slide. You see that we have, who's the top there? China, of course. China, 187 earthquakes. I did not know that. I don't know about you guys, but everybody thinks that we have a ton of earthquakes, and you hear about these a lot. Like I don't subscribe, but CNN breaking news is one of the tweets that I look at pretty much every day, and it's one of those that comes straight to my phone. Just get big time news, like big news across the globe. And I feel like this happens a lot. We hear about, it was an earthquake in China or earthquake in Japan. You don't always know about the fallout, but between 1990 and 2025, China's had 187 earthquakes. Indonesia is second on the list with 173. All my people out there who are geologists or anything, I mean, does this have anything to do with tectonic plates and have anything to do with the topography of the region? Why China, Indonesia, Iran, Japan are like some of the top four, or are the top four over the last 35 years. I mean, it's kind of interesting, right? But Indonesia 173, Iran third on the list with 112, Japan 103, and we all know about the huge earthquake a few years back that led to a lot more other issues. United States, kind of in a distant fourth. Distant fifth at 79. Then you got, kind of back over in that region, Turkey. Obviously Turkey's very far from Japan, but still. You got Turkey at 65. You got India at 59. Those aren't too far from each other. You got Philippines going back out east. Yeah. From India. Philippines at 55. And then you got Peru at 51. And then you got Afghanistan at 39. So I was just curious where most of the earthquakes end up happening in the world. And you can see China, Indonesia, and Iran are the top three. Let's move to the next slide. James Bond IV, I see you, man. I see you in the chat. I'll answer that in a little bit. Japan per square mile, probably. Yeah, maybe. Isn't Japan basically on top of a fault? See, that's why I don't know this. I was curious myself, but that makes sense. If that's the case, you could see why. Where was I? Oh, I am. Yeah, there we go. SPY, FPX, whatever you want to call it, S&P 500 implied vol is actually lower than historical vol, right? Because we've been moving around a whole lot. But anybody who knows about trading, this doesn't always lead to the best scenario when you are selling vol. So we need historical vol to calm down some. Now, I think this week, minus yesterday, this week is gone a lot in the way of that as far as historical vol calming down. We can get historical vol to come down and implied's already coming in. That's when it's golden for selling vol. The only thing is we'll see how the rest of these earnings end up playing out, right? We got major earnings starting next week, and then the really big week should be the week after that. Oh, man, we'll see how it plays out. Let's move to the next slide. Looking at let's move to slide 4. Looking at the VIX curve here, I put a little sort of white arrows here because you can see we're still in backwardation, but you can see that the June is not that much higher than the July VIX expiration. Now, always remember that these curves are 30-day forward looking. So if the May curve, if you have a May curve, it's using June SPX options to price that VIX May number. Same thing with June. June is looking at July. So that being the case, I think June is just a little bit lower, almost even with July, and it's definitely it's substantially lower than May because that's 90 days out, if you will. I mean, as far as options go, it should be a little bit lower vol and maybe on par vol with July. Who knows? This June could start to drop more if they really mean business about pausing things for 90 days. Because again, the 90 days is not June, but it's July options expiration, if you will, somewhere around there. So I just thought that was interesting. But other than that, we're still in strong backwardation. We've been in backwardation for the better part of, I don't know, 6 weeks, maybe. I think that's fairly long, but not even close to some of the longest times. There's plenty more longer. Let's move to the next slide. I actually need to find my old chart about some of the longest times in the backwardation. Just wanted to put this up to remind people: gold, silver, gold over silver, gold divided by silver is the gold to silver ratio. When it's over 100, means we're pricing war most of the time. What kind of war? Tariff war as of right now. Before was, 2020 was a biological war, I guess, if you will. It's an interesting way of saying it, but it usually is. The reason why I say war is because I've seen this thing go much further back, even to 1991 when that was over 100. And that was an actual war, right? The Gulf War. And people are usually buying gold in wars times period, or hoarding gold, if you will, because all other currencies kind of, sort of fade off, right? Currencies kind of evaporate in the middle of a war. You can literally take another country off the map and their currency is gone in the middle of a war. It can happen. Let's move to the next slide. So, like we said, Netflix earnings are tonight. Remember, you don't want to trade any near-term options in Netflix. You really don't. It's just too much risk for you because, again, something could wind up in the money, and then you'd have a stock position come Monday morning, and it's just a lot to deal with. So just be careful. You don't want to do it. So you don't want to trade any April 17 options in Netflix. April options expiration obviously is today. That's one of the reasons why we're talking about this. Markets are, of course, closed for tomorrow. Earnings next week, some of the big ones include Tesla, Intel, Google. There just came out some news today about Google. Wasn't necessarily favorable. Verizon has earnings. Boeing, of course, had news earlier this week that China has advised not to buy any more planes. Chinese airlines have been advised not to buy any more planes from Boeing. And then you got American Airlines as well, and IBM. Number of S&P 500 stocks above the 50-day moving average is 129, only 26%. It's fairly low, but a little bit higher than yesterday. Let's move to the platform. So we have faded. Yeah, almost not surprising, right? So there are, what I usually do in times like this, when you got a bunch of positions, you usually sort the book by IVR. What can I close? What can I get rid of? This is not exactly one to close. And I actually put this on a while ago, and these are still in the money. I would almost close this, but not quite. This is out. This is not as bad now. But do I want to keep this position? I don't know. These are further out. It's June. It's also earnings. Not really killing it on this position. This one might be one that I close because I don't know how much of Home Depot. I don't know how much of their products come from overseas. I don't know the situation. It is one of those things I'm worried about on earnings. No, not roll. Close. This is one of those. It's time to start doing a little bit of. No, not the one put. Jeez. It's time to start doing a little bit of risk management here on a lot of positions. It's something to think about. I really, it's decided recently there's a few things I'm going to start doing and just take a little risk management here, especially ahead of a long weekend. There's going to be more than enough news throughout the weekend. I can promise you that. And I haven't made a ton of money on many of these positions, but still, this is one short put. I've had this on for a few weeks. I had hoped it would have made more money, but I'll close that one too. Let's see. And, here's the deal. Sometimes you close winners, sometimes you close losers too. This is a winner. I just put this on yesterday, this Goldman. I might close that. I'm still trying to decide. Let's see. Distance expiration. Anything close? I do need to close these. So yesterday I sold these put spreads against the short call spreads that I had. When I say put spreads, I did it in Qs as well. So SPYs and Qs. I had some further upside short call spreads, and instead of closing out the call spread, I decided to sell a put spread against and turn on QQQ Condor, and I feel like it's fairly wide enough, given the fact that it's May, but I figured it would be advantageous to maybe, I decided to sell downside against the move yesterday, but now, as we get close to the end of the day here, I'm just going to close these, and Oh my God. I hate when this doesn't do what I want to do. All right, you know what? Fine. We're just gonna have to do it this way. Yeah, I just think I want to close these ahead of the weekend, and I really feel that I'm going to get an opportunity to put these back on if I want. And if I don't, I can live as well. That means things are over. But we all know things are far from over when in this situation right now. Qs is another one. Again, I did the same thing yesterday in the Qs. I was already short a call spread, and decided to sell a put spread against it. But 1 day later, I just want to move on and close the whole position out, especially ahead this weekend. You know, there's just going to be so much discussion over the weekend. Markets are going to move all over the place. And I still feel like vol's going to stay elevated enough for a while for me to put these on, but I just want to deploy some capital over the weekend. I have a plan for this VIX. I still have this one contract of VIX in the May expiration right now. May is trading 26.90, so this is in the money. But I'm holding out. If for some reason we get another jump in VIX, which I don't expect it to be huge. Another jump in VIX could be VIX trading 40. I would probably the index trading 40. Which means, I would maybe do a June contract if for some reason June were to get up to 30. Again, that's going to take a decent sized move to get June up to 30. May would jump to 30 fairly fast. June, probably 27. I might do a June contract maybe to the downside. Because again, when this does calm down, vol's going to sort of collapse fairly quickly. But until that point, it's going to be a while. This thing here, I've had this on for a while, this XLK. Tech has taken it on the chin the most, as we've seen, especially yesterday after, NVIDIA said they're going to take a big charge off and AMD said the same thing. So these have been harder and harder to hold on to. And obviously I got a decent sized exposure to tech. I still have, speaking of tech, I got these short call spreads on Microsoft and Meta. This is not exact. I mean, they're working out just fine, but I don't know. I think this is one I'm going to take off. It's a small. This is one where I just don't want the exposure for earnings. Oh my God, what is up with this thing today? Fine, do that and then sell that. 215. We'll try to close this. That level. Back to positions. Microsoft, we'll do the same thing. We're going to close these upsides. Oh, that was easy. Close this again. That's a small. The Meta was a small gain. Microsoft will be a small loss. And I initially put these on because I was expecting the market to bounce back faster, but not quite reach that level. And maybe vol will come in. But now it's basically typically. When you have as high a vol as we had, when VIX was around 40, 45, right? I usually don't like to sell names that have earnings coming up. I'm a little bit different than the Tasty methodology of Tom and Tony in this way. I don't necessarily sell names in earnings months. Like I definitely don't, because the vol holds up for so long. And I would rather, if I'm going to sell an earnings vol, I would rather wait till the day of. But if you sell it so far in advance, I mean, who knows where your position is going to wind up. And so I typically don't like to sell earnings months. But when you have all equity market volatility just rising the way that it does, then, you have volatility on top of earnings vol, if that makes any sense. And then you can actually sell the earnings vol. And then it'll, say this is your normal vol level, right? And then say this is earnings vol level, right? So these two. And then say when you get the situation that we've had where VIX is 50, well, then you're going to get vol up to here, even though this earnings vol is going to come in. And then I was selling, when I sold these Meta and Microsoft, I sold it with the idea that the vol would at least come back down to the earnings level and then I'd be able to close, let alone get down to normal, which it wasn't going to do until after earnings. If that makes any sense. I hope that makes sense. So that's why I sold those initially, because even though it was earnings vol, I wasn't worried about, I wasn't worried about sort of the high volatility level, the earnings vol of it. But now that VIX is back down to 30, I figured it's a good level to kind of close these out and move on. So that's kind of the way I'm looking at things. And I don't know if there's a few more. I mean, some of these other ones are in the money. Some of these, IWM maybe is one I should close. But I think it's fine. Honestly, if there's anything else, it would be something that's in. And most of my positions are in June, so it would be anything more near term. But again, I just put this crude. I just put this gold on. I just put this crude on today. Iron Condor in here out in June. So I think there's been somewhat of a range carved out. When you get big moves in a name, and it kind of you kind of get big highs, big lows, you kind of have an idea of a range. So it fell, gold oil, fell from 70, went as low as 55 and change, 54 and change. So I figured that was my range, and I went down to 56 to 54, so that 2 points wide, and then upside 72 to 74. That's kind of the Iron Condor range. Pretty decent pop on that one, I believe it was 57% pop. It could be better. It's gonna be 60, but I'll live with that for now. Gold, a 58% pop trade. Also, an Iron Condor. And at the time I did it 200 points wide from where the spot was. So at the time, spot was around 32.40, 32.50. $200 to the upside was 34.50. I did that 20 points wide. And $200 to the downside when it was 32.50 was 30.50. So that's how I chose my strikes. And that's the position I got. I'm still going to keep this one on and maybe look to close a few more things out before the day's over. But that is how I'm trading into the long weekend. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, trade them often. Have a good long weekend.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tastylive.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Hey everybody, happy Monday, Thursday. Tim Knight here, and this is the last day of the trading week. I think it's been, I was trying to think about it, I think we've only had 10 trading days since Liberation Day. I think that's right. It's all a bit of a blur. It really does seem like, a year or so, because it's been so densely packed with news and activities and movement and information and reversals of information has been quite the ride. And so we get a 3-day weekend to, I was going to say relax, but just sit on the edge of our seats for the next news to tumble out. I suppose that's why we're selling off right now to some degree, because we had spent most of the session kind of gaining ground, and then just minutes ago it started slipping. Once again, I assume just because people would really not stick around and see, well, let's see what happens over this long holiday weekend, because things can change on a dime for better or worse. I've got some charts for you as always, and I want to apologize for messing up Netflix yesterday. I really thought earnings was yesterday afternoon. I've been in the financial data business for many decades. Earnings date information is notoriously bad. If you see a date that earnings is supposed to be, it's 10% chance it's just plain wrong, usually by about a day. That's what happened, so I apologize. I was on the edge of my seat about Netflix. It's like, it's not moving. Why? Well, genius, because it's not till Thursday, so sorry about that. I'm pretty sure it's today, though. And the weird thing is that they're going to announce, and for whatever news comes out, then people have to wait until Monday. That'll be interesting. So, so my bad, but we'll look at Netflix at the very bottom of the program. Here's the spider. And you know what? I like candlesticks better for this, so let's just change this to candlestick charts. And we have been not doing much of anything today. It's not a very dynamic day. We had a nice tumble yesterday. We're kind of right smack dab in the middle of yesterday's trading activity. But as I think I said yesterday, instead of just scurrying around covering things left, right, and sideways, having looked at the longer term charts, it just seemed to me imprudent to do so. It seemed to me there's plenty more downside. So yeah, I would like to be able to not go crazy this weekend with tension, so I've lightened up to some degree, but I'm still pretty much out there. I think we have 27 positions down from at 36 yesterday, so jump back to some degree. The cubes are pretty much barely changed at this moment. We had a nice gap down yesterday. Ain't doing too much of anything right now. There's really no big news of any kind, unlike yesterday when there's all kinds of feelings going about. SMH is down, the Semiconductor ETF. There are many new gaps produced from yesterday's tumble, that is to say Tuesday to Wednesday. But we are just lingering under that gap today. The only kind of two big stock movers that I noticed were Eli Lilly, which blasted higher. I was short, and I wrote a whole post about why that was a dumb decision. And UNH, United Healthcare, which we're going to look at in a couple of symbols, which was down hard last I checked. But yeah, not a very news-heavy day. Here's NVIDIA, down pretty hard, over 3%. And this has, since it peaked, lifetime peak was this very year. It's January, got to 153.12. It has lost a third of the value since then, so something like $1 trillion in market cap. And this line here, this trend line, used to be resistance, bang, 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 bang. It magically changed to support here. And so as we fall, boing, boing. See, this program has sound effects. And this actually failed here, but for the moment, we're still respecting that as support. So this selling was so hard, it actually got below, but we are respecting yesterday and today that level as support. So yeah, that's NVIDIA. And the kind of odd man out, and this is what threw me this morning, is the diamonds, the Dow 30. Because first thing I do when I wake up is groggily look at my iPad and say a brief prayer and then look and hope for red. And it was a mix, because it's like ES green, RTY green, NQ green, YM red, really red. It's like my assumption at first was like, okay, this is just bad data. Because as I said, I've got a lot of experience with financial data. It's not that clean. So I figured there was just a bad data point or something. No, it was just the Dow component was down a lot, the aforementioned United Healthcare. And so the diamonds is, those are down about 1.25%, almost 500 points on the Dow, thanks to UNH, which is the sound their shareholders are making now. It's a hard fall, 136 points or so. And it's interesting to me because the Luigi incident was, I think, I don't remember exactly when it was, but somewhere around here, I think, somewhere around about there. And, that didn't cause any particular big stock movement, but over the course of time, it started getting weaker and then plunged and it hit a low here back on Feb 21. Then it began this climb, and I'm not quite sure why, but it climbed from 467 all the way up. It actually got in the vicinity of lifetime highs just a couple of days ago. Got back into the 600s. And this is the old adage about how stocks do fall a lot faster than they rise, And we've undone weeks and weeks of gains pretty much at the opening bell. So the earnings, post-earnings, this plunged hard. And so UNH is trading right now where it was trading in 2021. So 4 years ago, that's where we're at. So it's been quite an interesting critter in all those years. So that was the big move down today. EFA, weirdly, is very strong right now. I guess the trade tensions are easing to some degree, but I will say this is still a bearish setup provided we don't cross above this gap. This gap is absolutely key. 82.29. So this gap right like so, the dashed red line. We're getting close to it. It's still a very intriguing setup, and we shall see. But EFA has been amazingly robust. It bottomed out back here on the 7th, and it has been roaring higher, but that gap is beckoning. It's an important resistance right there. There's been a lot of damage even with the lift we've seen recently. Apple, I don't know if it's the biggest company in the world right now, that with all the movement there's been, it probably is. NVIDIA certainly not. But Apple's very close, and this channel is the key. And the midline of that channel particularly is important to watch, because as we zoom in, that midline is acting like a magnet for those prices. We got well above it, it fell back to it, fell really hard, and then boink, back we go. So you can see this cluster of activity right here. This midline is important, and these horizontals are important as well. This was the recent price peak, and that was following the news last weekend about exceptions for electronics and cell phones and so forth. So the opening was pretty much the peak, and we're down hard from there. So Apple's a somewhat damaged stock in as much as we've got this topping pattern here, and we are just below this multi-decade midline of the channel. Over in gold land, finally, gold is slipping. The front month's down about $21 right now. And we've got a spinning top on this one, candlestick. Lifetime high on an intraday basis today, but we are stalling out, it seems, on GLD. As I suspected, if gold falls a little, silver's going to fall a lot, relatively speaking. So whereas gold is down a fraction of a percent, silver's down a little over 1%. This gap here was not sealed, so we are getting some selling in precious metals. And miners, in particular, falling. Even from this great distance, you can see what a tremendous ascent higher this was. Now, we peaked yesterday, and we're falling today. It's nothing dramatic. I mean, we're basically trading where we were trading on Tuesday, so it's not like some huge collapse. But given the amazing rise on this, it is, not shocking that we're slipping back a bit. And even dust, we talked about this yesterday, even dust is up, of course, because lifetime low yesterday on this, but dust, the bearish leveraged instrument against the miners, this is up almost 4%. I don't have too much to do with any of this except for two things. One, I entered a short position of Newmont yesterday in EM, and I've tightened up my stop on that one to this dashed line, so just about 57.08. And earlier today, I entered a short position against GLD. So, long-term, still, of course, precious metals bull, but very short-term, given the incredible rise on that, looking for some slippage, which we're starting to get some here and there. What else is cooking? Well, over in DBC, this is the commodity ETF. We fell very, very hard on this. We have been recovering from there, but I would keep an eye on oil-related items as we get closer and closer to sealing up this price gap. For example, XOP, which has this beautiful top, this just collapsed. It's been struggling and trying and crawling to get back up to the gap, and it may well do so, but this represents staggeringly strong resistance. 119.36. I mean, it can't even seem to muster the strength to grab the ladder rungs back to that price gap. Relatedly, a little more obliquely, there are some intriguing ETFs that are also getting close to important resistance points. XLB materials, a couple of resistance levels here, 81.89 like so, and then this gap, very important, 82.86. That's XLB. XME, which I am maniacally short. This is the metals ETF, 55.81. The stop on this, and this actually may be a little bit red today. And this is changing subjects unrelated to commodities and such, but I would also point out another ETF, which is a less interesting setup, but still worth pointing out. XLF, the financials, 47.90 being the first resistance point on that. 70 seconds left. All right, let's wrap this up. Bonds, TLT, down over 1%. It looks like we've got a nice little resistance level here on TLT. And again, this is what the government is really focused on, the very weak bond market, which seems to have steadied itself somewhat in recent days. But that is front and center in their attention. XLU, oddly, is showing strength. And the key on this one, the key resistance point is 80.21 for the utilities. And the last chart, like Rocky and Bullwinkle, this time for sure, Netflix, no position, but well worth watching, because the point is the same I made yesterday when I mistakenly thought earnings were coming out, that it's psychologically really important. I have no position. I took my profits yesterday, but if by chance it tumbles, that I think will cast a pall across equities, even though it's just one stock, is an important stock psychologically, because people, again, will be reminded that, oh yeah, earnings count, growth counts, fundamentals count. So, well, have a good long weekend, and thanks for joining me as always. Hope you've done all right during these tumultuous times, and I'll see you on Monday. Take care. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap.
Well, we got Nova Vanetta today. She's out on a secret mission. Is this correct?
She's on a secret mission in New York City. But yeah, we're doing a funny little promotion, and we're going to see how it goes. And there's an outside chance, very small chance she gets arrested. Yeah.
So you guys sent me to New York to deface a national treasure, and I did not get arrested. No, in partnership with the testicular cancer charity, we mounted cherries onto the back of the charging bull on Wall Street, and it was awesome. We did a test run last night at midnight. People went nuts for this. Some guy yelled at us, and this other guy was like, oh, he's just cranky. But it's all for a good cause. We're out there for a couple of hours. It took months of planning. It takes 2 people to hang them, because that bull's ass is pretty tall. Yeah, so that's why I'm in New York.
Those cherries got some good hang to them.
Mm-hmm. Yeah.
Friday might be interesting. I'm not allowed to work on Friday. I have committed to my family because the Golden Prince is getting married.
I know. Congratulations.
So I have committed that I have to do family stuff, like take pictures.
I'll take things that Tom excels at for 100, please.
I'm just going to be a good,
attentive husband and father to the groom.
I'm never a good attentive husband. What I'm probably best at is
dancing. I watched you at the last wedding. You really excel at dancing.
I excel at picking up the tab.
My big question for you, and you know Slappy as he's gotten older.
What do you want to know about Steve?
Do you think after dinner, it was his 60th birthday?
No. Don't do it.
Beth knows Tony better than I know Steve.
Do you think he...
I have no idea what you're talking about, and I am just going to move on from this conversation. I'm with Beth. No.
That was like Minority Report, like a pre-crime Omaha. You know, like she knew the Omaha was coming. Like she got the little ball that came down and was like, okay, Tony's gonna go there.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade, make your move.
Ring the alarm, hey, ring the alarm, boys! Turn up the charm, listen up, y'all, get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the closing bell on this synthetic Friday. Sadnoff, even the S&Ps are down $20. Basically nothing to see here. They were just up 50 about a half an hour ago. Sold off to be up only 20. NASDAQ is up 12. It was just negative a second ago. Turned a little slightly positive just now. It was higher when the S&Ps were higher about a half an hour ago, too. Russell up 16. The Dow has been red all day, Sadnoff, on the heels of UNH. Got a lot of emails about UNH. Stock down over 20%, almost 23%, $133. Is there anything to do in there? Well, markets are quite wide on no matter where you go. You go to May, they're a little bit better, maybe 40, 50, 60 cents wide. But if you go out to June, you'll notice that they're, almost 80 to $1 wide. For me, there was nothing really to do in UNH, and this is about as liquid as they're going to be. Volatility down 65 cents, trading 26.80, still nice and elevated for everybody who wants to play in the pool. Maybe you've missed the higher implied volatility, missed the lower implied volatility. You got it right there in the middle over the last week or two. Bonds down 27 ticks. They reversed from earlier this morning when they were over 115 to 114.15. They're 7 ticks off of their lows. Bitcoin hanging out at just about $85,000. Talking about how stable it is, 84,800 through everything that's going on here. Oil up $1.90. Sadnoff, a nice little rally from the lows of the mid 50s up until 60. Well, it was over 64 this afternoon. 63.72 right now. Gold down $16, was actually under 3,300. That's $30 lower than where it is right now. It's actually caught a little bit of a rally, as it does every day. It's only down 15 right now. Silver down 57 cents. That's a big move, almost 2%, 1 3/4, 56.5 cents. Euro caught a little bit of a bid as of late, basically unchanged right now. Sadnoff, that's all I really got, unless you want to talk about the albatross from the room, and that would be Netflix for earnings up $8, IV rank of 56. What say you?
I have one position on a Netflix. Haven't traded it today. I'm short the let's see exactly what I have on.
You're in May?
Basically, yeah, I'm in May. I don't know if I love May. I'm short the 1180 calls and which puts and the 735 puts. I don't know.
You're out there, $110 expected move, and you're 250 outside of that.
No, well, I'm 200 points away on the put side in May, and I'm 200 points away.
You said 735, and we're 970.
I'm 200 points away.
235. I said 250. I just rounded. I figured we were friends.
200 points away on both sides, and in May, I don't think that moves. So I'm not. I will tell you that it came in $2 today.
Ooh, bueno.
Already, it came in $2 today.
Ooh, bueno. That's
So it's
20%. It was over $10 at one point.
It's 8.25 now. It was over 10 this morning.
Ooh, bueno.
Yeah, I mean it's.
So why don't you take that off, and trade her up, Sosnoff, and go into the what would you call them? The 8-day options, because you're going to make up for your mistake. Why don't you do that?
No, I don't think you trade the 8-day options. The only thing in the back of my head is the UNH thing, the UNH story. But well,
you were kicking yourself in the teeth for closing a spread that you would have
made an extra $5 on.
That's right.
Markets are kind of wide in Netflix. That's for sure.
UNH or Netflix? Where are you right now?
Netflix.
Oh, because we were just in UNH a second ago.
I know. Just trying to decide if Netflix is worth it or not. Does it trade 850 today?
Does it trade 850 today?
Yeah. What's the split risk in Netflix?
We've talked about this before. I mean, it's 970 to be clear, right? You're asking, does it go down $120? Is that what you're saying?
Yeah, after the close today.
Got it.
Which is easier for it to do? Go up 120 or down 120?
Neither.
In this market?
Neither in this market. I don't think it can muster, if you would have asked me that, 6 months ago, I would have said upside easily. Now, I don't think you can get that kind of move to the upside.
I don't think you could either, but the funny thing was, I didn't think you were going to get that kind of move to the downside in UNH, but UNH has been weird because UNH has been rallying huge lately. So, this down move, I think, kind of
still, you can't play for a 25% move in either direction.
How much skew is there in here? Let's see. In the 0 days. Man, the markets are really wide.
Mm-hmm.
Really, really wide. You go out 100 points. Yeah. I mean, I don't know if the risk reward's worth it for $1.
It's not. You gotta do something with some conviction in there, Sosnoff.
Yeah, I don't know that you can. I don't know that you can. I don't know that you can. I mean, the other thing I would say is that can you even ratio spread something that's going to be that you have no control over this afternoon?
Yeah, well, I'm not looking at the 0 day options. I thought we put that to bed already.
No, I didn't put it to bed.
You're gonna be really a stubborn young man about this?
Yeah.
All right. Well, I'm not gonna entertain you. I'm gonna be kind of mature here. I'm gonna go
kind of mature.
Yes, kind of mature. Sadnoff, I'll give you your trade. With 8 days to go, the 880, 860 for $5, Sadnoff, 90% pop. It brings your break even down to 835, which is almost 1.5 times the expected move. 160 points get you down to 810. My break even's 835 or so, or 830. There you go, Sadnoff. I gave it to you. If you have the buying power left in your account.
Oh, I got the buying power.
Oh, I know you do, baby. Talk to me. Talk dirty to me.
Got the buying power. Come on.
Mm-hmm. A guy like you, that's what you should be doing.
Guy like you. $20,
$25 wide spread. You can even go down the 875, 850, bring your break even all the way down to your 2 times expected move. You get $3.50 in credit for the 8 days. You got a nice $25 wide embedded put spread in there. Bada bing, bada bop, bada boop. 93% pop.
I wanted to see where this thing was going to go to. I wanted to see where we could possibly take this thing on the outskirts of. Yeah. I think it's a. You're gonna hate this, but I kind of feel like
I think I already hate it.
I think it's a double ratio spread.
I don't hate that. I don't hate that. I really don't hate that.
You don't hate it?
No.
I think it's a double ratio.
Okay, what strikes you looking at?
On the call side, the 1040.
What month are you in? And I'll know if I'm even going to put it up.
Oh, the 1 day.
There are no 1 day. There's 0 day and there's 8 day. Now 0 day would be stupid to trade.
Why?
Because of the afternoon risk after Netflix moves, how you can get assigned on anything, even a defined risk trade. I don't think we have to go through this again. I think you're more mature than that.
What if it's all credit?
Doesn't matter. What do you mean if it's all credit? Come on, Thomas, you know this.
No, I understand. So you get stuck. You go right in between these, center this thing.
Yeah. What does that have to do with anything?
Well, you can sell the stock. Or you can buy the stock. You got 20 minutes.
Or you can grab your ankles and it could work out. I mean, who knows, Sosnoff? Yeah, that's my point. That's why I go to the 8 days.
You're such a wuss.
What? Just because I like to do my fiduciary responsibility to my loved ones. And that's you out there, everybody.
I don't know. I think I'm going to keep my May position on. I really want to do April. I haven't decided what to do yet. All right. What else you got? What do you think for Monday?
A good way to concede. Sadnov, I went and got my lamb chops already.
Oh, I haven't.
They're having a run on them. My butcher told me he almost ran out.
Of lamb chops?
Yeah. He said, T, get them now. I said, okay.
Yeah.
I mean, I get good ones like from Steigel Farms and stuff like that.
Yeah,
you
sure,
probably just, you know.
I get good ones. I get them from Australia, New Zealand. I fly them over.
New Zealand, Australia, same thing.
I fly the lamb over.
Same thing. Mm-hmm. Sure you do.
All right. I think I'm going to take a pass. I think I'm just going to leave my position on. Don't love it. Don't hate it. I think it's a nothing. I think I'm going to make, if I'm lucky, I make $1. I don't even think I make that. What do you think for Monday?
What do I think of Monday? Long weekend. I don't know. Market's pretty. I mean, I wouldn't say it's nervous, but even the S&P's only traded 1.15 million. Even the S&P's have traded. Volatility is in by 80 cents. This is about as low as it's been for the afternoon. It had a little bit lower earlier volatility today. Actually crept back up a little bit. I don't know if you have a position on in Tesla side. No, Tesla volatility looks like it's come in nicely today. Stock is down $1.40, was up a little bit more. Monday, the way we're behaving today, China, we make a deal. I remember when Trump's tweets used to send us, up 200 handles on even the S&Ps.
I'm flat Tesla. Do you know that the vol in there came in pretty good today, about $1.50 on a Strangle?
I just said that. I don't know if you have a Tesla position. It came in quite nicely today.
Yep, came in quite nicely.
Yeah. You only know that if you have a position, sure.
Yep, came in quite nicely.
I'm mildly bullish for Monday.
Oh God.
What? What? You too? Because if we are, I'm going to neutralize my delta right now and go short. I mean, just let me know. Just do me one favor. All right, it's been a long time since you've done me a favor.
What do you want? Yeah, I'm mildly bullish.
Oh shoot! God bless it. You ruin everything. You like mush. Oh man,
mush. Yeah, I can't. I don't want to get short here over the weekend. I'm mildly, I feel like I feel like today was the gap up opening. They couldn't sell them off.
Couldn't really buy them either here. I mean, Nasdaq just turned red. It's down 4. Yep. Dow's been weak all day long.
Oh yeah, well the Dow's not going anywhere with UNH down $140.
Right. I was just saying, but that puts a damper on the market too. But you got some stocks with some big names here that are lower. Microsoft down $3 and change. Nvidia never got out of its own way. It's down $3.50. Been down most of the day. I mean, it traded up to 104 for a quick second. Google's down 2 and change. Amazon's down almost $2. Tesla's down. I don't know.
I got to tell you, I kind of feel like, I think part of me feels like the Netflix is going to miss, but that's like I think Netflix is going to miss. Could
Netflix be a non-event?
It could be. In this market, it really could be. I feel like they're going to miss small, but I do think there's a split risk. Like I think Netflix has all the cards in their hands right now because they can say whatever the hell they want. It's a 3-day weekend. They can buy a lot of time. They can spin this thing however they want. So I think there's more risk. Let's put it this way. I think there's more risk of a gap up because Netflix does something good than there is of Netflix gapping down and the market doing something bad. You know, the market, all things considered today, I don't remember what Taiwan Semiconductor did at the end of the day. It's probably unchanged or something. It's unchanged. So you had one of the worst earnings experiences we've seen in a long time with UNH. You know, that's a huge move in there, and that's a Dow stock. And yet the market, you know, the S&Ps are up.
Yeah.
And so if that didn't hit the market today, I'm kind of thinking that you've got, that you've got some upside potential.
I feel the same way.
By the way,
that scares me.
By the way, somebody sent me an email that said Kathy Woods reiterated her 2,600 number on Tesla.
Yeah,
it's $240. It's $240
for 2027 or something like that, though, right? I mean, it's a couple years out.
Yeah. She is truly an idiot. Like I've heard a lot of dumb stuff.
I would like to have a cup of coffee with her and ask her what she was thinking. I would like to.
I mean, I've heard a lot of dumb stuff.
Well, you work with me. Of course you've heard a lot of dumb stuff. Sure.
I mean, just don't put something out there that has, I don't know if Tesla has a number. Like, I don't know if there's, I don't know how far out the leaps go. I'll tell you, actually, let me tell you. Because what pisses me off is
you got 600-day options. You've got
you've got
900, almost 1,000. December of 2027, you're looking at 80 points, 177.
Yeah. I can't get any further out. Anyway, but to get to 1,000, the statistical chance of getting to 1,000 by 2017 is like
2027.
2027.
Those options you just looked at are December of 2027. It's $177. That's the expected move.
Yeah. And she said December of 2027, which is the $177. So her expected move is $2,200, which makes the statistical chance of that happening
0.000001.
Okay. So doesn't it bother you that creating a quant firm and having people say stuff and getting picked up by some financial media, somebody has a 0.0001 chance of happening? It's just like so idiotic. Doesn't it piss you off? Pisses me off.
Sure.
Like she's such.
I think that's a bigger blemish on the market than many things that people think are blemishes on the market.
I know, but it's like that's such a I mean, how do you even say stupid shit like that? She's just she is completely off her rocker. If anybody ever quotes her again, don't ever send me an email. And Vanetta, I will have her killed if she ever gets a
Monday. Vanetta's going to pick up that article. And by the way, Sadnov, since we both became mildly bullish, Nasdaq sold off by 50 handles. Even the S&Ps are almost unchanged.
Yeah, the Dow just lost 100. It was down 450. Now it's down 550. Yeah, I think that's just a lot of nervousness over, well, I don't know. I was going to say over Netflix, but Netflix hasn't really moved.
It hasn't.
But, listen, to be fair, if the S&Ps should not move that much on Netflix, and the Russell's not going to move that much on Netflix, but the NASDAQ could move, 100 points easy.
Sure. As a matter of fact, we've talked about it in the past. Key on the NASDAQ futures to see what Netflix is going to do or has done already, even before it comes out.
Yeah. So let's just explain to everybody what happens here. So if you sell a call in Netflix or you sell a put in Netflix, and Netflix at 3:00 closes and yours puts out of the money or calls out of the money, you are not out of the woods. I repeat, you are not out of the woods.
Hence why you should be staying away from the 0-day options. Thank you.
The brokerage firm, and whatever brokerage firm you're with, they're going to hate you because there's no way for them to defend your risk either. But the professionals have about an hour of which they can decide whether or not they want to exercise, and retail customers have about a half hour. It's actually like 3:25, so 25 minutes Central Time. 4:25 Eastern Time, and that's just because the clearing firms have a cutoff. But the actual cutoff is later; it's like 5 or 5:30 or something. Each firm's a little bit different, so a lot of stuff can happen, and the stock could go down 100, it could go up 100, it could be 75, whatever it is. And so you got to be careful here. You're going to put the risk teams in a lot of pressure if you keep a near-term position on. So
even a defined risk trade.
Even a defined risk trade. So if you have the money. I'm sorry. If you don't have the money to carry as much stock as you're doing, they are going to shut you down. I would roll forward to a different week or a different month. And in the case of Netflix, you really have to go to the monthlies. There's just not a lot there.
Yeah, agreed.
I mean, the Mays are trading really well right now, but that's about it.
Very good. I love your public service announcement, Sadnop. But you know what? I've got something that the public's really been waiting for. That's right. We got the overtime crew in the house. All three amigos. How are you, gentlemen?
Good afternoon.
Hello, boys. Well, it's big Netflix. I'm not a Netflix person, so it's hard for me to say because I don't really watch Netflix. Tony watches a lot of Netflix.
Because you can't remember your password, but go ahead.
Do you guys watch Netflix?
Tom doesn't know which button to push.
Well, he knows what buttons to push. He just doesn't know how to get Netflix.
Dylan, do you watch? There's no chance Dylan watches Netflix. No chance.
I sometimes, if I have a friend who wants to watch something, I will partake. But the honest truth is that at this moment I don't have a functioning television screen in the home that I occupy. But I would.
Yeah. What are you on the lamp, Dylan?
But I do sometimes think to myself, I should probably plug in that television somewhere, wherever it is, and watch some Netflix. So I do think about it. But then I'm like, but what would I watch? The only thing I could watch would be I could watch the 57th rerun of all the Seinfelds. Like, how many times can I watch every episode of Seinfeld?
That's just true. But Ilya for sure watches Netflix, and Chris for sure. Yeah.
Anybody with children and a wife.
Yeah. But boys, what's your call? Ilya, what do you think here? Higher or lower in Netflix? It's a total guess, so just what do you think?
I'm gonna hold you to it.
I would suspect it's probably close to in line. Maybe a little bit better just because they've probably guided cleverly, so they'll try to report. But I don't think it really matters. I don't think that this is what's going to drive the stock or any stock, really. I think that there's a different story out there, and these things don't very much matter.
Well, it did matter in the case of UNH today, but every other stock that's come out, it's had no impact. It's zero. Chris, what do you think?
Higher. Netflix is like the Philip Morris for Gen Zers, right? They need their streaming, like a good Gen Xer needs a good cigarette. So to me, it's a stock that people are going to continue to use if they're trapped at home and they're not traveling. So yeah, Netflix should just stay strong throughout all this.
I'm going to call a bold move here. Netflix actually lower after the earnings come out by about 30 to 35 handles, maybe 40. And then they announce the stock split, Sadnov, and it's up 50. 100-point range.
Yeah, Dylan, I can't. I'm
I mean, I don't even know what to do with that last comment.
It's been 4 days of him. I can't. I'm
How can
I'm ready.
you work
I'm
with
ready
it?
for a spot treatment.
I mean, can I be more specific? I mean, I gave you everything you need. Maybe up more than 50. I'm just telling you. I mean, I don't know.
It's not this Netflix. The problem with Netflix is that the growth in marginal users is slowing, will slow. It's going to slow. And until Netflix announces live sports, which I know they're noodling around, and let me put it this way, Netflix lower with an asterisk if they announce an NFL or a live sports deal, then higher. But absent live sports, they can forget it.
Can I tell you guys something that nobody knows? It's like a little bit of inside information that I think is really important.
Sure, Elon, tell us.
Netflix is picking up Tasty, the live stream, for the rest of 2025 and 2026. So do you think that would make the stock go higher?
That could be a red flag. that could be a sign of desperation. Like that could be a sign that they're running out of content.
They couldn't get the NFL, so they took Tasty instead. I nobody knows that. Just so you know, I think this is you guys are the first guys to hear this. So it's just a little bit. I didn't want everybody to know at first. But,
I'd like to revise my Netflix call then, if that's okay.
I mean, honestly, it's the guidance that's going to probably be the most impactful. I mean, we're looking at what 5.67 for EPS. It's not. I mean, it's already a jump.
All right,
it's already the highest in a while.
We only got 2 minutes left, so let's go around the horn. Chris, what do you think for the markets next week?
Initially down, close the second half of the week higher for stocks. I think we're going to get a trade deal with Japan or some memorandum of understanding, an MOU.
Oh, an MOU. An IOU. It's like an IOU with an
I
M.
love a good MOU. Everybody loves a good MOU.
I love a good
It's an
MOU
agreement
too.
to create a future agreement.
Yes.
In the future, we will agree to some things that we're going to agree that we'll futurely agree about.
It's really good for marriages too. I strongly suggest everybody who's considering getting married to get an MOU.
Do it with an MOU.
A memorandum of understanding. Very important to have in your back pocket. Ilya, what do you got?
Now you tell me.
Well,
I think
really
next
trying
week,
to help Dylan because Dylan needs it more than anybody.
Listen, I've checked. I've removed myself from the field of play. I got to take a break. I'm on a rest of life break.
What do you think, Ilya, for next week?
I think probably lower. I don't like how soggy everything has been this week. They haven't really built up to anything. I'm not quite ready to say that we're going to get back to the bottoms necessarily, but it looks like it's really struggling here. So I'm going to say lower.
Tony, quick.
I'm agreeing with my friend over there, Mo, with the MOU coming out this weekend, although I do think we're going to open higher, not as high, similar to what we did last weekend, and maybe meander sideways from there.
Oh, a little bit.
It goes higher all week. It's one of the best weeks you'll see of the year next week.
It is traditionally
relief rally.
Let's be fair. Next week is traditionally a fairly strong week in the market to follow up a very strong, April expiration. So I think that the fortune favors the bulls on the early call. But I kind of like. Tell
us who you agree with, Sadnov, so we know which one of us is going to be wrong.
I kind of think that the Netflix, I'm hoping it's a little bit lower. I don't know. And then I hope we rally off I'd rather see us rally off the lows than sell off the highs.
Netflix looks like it's up about $20 right out of the chute right now, but that could just be, I don't know if it's come out yet.
Just a little pregame hype.
I mean, I see it $7 high. Not really. I don't know, Tony.
I saw
watch them beat the forecast and then moan about consumer confidence and the tariffs for the entire earnings call.
I see a bid up $7 right now, but the offers are kind of wide, and now I see it actually lower.
Yeah, so I saw both too. Mm-hmm.
Yeah, so I mean, do you
NASDAQ
think
futures rallied. Now they're basically unchanged at 6.
We got the results here. EPS is 661 versus 571 expected. Revenue.
Oh my God, it's a
10.5.
Freaking
The non-event. I said it before.
Freaking non-event. It's it's an absolute non-event. If the number's out and this is it.
Tim Halley is stepping down. Reed Hastings is now the non-executive chair.
It's up $10. What was the expected move, Tony? 55?
50. Yeah, 55, 50, 55.
55, and it's literally unfrickin' changed.
Yep. They beat nobody cares. Yep.
Well, Sadnov, good job out of you. You could have been somebody, but you're not. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. With
As
these guys
I told
on
you before, that's why you sell the front month, Mr. Batista. You owe me. I want you to drive to my house and give me a check, please.
Oh yeah, because the 8-day options that were trading 3 times as much wouldn't make any money. We're going to take a quick 90-second break. Peace. Can't stand him.
Ciao,
tonight.
boys.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like in horse racing, they would call it wire to wire. And in trading, they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
What happens when two titans of trading come together to harness the power of their prowess? You get a massive display of, whatever this is. Oh, thought he had it there. Come on, gents, it's not that hard. Hit the ball with your paddle, mate. Oh, for the love of... Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market, trade ideas, and more delivered right to your inbox. Sign up at tastylive.com/newsletters.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Trump wants to get rid of Powell. In other news, it's a day that ends in Y. It's Thursday, April 17th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, to take you through the rest of this hour, the final hour of the trading week here. Markets are closed tomorrow for a Good Friday holiday. It is Easter weekend. Happy Easter for those who celebrate. For those that don't or just here to talk markets, welcome. Hope you're on the platform. Hope you're on the website, tastylive.com. If you're there, come join us on YouTube. Tell us what you're all about, what you think of this action today. Quite frankly, a little bit of action today. S&P 500 down by 0.25%. The NASDAQ up by 0.07. We can talk about the Dow and the UNH move later on, but this is a pretty quiet day on a day where the President of the United States is openly talking about firing the Fed chair, which he can't do legally, but nonetheless, he's vamping on about it. Markets, we know. The median trader knows that Powell is probably going to be out of a job if the Supreme Court lets him fire Powell. And if he's not going to get reassigned in May 2026. So it's coming. Markets don't respond. Bonds don't respond. Gold doesn't respond. Dollar doesn't respond. It's actually a fairly quiet end to this week. We just had Netflix earnings come out. For those that were with us at the end of last call, Netflix is higher here-ish now. It's been oscillating back and forth now up to $990. So starting to settle on a little of the upside. Obviously can't trade this right now. So if you did have a position on it, it was for long delta and moving up. Hopefully it worked out. If not, good luck on Monday. Ilya? Let's talk about this Fed chair potentially being fired by the President of the United States. A lot of bark. Market doesn't seem to think there's any bite right now.
It's an interesting sort of thing because you have a situation here, and I think looking at the bond market, you very clearly see it, where the market has decided that there is increasingly sovereign risk in U.S. assets, and that this risk isn't that the U.S. is going to lose its predominance or anything of the sort, but there's as we discussed on the show yesterday, there's gradients. It's not just everything is great or total Armageddon. There's middle steps, and clearly we're sort of tilting in the direction of wait a second. We don't want to necessarily be holding U.S. assets because who knows what's going to happen. And that's the building of the term premium in treasuries. And that's what's driving yields higher. So if you were the president and you said, I want yields to be lower, it's actually very much in your own hands because the reason that people are so concerned is because of the uncertainty you've created. Mm-hmm. The surge in term premium has to do with the tariffs and the uncertainty around them. All of these continuous kicks of the can down the road are just telling the markets, well, we still can't find anything forecastable to actually plan around. So what are we going to do? Nothing. We're just going to demand more compensation for duration risk, and that's it. Okay, so the president comes out and in a Truth Social post says, well, look at the ECB. They've been cutting and they're cutting again, and they just cut another time. Meanwhile, Fed Chair Powell isn't doing anything. Not like Powell can set policy individually by fiat, but nevertheless, he's just sitting around, can't wait for him to be essentially relieved of his duties. And I'm paraphrasing here. I think he said something along the lines of terminated or something like that. if ever there was a misunderstanding of the moment, I mean, the president is adding more fuel into the very same situation that's driving yields higher, which is the opposite of what he wants. By creating more uncertainty around who's going to be the Fed chair, the president is increasing borrowing costs, not decreasing them, by feeding that rise in term premium. Mm-hmm. Whereas what he could be doing is creating certainty around his tariff regime, which would actually drive yields lower by reducing that uncertainty.
It would help reduce that uncertainty. Dylan, these remarks about Powell leaving, he said, quote, "I'm not happy with him. If I want him out, he'll be out of there real fast, believe me," unquote. This was at an event today with your Prime Minister, Giorgia Meloni. Do you think that
she's in town?
Do you think that this is a sign that maybe the U.S. and the EU could be close to any sort of understanding, a memorandum of understanding, if you will, or is Meloni just being dispatched there because
I thought that,
speculate with
far
me.
Be it. Listen, Donald Trump he's your friend today and he'll kill you tomorrow. So, Donald Trump likes pretty girls. Giorgia Meloni he probably sees as a pretty girl, and so he likes to hang out with her. But I believe he has absolutely no loyalty or general. I mean, they've made their utter disdain for all of the European prime ministers very clearly known. They sent the vice president to Europe as soon as they were elected to tell Europe off. They have no respect for European government or European leadership in any way, shape, or form. But at the same time, Mr. Trump, the president of the United States, is socially very adept, and the Italian prime minister is probably socially the most capable of the leadership crew in Europe. But I don't see what happened between Meloni and Trump today in Washington, D.C. as anything more than a social ritual that I think has little to no bearing on policy. It's a photo op for both of them.
Fair enough. The Powell comments today, I think, if you've been watching Trump and what him and his administration have said regarding the Federal Reserve during the campaign up to now, it's pretty clear they're not a fan of Powell. They accused Powell of playing politics when he cut rates back in September. Trump lambasted him for that. I think the silver lining for today is that, given the comments here, if Trump wanted him out of there, he'd be out there as soon as possible. Well, he's fired everyone else already. Hasn't he gone around with a chainsaw? Doge going through the administration, firing every person that can be fired under the executive branch's whim? Hasn't happened with Powell yet. Not just because it'd be destabilizing for the market. The president may not have that authority. We've covered the lawsuit that's making its way through the court system right now, and it's now risen to the level of SCOTUS regarding Humphrey's executor. It's a 1930s ruling when FDR tried to fire an FTC commissioner, and during the deliberations, this guy Humphrey died. And so the question was whether or not there wasn't even a lawsuit or could continue to go on. Ultimately, the widow is able to carry the lawsuit forward and ruled that the president can't unilaterally fire these independent, non-political commissioners. And no president has challenged this in 90 years to effect. So if the Supreme Court upholds it, then Trump can't fire Powell. If the Supreme Court overturns Humphrey's executor, then he can fire whoever he wants. And that's why I think the market is saying, well, the Supreme Court isn't gonna let this happen. So if Trump really wanted to get rid of Powell, he would have already gotten rid of him. So this is a lot of talk today, not much more than that.
Well, interestingly, there was an article out, Politico picked it up, at a few other outlets as well, citing, of course, unknown people familiar with the matter, saying Scott Bessent is over there yelling up a storm about this thing and trying to caution the president that any kind of attempt to remove Powell or otherwise meddle with what the Fed is doing would, in fact, to yield, as we're saying here, the exact opposite result. Higher yields, not lower. And there may not be anything the Fed could do about it because the Fed is only as good as its credibility. It can't mandate all of the interest rates in the economy. All it can do is be credible, move its rates as a kind of baseline for the cost of money, and if the markets generally believe the Fed is credible, they'll follow. But if they don't, then they won't. And so you make the Fed appear to be a stooge of the executive branch, and all you do is you set yields on a dramatic rise higher as uncertainty builds. It's, I suppose, what we could call, Chris, the fool Erdogan.
God. If people don't know what that means, we can do an episode next week where we talk about the failures of ergonomics, but you could also just go to your, Claude or GPT, or if you still use Ask Jeeves or Google or something, go to one of those old fogey search engines. But look up what ergonomics has done to the Turkish economy and the currency and the cost of living. I think the way that Trump's putting us on the course, it's ergonomics. If it's kind of like an American Brexit, if you will, from the global trade system.
Yeah, kind of.
I mean, Dylan, hasn't that been one of the clear lessons that the UK has learned post-Brexit, that they didn't really have the ability to chart their own course as much as they thought they would, that they didn't have all the power back once they excised themselves from the EU? They've been struggling since then.
I mean, the reason, you're not wrong, and I don't disagree, but the reason I hesitate to just jump right in there and agree is, first of all, most of the people who live in London didn't vote for Brexit. Most of the educated urban class in England had no interest in Brexit. It was a abandoned and disenfranchised northern rural voter that was susceptible to delusions or illusions of British primacy in a way that is almost identical to the rural American voter who is now vulnerable to illusions of American non-interdependence, I guess would be the most polite way to say it.
Because there's already American primacy, right?
I mean, America's primacy is a function of the fact that it is the dominant counterparty, it is the most connected place in the world. It is because it is the most connected place in the world that it is the most powerful country in the world, and it's the most connected place in the world because it is the reserve currency and because it is the reserve capital. It is the capital source for the world. And I won't reiterate all the things that it is, but technology, finance, entertainment, blah, blah, blah. And so it is a politically accessible and successful strategy to tell a disenfranchised minority that disconnecting from the other is ultimately going to be good for them. But it's also explicitly at the feet of the Democratic Party that they're so corrupt and incompetent and incapable that instead of fielding even a marginally viable candidate, they thought that they could run a senile man who would then handpick someone that no one wanted. And so I think it's easy to pick on Trump and for good reason, but I put Trump's existence at the feet of the Democratic Party more than I do anything else, because 80% of the available voting pool didn't vote for Trump in the first place. So this whole idea that there's this big Trump wave is bullshit. 22% of the available voters voted for the guy. 78% of the people either didn't vote or voted for someone else. So the entire construct is frustrating for me because it perpetuates the false belief that America wants this, which America wants this as much as any dictatorship wants a dictator. It's a minority that has seized power, and the reason they were able to seize power is because of the egregious corruption in the Democratic Party, which made a fuck you candidate more attractive. And so that's what we've got.
Yeah, if I could just opine on that for a little bit, I think that's a common point that I've had talks with many Democrats over the past few months. Like, it was just the messaging is just this. Like, no, guys, if you think that Trump was this uniquely unpopular of a person, What does it say about the candidates that, Democrats are running out that you guys lost to this uniquely unpopular person? It must mean that you are even more unpopular. David Shore, who is one of the Democratic Party's, big data guys, he looked at crosstabs from the 2024 election, Dylan, and, I know that you say like, oh, if, Democrats only to get better candidates and turn people out, they would have had a better chance. That's not what the data suggests. The data suggests that lower turnouts actually help Democrats now because of the shifts in the voter composition. And the Trump coalition coming out of 2024 on a voter basis resembles the Obama 2008 coalition more than his 2016 winning set of voters. And so when you have a coalition that's like Obama 2008 or Trump 2024, the higher the turnout, the more people you're getting involved who are seemingly politically disengaged and aren't following the news day to day. And if you're not following the news day to day, what's your interaction with politics? High gas prices, high grocery prices, high insurance prices, cost of living's out of control. And so you look up on the election day, who's in charge right now? Get him out of power, right? So the disengaged voter actually, like more people voting last election, would have probably meant a bigger Trump landslide. And that's again, I don't see many Democrats outside of the data scientists looking at the numbers and making that suggestion. So Trump is a uniquely popular president. And that's, I think, difficult for a lot of people to stomach. And it's, not comfortable for people who don't like him to say.
Well, and this is the dichotomy, right? A lot of what the campaign was about style. Well, look at the style over here, look at the style over there. And the Democratic argument seemed to be, well, that style over there is disagreeable. This style over here is agreeable. And I think what you get in the results, and actually Jon Stewart, I think, made this point better than anyone, but of course everybody has since kind of picked up on the phrasing. What Trump has been really good at, to sort of make the Brexit analog, is to identify what the source of discontent is, to identify the issue, to diagnose the mood correctly, but then to provide solutions, or at least proposals for solutions, that nobody likes and that are probably disastrous, as we now see with the way that these tariff situations, the DOGE process, the immigration process, with the way that it's being interpreted by business and consumer confidence, and with the market response to those interpretations, which are universally dire. So this is not us speculating on the quality of the president's ideas. This is what the markets and consumers and business people have made of the execution of those ideas so far. So there's two things at work here. On the one hand, the assessment of what the pain points are clearly is correct, because clearly the voters were not upset at the tone nearly as much as they were upset at the scoreboard. And they had a very particular interpretation of the scoreboard economically, politically, socially. And the president seemed to have dialed in on sort of what is the point of maximum discontent amongst most people. But if you look at business confidence and consumer confidence numbers, there's clearly a ton of buyer's remorse. And the markets are reflecting that.
I don't know if the markets would call it buyer's remorse, right? If Trump was just doing Trump 1.0 right now, we'd be probably thinking about
that's the thing. If
a 6400 S&P.
Well, hence the buyer's remorse. Right? Yes, I think you're absolutely right. I think if the markets were worried about tariffs as a concept and an immigration crackdown as a concept and government efficiency and the slashing of bureaucracy as a concept, we would have these things be drivers for sell-offs in November at the absolute latest, once the results were in. That's obviously not the case. I don't think anybody thought that the concepts were necessarily objectionable. I think what now is starting to show up as of late February, when sentiment across consumers and businesses starts to deteriorate around the rollout, that's where this becomes real. That's where the buyer's remorse comes. When people look at the execution, you can put your meme of Jim Cramer grabbing his head on CNN and shaking it vigorously. This is where the buyer's remorse is. It's in the execution. And that, I think, speaks still further to the idea that the analysis of the issue was probably spot on. At least, I mean, we can quibble as to whether there is the issues that people think that there are. But what people think the issues are was probably diagnosed correctly. It's the execution that has everybody upset.
Dylan, some of the China-sensitive names are struggling here as we look at the, retail, for example. Retail ETF, it is up, but a name like Amazon is down. The sector performance across the board today was still very defensive in, considering it was a mixed market day here. But in terms of the top sector performance, one needs to look no further than what's happening in the energy sector right now. Crude oil obviously having a very strong day here, up 2.94% right now, back to its 1-month moving average. But you have some of the energy ETFs leading the way higher: XLE, OIH, XOP. OIH is your top performer, up 3.56%. You also see that staples are up there, and utilities, and they're both outperforming the broader market here. So, Ilya, when you look at today's bounce, you look at the composition of this rally, or stutter step, if you will. Although we can't trade tomorrow because this is basically a synthetic Friday episode of Overtime. How do you feel about going into next week knowing that there are 3 very, very long days ahead before the futures market reopens?
I'm not changing anything. So I was a little bit concerned about my dollar shorts going into the ECB, thinking that maybe the ECB would take some steam out of the euro with a rate cut and with dovish rhetoric, and that would spill out into a more generalized U.S. dollar rebound if the move were big enough, because the euro is, of course, such a huge part of the overall dollar market. In fact, the euro-U.S. dollar exchange rate is possibly the most liquid financial instrument in the known universe. But that didn't happen. The euro very impressively held up. Lagarde came out there, all kinds of dovish. And that really didn't seem to move the needle for anyone. And so as I look now at what's left, it doesn't really seem like there is a sense of urgency to do much of anything. It seems like the markets are getting ready to go into the end of the week with not a whole lot of conviction. The only moves we see, in fact, are in the bonds, and they're all happening at the longer end. So the 2-year barely changed, the 10-year down a little, the 30-year down more. All of that just tells me we're going into a long weekend, to your point. Lots of things can get posted on Truth Social between now and next week. Lots and lots of markets will be off for Easter Monday. So those closures will continue in Europe and in a lot of parts of Asia Pacific, let's say. And so liquidity is going to be really thin at the weekly open. Things can get really choppy until the U.S. comes online. The bonds move today just tells me people baked in more term premium into yields and decided to go on vacation because nothing else is moving. So I'm staying long bonds. I'm staying short dollars. I'm a little bit short the Russell. That's it. I don't think there's any reason to touch anything.
Do you look at the move in oil as just a bounce off of a price extreme or an actual adjustment in the economic pessimism that was embedded in that sell-off?
I think right now the easier explanation is that it's a bounce off an extreme because if you take a look at the chart here, you can see, and Chris, I think you've got the line I'm looking at right there. We're testing the underside of what was a break downward. I think this is more about a loss of desire for conviction. And the market's just saying, you know what, we're not going to mess around with anything extreme here. Moreover, I think if you look at the calendar for today, you have a little bit of an explanation for what's going on here. The EIA numbers were out earlier this week. I think you got a little bit of a impetus there. And so, I mean, pretty negative inventory numbers across the board. A much smaller build than the previous one, and generally for refined products, inventory's down. So we didn't have a response on it on the day of. This seems like maybe is a response to it before the end of the week to just kind of clear the decks, price in the data, and then go into next week with whatever's new. There doesn't really seem to be a very compelling reason looking at crude oil here to think, oh, I'm going to extrapolate this higher. Now, if you take out the previous swing lows from March and you get back over that, okay, maybe you have more of a conversation, at least to the top of the range around, let's say, 71. But even if you thought that was going to happen, the risk reward, now that you're kissing the underside of the lows, is awful. You're basically nose up against resistance. So it doesn't even look like a trade.
I think maybe it's the optionality around this weekend's meeting in Rome, Dylan. The Trump administration and the Ayatollah regime are sending people to go meet in Rome to talk about a nuclear deal. The Trump administration has repeatedly said that it's either deal or bombs. And so as we head into a weekend,
it's a fun way to say it.
Weekend where there's clearly something at stake here, seems like a decent hedge, right? You want to keep all your other risky stuff on? Buy some oil. Put a little oil in your pocket before the holiday. It's the worst that happens, right? As for May, yesterday on Futures Power Hour, Thomas and I were talking about this, how we were nearing the break-even rates for existing oil wells. And so we both put on short put spreads. Obviously, this is working out well for right now, short the 56, 58 put spread. This is a place where, quite frankly, if you're not comfortable holding risk into the weekend, it's as good a place as ever to get out. Former low that you have in September, lows that you have in March. Got a few minutes left to make some trades. We see here that, we're talking about the 1 month moving average up at 68.07. It's pretty clean, depending upon what contract you're looking at. But otherwise, oil, I think, has some optionality around this meeting this weekend. Dylan, why Rome? Why not Vienna? Why not a place where OPEC has some cachet? Why would the U.S. and Iran meet in Rome? Not that it doesn't even matter. Am I just talking out loud?
I mean, the only reason that I could think is, for whatever reason, the Trump administration is going out of its way to elevate Italian leadership, because I think that it believes that Italian power and Italian leadership is the most reliably conservative and obedient to the Trump agenda. I think that they feel that the rest of Europe is defiant, indifferent, or disdainful of the Trump administration. And I think they feel like Prime Minister Meloni and by proxy Rome is the one aligned nation with the Trump agenda, at least culturally. It's a safe cultural location for the Americans, and it's also the most beautiful city on earth. Probably doesn't hurt.
Well, it's probably also.
But I do think that there's
I mean, to your point, Dylan, it's probably the friendliest of the important and influential ones. Because I mean, if it was the absolute friendliest, they'd be going to Budapest or something like this.
Maybe at Hungary, yeah.
Yeah, but that they're going to
that's
Rome.
A second-rate operation.
Yeah. I think to your point, this is, and I mean, you've been very bullish on Giorgia Meloni, and I think rightly. It sort of speaks to her competence and importance that they would have this in her house, and that she would be in Washington basically the day before.
No, they're clearly elevating the Maloney. The Trump administration has made the decision to elevate Maloney from the get-go, right down to being, I think she was the only one of the big four European nations that was even invited to the inauguration.
Which might actually bode well for Ukraine, because unlike, let's say, Viktor Orban in Hungary, she is a tremendous Ukraine hawk.
That's for sure.
Is there a China angle here?
Maybe.
Could I chew on an idea that 44% of China's oil imports come from the Persian Gulf? And if the U.S. really wants to turn the screws on China, then having American warships conducting military activities against Iran might kill two birds with one stone. I know that Trump said that he turned down an Israeli request for an invasion and attack a few weeks ago. And that information was made public today ahead of the meeting on Saturday in Rome. Draw the straight line. Trump's clearly trying to stake out, like, listen, I want to get a deal done here. Cop. It's actually very smart messaging. Yeah. It's very smart framing, right? We released this story. We know we have a meeting coming. Oh, by the way, in the news, we stopped an attack against you guys. We really wanted you dead. If these talks weren't meant to be constructive, we just let Israel bomb the hell out of you. So it's a very smart framing to put the meeting on better terms, but it also means there's a gun being held to Iran's head here, where if they don't come to an agreement, I don't think Trump is going to shy away from that, though. You want to upend the Chinese economy right now while it's refusing to call Trump, disrupt the flow of oil. So I have my long crude position on here, if only for that. The volatility is too high just to justify buying deep out of the money calls right now. So short put spread works for me. I still think that we need to worry about this geopolitical risk. And fortunately, we finally have some vol in here to operate around.
You know what, though? What's been this is hilarious to think about as you're talking. What's been the problem for China's economy really since before it lifted COVID restrictions and thereafter? It has been a persistent deflationary spiral. There is no demand to speak of. It's really interesting, of course, we just got data this week, surge in industrial production, but that surge in industrial production and to some extent a surge in retail sales, both of those come after you get trade data this week showing imports are cratering and exports are rallying, as if to tell you this is all front running of tariffs. Moreover, you look at the bank deposit data that I like to follow in China, and you see more and more money flowing to longer term savings accounts, time deposits, than demand deposits, that is money earmarked for consumption now. So all of this looks like a fake rise in retail sales thanks to the government's stimulus program encouraging swaps of appliances and things. That's not new consumption. That's swaps of appliances. You swap your refrigerator, now you have a new one. That's it. End of story. If you don't have any more confidence, the story's done. Okay. Then you have this surge in industrial production and in exports. Okay, people are front running the tariffs. That makes sense. That's going to go away now that the tariffs have actually been levied. How do you get China's economy moving, though? Well, one way is you could jack up the price of oil, create inflation, make everything more expensive, and spur a rush of consumers to try to front run that inflation, and of course then to just amplify it, which is precisely the solution, or a solution, to the problem that has bedeviled China really since 2021, which is nobody is buying anything.
So Trump tries to turn the screws on Iran by blockading the Persian Gulf as we attack Iran with Israel, and China says thank you because we finally get a spark in our economy that we've been looking for.
We get our consumers to buy stuff because prices start going up.
I don't know if I agree with that Dylan, but
it hurts later, but it helps in the front.
That's what makes this weekend so confounding. And I know it's like, oh yeah, every day's been a long day because things are coming out of left field and the VIX is sitting at 30 still. So any day the VIX is at 30, it's going to be a long day. But also with this weekend, Dylan, right? We have all these exogenous events. We have Fed speakers the next few days. We have obviously Trump talking about firing Powell. We mentioned the other day that it seemed like Kevin Warsh is the person who's campaigning to be the next Fed chair. CNBC just reported this afternoon at 3:58 Eastern, so 2 minutes before he went on overtime, that Trump has talked to former Fed Governor Kevin Warsh about firing Powell and replacing him. So if we can figure that out here, this is not to pat ourselves on the back. The point is, why didn't today's Powell firing news get more traction?
Yeah,
because it's been as plain as daylight for anyone to see. This, of course, is where he's angling. He's been angling about this in the public for months. So the fact that it's coming out now, the day after Powell effectively says, we can't cook the stew that you want us to cook because you haven't told us what ingredients you want to go in there with any certitude, Powell's now on the chopping block. Maybe.
Excuse me.
Bless you. So Dylan, we have all these headlines for this week, and I asked Ilya, is he going to approach things differently on the other side of the weekend? Obviously, you can put an asterisk on it. Who knows what's going to happen here? But assuming we start Monday with where we ended today, in terms of news flow, developments, lack of trade deals, how do you approach next week?
I think next week has more upside than downside. As I said, talking to Tom and Tony, I just think that I think all you have to do is look at the Trump tweet talking about the need to fire the Fed chief, and then look at the reaction to that, and specifically the absence thereof. And so now I think the market has made the new normal the fact that the president's going to change his mind constantly, make hyperbolic threats, and try to do things that are historically illegal to do. And that is the new normal. So now the odds are that at some point Trump may not do some of that. And that, to one of you was saying this, I can't remember whether it's Japan coming in, China coming in, Giorgia Meloni working magic from Rome, that there's a better pot odds of an upside surprise in terms of some sort of conciliation or reconciliation than there is the possibility of more chaos, if only because the market is now priced at a level where, again, the expectation is that the president will say something chaotic and hostile every day.
Yeah.
And that's reflected in, that's why the dollar's been marked down. That's why the bonds are where they are. That's why the indexes are adjusted lower, blah, blah, blah.
Yeah, I mean, you do at some point get to a level of maximum pain that has been priced in. But
yeah, well, we're at the point where the market sees that we're not going to trade with China anymore.
Yeah, right.
Well, we're also at the point where when the president says fire the Fed chief, and the market's like yawns.
Yeah, it's like, okay, sure, we're going to fire the Fed chief. We're also going to have reciprocal tariffs. Wait,
how do you even price? Price that in? Firing the Fed chief. What do you do? Slap another 100 basis points on a Treasury yields? Right? Like, how do you actually price in firing?
How do you actually price that in? Well,
dollar goes down 10% in a day.
Yeah, dollar has a double-digit. I mean, seriously, dollar has a double-digit down day. Yields surge. Stocks have maybe a 20% down day.
Gold
goes to the moon. Yeah, and
that doesn't happen today.
No.
UNH had the biggest move today. The market down 22.37%. It's obviously fascinating because it's complaining specifically about the increased costs it has with its Medicare Advantage program. So other companies that operate in a similar space were also being hit here. One thing that we need to be aware of, though, when we talk about the cost of insurance going up, right? Do we think that UNH is just going to eat these elevated insurance costs, Dylan, or are they going to pass along the cost to consumers with higher insurance premiums moving forward?
I mean, I think they will pass them along. I mean, come on.
Right. But this is what tariffs do. When tariffs are imposed, and I want to bring the big picture here to what the macro policy is. When tariffs are imposed, especially on imported goods like raw materials or industrial components, they are a tax on trade. You as the importer are paying for them. They raise the cost of doing business. And this isn't theoretical. This is just the hard dollar impact. So input costs are going up, profit margins are getting squeezed, and companies are forced to either eat the costs or pass them along to consumers. And more often than not, Dylan, they're going to pass them on. So, but what does this have to do with insurance? Insurance companies are operating in a world where they're currently and constantly pricing risk. It's why you have these insurance companies pulling out of places like Florida and California for climate issues. They have determined in their models that it's more likely than not that they are not able to recoup the cost of their investment. So not worth playing the game. But when you're constantly pricing in risk and you're constantly pricing in now a higher cost of goods sold, you're thinking of higher replacement costs of everything, higher costs for construction materials. There's delays in production. For insurers, because of the delays in production and rebuilding things, this translates into higher claim payouts in property and casualty insurance, greater exposure to business interruption, and more even volatile asset returns in their investment portfolio because they need a cash flow, liability, and duration match. So if costs are going up and volatility is increasing, what do these insurance companies need to do? They need to charge higher premiums. The tariffs are going to lead to higher insurance costs. It's just a function of math. So UNH today says the costs are going up. Do you think that UNH is going to be benevolent? Or do you think that UNH is going to squeeze the rest of us for this? They're going to squeeze the rest of us for this.
Sure.
Tariff increase input costs lead to increased replacement costs, which lead to increased insurer liabilities, which lead to higher premiums. This is how it's been for the last 50 years, 60 years, 70 years, Dylan. Why are people pretending like it's not going to be a huge issue now moving forward?
It is going to be. Why
should we get long war insurance companies here? They've done quite well this year.
Yeah, I mean, I think that's a rational consideration, actually. From a trading standpoint.
We talked about the fires, right?
I mean, the only thing that would hold you back is this idea that everything around the market is getting squeezed with more term premium. And insurance companies, much like a lot of other non-bank or shadow bank type of entities, are sitting on a giant pile of U.S. treasuries, which are sinking like a rock. So if you were concerned about SVB, this is another one. Let's not forget that where we really got worried about the 2008 crisis wasn't the fall of a bunch of investment banks, including Lehman. It was AIG and Munich Re and things like this. So and AIG, of course, first and foremost. The tentacles here are vast. The pool of dark bank lending is giant. And by the way, when we say dark, we're not saying it's insidious or anything like this. We're just saying that these are lenders that aren't formally banks. So private equity companies, insurers, things like this. These are institutions that lend people money, but that don't have to follow the rules of a formally declared bank in the way that they manage risk and hold capital and all of these things. So about the only thing that I would be worried about in that logic would be if there's a further squeeze down on the bonds because the uncertainty grows and rates keep nudging higher, a lot of this space is going to be exposed.
I understand that. It can cause balance sheet problems. But you also have to get insurance for certain things in this country, right? You're mandated to have certain kinds of insurance. By law, it kind of operates as a monopoly. If I could just give a little anecdote here, Dylan. Maybe one of the companies, I'm looking at the top holdings of IAK, which is the insurance ETF here. You have some decently liquid names, AIG, Travelers, Progressive, Chubb. I have Chubb insurance, okay? The people who fixed my floors, did the mold remediation, billed like $12,000 for it. Chubb went back and forth with them for the last few weeks, and I just got the confirmation that today the claim was paid out, and they whittled down the payment to $7,500. So when I think about an insurance company, agreeing to pay for service and then telling the contractor, like, actually, we're going to give you about $5,000 less than we assumed. These people are fighting in the trenches to make sure that they don't pay out on any claims. They must be giving all the money back to the shareholders. Stock's reflecting it this year, 285 right now. It's been moving up slowly throughout 2025 when it started near 224. The top end of the insurance market right now is incredibly stable. I mean, Progressive had a not so good day today, but broadly speaking, these companies have been holding up. They're holding up better than anything else. I mean, the only names that are basically comparable right now are going to be all of the consumer defensives, the consumer staples, the Walmarts of the world, the Costcos, the Procter & Gamble's of the world. Should we be a little bit more creative in our thinking here, Dylan? Like, if costs are going to go up and we're going through a stagflation window right now, which is looking increasingly likely as every day goes by without any significant back down in this trade war, shouldn't we just have a stagflation basket on that's probably going to work for the next 5 years and operate in that
super
realm?
rational. Yeah, I think that, I mean, I don't disagree with anything you're saying.
The problem,
it just feels like we need to fundamentally change our investing and trading behavior, right? Like, pretending that this is going to be a flash in the pan, we need to think 1970s investing style returns.
I mean, this is not a flash in the pan, clearly, and the markets are showing it to you. Otherwise, we wouldn't have this consternation. I mean, I was wrong to be short stocks last year a lot until this year, where all of last year's rally got erased. So, ha ha ha. Not that I would have held it, of course, and not that it made sense to hold it. But the markets clearly are very concerned that this is not a flash in the pan. But the thing is, because it's not a flash in the pan, the markets are already looking through the inflationary impact and to the growth impact. Because when you look at break-even rates, and by the way, it's not just in the US, it's in Europe too. But if you look at the US break-evens, they are cratering. That's not an expectation that the tariffs will cause inflation. That's an expectation that the tariffs will cause prices to go up. That will cause an economic downturn, and the impact of the downturn, the demand destruction from the downturn, will be so bad that it will overwhelm the upside to prices from the tariffs, and the net effect will be lower inflation for all the wrong reasons. Firings, higher unemployment, you name it. So I don't know if you want to be prepared for stagflation here. I like the stag, maybe not the flation.
Dylan, what was that company?
But I mean, do you not like the insurance basket for all the logic of Mr. Vecchio's opining?
I totally get the logic, and I think the logic might make sense, might make more sense after whatever sweep we have, because I think Chris is absolutely right. This is not a regime that's going to go away quickly. And so what the trade there might be is just a longer term idea that the inflation environment in general, probably for decades to come, is going to be higher than it was for the preceding 40, 50 years. And that's a bet that will have its winners and losers. The insurance companies probably look like they're on the winning side of it. But between then and now, there is maybe more just straight risk off selling without any regard for sector or industry, just de-risking.
Dylan, there was a company that you mentioned earlier this week as being a potential place to look. Eli Lilly was up 14.3% today. They just announced that their GLP-1 drug can now be administered orally through pills, no longer through shots. Full disclosure, longtime Eli Lilly shareholder. Thank you, Mr. Robot, for telling me how bad of a company it was. That was a good counterculture signal. $840 now here. Seriously, like my best investing ideas are always for the dumbest reasons. Like I'm either the guy in the meme at the very left side of the curve that's drooling or I'm at the very right end of the curve being like, this is a very idiotic idea. It's definitely going to work. Like, I know it's definitely going to work. Dylan, you mentioned Eli Lilly, though. You talk about these manufacturers that make medical equipment here or drugs domestically are doing a little bit better on the other side of all of this. Even Johnson & Johnson here is recovering. It has a 2.3% bounce today. Another medical device manufacturer, AbbVie, up by 0.77%, outperforming the broader market and finding a little bit more stability. Instead of fighting this, Dylan, maybe we should just embrace it. You know, the world that we knew and love is gone. Globalization's dead. The balkanization of trade is here. And so we need to adjust our expectations for what sectors will perform well permanently moving forward. Although, let me end on a different note, if I will. What if the reason Powell is so mad or rather Trump is so mad at Powell for not cutting rates is because Trump in the back of his head knows that this trade war is all BS. And he just wants to engineer a situation where he can just get the stock market through it before he finally announces all the de-escalation. I mean, if the inflation's coming, right? Shouldn't Trump be grateful that Powell isn't going to let a wave of inflation wreck his tenure as president? There's a lot to consider.
I think when you have the break-evens telling you that inflation expectations are collapsing, and the Fed chair tells you this week that the reason that they're worried is maybe the tariffs will have a longer-lasting upside to inflation expectations, and they're pointedly telling you that's not the direction that they're going, you're really just waiting for the next big piece of data to justify things. And if the next big piece, NFP didn't let you have it. Retail sales didn't let you have it. You need a piece of data to hang your hat on if you're the Fed, because you cannot let go of your credibility, because then inflation expectations really will go bonkers on you. The market has to believe what you're saying. So you get a bad piece of data. And then you can say, okay, now we're going to cut. And there's an off-ramp to the whole thing. To Dylan's point, with the president, you're the greatest, best person ever today, the worst one tomorrow, and the best one again the day after. I mean, the off-ramp seems simple, and the Fed wants to cut rates. It just needs a bad piece of data to do it.
Well, it's been another interesting week here. We don't have any trading tomorrow. Markets are closed, so Ilya, Dylan, and I will not be on air. To that end, if people are celebrating Passover, hope the celebration is going well. If you're celebrating Easter, hope you have a lovely time with your family. If you don't do any of those and I've offended you in saying have a good Easter or Passover, I apologize. I'm just, we're making this up as we go along, folks. So overtime's now out of time.
Tell you what, the lack of carbs is not helping my focus.
That's true. It's Thursday. We'll be back on Monday, same time, same place, right after last call, 4 p.m. Eastern, 3 Central. So for Dylan Matt Radigan in Milan, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. See everyone soon. Have a nice weekend.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tastytrade.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom.
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh, boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancelleri. Bam!
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Bat, University of Kansas. Number 20 because that's how many underlies are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tastytrade.
Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on. So every resting order that's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker, and if I'm a broker, that means I did something horribly wrong because I'm a market maker.
It's a quiet day for the markets, despite another big raft of scary headlines. This time, U.S. President Donald Trump is openly threatening to fire Fed Chair Jerome Powell, something that, if the markets were to have believed it, would be no doubt a source of epic consternation. But as it turns out, the news passes with a whimper. And the markets head into what is a global deceleration of activity around the Good Friday and Easter Monday holidays, with, of course, Easter in the middle, seemingly taking hold and the markets kind of settling into a quiet drift. But that doesn't mean that things are actually quiet, and it certainly doesn't mean that we don't have a great big source of volatility brewing in the background. And so what we'll do here today on Macro Money is take a look at some of the data that has fallen through the cracks this week coming out of China, which at first blush might suggest they are all geared up to fight the trade war. I'm going to see if that's in fact the case, how the landscape presents itself. I'm Ilyas Spivak, head of Global Macro here at Tasty Live. And what we're going to do first is just unpack some of the data that has come out this week. There was a big set of releases on the calendar, and they're all out at this point. We should get foreign direct investment numbers at some point over the weekend, but there isn't actually a time of release attached to them, so who knows when they'll be coming out. The data already on the menu looking somewhat impressive, at least at first blush, though, and seemingly suggesting that China is well positioned to resist Washington's offensive. Let's take a look at these numbers here. Exports surging. That's reported earlier in the week, 12.4%, though imports down again and more than expected, off 4.3%. We'll start to unpack this in just a second. Probably the most impactful number, GDP, the year-on-year rate, 5.4%, unchanged from the fourth quarter, but higher than the 5.1% expected, and blistering numbers for industrial production and retail sales. That perhaps one of the most eye-catching bits of this entire equation here. The number for industrial production, 7.7%. That's the highest since June of 2021, before China exited COVID restrictions. We sort of approached similar levels in January and February of 2022. Again, before those restrictions were over, that was about 7.5%. But clearly, numbers that are significantly stronger than recent history. Retail sales up 5.9%. That's the strongest since December of 2023. So heady numbers here, seemingly. But once we start to unpack them, the story may actually end up somewhat counterintuitive. And these large numbers may in fact be telling us just how concerned businesses are about the trade war's impact. So concerned, as a matter of fact, as to be aggressively front-running them. Now, of course, remember, these are first quarter numbers, so that they don't take in the actual full breadth of the tariff hit, which only is gathering pace in its kind of full and complete impact. Maybe it can, of course, be escalation, but April has really been the timeline for where things have really become spicy here. We are not seeing the full impact of this yet, but looking at the breakdown of GDP, we can see that even going all the way back to the second half of last year, we don't have the full breakdown here for the first quarter just yet, but we can already clearly see in the third and fourth quarter this growing contribution from net exports to overall GDP. And we can see that the final consumption contribution has actually shrunk significantly all the way after this COVID reopening. So the reopening happens right here in the tail end of 2022. The first quarter of 2023, you see that impact with a massive addition from consumption. That has whittled down to very little at all. Capital formation, that is investment, measure of business confidence, has also shrunk significantly. And as we look at the increasing share of exports, even as, especially in the fourth quarter here, you have increasingly combative rhetoric. And of course, now you know who the president is going to be in the U.S., there seems to be this sense that you have a reason to front run whatever tariffs might be coming. Of course, at that point, you don't know what they're going to be. But you do know that they're coming because they're a feature of the president's campaign repeatedly over and over and over again, and now he's won. So the idea is, well, costs are probably going up, so buy as much as you possibly can now before they do. And that seems to speak to what this surge in net exports contribution to growth is telling us. Now, while we don't know that this is a situation that was exacerbated in the first quarter, again, looking at those trade numbers, that is a fair bet. Because, of course, as we can see here, export growth is accelerating. Meanwhile, imports are not just going lower, but they're already below zero. So not only are imports diverging from where exports are going here, basically since the middle of last year, but imports are actually shrinking, and at a nearly double-digit pace. Of course, the latest numbers here increasingly so in this direction, imports down 4.3%. That's, of course, not as much as 8.4 in the prior month, but the trend is unmistakable. And so with this in mind, you would, of course, surmise, okay, what is net exports? It's exports minus imports. So you would expect that this state of affairs very much continues into the first quarter and helps to account for this strength. Moreover, it also helps to explain how you have this jump in industrial production. Again, the highest since we were north of 8% back here. Okay, well then what about retail sales? Let's say we can explain away industrial production as front-running the tariffs. What about this jump in retail sales? Surely that means that maybe the consumption component is finally starting to build momentum. And indeed, if we take a look at the internals here, it does seem like there's been a genuine pop in consumption, but why that pop has occurred, of course, matters a great deal. You know that one of the biggest sort of efforts, one of the loudest efforts in China's assorted stimulus measures has been this trade-in program to try to subsidize consumers to swap out older comms equipment, appliances, and furniture for new ones. And we can see very clearly that as we head into 2025 here from 20 to 24, that has given a very significant lift. Indeed, the swap seems to be actually encouraging some activity. But is this activity you can bank on? Well, ostensibly, you swap out your refrigerator and now you're done. You swap out whatever other household appliance or whatever piece of furniture you were looking to replace, and then that's it. This is not an on-ramp, seemingly, for ongoing consumer confidence. And indeed, if we take a look at where we are here on that score, we can clearly see that there's still this widening gap between money heading for so-called time deposits, that is basically savings accounts or CDs, where the presumption is the money is going to be held for a longer period of time, earn more interest, but then be less liquid. And so the idea is this is savings. And then there's, of course, demand deposits, the money that's basically in a checking account and earmarked for near-term spending. Well, you can see that the ratio between these two, which is what we have down here, has kind of oscillated in a stable range all the way back from the global financial crisis into COVID. But once you get COVID, you get this massive increase in money flowing into time deposits, relative to demand deposits, and the ratio is approaching almost 3-to-1. That is to say, about 3 times the money going to accounts earmarked for consumption is getting packed away in savings. This is not a picture of consumers that want to be spending money. And so, yes, you might have a retail sales lift here for some amount of time. Of course, it isn't anything like the jumps that we saw even as recently as 2023. This is that reopening jump right here in the first quarter. But since then, retail sales has generally cooled. That makes sense. But this pop right here, much as it seems to be well supported, is just that. It is a pop. It isn't something with runway to continue. And of course, that, at least in general, sort of spiritual terms, as it were, lines up very much with what we're seeing from this jump in industrial production. And that, likewise, to the extent that it is a front running of the tariffs rather than some sort of a true recovery in demand, that again looks like a flash in the pan kind of a situation rather than something with forecastable scope for continued movement in the same direction. Now, ostensibly, we might see more of the front running. We might see more of an uplift from these incentive programs that China has introduced, but all that's well and good. It's just not the kind of thing that prepares you for a mounting trade war, because it is inherently temporary. And once the tariffs really start to hit, the front running ends and the mood continues to sour. This, of course, speaks to the issue that China has had really since the COVID reopening. And again, here's that telltale moment here at the start of 2023 where you get the last kind of gasp of growth as you get that reopening. And since then, we can see China's economy has basically flatlined. Moreover, the most jarring part of this, as we've talked about extensively before, is that real GDP, that's the darker line here, is running above nominal GDP. That's the lighter line here. And this is the spread. I used different axes here just to show the spread more clearly. You can see here that we're looking at a gap here of about, give or take, 1 percentage point of GDP growth, which is a staggering amount. Because what this implies is an economy-wide deflationary spiral. If real GDP is running north of nominal GDP, and nominal GDP is by definition real GDP plus inflation, well, then nominal should be above real as long as inflation is positive. But if inflation is negative, that's how you get real running above nominal. That is to say, nominal becomes real plus negative inflation. And what you end up with is nominal being discounted by inflation, not have an inflation premium. And of course, that's really the essence of the issue. If prices are falling, if there is in fact deflation, now for 7, maybe 8 consecutive quarters, we don't have the nominal GDP numbers here, but we'll get to estimating them in a second. We have a situation where China is basically relegated to the bargain bin. if there is demand in the economy, well, then people buy things, and that buying of things drives the price of those things higher, as that demand pulls on, at least for the moment, finite supply, and competes on price to get it. So the price of things goes up. Well, what happens if the price of things isn't going up? Well, it tells you there's no demand, and prices need to fall to try to entice it. And what we're looking at now is close to 8 consecutive quarters where that's not working, and prices keep falling and demand remains absent. China is effectively an economy that's attempting to discount its way back to bringing demand to life, and so far, no dice. Now, again, we don't have the nominal GDP numbers here for the first quarter. The real GDP numbers just came out, so we don't have the nominal ones to make the spread calculation here, but we can look at what's been happening with CPI and PPI so far in the first quarter, and we can see that the direction is toward weaker inflation, not stronger, essentially hovering on the lower side of proximity to zero for consumer prices, and the situation in producer prices has only become more negative. It's, of course, been negative since 2022 here, since the middle of that year, and it's never really become very much better. But we can see here that it's actually appearing to deteriorate most recently. So the likeliest scenario seems to be that this situation might have actually become worse, not better, when these numbers are updated. Moreover, the stimulus that China has rolled out is plainly not working. We can see here the share of new loans in GDP continues to be falling. So the Bloomberg Credit Impulse Index here still very much in negative territory. Now, the pace of decline seems to have eased a little bit over recent months, but that's not really much of a positive story. It just tells you that perhaps in year-on-year terms, the situation is not getting meaningfully worse, but of course it also doesn't suggest anything about it getting meaningfully better. So all of the inducements that China has introduced, including, by the way, that trade-in program, are plainly not stoking more credit and more borrowing activity, which, of course, is their aim in trying to revive the economy. Furthermore, and we'll get an update on these numbers maybe over the weekend, foreign direct investment continues to fall at a pace measured in the double digits. So we're, again, as of the latest numbers, approaching 20% year-on-year declines, suggesting that capital is pouring out of China as though a ruptured water main. This is a very rapid exodus of capital. And so the situation seems to be that China's economy remains anemic. There's, besides the headline GDP numbers, under the surface, all of the underlying weakness we've seen in recent quarters. None of it seems to be getting particularly improved. And at the same time, the stimulus efforts that have been attempted seemingly not doing much of anything. And so this doesn't really paint us a picture of an economy that's ready for a trade war that now implies tariffs of as much as 145% from the U.S. China, of course, has retaliated with its own tariffs. And that's been an interesting conversation because all of the countries that got a reprieve on reciprocal tariffs above 10% were the ones that didn't retaliate or at least walked it back quickly in the case of the European Union. In the case of China, they did not. They've retaliated. In fact, most recently on April 11th, they increased tariffs on goods to the from the U.S. into China to 125%. It's not a huge. It's not going to make a huge difference because of the trade imbalance, but nevertheless, China appears to be fighting back. But the structure of the economy does not seem to suggest they have a whole lot of runway. Moreover, their ability to counter is significantly diminished by their own actions in divesting from their holdings of U.S. treasuries. A lot has been made in recent days of this idea that the reason that the U.S. treasury market is suffering to this extent is because China is actually fighting back against the trade war by selling off their treasury holdings and driving up yields. That this is then creating a potent headwind for the U.S. economy. But what you actually find here is that China has been slowly divesting out of U.S. assets, basically going all the way back to 2010, 2012. 2011 seems to have been the peak. Things held steady until about 2012, 2013. And since then, there has been a steady reduction in China's holdings of U.S. treasuries. And if we look at where those holdings are relative to total outstanding U.S. debt, we're talking about a return back to about 3%, even a little bit less, of overall U.S. debt outstanding. So the lever here does not seem to be particularly potent. Instead, the rise in U.S. Treasury yield seems more about surging term premium. That is, the market's demanding compensation for duration risk around all of this uncertainty in the U.S. It seems to be more a self-inflicted wound than anything that China could have scope to do, considering how little impact they now have on the overall mass of treasuries and the amount that they would need to sell and things that they would need to do to really unwind things to have a meaningful impact. So if we learned anything about this situation this week, it is that the president has mentioned he would like to make a deal with China just today as he was meeting with Italian Prime Minister Giorgia Meloni and having a press outing. He said as much directly. Meanwhile, China has apparently laid out its willingness to strike a deal. And so if anything, what all of this suggests is maybe the trade war is heading into a place of de-escalation rather than escalation in the relatively forecastable future, and not because the U.S. is eager to make a deal, but because economic data, headline readings notwithstanding, China's economy is hardly in a position to add a still more aggressive headwind into the mix of troubles it's already dealing with. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go there from. I'll be back for all of that next week. Also, Futures Power Hour with myself and Chris is Mondays and Fridays. I'm on with Victor Jones for the Price of Truth on Tuesdays, on with Victor and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back next week. Happy trading.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
If you missed the live show, here's our cherry on top weekly recap.
You are making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on, what did you want to do last night? I missed that.
Don't repeat that. No.
No, what did you want to do?
Do this every time I'm here.
I just want to know what
Every time I'm
what did
here,
he say
we gotta
he
go
wanted
down
to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get in the. See you later.
Nick is going to be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this. Like, it's hot as hell in here. I'm like sweating. Like, it smells.
I'm AJ Rudolph. I'm a senior product manager here at Tastytrade, and I just qualified for the World Poker Tour $5 million free roll in Las Vegas on Friday. So I've been playing poker for about 20 years, actually. I started just with friends. It was like 2005, I think it was, where everybody was like, yes, let's go play poker. There was a huge boom around poker. And I actually feel like that is coming back around again. Right now, there seems to be a lot of interest, and the fields are growing, and everybody wants to get in there, and everybody has a chance to win. That's kind of the cool thing about all of these big events. I feel really privileged that I have the opportunity to go and do this. This particular tournament is only 2,000 people. You cannot buy your way into it. You have to win in order to win your seat, and that's what I did. And so I just buckled in and played my game and really focused and won my seat. I'm a very aggressive player. I do rely very heavily on reading the players at the table. I think that's super important. To be a balanced player, you want to make sure you're doing the math, you're reading the people, and you're doing all of those things in combination with each other, so that way you're using all the tools that are available to you.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
What is going on, everybody, and welcome back to Risk and Reward with Ian Gus. Gus, before we even get into it, I love the collared for today. What do we got? What do we got there? Give us a breakdown of the fit for the day. What is that? It's yellow.
Yeah, so this is my short week, my Synthetic Friday T-shirt. Little cause for celebration. This one, it's William Murray, which is Bill Murray's golf brand. Highly recommend. These are like the most comfortable shirts I own. But this one has cocktails, lemons, and some guys hitting golf balls. I think
I like that.
Some umbrellas in there too, and tees and whatnot. But this one, it's a fun one, little Thursday short week shirt.
You're already forming the guy that has the different types of shirts. That's what I'm already getting the vibe.
Actually, as I was putting this on today, I was like, I can't build this reputation. I can't afford to have.
I think you already did.
I can't afford to have this
right next to you. It's too late. The stash, the different shirts, it's too late, brother. But I know today we're going to be getting a little bit into the new Minecraft movie. Going to be touching on Warner Bros. They're underlying a little bit. As for today, shorter week in the market. Going to be a longer weekend. We got Good Friday tomorrow, so make sure you adjust alarms if you need to. If your platform is frozen, you don't need to refresh it because the market's going to be closed. But we'll dive into all of that. Some of the positions are doing a little bit better today. Had vol coming in on some more positions. The lift position for the risk of the week is going decently well so far. It's not too volatile, but we have the zebra position on there. So I have not been forced to manage that position yet. So overall, a little bit more of a quiet day, but great overall. Can we get a little recap for you, Gus? How we doing? Where we sitting at right now?
Yeah, I'm feeling about the same. I'm blessed that the Nvidia position that I was sweating all week did wind up getting home for max profit. So shout out to Nvidia.
That's crazy.
Jensen did hear my prayers live on air yesterday. We were very close this morning. It was like $100.40.
That's the second time, is it not? You did that twice with Nvidia, if I'm not mistaken. Maybe I'm mistaken with another underlying.
Maybe it's a different underlying. I definitely have had a few come right down to the wire, and it's funny because it's like that, like the expected move. Like there it is. It happened.
Right.
Right. But yeah, and then TNA trade, my risk of the week from Tuesday, small cap ETF. This thing is absolutely booming, and it's really just due to like slight vol increase. And I have the thing happening, which I'm sure everybody's familiar with if you've ever done this. But sometimes if you take any sort of complex option strategy a ways out, like in this case, I'm 183 DTE on these two. What are these? These are these call spreads, bull call spreads.
Yeah.
And both of the premiums are moving in the same direction. Like it's supposed to be one offsetting the other, but sometimes you'll catch when the expiration is far enough out. Sometimes all of a sudden you'll catch they both go green, and so that's what happened today. Is both my short call and my long call on the same underlying are both green at the same time on the same day. So a little bit inflated there, but yeah, it's been a good day for me as well. Seems like I don't know, maybe are finding some kind of stability here, but with all the earnings coming up next week, that might shake things right back up.
Man, I love that you came out of that one with NVIDIA, especially with all the talk this week going on with the tariffs, China, US, NVIDIA being in the middle of that. So that's dope that position worked out, especially with the volatility we've seen in NVIDIA. So TN, what was the risk of the week for this week again?
TNA, which is a 3x leveraged small cap ETF. And the risk of the week itself is at exactly break even.
There we go.
I have made no ground.
There we go.
Haven't lost any ground.
Laidback said, I saw you sweating yesterday. I was sweating a little bit for you too yesterday, but I'm glad it worked out. NVIDIA really pulling through for you. So Warner Bros. Big bet on Minecraft. When were you playing Minecraft for the first time, Gus? I know this is one of those games, one of those topics that we all probably had a little bit of experience with within the last 10, 20 years, maybe. When did you first get into it? When did you first hear about Minecraft? Did you like it? Did you enjoy it? What are your thoughts on it?
Oh, yeah. Minecraft was probably the first video game that I truly no-lifed, was Minecraft Xbox 360 edition.
Truly no-life.
Yeah, I mean, that was like the first video game that was for real. Like get home from school, throw my bags down and sit on the Xbox until I have to get it off until my mom yells at me, until whatever happens.
Yeah.
But yeah, 4th grade, I think is about right.
Really?
Yeah. 4th grade, I was 10 or 11,
Okay.
something in that vein.
Yeah. But it was on a console when you first got into it.
Correct. I got into it on console because that was all I had access to. PC was still the primary way to access it at the time. But yeah, and then of course, Captain Sparkles, and I don't want to list any of the other YouTubers I watch because it seems like half of those Minecraft YouTubers have scandals these days, and I don't know who's who in that ensemble, but I know Captain Sparkles is still chugging. So shout out Jordan Marin, my goat.
Yeah, no, I love that. I just asked too because I remember I got onto the consoles a little bit later, checked out Minecraft, but my first experience with Minecraft was actually on an iPod Touch, an iPod 4 to be
the Pocket
exact. I was in
Edition?
about the Pocket Edition. I was in 6th grade. I remember I would go to work with one of my parents one time, and I would connect to their Wi-Fi, and I would just like be grinding over there on that little iPod, just building like ships, like building little things that never really panned out and never really finished those projects. But I remember first getting into that, just overheating in my hand, going ham on that little iPod. But first experience with it. Yeah, 100%.
Yeah, and that
100%.
Pocket
But what we
Edition,
got here
I
today?
remember like 2 years after the fact, I discovered Pocket Edition, and I was like, what do you mean you can play Minecraft on the go? But anyway, today we're talking...
Did you have an iPod or anything of the sort to even get the Pocket Edition?
I had an iPod Touch around that time, and I eventually did get Pocket Edition, but I was already kind of spoiled once I had been playing it on console. It felt like it was like clunkier, so I didn't get much use out of it. But I would always be jealous, like on the way to a field trip, some kid would whip their iPod Touch out and be playing Minecraft.
Lastly, before we do get into this, I think I do remember downloading a lot of those applications. Does anybody here, you in chat, remember jailbreaking an iPhone or an iPod? Oh my!
If you've never broken a jailbroken an iPod, man, you're not living. That was. Oh man!
You know what I felt like? I felt like one of those guys in the middle of the night with my hoodie on, like I'm getting behind the mainframe and firewall. Like that's what it felt like when you were jailbreaking an iPod. But anyways, that was around the same time. What do we got right here? A culture phenomenon with Minecraft. What does this tell us?
Yeah, we're talking Warner Bros. We're talking Minecraft movie, and this isn't just a kids movie. This is a $160 million test of whether Warner Bros. Deserves a buy, and Minecraft is holding the controller. Let's talk about it. First and foremost, we got to establish the gravity of Minecraft here. It is a cultural phenomenon unlike any other. It's the best-selling video game of all time, over 300 million copies sold globally, which is kind of crazy to conceptualize. That's getting close to the population of America. And Warner Bros. Has bet big on it here, rolling out the Minecraft movie. If you're on social media, I'm sure you've seen at least something about it. It has been quite the social media phenomenon as well. It's got a load of cast: Jack Black, Jason Momoa, Emma Myers, and importantly, the pool spans generations. You have millennials and Gen Z who want to see this movie. They're driven by nostalgia, like we were just talking about. We both just got nostalgic, citing the first time that we played Minecraft. Gen Alpha still plays Minecraft right now. They're obsessed with the meme culture that's surrounding this movie, and beyond that, Gen X, a lot of who are still parents of some of these Gen Alpha and Gen Z kids are having to go take their kids to this movie. So it really has been a bridge in cultures, and it has become quite a trend to go absolutely ape when the chicken jockey scene plays in this movie. I'll let Arrow cue this up now. This is here's an example. Perhaps the most pronounced. No sound on this video, but it does get very loud. We got popcorn in the air. There's a guy with a real chicken here. If you pay attention, you see him holding it up above his head. That's a real chicken that man has. And while this is
a real chicken,
it is a real chicken. He's got a real chicken in the movie theater. And I'll add, this happens about an hour and 40 minutes into the movie. So I don't know how long you had the chicken for or where it came from, but it might have been a while. But anyway,
oh my god,
it has become quite the pop culture phenomenon. This is happening across the country, and not to that degree necessarily, but I have seen lots of movie theaters are actually having to print schedules of when Chicken Jockey will happen so that they can be prepared to go handle what's going down in these theaters for that scene. Yeah. And it has just absolutely taken the world by storm.
This isn't the first time we've seen a product in this example. It is a digital product, right? It's a movie, but we have seen meme culture within the last 5 to 10 years really propel the success of certain events that are going on. You know, whenever your movie turns into a meme, I mean, they're tracking when that scene in the movie is going to come on so that they can prepare for what's coming. I mean, I've never seen anything like that before in my life, but to see something like that go on in the theaters just blows my mind. I mean, turning the lights on, like seeing what's like the anticipation, the build up to that. It's
They
just something
stopped
that
the
I've
movie.
never seen.
They stopped the
before.
movie. I've never gone to a movie in my life that had to be paused in the middle for any reason, like at a
Neither
movie
have I.
theater. I mean,
Yeah.
it's completely insane. And also, I would throw in, I don't condone this at all. I'm sitting here laughing at this because it is like objectively
Yeah.
kind of funny. Do not do this. Be nice to your local movie
It's
theater
just like
employees.
the shock value of it.
It is.
It's like
It's
a level
the
of shock.
absurdity. Exactly. It's the absurdity.
Right.
But when you actually get into the practicality of the fact that some high school kid making $10 an hour is going to have to clean up that whole theater, it does kind of suck. Don't do this. Don't do this. Jump up and down, scream. That's all good. Don't make a mess.
It almost like it's, and I wonder how often that is happening during the movies. Like, does this happen every single time that moment in the movie comes on? Because if not, it seems like it's almost like an interactive movie.
There's
It's
a
like now
generally-
they just accepted it.
Yeah, there's always a generally rowdy reaction. You'll see kind of phone cameras light up the theater. I've seen lots and lots of tamer videos than now where everybody just yells chicken jockey and then the theater laughs and then they continue watching the movie. It's not, nobody has a real chicken in there. So yeah, it's all varying degrees, as is true with anything. But I have seen a fair share of videos that look like that one that we just watched with popcorn flying through the air everywhere. Also, you paid $17 for that popcorn. I know you did. So who's losing here?
Minimum.
Minimum. Yeah, it's crazy. It's crazy out here.
Absolutely. I mean, I don't even know if I've seen multiple videos or if I've seen the same video from like 6 different POVs. But we have seen movies create video games, or we have seen producers create movies out of popular video games such as Super Mario Bros., Friday Nights at Freddy's, Sonic the Hedgehog. And for comparison, The Hunger Games was a $694 million worldwide. Toy Story was coming up just shy of $400 million worldwide. But it's not the first time we've seen successful movies made out of some of the most popular video games. Never would I have thought something like Minecraft, something so basic, like Minecraft, right? Building blocks, different it's really not a super complicated game, maybe as to why it's so popular, but never would have thought personally that Minecraft would really take off and you could make a movie out of that. Something with Super Mario Bros. When there's like a story mode to something, I see how you can make a movie out of it. For example, Mortal Kombat. There's a story mode of Mortal Kombat, and they've made movies of Mortal Kombat. So the success of Minecraft in the movie and the popularity definitely has caught me by surprise, at least. I don't know what your thoughts are on that, Gus.
Yeah, no, I think that's a very interesting thing. I haven't ever really been able to put my finger on what it is that I feel like is different about this Minecraft movie, but you're exactly right. It's the fact that Minecraft innately does not have a narrative structure. I mean, there is a narrative, somewhat of a narrative structure to the game. You are Steve and you kill the Ender Dragon, but it pretty much ends there.
Right.
And so when you talk about, comparing it to, like you said, Super Mario Bros., which has a robust cast of characters from all of these different video games over all of these years, and then you compare that to Minecraft, which has literally one named character that is a human.
Yeah.
It's kind of crazy to think about. And also, Super Mario Bros. Number 18 movie of all time. Number 18 top grossing movie of all time in the world. I mean, that's pretty crazy. I was shocked to find that. I haven't, no.
Neither have I. I guess we've not aided towards the success of the Super Mario Bros. Movie at all.
I'm probably not going to see the Minecraft movie either. I don't go to a lot of movies. I'm priced out. I'm priced out of movies, people. It's ridiculous. Yeah. It's getting ridiculous.
Yeah, I know. I heard a lot of good things about the Minecraft movie, though. I was talking to Yessie earlier today. She helps and handles a lot of the articles for Tasty and whatnot, but she had mentioned she had taken her kids to it. They said they enjoyed it. She said she thought it was great as well. She said it was superb, to be exact. But maybe we gotta end up checking it out. I don't know. But Minecraft movie economics, what do we got over here, Gus?
Yeah, so $160 million budget. That's approximate based on varying insider reports. That exact number hasn't been released yet. Marketing, also an approximation, $80 to $100 million. This is based on Warner Bros. Typical spend on a movie of this approximate budget. So a lot of approximation happening here. Your break-even target is typically about 2.5 times your budget. So $400 million-ish is what they would probably be shooting for to break even on this one. And then we know that it did $157 million on opening weekend. Obviously, it's hanging around with all of these memes, so I would suspect it to have to have a strong second weekend as well. And then also the streaming tailwind is incredibly hard to predict, and it's also hard to even quantify where one movie falls into the entirety of HBO Max's revenue, or simply Max. Sorry, I didn't mean to misspeak here. But it's going to be released on Max sometime in the next 45 to 60 days. And yeah, streaming projections vary wildly. And even if you could quantify how it's going to stream, it's tough to decide how that contributes to Warner Bros. Bottom line as a whole. But you can see it here in the box office put up against all of the other movies that were on opening weekend this week. And yeah, obviously a very clear winner there.
Yeah, 100%. I would have to say, I think TikTok is really the main proponent of just meme culture. Like when we think about when meme culture really started to pop off, I really do feel meme culture I know it was always a thing, but especially with GameStop and AMC, I mean, that was another cultural phenomenon. And I don't think the energy or the levels of that excitement wouldn't have happened without TikTok. Because I was just thinking about like, how do these things catch such traction, and how do these memes really come about? Memes have been around forever, but I've never seen so many memes in a short span amount of a time with this much of an effect, where it's, you know, really aiding the success of certain things going on right here. So it's just a lot to digest, but that's a lot of money, and Warner Bros. Definitely knows what they're doing, and it's helping them break some records. So we'll see how long they can do it.
Yeah, exactly. Yeah, you can take us away here. Current state of Warner Bros.
Absolutely. Warner Bros. Is down 89.5% from the 2022 highs. We're about break even year to date. $42 billion in long-term debt as of Q4 of 2024. Revenue segments declining here. TNT, TBS, CNN produced the most revenue. All are quickly declining, and movie releases equals high volatility. It's almost like a binary event. It's like the anticipation to the movie event. We know that is the event where a lot of the uncertainty will go away. That's kind of how I see it. And then Max keeping them afloat, 95 million subscribers. So I know Warner Bros. Has been taking an absolute beating. So we'll see what this does to their bottom line, and we'll see how things play out, you know, into the long term. But they are down about 90% from the 2022 highs. So maybe we get a little bit of a bottom here, but we'll see what happens.
Yeah, for reference, Netflix has 300 million global subscribers per their.
That's insane. And whenever you made that comparison about the, you know, America having about, what is it, about 330 million, 333 million, somewhere around there.
I think we're trending towards 400 these days. Yeah, it was.
Are we getting there?
Yeah,
That's
I think
crazy.
It's like 380, 390. But yeah, exactly. Yeah, crazy to think about, and that obviously is worldwide. It's not all Americans, but yeah, it's crazy to think that Netflix has as many subscribers as the population of America.
Right.
It's nutty. Anyway, all right. Yeah, implications for shareholders. Also, can we take a second? Look how sick this shareholder meeting looks. They got a cool room.
I
for
love
that.
it.
But
yeah,
if the Minecraft movie overperforms, good. No, if the Minecraft movie overperforms, that's going to boost confidence in Warner Bros. Ability to monetize these new IPs. It would provide a little bit of unexpected cash flow relief, especially if it performs, performs well above expectations and projections. That may renew some investor interest. And also, as Errol just mentioned, in the age of social media, sometimes investor interest comes from unlikely places like social media. And there can be these phenomenons and these run-ups that happen just because the same people we just saw throwing popcorn in that movie theater have the ability to go on their phone and buy Warner Bros. If they so choose. If it underperforms, that's going to be another hit to confidence in theaters, and that's more of a macro context sort of thing. And what I was just getting at, movie theaters kind of dying off as a whole. I haven't been to the movies in a long time. It's gotten too expensive. I know lots and lots of other people who are in the same boat. What's your opinion? You've been to the movies? You still enjoy?
No, I mean, it's been a while, but the thing that I've always thought about the movies, I really compared it to like the mall. It's like the mall is still a thing. It's still popular. You'll go there for whatever reason you might go to the mall, but because of online shopping, it's really reduced the friction just to get what you want on demand and the convenience. And then kind of the same way I see with the movies, just like you mentioned, Netflix, 300 million subscribers, right? To watch whatever you want to watch on demand. And I think because of the new, the new streaming services that we have was kind of killing the theater model a little bit. So I'm kind of the same proponent.
I agree. And I also think, and it's why TV is dying as well. There's a substitution effect to entertainment. Like right now, if I want to be entertained by something playing on a screen, I can go find something that is exactly, specifically, precisely what I want to watch this very moment without making any sacrifices. And any movie, even a movie that I guess I wouldn't say that you're the most excited to see, but a movie that would have been moderately exciting to go see 10 years ago just isn't going to. Getting up off the couch, going to the theater, paying all that money and sitting down and watching the movie is not going to appeal to me nearly as much as just queuing up a YouTube video and throwing my feet up. So
So maybe it's a little bit of both. Maybe it's the pricing and then the convenience. So it's like it just makes sense to do this instead.
Yeah,
So
especially. And yeah, as you said too, Netflix, I mean, I prefer YouTube, but if you want something incredibly high quality, there's also 101 different streaming services where you can find access to incredibly well-produced movie budget style things. I mean, Game of Thrones is maybe the best movie that's been released in the last 15 years, you know, if you really break it down. So, yeah, it's very interesting. Nobody quote me on that. I'm not a movie buff. I know there's been better movies than that. And Game of Thrones is a TV show. I know. Anyway, if it underperforms, back to the points here, heightened pressure on streaming growth, as we just said. They really need to be shifting their revenue away from on live TV and in the movie theaters over to their streaming services as much as they can, and that's been going well. Almost 100 million subscribers at this time. And there would be questions about Warner Bros. Management as well should this flop. This is obviously a big risk to take. This is a gigantic budget to give to a movie that you're not sure people are necessarily going to want to see, and obviously they've been validated to some extent so far. But should it underperform profit projections, that's going to raise question marks. I'm sure that somebody was a strong advocate that this thing would absolutely kill, and while it's doing very well, they have spent a lot of money getting it ready to go to market. So it'll be interesting to see how it all shakes out. They do have their next earnings call May 9th, where we will get details on a lot of this information.
You know which model I'm curious on and the success of it. Like, whenever the Jake Paul and Mike Tyson fight, they did a collab with Netflix, and they probably did some type of rev share based off of the subscribers that signed up because of the hype built around that. I wonder what that model looks like for some of these other producers like Warner Bros. Like, I wonder what a rev share could have done with them if they would have taken the route of partnering with a streaming service, someone like Netflix, and how that would have looked in comparison. Obviously, that one's a tough one to split test. Maybe you'd have to do it with a different movie. And then at the same time, it would have to catch a lot of that meme traction too. But I am curious about that model too. I don't know if there's any reasons why they want to have it in theaters, but the structure of getting it on something like Netflix and they do some type of partnership deal there. I wonder if more movies will take the approach of that, or if theaters are going to be standing.
Yeah, I agree with you. I think that there's still this kind of outdated stigma that exists around going straight to streaming, or it used to be straight to DVD, like, a straight to DVD movie, that's going to be terrible. And I think that stigma still sort of exists in the industry a little bit when it really shouldn't. I mean, when you talk about, great shows on Netflix, there's too many to name, the Breaking Bads and Peaky Blinders of the world. And, those are really good, well-produced things that are direct to Netflix. And I don't see any reason movies couldn't be the same way. I think there's just a stigma that needs to be shaken there.
Yeah, 100%. Shorter week in the market this week, not as exciting as last week. And I guess it depends on what you take as exciting. But nonetheless, we're going to have a longer weekend this week. So be sure to remind yourself to that.
Hold on, you got to give me my beautiful last slide here real quick with my Minecraft landscape, bro. I don't even care if we go over it.
Beautiful.
That's so
gorgeous.
Nice. All right, continue. Sorry.
No, all good. But here we go. Before we end off, we got some key takeaways here. You know what popped up on my feed not too long ago? I saw somebody build a cruise ship in Minecraft. It was the most insane thing I've ever seen in my life. I mean, the detail, you can go in the cruise ship, it has its separate rooms, and I'm like, this looks like it took a whole year working on maybe at least 6 hours a day to complete this and get it done. But that's been popping up recently too, maybe because of the memes going around with Minecraft. But Warner Bros. Is under pressure, and they're betting on the Minecraft movie. Video game movies have a real box office track record now. Minecraft's performance could move the needle, not solely because it's a stronger performer in the box office, but it would signal Warner Bros. Ability to adapt from modern IP, which that's an interesting point there. Keep an eye on box office data in the coming weeks. Warner Bros. Reports earnings on May 9th, right around the corner, and will likely provide more insights on this topic. So we'll see what we get. But we are running out of time here. Anything to add before we hop on out of here today, Gus?
Nothing to add. This whole day of researching for this segment has really made me want to play Minecraft. I might go home and play a little Minecraft tonight.
I was literally, when I seen the video, I was looking at more Minecraft videos. Even today, I was looking at the cruise ship ones, this and this and this, and kind of just going down memory lane on this topic.
Yeah, chat says Bob Sala in chat, Detective Pikachu movie is underrated. I never saw that. I'll have to. I might have to give that a watch. I remember that coming out.
Yeah.
Interesting.
100%. Well, that's going to wrap it up for today's segment. We'll see how these things pan out, and we'll see how we're going to manage our positions by next week. I know we got a lot in there that are expiring for this expiration cycle, so we'll see what we got to do in there. Thanks for taking the time to hang out. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth. before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was. And basically, instantaneously, like, I was hooked. I'd always seen all the stuff on tastylive with all the data and all the value I thought that bring. And then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you missed the live show, here's our cherry on top weekly recap.
I had the, what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine?
Crackers?
I went snorkeling.
You went snorkeling?
But I said the last time I went snorkeling.
And the fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
It just doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh, for what? For just funsies?
For my birthday.
Oh, wait, I didn't know it was your birthday this weekend?
Yeah.
Oh, happy birthday.
There you go.
I didn't know you were an Aries.
I am an Aries.
Yeah, that kind of tracks.
Something. What is your sign?
I'm an Aquarius.
Aquarius?
I'm an Aquarius, yeah. Tom's a Pisces.
Pisces.
Yeah.
That makes a lot of sense.
It does.
Yeah.
It really does.
That kind of tracks.
I don't even know what that means. Whatever.
I think it means you like fish.
What happened, girl, during last call?
I lost my
You want to talk about it?
I lost my beret.
You didn't lose it.
I found it.
So you got.
I'm thinking of getting rid of it.
Oh, new look?
I'm thinking of the new look.
You should do a faux hawk.
Oh.
What is
I think you nailed it. I don't know.
No. Cornrows.
I could see rocking some cornrows.
Yes, cornrows.
I think you should go to Flavortown and just get the Guy Fieri spikes.
Boom, platinum tips.
Platinum, yep.
Is it true? Did you skip the beret yesterday?
On the clothes.
Oh, it looked like it looked like a decrepit old grandmother. It was so gross.
It's like that old monster from Tales from the Crypt.
Get the full scoop by checking out the archives at tastylive.com.
Contrarians! I just signed up for Dough and opened a new brokerage account. Time to get trading!
Newbegin, big barbarian on hillside. To celebrate, let's slaughter 1,000 ewes and suck the raw marrow from their bones. Oh yeah. Why did I say 1,000 ewes? I always get caught up in the moment.
I don't even really like raw marrow. I mean, it's fine, but it's definitely not my favorite.
Hey, maybe next time when I do something cool and smart, just give me a subscription to Bob the Trader, okay?
Thinkorswim will always be my baby.
But this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
Oh my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Reading of the tape. More trade ideas.
Sweet. Still can't believe the Wi-Fi we get up here.
The trade ideas on Doe are as good and as true as my honored blade bid ask, with whose edge I gutted 100 marauding conformerons.
To the fearful bid ask.
With this blade, I pried open the gross, smelly lair of the Hydropons Hilda.
I remember that. You were covered in nasty snakes for like over an hour.
And don't forget how I used it to stab the snarling maw of the hideous Minotaur Dibitrix, his putrid breath filling my nostrils. But still, even with these thrilling conquests, these victories that have passed into myth across distant lands, I hereby deem the trade ideas on Doe even more powerful. Ah! I mean, you probably still need a sword. Yeah. Didn't think that one through.
Tastylive, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tastylive research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tastylive plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tastylive has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
If you missed the live show, here's our cherry on top weekly recap.
I had what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine?
Crackers?
I went snorkeling.
You went snorkeling?
But I said the last time I went snorkeling.
And the fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
It just doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh,